who redefine leadership every day. An unmatched legacy, unwavering trust, enduring credibility. NDTV Profit Business Leadership Awards 2026. 26 July. Only on NDTV.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform. Digital first. Virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real.
More than 10 days of consecutive strikes by the US and consequent response by Iran seems to have kept the peace deal in the cold storage. Even US President Donald Trump says that he has lost interest in the deal. US futures trade near the flat line after a good session as investors look ahead to another busy day of corporate earnings, with several major tech and industrial companies as well set to report. Oil prices climbed to almost 5-month high on the back of US-Iran uncertainty. The benchmarks remained under pressure amid F&O expiry-related volatility, with HDFC Bank and Reliance Industries among the key drags on the indices yesterday. Eye on earnings and geopolitics as GIFT Nifty indicates a flat start. And a stellar first quarter by Bajaj Auto raises hopes of another good year ahead. The automaker plans to launch several models and upgrades in coming weeks, along with broadening its expansion plan. Good morning, you're watching Markets Today with me, Shreyansi Singh, and over the next half an hour or so, we'll tell you everything that you need to know to start your day on the right note. In fact, let's begin with just that. Take a very quick look in terms of the handover coming in when you talk about the Middle East conflict, and it has indeed intensified further, with the United States really carrying out its 11th consecutive night of airstrikes on Iranian military targets. And you do have Iran activating air defenses. Handover coming in when you talk about the Middle East has indeed intensified further, with the United States really carrying out its 11th consecutive night of airstrikes on Iranian military targets. And you do have Iran activating air defenses over Tehran, as explosions were reported in certain parts of southern Iran as well. Meanwhile, Houthi targets against Saudi shipping, that's another story that you're looking at as well. They forced some oil tankers to also turn back, raising fresh concerns over global energy supplies and trade as well. So the escalating conflict is keeping markets on edge as geopolitical risks really continue to mount, and geopolitics also continues to change very sharply when it comes to US and Iran as well. In fact, on that note, Let's also listen in to some commentary coming in from US President Donald Trump, who's talked about renewing his threat to strike Iran's Pickaxe Mountain facility, also declaring that the United States is going to be targeting the underground site as well soon, and Washington really continues its military campaign. So that's the entire backdrop that this is against, but against that backdrop, let's go across and listen in to that bit of commentary.
Do you believe that Iran has moved nuclear centrifuges into Pickaxe Mountain? And when you say we're not done yet, what is left to finish?
Well, I think that they may have. We don't have it on record. All we do is read the fake news. You know, we see the news is so wrong so many times. So, you know, maybe this one they have right, but it's okay. It doesn't mean anything unless they have the material. You're talking about the centrifuges. Yeah, it doesn't mean anything unless they have the material. They don't have. We follow the material. That's where the action is, and we'll be hitting that area probably pretty soon.
Alright, then there you go. So that's the entire backdrop that you're looking at as well. Let's also talk about the global markets. First things first, let's talk about what's happening with oil prices, because that's where you've seen that 5-week, a very big high also, a 5-week high also coming in terms of that $91 a barrel level also being breached. That's something that you're looking at in terms of oil prices. And Brent has really posted its highest close since June 10th. WTI notched its highest close since June 11th as well. As you can see on your screens, 92.5 for Brent is what you're looking at. Of course, WTI is unchanged, and that's also something that's important to take a look at in terms of the update that you're looking at for the prices as well. And when you talk about Brent remaining in that technically overbought territory for a 7th straight day, that should tell you everything that you need to know in terms of everything that is happening with oil prices as well, given that escalation. So it's really the normal for the market that has really changed with these kind of prices really trickling in. And let's also talk about US markets as well in terms of the picture there as well. Now, you're looking at a little bit of a decent session across the board. Whether you talk about NASDAQ, S&P 500, Dow Jones, across the board, you're looking at a decent sort of performance coming in. Can't say the same about US futures though, because that's where you're seeing a little bit of weakness really settling in on certain counts when you talk about US futures as well. So a little bit of a mixed picture that at least you're looking at in terms of NASDAQ on the back foot with that 0.2% decline, some bit of a negative bias that you're picking up for S&P 500 and Dow Jones. But speaking of mixed cues, let's talk about Asia as well, because that's one story that's quite mixed at this hour. Now, you do, of course, have Shanghai and Kospi that are trading in sharp differences to each other. So 3.8% downtick coming in for Shanghai, Kospi about 5.5% higher. And same about Nikkei as well as Hang Seng as well, because a little bit of a mixed picture that you're looking at for some of the other Asian indices as well. 1.8% uptick for Japan's Nikkei, and Hang Seng about 0.8% lower as well. So largely, that's the kind of queue that you have, a little bit of a mixed queue, Sharad, that we have. But let's also talk about the F&O queues in terms of what they have in store. And it seems to be a little bit of a worrying backdrop, I'll be honest, because you do have oil prices at $92 a barrel. That's something that we were still seeking forecasts about just yesterday.
Exactly, you're right. Good morning, Shansi. So, idea is the very narrow range bound opening is expected. A little bit of negative sentiment bias is there, but to be honest, the volumes seems to be on the lower side. Now, why I talk about that is because the Nifty implied open, that's slightly negative coming in. But remember, the Asian tech heavy indices are doing well. A good recovery is at play with the semiconductor stocks, while the US futures are kind of stable, a very range bound. Nifty Bank, that's a stress is there on the Nifty Bank, especially after HDFC Bank's weak numbers had come, and the little bit of sell-off might continue today also. So a little bit of drag might be there in Nifty Bank also, and we'll get you an exclusive research on that. But for the FI's point of view, the concern is, or you could say, there is a little bit of relief in the cash market. But remember, the shorts are still at its highest levels almost in the series after snapping 6 days of selling in the cash market. Let's just pull out the FI shorts to give you that entire picture, and this is what I'm talking about. It's roughly 91%. So this is a little bit of concern coming in. So one side there is a cash buying, other side the shorts are there. So a narrow range bound trade is definitely happening, but no major global trigger has happened, and this is where the congestion zone lies at 24,200 and 24,300. Both of them call is something where the momentum or positions are being chased. But if this breaks, then we'll see some new technical levels coming in. Open interest gainers, I would like to just point out, stocks such as Astral, that's where a little bit of long build-up is happening, but will it sustain or not? That's the big question. Very narrow range-bound market, or even stock-specific moves you can see. But Q1 earnings, that's where the reactions will happen. But yes, do keep an eye on Aurobindo Pharma, positive development coming in. And there is a pharma-related announcement coming in from the generic exporters as well. But will it hit the pharma players, or will it be a good buy in the dip opportunity? That's what the time will say. But this is the overall setup coming in for the F&O segment.
Absolutely, and thank you so much, Sharath, for joining us with that entire update also coming in. So there you go, those are the F&O cues in terms of what they have in store for you. Let's also quickly pull up oil prices and talk about a couple more things right now. You do have crude oil exports from Saudi Arabia that have fallen for a third straight month in May as well. That's something that you're looking at. Other than that, of course, there is the oil market weekly storage reports that you're watching out for later on Tuesday from API as well as Wednesday. So that's something to watch out for. But in terms of what else to watch out for, there's actually Parth who's standing by with that entire list in terms of all of those counters that are likely to be buzzing away in trade and some on the downside as well. Parth, let's take a look at this list that you've got for us.
Yeah, sure. So a lot of interesting names are there in my watch list today. The first ones are ONGC and Oil India, which will be seeing some positive sentiment as crude oil has hit a new 6-week high on the back of uncertainty around the US and Iran tensions. The next one is Aurobindo Pharma, which has received an approval from Anvisa Brazil to manufacture biosimilars in its Hyderabad facility. The next one is Anantraj, which will be demerging its data center and cloud businesses into a separate entity called Ashok Cloud Private Limited. Then Gabriel India will be acquiring a 28.9% stake in HL Mando and for an amount of 2,200 crores, and also another 30% stake in HL Klamu for an amount of 935 crores. Then India Mart has announced that they will now be providing working capital financing to the businesses that are listed on its platform, and they have actually incorporated a new subsidiary for the same purposes with the name of India Mart Finance. Then VS Scientific has acquired a 100% stake in Bio for Italia for an amount of 17 million euros. Then CMEC will be buying a vessel with the name of CMEC Anant from HL Offshore for an amount of 674 crores. Also GRM Overseas will be in focus, where Acuite has upgraded its long-term rating on the company to Acuite A and a short-term rating to Acuite A1 on the back of improvement in the group's scale of operations. And the last one in the positive sentiment list is PC Jewelers, which has now repaid all the outstanding debt the company has from 5 of the 14 consortium banks, which is in line with the company's which is in line with the company's objective of achieving a debt-free status in the current quarter itself. Now, there are two companies in the negative sentiment list as well. The first one is Vedanta Oil and Gas, which has received a demand notice from the Directorate General of Hydrocarbons for an amount of $35 million. And lastly, the crude-sensitive sectors like paints, tires, packaging, and airplane stocks as well, they will be impacted because, as I said, that crude has reached a new 6-week high level. So these are the top stocks and sectors that you should have on your focus for today.
No, absolutely, and thank you so much, Parth, for joining us with that entire list. That's said and done. When you talk about the entire other gamut of stocks as well, there's going to be a bunch of stocks that are going to be in focus and in the spotlight on the back of their earnings. In fact, Jasmeet is joining in with just that list as well. Jasmeet, what have you got on that list?
Well, Shreyanshi, very good morning, and I have a bunch of stocks in focus on the back of that earnings. First, let's start with the thumbs up, the positive earnings. First one is IHCL. Well, this stock will be in momentum given on the back of a strong Q1, which we have seen coming from the strong demand as well as the premiumization of the segment. While the second one is JSW Infra, we are seeing the execution is on track for this particular counter and the volume growth is steady, which has supported the Q1 growth. While the third counter is Adani Total Gas, the overall revenue is a double-digit growth and it's up probably 27% on YOY basis. While the third one is Cyient DLM, we are seeing growth coming in across various segments of this particular counter, especially the aerospace segment is leading the growth. That's why the stock will be in focus, and also a strong Q1 for this counter as well. If you look at the MPS, we are seeing a good margin growth. The overall overall EBITDA margin stands at 34.3% versus 27 in the previous quarter. We see a good jump of roughly 800 BPS points over on YOY basis. If we look at the next counter, I have Canada, Rebecco, AMC. Again, we are seeing a stable operational numbers for this particular counter. And lastly, we have Suntech Reality. The overall collection for this counter has stayed strong. And if you look at the overall customer collection, it's nearly up 17% on YOY basis. If we look at on the thumbs down side, the stocks that will be in focus on the back of weak earnings, we have something like a Bandhan Bank on the back of that guidance cut by 40 BPS coming in for the ROA. Then second one is Anthem Bios. We are seeing the shipment delay has impacted the Q1 for this particular counter, and that's why this stock has had a weak quarter one. And last one is Sagility, the IT pack. We have seen that the overall weak quarter for the particular counter, given its seasonal impact on the Q1 and Q2. So overall enrollment business has gone down for this particular counter, and that's why we are seeing weak numbers for Sagility as well.
Absolutely, and thank you so much, Jasmeet, for joining us with that entire list of stocks. So those are some of the counters to watch out for. There's a bunch of others, and we'll talk about that in a bit. But before we do that, let's talk about the latest announcement also coming in from the US president when it comes to the entire pharma space as well. In fact, he's talking about how all generic drugs are being brought into the US are going to continue to have a tariff of 0% for a 2-year period of time, after which the tariff will be raised to 100% for a 1-year period of time, 200% thereafter. And in terms of the rationale as well, he's talking about how this is done in order to restore generic pharma production into America with a penalty to those companies that decide not to build plant and equipment within the stated period of time given to them. Now, the objective of this policy, Trump says that it is to protect the people of the US. The policy on patented, branded, or innovative drugs for that matter, which has been so successful, is going to remain in place as is. Now, he's also talking about pharma facilities that are being built at a level that was never seen before all over the US, and that for that matter, which has been so successful, is going to remain in place as is. Now, the entire tweet that he had as well, that's the entire announcement that he had in terms of the word coming in on pharma tariffs. So that's really a phased tariff plan that you're looking at in terms of some of your generic drug imports, keeping tariffs at 0 for 2 years before potentially raising them. In fact, Varsha is standing by with that little bit of an update also coming in with all of those details, and also potentially the impact that you're penciling in as well, Varsha, because it's a very, very significant announcement.
Yes, absolutely. And we might see some kind of, sentimental impact today on some of the generic companies, but you also have to understand that Trump has given 2 years window to build plants in US. But let's first see what is the news. One is the generic, what has been announced is the generics drugs entering US will face 0% tariffs for the next 2 years, and the tariffs could rise to 100% in third year and could further rise to 200% in thereafter. Now, the companies are being given, this is of course forcing drug makers to shift manufacturing to US, and the companies are given 2 years time to build US plants. Now, let's talk about the Indian pharma companies with major US exposure. You have Aurobindo Pharma. This is the generics exposure. Has 49% of revenue contribution coming from US, Lupin 42%, Torrent very less at 10%, Zydus at 40%, Gland Pharma 53%, even you have Dr. Reddy's at 38%, to Cipla, Sun Pharma, Glenmark and Torrent Pharma at almost 9 to 10%. Now, talking about companies having plants in US, because that what the peg is. If you have plants in US, you might, you don't want to have to pay tariffs. So Aurobindo Pharma will have a positive impact because they have a meaningful manufacturing presence in US. They've also acquired Lanet, which has a 60% capacity. This company, that is Aurobindo, is better positioned if domestic US production is incentivized and potential beneficiary if policy is implemented. Next, you have Sun Pharmaceutical Industries. Of course, they acquired US-based healthcare firm Organon. So technically they also have base in US. You have Senaris Pharma. They already have US manufacturing exposure, so not much impact on this company as well. Who could see potential pressure, I would say. A few companies, you have Dr. Reddy's, Lupin, Cipla, Zydus Life Sciences, though they have some kind of US manufacturing footprint, but they still depend meaningfully on India-based production. Hence, this might see some kind of impact, could face sentimentally negative reaction. You have Biocon, wherein biosimilars and generics are largely supplied from India and Malaysia. So hence we might see some kind of pressure there, and could see sentimental pressure if tariffs eventually materialize. Also, if I were to talk about the neutral impact kind of companies, you have Alchem Lab, where the company is largely dependent on Indian manufacturing and also doesn't have much coming from US. US generics are not a major profit driver for this company. And lastly, you have Torrent Pharmaceuticals, 9 to 10% of earnings coming from US, limited earnings dependence on US generics, and hence not much impact we are seeing there. Now, the important question is, can US really implement the plan? Around 90% of US prescription by volumes are generics, number one. Even US healthcare system relies heavily on low cost imports, and also if you see, building plants in US could take lots of years. Hence Trump has given that 2 years time window. But overall, we might see some kind of pressure today, but you also have to understand that we do have 2 years to set up plants in US, and majority of companies have actually that plan to set up the US manufacturing base. So I don't think so there will be much kind of impact in longer term in fact.
Absolutely, and thank you so much, Varsha, for joining us with that entire bit as well. So there you go, that's some companies that are going to be in focus as well, some that potentially stand to be under pressure, but there's still some time to go for it as well. Let's also talk about one stock that I mentioned earlier as well. You do have Bajaj Auto that reported a strong first quarter set of numbers. You're looking at the revenue, profit and margins also beating last year's performance as well. In fact, Puneet is joining in with that update coming in terms of the numbers, the volume-led growth, and what's really worked for this company, Puneet.
Well, thank you for that. So you also had Bajaj as well as TVS come through during market hours yesterday in terms of results. TVS was up 6%, Bajaj largely flat, but a very strong results nonetheless. So why was the price and the stock price largely flattish is the key question. Of course, in terms of the results, we saw numbers yesterday. EBITDA was up almost 45% for the company. Margins at 20.9 in a quarter where you've seen raw material price volatility continue has been one of the other key factors as well. Now, in the conference call, company mentioned that the export growth was strong. That helped in the forex as well as the INR depreciation part, and that followed through into the margin. So that was one of the biggest factors despite seeing a very high commodity price impact in this particular quarter. Management also said in the conference call that the highest export growth was propelled by volumes, but they saw 4.5% of revenue impact because of commodities. That's higher than the last 2 financial year combined, and hence the favorable INR depreciation helped in this particular quarter as well. Now I just want to actually skip to the brokerages part as well, because we spoke about the domestic motorcycles being very good, but Jefferies actually still continues to maintain a hold rating on the stock, because and despite having hiked the price to 11,500 versus 10,500 earlier, they feel that the EBITDA margins were very strong despite the cost headwinds that we saw, and the India's two-wheeler demand continues to hold up at this point of time. But the 2 new bikes that Bajaj intends to launch before September under the Pulsar brand, that's point number 1. And another 2 key brands in FY27, this will be completely new planes. They will have to watch out for the impact for that, because Bajaj has been losing some market share. They raised the EPS at this point of time, but still continuing to maintain a hold rating. Citi on the other hand maintains a sell rating on the counter. They've also hiked target price to 10,000 versus 9,300 earlier, mentioning that Q1 was above estimates, but challenges currently persist for the company. They're seeing a slew of model launches, but the domestic market share actually has been declining for the company over the last few years, especially in the last 2 to 3 years, at a time where TVS is outperforming. So hence, Street is waiting by for those launches, but they have high target prices but continue to maintain their view.
Puneet, and let's also talk about the brokerage view coming in terms of that outperformance as well, because the wind looks like it's going to be in TVS Motors sale yet again for a second day after that 6% rise coming in yesterday. Let's talk about the brokerage radar, bets also, some of that commentary coming in there.
Well, most certainly, because we've seen valuations, the most expensive for TVS amongst the two-wheeler makers. but specifically, brokerages have actually come out despite that and maintained the positive view. Now, this was largely on the back of an all-round performance by the company in this quarter. Jefferies has actually hiked the target price to 4,900 versus 4,500 earlier, maintaining that it's a beat and a raise, and that the street is still waiting by in terms of estimates because they feel that it's too low at this point of time. For them, the two-wheeler demand is going strong in both the India as well as the export markets, similar to Bajaj, but they feel they like TVS's improving franchise as well as the peak margin concerns. That is all history according to Jefferies, and hence that positive view coming through. Kotak Securities as well, has maintained an ad but has hiked target price to 4,150 versus 3,925. They are already building at a 10 to 11% CAGR in terms of the volume growth over the next 3 years, and they feel that the company remains well placed at this point of time to outperform the industry and continue gaining market share across key segments. So that was another positive view coming through. Macquarie as well as Morgan Stanley have maintained their outperform as well as overweight rating with a similar target price, unchanged target price for them. The one important point that Macquarie mentioned was that the capex will lend medium-term growth aspirations for the company, while Morgan Stanley has said that the international operations remain strong with the Norton brand launch expected in Q2. So all of those positive views coming in for both Bajaj and TVS, but there is more favor for the latter at this point of time.
Absolutely, and thank you so much, Puneet, for joining us with that entire update also coming in. So that's one stock to really watch out for, and looks like it's going to be buzzing in trade. But with that, it's a wrap on this edition of Markets Today as well. Thank you so much for tuning in. India Market Open up next.
The stage that has captured the pulse of leadership since 2006.
NDTV Profit Most Inspiring Leader of the Year Award goes to Mr. Anand Mahindra.
Celebrating visionary trailblazers and industry mega stars who redefine leadership every day. An unmatched legacy, unwavering trust, enduring credibility. NDTV Profit Business Leadership Awards 2026, 26th July, only on NDTV. India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform. Digital first. Virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
the hottest trends,
the smartest brand moves on our new show.
But wait, what do we call it?
The Hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Very good morning. You're watching India Market Open, and I mean, it's going to be one of those days where the focus is going to be on corporate results more than anything, because what's happening globally is anybody's guess, guys. So add to the complications, the Houthis have come in and said they're going to do a blockade only on Saudi Arabia. Painful for us specifically, because that route reportedly was being used for crude shipments coming into India, and 2 oil tankers have turned around yesterday after that blockade was announced. No one wants to mess with this threat from the Houthis. So.
And to add to those rules, you have Trump, who's come out and said that he's going to look at pharma tariffs.
So
whether they will come into effect or not
I
is the
think that's a
question.
lot of bluster.
Yeah, but then constantly there are jitters, right? No one is able to take a constant call over you, Alex, and that's the concern.
No, but that's true. That's true. I'm sure you're hearing that from money managers as well, and we're hearing that from money managers. No one is sure when things are going to turn. So let's start with what's happening with global markets. US markets snapped a 3-session losing streak, closing with gains in Tuesday's trade. So some set of good results has helped the US markets. Also a return in interest to what's happening in semiconductors. So let's pull up the indices if we can, and you will see the Nasdaq doing the best of the three, about 1.5% up. US futures also looking decent. So here's what's happening. Even as Brent is now crossing the $90 mark and all of these concerns continue, markets broadly are seeming okay. Even treasury yields are inching higher, but they have been fairly steady as geopolitical uncertainty grows. The 10-year is at 4.63%. Meanwhile, oil prices is a different story. It's climbed to the highest in 5 weeks as Houthis are now threatening a naval blockade of Saudi Arabia. Brent is above the $92 mark. Meanwhile, let's take a look at what US President Donald Trump is saying. He's renewed his threat to strike Iran's Pickaxe Mountain facility.
Do you believe that Iran has moved nuclear centrifuges into Pickaxe Mountain? And when you say we're not done yet, what is left to finish?
Well, I think that they may have. We don't have it on record. All we do is read the fake news. You know, we see the news is so wrong so many times. So, you know, maybe this one they have right, but it's okay. It doesn't mean anything unless they have the material. You're talking about the centrifuges. Yeah, it doesn't mean anything unless they have the material. They don't have. We follow the material. That's where the action is, and we'll be hitting that area probably pretty soon.
So it continues to be extremely uncertain. Let's pull up Asian markets this morning as well as the India implied. And good data coming in from Japan. You have Kospi, which is up about 5.5%, Shanghai 0.21% up. I wonder if we can pull up the Nikkei because their trade data is actually much stronger than what was expected, reflecting in the index. The Hang Seng down about 0.75% odd. The India implied showing a downtick. Once again, about 63 points in the red. Let me go across to Richard Harris, Chief Executive, Port Shelter Investment Management, joining us now. Richard, clearly crude prices are steadily inching upwards. There seems to be no real relief over there. Do you think tolerance levels are going to get thinner and thinner? Because equity investors are finding a way around this for now, but can that really last?
Well, it's obviously quite tricky. We've got the Strait of Hormuz issue. I don't think we're going to see any real relief there for a while. Yes, we may have a few vessels trickle through from time to time, and we may even indeed see a ceasefire. But I don't think we're going to see an awful lot of oil coming through there. At best, we might see oil coming through other areas. And because of that, I think that we're going to be in this situation for a while. The big issue behind all of this, of course, is what's going to happen to inflation. Because we've seen the oil price creep up. That's not particularly good. That oil price will creep through to other things like fertilizers, to plastics, all the products that we get from oil. But by the same token, we're seeing inflation expectations go up. And I think that's going to be a big issue for the future. So far, the markets aren't looking at that. But that, to my mind, is going to be the issue for the third quarter, fourth quarter.
The question, Richard, beyond that is a global macroeconomy and the bond yields, right? So you've got one eye on that as well. As things stand, at least for now, the initial macro indicators aren't looking so bad, whether you look at the US or you look at Japan, where the latest data has come through.
Well, that's right. You know, indicators are holding up at the moment. We're likely to see from the big companies earnings that look okay. I don't think anyone will be terribly surprised. I don't think the market will necessarily react. But we do know underlying that there is quite a lot of stress, not just on the American consumer, but consumers around the world with prices going up. So I think we have to say that the bias on interest rates is not going to go down. Maybe they'll stay flat, but I think there's more of a chance that they're likely to go up from now on. Now, this isn't going to happen immediately. I think we'll run through the summer okay. but clearly coming into October time, November time, could be a big period when investors are going to start looking at earnings. They're going to start looking at what's happening with AI and the earnings coming from there, and who are the winners and the losers. So I think that the picture ahead doesn't look particularly promising.
Richard, good morning. So if you're talking about the picture which does not look promising, what do you make of the AI sell-off that we saw in the global markets? Do you think it's a technical one, or do you think there are fundamental reasons behind it, number one? And my second part of the question is in terms of India. How do you think FIs are looking at the Indian markets now? Do you think there is still a negative perception, or is there something which is more neutral that is coming their way, and which are the sectors that they're looking at?
Well, two things. Yes, I think there was a technical reaction. After all, these AI stocks had done extremely well. So it wasn't surprised to see them come back a bit. And I think, the moonshot event, we've seen the DeepSeek and now moonshot, these AI models coming out of China that appear to be a lot cheaper and do nearly as much. I think they're probably in a different market area than many of the American models, but you have to say that because there's been such huge money raised in the US for the US type of AI models, sooner or later there probably is going to be some kind of reckoning where the market's going to say, how are they going to monetize it, and how are they going to monetize it quickly? So once again, we're looking slightly as like history repeats itself. The dot-com bubble. We knew the internet was going to be great, but we saw all of that performance put into prices in 99, 2000, and then a big pullback for about 2 or 3 years after that as the market digested who were the winners and who weren't. So that's the kind of model that I'm looking at forward in terms of AI. In terms of India, of course, I think investors are probably going to say, well, we're now looking at the white-hot leading edge of technology. And a lot of the industries in India, outsourcing, call centers, are now under threat from AI. So I think that what investors are going to be looking at in India is maybe rotating from some of those older spaces, which they were quite happy to be in because India was quite leading edge there. They're going to be looking for new areas. And those new areas, I think, are yet to reveal themselves in any size.
Got it. All right, Richard, thanks so much for taking the time this morning. Pleasure having you.
Thank you.
Let's talk about what happened in trade yesterday, and the Indian equity markets ending mixed. You had the benchmarks that lost about 0.2%. Foreign institutions very interestingly turning net buyer to the Foreign institutions very interestingly turning net buyer to the extent of 1,650 crore rupees. Domestic institutions selling to the extent of about 660 crore rupees. The Nifty 50 dropping about 0.2% and climbing just about 52 points from the day's low, so not too far off from the day's low. It was weighed down by heavyweight underperformance, and the likes of HDFC Bank, Reliance Industries, SBI were the top three losers. HDFC Bank losing 2%, Reliance Industries, SBI both losing about 1.5%. Those three heavyweights accounting for 100 points on the downside. So most of what you saw on the screen was because of those three stocks. The broader markets ended the day near the day's high, and you saw buying at lower levels that came through, and that really is a trend that you've seen in the recent past as well for the broader markets. The market breadth turned positive but was nearly equally divided towards the end of trade. The mid-cap index ending with gains of about 0.4%, the small-cap index close to that mark as well. Realty, auto, defense and metal outperformed. And the other end of the spectrum, you had PSU banks, likely on account of State Bank of India, which has the biggest weight, underperformed. It was the biggest sectoral loser, but you also had IT and FMCG that underperformed. We were watching this Herald on closing yesterday, where you saw just a couple of, or 3 or 4 stocks that were leading to a bulk of the damage.
And I think that's what happened day before yesterday as well, right? So I think the mood of the market is still consolidation, where there are a few which are trying to pull the markets lower, but a bulk of them which are still in the green but don't have that equal amount of weightage are trying to keep the markets just in firm control. So that consolidation has continued, and I think that's the flavor for today as well. The global cues have been positive, so that could probably prompt a steady or a mild positive recovery in markets. Wall Street's technology and semiconductor space has staged a firm rebound. If you monitor HDFC Bank and Reliance Industries closely, because these are the two stocks that even Alex is talking about to some extent that have been putting pressure in terms of where markets go, and technically as well, the weakness is what has dragged down the headline indices. So it's both of these counters which have played spoil sport. Now, the question is whether you should look at stock-specific action, because we're talking about Q1 earnings, and that is what is accelerating right now. Defensives like pharma and specific counters have continued to outperform the broader markets, so watch out for that space pretty closely. However, pharma as a sector will be in focus today on the back of the tariffs as well that Trump is talking about. Now, if that happens, you could see a sentimental negative impact that could be coming in terms of pharma. So overall, I think it is going to be stock specific, and from individual sectors, I think pharma is the one that we'll be looking at, because you have Dr. Reddy's also that will be reporting numbers today.
You know, I kind of agree with Alex on the point that there's bluster about tariffs. We keep seeing every few months. And then nothing much happens because the dependence of US, the United States on Indian generics is very high, and it's not something that can be covered in 2 years.
Exactly. What are you going to do? You say, okay, set up factories here. They do set up factories, and they say, oh, you know, operational challenges. Most of our production is back there.
A lot of Indian pharmaceutical companies are now setting up in the United States already to cover up that loophole or whatever you want to call it.
You know, I think the problem over here is where the moment they talk about tariffs, I mean, he's talking about it so that the capex has been made in the US by all of these generic companies, right? So the money does flow in there. However, the companies are not sure as to for how long and to what quantum should we actually allocate capex in the US markets, or should we look at the Indian markets itself? So for them also it becomes a very difficult situation, a difficult call to make, and that's where the issue is.
I don't think it's going to be that complicated. Just in my opinion, okay, you'll do a token. I think, okay, this is not based on what any company has said, but I think this is going to be playing chicken. You do a token setup of a factory over there, but a bulk of your capex is done over the last several years. You've been conforming with US FDA. You've been doing all of that at your facilities here. You put in the money. You've got the manpower here. Why would you shift any of that there?
Also, you now need to just run out the clock till November, till the midterms as well. So that comes into the picture as well. All right, in terms of factors today, it's the second consecutive day of decline that we saw, but still trading above key moving averages. Market remains in consolidation mode with a mildly positive bias. Broader markets continue to outperform large caps. The immediate range is at 24,000 to 24,400. Resistance levels at 24,245, 24,275, 24,320. Support levels at 24,145, 24,120, 24,070. In terms of what you should see as your strategy, above 24,300, momentum could extend above towards 24,400 to 24,500. Below 24,150, expect weakness towards 24,000. Below 24,000, trend turns negative in the short term. Momentum indicators remain neutral, suggesting consolidation. Resistance at 58,120, 58,220, 58,380. Supports at 57,795, 57,695, 57,530. Above 58,100, a potential move towards 58,500 to 59,000, and below 57,800, a risk of decline towards 57,300. So these are some of the key levels that you have to keep in mind before trade today. But let's add to that information and get a stock of what's happening in the F&O space. Puneet.
Well, thank you for that. It's yet again, you know, as we wrap up the weekly expiry yesterday as well, it was largely a very sluggish kind of a market performance, because we have seen pressure on the index and not too much movement, as you mentioned, the key levels, and those are the ones that we're watching out for, with a yet again implied open in the red. But for the Nifty 50, 24,000 and 24,200 are important levels. 24,200 is a weak support level, but you are watching out for it. In terms of the Nifty Bank too, now we've largely done with the private bank names. In terms of earnings, the public ones, the PSU ones will be now in focus. But barring SBI, the weight of the other PSU banks is smaller, so you will need additional triggers for the next leg of move to that 58,800 mark for the Bank Nifty. the foreign investors, have been sellers over the last 6 sessions largely. Today we are seeing a good buy number coming off almost 1650 crores, and the index long that we've been highlighting at 10 to 11 odd percent, is back again at that sub 10% mark at 8.5%. So almost 91% short positions yet being held in by foreign investors. There are two key aspects now on the put call ratio. For the foreign investors, it's come down to 1.1 from the roughly 1.3 yesterday. For the overall Nifty put call ratio, that is slightly elevated at that 0.81% mark, and that is visible on the index as well as the levels that we watch too. So 24,200, given the most near-term open interest level, has seen some active change as well, and hence you're seeing at the 24,200 mark. But when you look at the 24,500 mark, not seeing too much action there. Puts have also been reduced, and hence the put call ratio has come down. But largely a near-term index volatility will continue as well, and that's the F&O data that's showing in as well. For stock-specific action, you've seen on the gaining side of things, a bunch of them. Hyundai Motors seeing some build-up of longs. NHPC is the other one, not with too much rigor, but seeing those moves. And for the open interest losers though, the other one, if you can pull those up, Oro Pharma as well as Ultratech was one. Ultratech had good results. Shorts have been covered on this particular counter, but largely not too much wild moves on the stock. It was up 1.6%. So overall, that's the key picture coming through. You're seeing some on Sona BLW and the other ancillary plays, also shorts being covered and longs being built up. So that is a trend that will continue. But that's the F&O picture for today. The important levels that we keep continuing to track at this point of time on the benchmarks.
Okay, thank you so much for that, Puneet. All right, let's start with the watch list. That's truly the name of the game. When you don't know what else is going on, at least you have earnings to look at and get enough information on what companies are doing. Luckily, fair bit of good earnings. I'm starting with Cyan DLM. Good set of numbers, I would say. Revenues are up 34.3% at 374 crores versus 278 crores. EBITDA up 56.4% at 39 crores versus 25 crores. EBITDA margin at 10.5% versus 9% year on year, and net profit was at 16.3 crores versus 7.5 crores. They've recorded an order book at 2,599 crores, and order intake stood at 551 crores. The book-to-bill ratio is 1.5 times. In the key commentary, they've added AI and data center to 2 new business opportunities. That's a hot space. We'll have to wait and see if the street rewards them, because the stock was already up yesterday. Currently, they have key 4 sectors. That's aerospace, medical, industrial, and automation. Growth has been absent last 3 years. This is the first quarter of decent revenue growth. Brokerages and street are still wary of growth sustenance. So you will see some of that commentary coming in. For example, Kotak Securities has downgraded the stock to a sell from a reduce, but hiked the target price to 430, way below what the current market price is. They're saying strong execution, delivery on newer segments remains key. Results are in line, and strong execution is offset by lower other income. Order book quality has improved. Pipeline indicates continued momentum. Long-term strategic pivot towards expanding industry coverage and offerings. So we'll have order book quality has improved. Pipeline indicates continued momentum. Long-term strategic pivot towards expanding industry coverage and offerings. So we'll have to wait and see what happens with this company going forward as well. I'm looking at Indian Hotels next, and I would say also a good set of numbers over here as far as Indian Hotels are concerned. Let's give you some of the key highlights first before we get to anything else. Revenue growth was driven by RevPAR growth. Operating EBITDA margin expanded by 54 basis points for the year. Management fees grew 26% as well. Positive demand environment has continued into Q2, with July trending ahead of Q1. Core numbers: net profit up 26.8%, revenue up 14.6%, EBITDA up 16.8%, and margins at 28.8% versus 28.2%. So pretty flat there. Domestic same-store hotel RevPAR has risen 14% year on year, and room revenue has expanded 16%, while F&B grew 9% for the year. We'll be speaking to the management ahead in the day as well, so watch out for that. Just taking one note on Indian Hotels from Morgan Stanley, they've maintained an equal weight with a target price of 783. They're saying Q1 growth momentum to continue in Q2. They've maintained its double-digit revenue growth guidance for FY27. So that's the second one on my list as far as the watch list is concerned. Let's go to Lenskart as the third, and this is a brokerage note. BofA has maintained a buy with a target price of 575, and the take they've taken is about seeing beyond India. They're understanding the overseas operations better. Overseas business, not an agency, but a core. Local execution is crucial for sustained performance, and different markets are operating at different stages of maturity. So their focus is essentially on the overseas business, which is why the focus on Lenskart this morning.
Interesting list. I want to start actually with not such a good number, and that is Bandhan Bank. And this is on the back of not a terribly impressive NII growth. The net interest income, which is the core income of the bank, growing just about 6% or so. Asset quality has improved, and that has brought credit cost lower. The provisions have remained more or less flat on a quarter-on-quarter basis. The credit growth has been led by their non-emerging entrepreneurs businesses, essentially their micro entrepreneurs business. The non-EEB portfolio forms about 2/3 of their total loan book. The secured portfolio has grown by as much as 27% and constitutes about 57% of advances. So they seem to be focusing on improving the quality of their lending, and that is having a bearing on the pace of lending. They've also had to push out, and this is what I've read in a couple of brokerage notes, their return on asset expectations forward, in that they're currently at the 1% mark, and in order to have it improved, they're going to have to actually wait for some more time. The net interest margin remains stable at 6.2% despite elevated funding costs, and they're cautious on the micro lending book and that growth as well, and they continue to prioritize asset quality. So they've missed on the numbers with regard to the net profit, though it's an increase of as much as 35% to 502 crore rupees. So watch out for Bandhan Bank. It did see a bit of a drop in trade yesterday. Pull up the intraday chart. I'm just curious. Towards the end of trade, I think it did fall. Yeah, there you go. It did see a bit of a crack towards the end of trade. So it might have a bearing on the stock this morning as well. MPS, this one stood out. I was curious. I didn't know what the company did, so I looked it up. They're in the global B2B digital platform space, and they offer content solutions. They have a few AI solutions that they've talked about on their website as well, but the numbers look pretty good. Strong reported revenue growth, the highest in fact in 5 quarters. They've also seen a pretty sharp margin expansion to 34.3% and practically 940 basis points higher, in fact, quite significant. You had the fact that it aims to hit 300 crore of EBITDA in FY27 from 236 crore rupees in FY26. This is a guidance that they've given in their quarterly presentation or their investor presentation, and they've hit 25% of their mark. The reason they're confident is that historically they've seen a better performance in the second half of the financial year. So they feel confident enough to set that target of 300 crore in the way of full year EBITDA. The profit growth is as much as 43% on account of that improvement in the EBITDA margin. Suntech Realty is the last stock on my list, and it's seen a pretty subdued revenue growth, but there's a substantial margin expansion, and that has aided bottom line. In fact, the margin has expanded over 900 basis points to 35%. EBITDA growth as a result of that has come in at 39%. And one more in the realty pack that has actually posted a decent set of numbers, continuing to make you wonder what happened to that one. I think Keystone didn't have the best quarter, right? But you're trying to figure out what's working. There seems to be something on the bottom line side or on the margin side that is working for quite a few this time.
And the other thing what's happened is, Alex, in terms of real estate, where it's the new launches which have aided growth this time around.
The mix is good.
The mix is absolutely good. Now the key is the money that they've garnered over there, is that reflecting on the collections, because a lot of them, the collections have not been that good. So that's the dilemma here. However, because of the new launches, you're seeing that uptick coming in. Margins are getting protected, which is a good thing as well.
Yeah, so therefore revenue growth is not there, but the margins are expanding, and so the bottom line is expanding.
Correct,
Okay,
exactly.
cool.
So it's an interesting mix that we are seeing in terms of real estate. You know, on my list, if I have to look at the stocks, Anantraj is the first one. Again, I'm talking about a real estate pack, and this is on the demerger. Now they're going to demerge the data center and the cloud business. The board has given them the approval to create 2 independent listed companies. This is going to be interesting because we need to understand whether the valuation will come up, what's the valuation they're going to look at in terms of the real estate business versus the other data center business. Now, Anant Raj will retain the real estate and the infrastructure business, and Ashok Cloud, that will house this, data center, cloud services and AI infrastructure business, and that is the company that will be listed separately as well. Now, shareholders will receive one Ashok Cloud share for every one Anant Raj share that they hold, and the demerger obviously will be subject to regulatory and shareholder approval. If you talk about this digital business, it accounts for a turnover of close to almost 145 odd crores, which represents around 8 to 9% of Anant Raj's total combined turnover as on the 31st of March 2026. And the reason why the promoters have decided to do this is so that they can garner the kind of valuations the data center and the AI business can actually get basis what the peers are getting, because currently the valuations are more towards the real estate side of the business. So it's going to be an interesting story to watch out for. The stock as well ended near the day's highest levels with gains of 1.5%. The other one on my list is Sagility on the back of earnings. Now, it's a seasonally weak quarter if you have to compare on a sequential basis, because your EBIT margins are down nearly 200 basis points. Your IT services, the organic constant currency growth is coming at 5.1%. The seasonal healthcare enrollment business, that is what has impacted revenues this time around. 27 odd clients is what they've added. CareSeed acquisition has strengthened the healthcare offerings as well. And the AI-led healthcare services and managed services, the demand over there remains strong. Now, revenue is down 3%, your EBIT is down 14%. The EBIT margins are down 200 basis points at 15.8% versus a 17.8%, and your net profit is down nearly 16%. However, you have a Jefferies which has maintained a buy with a target price of 54. The stock is currently trading at levels of around 41, 42. They're saying that the outlook is strong, the execution is steady, and the growth outlook remains strong given the healthy order book and the existing accounts and cross-selling synergies that they have with Broadpath and CareSeed. They are the ones which will probably lead the growth. So currently, because of seasonality, there is weakness, but the brokerages are saying that the outlook is pretty strong. And if you have to look at a year-on-year basis, there is a little bit of strength there as well. So it's going to be an interesting one to watch out for. And in fact, we will be joined by the management of Sagility as well at 9:50 a.m. That's Ramesh Gopalan, Group CEO and MD, to discuss more on this. And very lastly, Gabriel India is the last one. Now, look at the numbers, very mixed in terms of where the earnings go, but I think the street is going to ignore the earnings this time around because they have announced acquisitions as well. The two acquisitions that they have announced are both EPS accretive. So first up, they've said they will be buying 28.99% stake in HL Mando Anand from promoter, and this is an inter-promoter transfer as well. The value is around 2,231 odd crores. It is a related party transaction because the stake is being purchased from the promoters, which is Asia Investment Private Limited. The company has said that they're looking to consolidate Anand Group's automotive businesses under the listed company, and HL Mando Anand India makes steerings, brakes and suspension systems for passenger vehicles. Now, the acquisition is going to be subject to regulatory approvals as well. Now, what they've said is that they will pay 350 odd crores in cash for the acquisition, whilst the remaining 1,880 odd crores will be settled by issuing preferential shares to Asia Investments. And as a part of the transaction, Gabriel will issue almost 1.4 crore shares to Asia Investment at an issue price of 1,305 per share. Post-allotment, the newly issued shares will represent 7.5% of Gabriel India's expanded share capital. And HL Mando Anand is a joint venture between South Korea's HL Mando Corporation, where HL Mando holds 71%, whereas Asia Investment owns remaining 29% stake in the JV. So this is going to be interesting to watch out for, because the kind of consolidation that they're looking at and the acquisitions that they're talking about, this is going to be EPS accretive as well from a business perspective. So watch out for Gabriel India.
So Gabriel known for shock absorbers in the two-wheeler space, right? And now the Anand Group, I think this has been happening.
Yes, this is the unlisted entity that they have, and because they want to start consolidating in the automotive space, that's the reason why they are doing this entire transfer from the unlisted entity to the listed entity.
And this has been going on for a year or so, right? This whole plan to consolidate in the Anand Group.
You know, on Anant Raj, just as you were going to that
story, Hiral. I'm wondering, the excitement about that stock in the last few, I would say even a couple of years or even a few months, has been the data center play and that part of it. Now that they are going to demerge it, is that going to continue to be seen as a positive? Is just the pure real estate play going to be so interesting? So I think that's one to watch out for as well. So a lot to unpack for you. We're taking a very short break. We're coming back with Kush Bora, Parag Thakkar and all the top stocks of the day. Don't go away.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
The stage that has captured the pulse of leadership since 2006.
NDTV Profit Most Inspiring Leader of the Year Award goes to Mr. Anand Mahindra.
Celebrating visionary trailblazers and industry mega stars who redefine leadership every day. An unmatched legacy, unwavering trust, enduring credibility. NDTV Profit Business Leadership Awards 2026. 26th July. Only on NDTV. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a meeting of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV.
Welcome back to watching India Market Open. Let's pull up the implied very quickly, and you're going to see maybe a bit of a dull day in the market. So will it be an 80-point gap down with Brent at 92? I wouldn't be surprised, but I must tell you, we here at NDTV Profit are very, very excited about what's going to be happening this weekend. The Business Leadership Awards will be front and center. Finance Minister Nirmala Sitharaman will be giving out those awards. We have a stellar jury which has selected the winners. It's the who's who of corporate India. That entire show will be live. Don't forget to watch it. We'll keep reminding you about it over the next few days as well. Parag Thakkar and Kush Bora in our studios this morning. Very warm welcome to you. Especially congratulations to everyone who made it through the terrible rains this morning. It was quite an ordeal. Mumbaikars hang in there. But it's not raining good news in the markets, Kush.
It's not, but it's not so bad also.
Yeah. I mean, 92 on the Brent.
Yeah.
Nothing stellar and exciting to celebrate. No real inherent strength being seen. I mean, we can just take at least some relief from the fact that और नहीं टूट रहे हैं.
Precisely. That's the point. I won't be surprised अगर थोड़ा और down day होगा तो. But I know the football World Cup just got over. But just to give a reference, ये थोड़ा सा ना own goal वाला scene हो गया. Banking and all was something that everyone was banking on. Pardon the pun. ठीक है. लेकिन जो results थोड़े से disappoint किए, that could perhaps temper, the momentum in the markets. And as we are seeing right now, we take heart from the fact that the supports aren't being tested yet. Just yet. I won't be surprised if we have a down day today, 80 points on the gift right now. It could slip a little lower.
Own goal किसका था?
हमारा ही ना, HDFC Bank and the rest of the pack. थोड़ा पॉजिटिव दे देते तो यहाँ से ब्रेकआउट आ जाता बहुत क्लियरली.
No, so own call हमारा क्यों? You mean the companies itself?
No. So what I mean is that for the most part we've said that the Indian markets haven't rallied because of a lot of external reasons. हमारे growth reasons भी थे, but we were setting up well.
Yeah.
अगर रिजल्ट्स अच्छा आ जाता तो चल जाते. तो इस बार हमारे रिजल्ट्स के रीजन की वजह से ये ब्रेकआउट नहीं आया.
Yeah. No, so I think there was a bit of overt optimism about not having any impact at all on companies' performances, and this is what happens when you're depending so much on one hero. Right, the amount of focus on HDFC Bank and the amount it pulls. I was seeing someone's calculation that was done that HDFC Bank could be responsible for 40% of pulling down the Nifty over the last few months. This is a back of the envelope calculation. I'm not doing it. Someone else has done it. But that kind of overt dependence on one or two players is what is the problem with us.
That is what is keeping the bank Nifty from actually breaking out. If you see the rest of the pack, they've had their fits and starts, they've had their moments. In fact, ICICI Bank's been an outlier, right? It's just because of this heavyweight not really doing its thing, not coming to the party, that is actually spoiling the whole setup. Also, by the way, one of the reasons why I see that today could be a down day, a rather interesting one. For the last couple of sessions, we've been talking about how the PCR has been very heavy, and that is why Nifty might not go up. In fact, that just might have been the reason why the Nifty didn't crack big time. You know why? Because just ahead of the results on Friday, there was massive put writing on 24,000, 24,100, 24,200. Now with the expiry yesterday, weekly expiry, that's been reset. And you're seeing shorts being built on Nifty and on Bank Nifty. You're seeing call writing returns. So 24,000 call, 24,200 call option has started to see some writing. So I think immediate upsides on Nifty and Bank Nifty are a little unlikely. Take out from the fact that SMIDs are now coming to the party once again. Don't look at the index. The breadth is okay, still in favor of advances. But once you see any kind of pickup in that for a day or two, that's when the portfolios will start to look good. So for now, if you have long positions on Nifty, continue to hold 23,800, 24,000 remain as stop losses. On Bank Nifty, 57,300 remain as stop losses. I wouldn't suggest creating fresh longs on Nifty and Bank Nifty just yet.
Okay, and what about individual stocks? Because through the week so far, at least the first couple of days, you've been a little cautious.
I continue to remain cautious, but that's turning into slight optimism, largely because not what these small and the mid-cap indices have been doing, but with the kind of breadth. The declines are still in that 13 to 1500 range, not to my comfort, but at least the advances are higher, so I'll take heart from that. So things starting to improve, but we haven't seen that kind of a breakout that I would love, especially in the SMID segment. So caution remains, but yeah, the tide slightly turning in the favor of starting to bank on stocks. Today again we've got two stocks for you, both of them on the long side. One of them is Karnataka Bank, one stock that has not really participated in the recent up move, but has been consolidating, ended at the high point of the day above that 275 280 resistance level. So could have a good day today or in the coming days. So 289 300, these are your targets. 272 is where you keep that stop loss. The other one is FIAM Industries. Here too we've seen good traction, good volume accumulation in the last 4 sessions. So for targets of 2405 and 2480 with a stop loss at 2260. Just a quick update on this one, which is Gujarat Fluoro. The pick of the week, the weekly pick, has gone on and hit target 2 in just 2 or 3 sessions, right? So 10% upside on this one. If you have, by the way, you could book partially right now, hold the rest with 45, 45, 50 as your trailing stop loss, given the kind of closure that it had and the kind of volume build up it's still seeing. Or if you just want to have an early weekend, book all of it and enjoy.
Book all of it and enjoy. Okay, we have a deep dive on Gujarat Fluoro coming up that our research team has put together ahead on the show. So stay tuned for that. That will be an interesting one to see. Parag bhai, so much to unpack. I'm going to start a bit by getting your view on Bandhan Bank. Okay. Because I think that could end up being the accident of the morning and will be a pain point. I think that's something that Alex highlighted in his watch list as well. But essentially, they've cut their guidance. Their return on asset guidance has been cut by 40 basis points to 1.2 to 1.4% for FY27. Return on assets guidance was cut due to macro uncertainty and margin pressure. Margins can be seen, can see an impact of higher funding costs. earlier aspiration of NIMs at 6.5% by Q4 FY27 has become challenging, is what they are saying. Now, I have two questions. Is this a Bandhan Bank problem? Is this also indicative of what maybe that space is seeing? Because they're talking about external factors that have caused them to reduce their guidance. And what is the impact you're expecting on Bandhan?
So the stock has already rallied 19% I think in last. So I would say that there will be a good correction because ROA guidance is very steep. ROA cut guidance is very steep. And it is led by NIM and OPEX. So OPEX is definitely Bandhan's own thing, right? They are investing behind technology and all, so they are cutting. But that they should have figured out before, right? Before giving that higher guidance of return on assets. Because technology investment is not suddenly you decide to do, right? So that is one thing. And of course, the other thing is for everyone that cost of funds have gone up. We have seen NIM compressions in HDFC Axis also, which can happen with any other bank, which is Bandhan also. So I would say that it is partly their own thing and partly, but I think the earlier guidance which they had given was very, very, I would say, optimistic.
But there is also the statement that they've made on going slow on EEB, which is their emerging entrepreneur borrowing, basically lending to micro companies, right? And they're saying that they want to focus on secured. So in the quarter gone by, 27% growth in the secured book. They pushed it to 57% of the total, but it's still about 43% that's unsecured.
Absolutely. So that is why I always say, right? I always say that I always prefer secured lenders.
Sure.
Unsecured lending gives you very good profits at the upfront. For 2-3 quarters look phenomenal. Then there is accident after some time. So Bandhan has already gone through accident. Now it was recovering. Actually out of that accident, but now they have because that guidance which earlier they gave was very, very optimistic, I feel. Now they are coming to realistic things.
So if there is a cut today, would you look at accumulation? It's a stay away all through and through. Kush, on the charts as well for Bandhan?
So Parag, just as data, in the last 4 months, the stock is up nearly 48%. So the run-ups already happened, and if there isn't a follow-through in terms of news and in price action, I think 190, 195, these are the support zones, could well come into being tested today. I wouldn't really buy into it just yet.
190, though, we might see that at the start itself.
Perfect.
Based on
in terms of the guidance cut that has come in. But if you have to just look at the financials, another company that I want to talk to you about is M&M Finance. The numbers are very strong. I mean, if you see the chart in terms of yesterday's session, a good spike that did come in towards that last 20 minutes of trade. Are you seeing further strength, Kush, in terms of the charts today as well?
This is a very interesting setup. Despite the spike that we saw yesterday, it's not close to overheating, volume backed up moves, 200-day moving average taken out. My only thing is that it struggled around the 200-day moving average for the good part of the last 1 month. So if it is able to sustain above the 330, 335 levels, continue building onto them, then I think positionally this still remains a good buy. So I wouldn't buy into it today, but with a stop loss around that 330 mark, I would actually hold M&M Financial Services. This is a good setup.
Okay, so M&M Financial Services, a good setup on the technicals as well. But pharma as a sector that is going to be in focus, in my opinion, and this is because the Trump administration has proposed a phased tariff plan on generic drug imports, keeping tariffs at 0 for 2 years before potentially raising them to 100% and later to 100%. Varsha is here with all the details and the impact. Varsha, we've spoken about this quite a lot of times in terms of tariffs are coming, tariffs are not coming in. Again, we're hearing about 100% and then a 200% in a phased manner. What does this announcement actually mean for the generic players in India, and which are the companies that stand to get impacted?
Yes, so first of all, yes, we might see some kind of sentimental impact today, considering the tariffs that have been announced by Trump. Now, overall, if you see tariff could rise to 100% in sentimental impact today, considering the tariffs that have been announced by Trump. Now, overall, if you see tariff could rise to 100% in year 3, and tariffs could further rise to 200% thereafter. So no tariffs for first 2 years. So Trump is actually giving a window to pharma companies to go and set up their manufacturing base in US. Now, also let's talk about pharma companies with highest US exposure. You have Granules India, wherein 76% of contribution is from US. You have Lupin at 42%. 10%, Torrent Pharma at 10%, very little contribution, Zydus Life at 40%, Gland Pharma 53%. So whole lot of companies have actually presence or a contribution coming from US. Now let's talk about companies which already have plants in US and might not have that much of impact. You have Aurobindo Pharma, wherein they have meaningful, manufacturing presence in US, a better position if domestic US production is incentivized, and they are the potential beneficiary if policy is implemented. You have Sun Pharmaceutical Industries, wherein they've acquired US based healthcare firm which is Organon, so we might not see some kind of impact there. Ceneris Pharma has already US manufacturing exposure, could gain from preference for local manufacturing. Which all companies might see some kind of pressure? One is of course Dr. Reddy's, you have Cipla, you have Zydus. Why? They do have US manufacturing footprint but still depend meaningfully from India based production and could face sentimentally negative reaction over there. Biocon, if you see, biosimilars and generics are largely supplied from India and Malaysia, so you have some kind of pressure there also if tariff eventually materialize. There will be neutral impact on two companies. One is of course Alkem Pharma, wherein largely dependent on Indian manufacturing. US generics is not a core problem for the company. Torrent Pharma, very limited earnings dependence on US generics, almost 9 to 10% coming from US in FY26. So overall, yes, we might see some kind of sentimental impact, but Trump has given that 2 years of window to go and set up the manufacturing base in US, and many companies are actually setting up their base in US.
All right. Thanks so much, Varsha. In fact, we were having this conversation this morning, Parag Bhai, and we were debating between the three of us whether or not these companies would actually go ahead and set up meaningful capacity and shift manufacturing from here to there. So first of all, from a company's perspective, we already put the money in here. They've got legacy here, and they've got employees here. And from the government's perspective, let's not forget that this is a major export from India. So why would the government be okay with that taking place as well? So do you see a material shift taking place, or do you see any cuts as opportunities to pick up selectively?
So my view has been, Alex, that I like domestic formulation, branded formulation like Torrent Pharmas of the world or Mankind's of the world or Emcure Pharmas of the world. We have discussed these stocks, and Torrent Pharma has now gone up too much, so let's leave that. But so if there is a big fall due to this announcement, sentimental fall in stocks like Mankind Pharma or Emcure Pharma, it will be a great opportunity to buy, in my view.
But you would still stay away from the
generics. See, first of all, stocks like Aurobindo and all have already gone up. Lupin, for example, has already gone up. Only the stocks which have not gone up is Dr. Reddy in this pack. Zydus Life has also done reasonably well. So there is no need to buy right now in these stocks, even if they fall say 3-4%. There is only one stock, Sun Pharma, which you can buy if there is a dip, because Sun Pharma US generic business hardly gets any value also, plus it is only 20% of the revenues. The major profits are domestic and specialty.
So, okay, the question over here that I have is, Parag Bhai, this announcement does somewhere become positive for companies who have a footprint in the US markets. So for example, you have Aurobindo, which has presence in the US market. You talk about a Zydus, they have presence in the US market as well. Dr. Reddy's, Lupin, Cipla, these are few of the names which have manufacturing bases already set up in the US market right now. Does this become a game where it becomes Indian companies who have a base, in the US markets probably will not see that kind of a negative reaction. However, you have names like Torrent Pharma, Alkem Labs, who are exporting to the US, but they are fully dependent in terms of Indian, manufacturing. Biocon, which is dependent on India and Malaysia to that extent. So these are the ones which stand to lose then.
I would say that, it depends on company to company, like which company has which plant where and how much it contributes to the revenue. You might be having a US plant in US, but that might be contributing very less to your total US revenues. So you have to go company by company. But generally, in my view, it is the US generic space as such has rallied. So I would stay away from it, and I always loved domestic branded formulation franchise, which is mainly chronic, and so that is why my picks are very clear in this space right now.
Okay, all right.
On the charts? Can't miss that one, because 15% is the kind of returns that the pharma index has given in 2026 so far, so it is one of the outliers, and you are seeing that defensive play which is already coming in there.
My question is tariffs. What tariffs? They are going to be implemented 2 years from now. Who knows 2 days later what post and what changes are going to come about, right? I am going to completely ignore this news. Plus one to Parag bhai कि अगर इसकी वजह से किसी भी stock में dip आता है, then it's a buying opportunity. My shopping list on this one's very clear. Shilpa Medicare, Ajanta Pharma, these we've spoken as the top picks. Senores is at 20-day moving average, has a tendency of rebounding from those levels. So yeah, I mean, any dip because of this in any of the pharma stocks should be taken as an opportunity to go along. Very clear.
Yeah, I agree with you. I think this is a bit of a non-issue when it comes to the health of pharma stocks. We've seen it play out time and again. What is definitely something which should be on your radar and plays out time and again is whatever is on Sumit Sarkar's list. When he presents what he's heard on the street. Sumit, what do you have for us this morning?
Well, given that it's earnings season, the first set of stock is based on that: IndusInd Bank, Bajaj Finance and Manappuram Finance. Now there are buy flows on the large HNI and the PMS desk, and dealers are expecting strong set of numbers from all the three companies here. For Paytm, there are sell flows on the PMS desk. There's a buzz of a potential block deal that could happen very soon, and hence, despite a strong set of numbers, the stock was down nearly 3.5% in trade yesterday. For Thermax, there are buy flows on institutional desk. Dealers are expecting a positive note from a broking firm to come in very soon. And couple of stocks that we did indicate earlier. Bandhan Bank was part of a segment yesterday where we did indicate that weak Q1 earnings is something that is expected. And yesterday on the conference call, the management has cut their ROA guidance for FY27. So that is one thing that could see a negative reaction in trade. And Gabriel India was part of a segment June 19, a month back, where we did indicate that there is some M&A activity that is in work which could be positive for the counter. And yesterday they have announced some stake acquisition in one of their associate companies, which as per analysts could be EPS accretive and positive for the stock. So keep an eye out for Gabriel India as well.
Okay, Gabriel India and Focus. Gabriel India has also reported. Is that something that you have seen, Parag, by Gabriel India on Focus?
So the stock looks expensive right now because right now the full consolidation impact we have not seen in profits. Once they fully consolidate, we'll get to know what is the P multiple and all. But whatever they are doing is absolutely minority shareholder friendly. Because they are consolidating all unlisted entities into a listed entity, and so all the profits will be here, or entire focus will be here. So it's a great thing which they are doing, and the Gabriel shareholders have been rewarded handsomely. The stock has moved up from 250 where I was watching it, and now it is 1488. So it has done phenomenally well due to this consolidation.
Okay, we still have Sumit with us, putting the focus on GAIL after a key regulatory change from the Petroleum and Natural Gas Regulatory Board. Sumit, what are you hearing?
Well, the notification has come in, and the clear understanding of this notification is that the earlier clause which required GAIL to separate its transmission and the marketing business has now been omitted. So PNGRB has omitted this clause of legal separation of the transmission business and the marketing business. Now, as you know, GAIL and the marketing business has now been omitted. So PNGRB has omitted this, operates in both the businesses. They have a transmission business to the extensive network of pipeline that they have across India. And when it comes to the marketing business, they also have that because they get gas from various other countries and sell it in the country. So earlier, as per PNGRB, there was a conflict in both the businesses, and hence there was a requirement to separate both these businesses. But the recent notification says that there is no such requirement, and going forward, GAIL can operate as a full entity which will have both the transmission and the marketing business. So a major overhang goes out for GAIL India at this moment, given the fact that they do not have to separate the transmission and marketing businesses. Now, why this was an overhang? Because as per GAIL, both the businesses are complementary and need to operate together, because transmission business provides a steady flow of income while marketing was a bit of volatile business, and hence both these businesses remaining together was important, and that now goes ahead for GAIL, and hence a major overhang moves out for the company.
Got it. Thanks so much, Sumit, for that. And Parag bhai, your initial thoughts, he's explained it already in a way that I think everybody can understand if they don't track the oil and gas space specifically. But your thoughts on GAIL?
No, so I'm sorry, I did not listen to what he said, so I'll pass it. But the stock is undervalued, but it has PNGRB related things. They did not agree to the tariff hike which they asked for. That was the overhang. So if that overhang is going to get removed, and if there is some positive there, the stock can get re-rated.
No, so I want to talk to you now about the two-wheeler majors. Bajaj Auto and TVS have both reported. We all know how you feel about Bajaj Auto. I think a lot of that has been proven correct. Unlike another stock that you really like, and the results may have not been up to par. But we'll talk about HDFC Bank in more detail at 9:30 this morning. A quick reminder there, we're going to do a deep dive on HDFC Bank. We'll have Parag Thakkar, we'll have Abhijit Divanji, and we'll talk about what's ailing India's largest private bank. But to talk about Bajaj Auto over here, I think they've lived up to expectations. How do you now look at a Bajaj Auto versus a TVS?
So I'll say, see, both are great companies. So I'll not put to one company versus other company. The fact that today I'm buying Bajaj Auto, this is because Bajaj Auto trades at cheaper valuations. One, Bajaj Auto has higher net cash figure, which is around 20,000 crore as of June, which will now get depleted due to buyback. And third, most importantly, is many people have ignored this fact that when there is a buyback and promoter can get a check of 3,000 crore at 12,000 rupees, which was 20% above that prevailing price, and he is not taking that check of 3,000 crores, right? One of that is a tax reason, because promoters are taxed heavily when they tender in the buyback. But the second reason is that the intrinsic value according to promoter is much higher. And that is proved, right? Exports and EV, I'll tell you, a lot of people focus on the domestic business, domestic two-wheeler business. Now that is just 25% of the overall business. 40% is exports, where they make more than 20% EBITDA margin, which is their company average margin. So, and that exports is roaring. 2.5 lakh vehicles per month they are saying, and Mr. Rakesh Sharma has on record said that it can go up to 3 lakh per month if the logistic issues.
So we are going to be speaking to Mr. Rakesh Sharma today. What is the one thing that you'd want to know from him?
So basically, see, I'll tell you, I am completely happy with the company. I want to share it with him. With the way they distribute money to shareholders is crazy.
Compliments are aside. We have to ask questions.
So I'll come to that. Most of the domestic investors or analyst community who are negative on Bajaj Auto are just due to one reason, which is domestic market share of two-wheelers, right? So if they are, and they have said on the call that they are going to have 10 launches by March 27. And within next 2 months also, you will see many launches in 125cc to 160cc, which are refreshers, right? So they are going to take action on that. What is their expectation of the market share increase once they have taken these actions is something which everybody would want to ask. Although it is irrelevant according to me, because it is only 25% of the revenues and hardly any profit comes from there. From where Bajaj Auto makes money? Exports. Right now, three-wheelers, domestic, three-wheelers, they are saying that they are making more than double-digit EBITDA margin in EV also, right? In Chetak, they are EBITDA positive now. And in Chetak and electric three-wheelers, they are actually facing capacity constraints. They have to
You buy
expand.
right now at this rate?
Yeah, I am a buyer.
Okay.
On this table, I can buy.
Okay. Yeah. All right. Now that is even one step beyond table thumping. That's table buying. Puneet joining in with what brokerages are saying on Bajaj Auto. Are they reflecting, Puneet, the optimism we're hearing from Parag Thakkar this morning?
Well, most certainly, a few of them have high target prices, and this is after a really long time, right? Because we've seen, as Parag mentioned, that the domestic market share continues to be under pressure, and that has been a pain point for analysts as well. But Jefferies has hiked the target price today to 11,500 versus 10,500 earlier, and they feel that despite a very severe commodity headwinds that this quarter faced, we've seen almost 110 basis point EBITDA margin increase. So that's positive number one. The other factor that the two new bike launches also will be very key, and most certainly it will be in the 125cc segment that is distributed between Q1 and Q4. But 10 new launches by September 2026 will be key for the company, as mentioned, and they've actually raised the estimates by 6 to 8%. City, on the other hand, slightly more, wouldn't say negative, but cognizant of what's happening in the domestic market share, because for the last 3 years, you've actually seen a reduction in market share for the company in the domestic side. So they feel like while the demand outlook is positive, there are challenges persisting at this point of time for Bajaj Auto in the domestic market, and they feel that a continuous decline in the wholesale market share currently is a concern. So a lot of impetus on the model portfolio and the revamp of the same, but the timeline as well as the management is very positive in terms of the new launches. Earlier they had mentioned 1 new launch, now they've increased it to 2 for this year, so that'll be something to watch.
Okay. 2 for this year. So launches is in focus, Bajaj Auto in focus, but let's talk about a few others that you might see some action. JSW Infra also a decent set of numbers. Revenue is up 18%, EBITDA up about 16%, and margins though have been flat to negative, I would say 46.6% versus 47.5%. Net profits also down about 10% for the quarter. We're going to see first rates coming in, and we'll see where JSW Infra hits. But is this a set of numbers you've looked at, Parag bhai? JSW Infra, any interest?
So I have clearly said that, right, when we discussed it around 300, when there was a QIP going on, that this is a FY28 story. The entire big scale up is going to happen in FY28 only. So anybody who is buying has to have a long term view. It is good that we got 15% very quickly, but from here on it is a 2-year story for sure. Because the largest jump in EBITDA is going to come from that slurry pipeline at Orissa, which connects JSW steel plant at Orissa, and that will give them 830 crore EBITDA, and that is going to start in FY28.
Aavas Financiers is also one that I want to just quickly look at. They reported as well, and we'll see how Aavas Financiers is doing this morning. The first tick is about 3% up, and in that BFSI pack, the numbers didn't seem half bad. But let's look at M&M Finance. Is it continuing its momentum second day in a row? That's another one which had a decent set of numbers, and Bandhan Bank obviously would be the big one to look at this morning. I'm seeing a 10% cut on the screen right now. We'll see if this settles at all. You have a Zydus Life Sciences also not doing too well, nor is a Bharat Forge. The Nifty and the Sensex by themselves are not too bad compared to what we had expected. Trident also another good set of numbers, and Trident stock should be in focus as well, just about 4% up. But look at all of your pharma companies, your Janta, Cipla, they're all doing okay this morning. Not too much stress over there at all. Trident on the charts, if you have a view there, Kush, and if you can just quickly look at that for us, we should look at some of those, and Aavas Financiers also if you have an opportunity.
So a Trident is not going anywhere, wouldn't really buy into it. I mean, if I had a position, if I got a bump up today, I would actually look at exiting, the stock 26, that 200 DMA is proving to be a stiff resistance, stop loss around 24.50 mark. I would actually look at exiting Trident. Aavas Financiers, you can continue to hold. There is an uptick, major resistance at about 15.25 thereabouts. So if it does open above that and is able to sustain, then you can see a continuation of this move that started somewhere early June. So Aavas Financiers is a hold with a stop loss around the 14.50 mark, but Trident, I think you should exit if you do get closer to 26 levels.
Okay, Chandan Taparia joining this morning. He's head technical and derivatives research at MOFSL. Chandan, very good morning to you. Let's get your Nifty check and your Bank Nifty check to start with.
Good morning, Tamanna. Thanks for having me. So Nifty got stuck in a range. Somehow we are witnessing a narrow range price formation. In fact, the narrow range 3 or narrow range 7 is being formed, which clearly indicates that absence of follow-up is missing at higher levels even after the sustained buying at lower levels. And I believe the more market consolidate, it will get the sign for next leg of rally. But as of now, we have to deal with whatever the market is all about. The broader trading range is now as of is 24,000 to 24,350, 24,444. So I'll go with buy on decline stance with the view that it's going to be in a broader range where support-based buying could emerge. So one can keep the support near 24,000 and capture this trading band between 24,350 to 24,444 on the higher side. Looking at the Bank Nifty index, on Friday it gave a breakout, but the momentum fizzled out due to the weakness in HDFC Bank. But at the same time, IndusInd and ICICI Bank managed to hold at higher level. So likely to be in a broader range. As of now, 57,300 is major support, while on the upside hurdle is at 58,250. So both the indices are likely to be in a broader range, but as immediate setup is positive with some consolidation. So we'll go with buy on decline kind of view in the market as of now.
So Chandan, we are talking about Bank Nifty since quite a lot of days in terms of the divergence that's happening between the PSUs and the private banks as well. However, at this hour, what would your top picks be for trade today?
Yeah, so yes, when you talk about the private versus PSU, in fact, private banks were doing well, but in last 2 days, we witnessed some recovery in PSU bank, mainly counter like Union Bank and SBI, but I believe private banks are likely to take a lead. If you ask me the sector-wise, 3 sectors are on radar on this morning. First is going to be on the Nifty Chemical Index, which gave a major breakout. Second is Nifty India Defense, and third is the Nifty Realty. So first trade will be from the Realty pack. Here I'll suggest to go long on Godrej Property. It has given a consolidation breakout. In fact, a positive price pattern similar to Poland India Defense, and third is the Nifty Realty. So first trade will be from the Realty pack. Here I'll suggest to go long on Godrej Property. It has given a consolidation breakout. In fact, a positive price pattern similar to Poland flag pattern. It has spent a consolidative move last 5-7 days, has been making a high top, high bottom on weekly chart. So one can buy on 20. We are looking for an upside target towards 20 to 50. Second trading idea, that is buy on rain industry. This mid cap counter has seen the strong momentum. In fact, has been making the positive price pattern with hold of rising trend line. Looking for the fresh leg of rally, so one can buy rain with support of 214. Looking for an upside target towards 233. So Godrej Property from real estate peg and rain industry from mid cap peg looks good for 3 to 5 and more percentage from current zone.
Right. We were talking about Bandhan Bank in the run-up to a market open, and it seems like it's going to have a bad morning, as this was expected to take place. But we were talking to Kush.
More percentage from current zone.
Right. We were talking about Bandhan Bank in the run-up to a market open, and it seems like it's going to have a bad morning, as this was expected to take place. But we were talking to Kush Bora, and in case you missed it, the levels that he was talking about are 190, 195. Those were the support levels. It seems like it's going to open below that. And so therefore, what are the levels that you would watch out for on the downside?
So below 90, the next major band of support is at 165, 170. And again, the reason I say that is, that you don't buy into Bandhan Bank even on a decline like this, because amongst the smaller names, you have so many choices in banks. Parag bhai spoken about, the big banks, South Indian Bank, J&K Bank, Maharashtra Bank, Tamil Nadu Mercantile Bank. Some of these names have done fabulously well in the last few sessions. So if I do get any dips in some of these names, I would prefer to buy these. There's been a fairly healthy institutional activity in some of these names. Price action also very positive. So Bandhan Bank, even at such declines, doesn't really make the cut. So focus on some of the other names. KTK Bank, Karnataka Bank is something that we've obviously discussed today and given out as a call.
Yeah, I think Bandhan Bank, the question will be whether to exit in this panic or not, more than buy on declines. All right, very quickly going through what should be on your radar this morning as we are wrapping up the pre-open session. Let's take a look at the crude sensitives. Remember, Brent at 92, ONGC Oil India, it's good for them. Brent is at a 5-week high. Want to take a look at how some of those stocks are doing, frankly, and that will be interesting to watch right now. Let's look at ONGC and Oil India. Let's look at pharma stocks, whether there is any real action over there as well. IHCL has a good, there you have ONGC, there we have Oil India, both of them in the positive. I want to look at IHCL, I want to look at JSW Infra, I want to look at Cyient DLM and how they are doing. Decent set of numbers. Suntech Realty as well. JSW Infra actually 3% down right now. Cyient DLM not getting a rate yet. Suntech Realty is also flat. Let's look at Canara Robeco AMC. We know Bandhan is going to be having a rough start to the morning. Canara Robeco actually 6% up. I want to look at Anthem Bio as well. Bandhan, of course, 10% down. Anthem Bio, Sagility. Let's look at some of those stocks right now. Anthem Bio was not a great set of numbers. Sagility was decent. Anant Raj will be demerging its cloud business. Street has seen it as a positive because they want to get a piece of the pie. Gabriel will be acquiring 29% stake in HL Mando. That stock is about 3% down right now. And there's a company called Viyash Scientific, which will be acquiring 100% of Bio4Life Italia for 17 million euros. I wonder if we have that stock and we can show it. That's about 0.62% up. So those are some of the movers. But Sharad joining in with a big brokerage call this morning. What's on your focus, Sharad?
Well, Tamanna, it's largely an NBFC, M&M Financial. The numbers came, during the market hours, but looking at the momentum in the NBFC stocks have taken this, and the brokerages have actually increased the target prices. Morgan Stanley has increased the target price from 335 to 370 rupees, and they have stated that the EPS hike is also expected to come in. for the next 3 odd years. Largely, they're expecting that the macro risks are behind and the cyclicality which will be there. There might be a re-rating scope going ahead as well. Also, looking at Jefferies, they have hiked the target price from 325 to 365 rupees per share, and they expect a gradual growth in the AUM. But the NIMs will remain range bound, and tech and management initiatives might improve the underwriting going ahead. Valuations seem reasonable right now, and that is why the bullishness is coming in from the broking houses on M&M Financial Services.
M&M Finance on charts.
Okay, so M&M Finance, if you are talking, then I believe the counter has really seen good attraction on the last trading session. Exactly took support at 50 EMA. Recently, it completed a double bottom kind of pattern with a decisive hold above 338. On last day, it rallied by more than 8%. Looks quite promising as of now, looking at the price pattern. In fact, it formed a cup and handle pattern, which has a bullish implication. So looking for next leg of rally, one can buy at current zone or buy on any small dip with support of 338, looking for an upside target towards 365 and all. And again, in previous recommendation, I gave buy on rain, where we are looking for a target towards 233, 240 kind of levels.
With regards to a couple of names that Chandan still likes, Trade Industries is talking about, Pharma, Dr. Reddy's, Sun Pharma, Biocon. Let's just pull up all the three names and see what they are doing, because there is a little bit of divergence coming in there, but these are the ones which are seeing a mild bit of pressure here. Chandan, on the charts, would you take this as a buying opportunity?
Yeah, so if you look at the selective sector, as I mentioned, that selective pharma counters looking good. And if you ask me, this is the market where we have to be very selective, because this is not the market where entire market and the sector and the stocks will do well. So in pharma, if I look at the Sun Pharma, it has been forming higher tops, higher bottom on the weekly chart, but momentum is slow. So comparatively, I'll go with counter like Lupin and Loras Lab in the pharma space. But yes, if someone looking for Sun Pharma, use the support near 1920 for an upside move towards 2020 marks. So Sun Pharma also looks good, but as of now, Loras and looks more promising for next momentum in the market.
One more reason to not be too worried about this, because if this is going to come in 2 years, Trump will at that time be at the fag end of his own, not where will he be? He'll possibly be in the White House still, but he'll be at the fag end of his presidency, and technically he cannot come back. Now, the if and but we don't know, but I mean, this is not something to be too stressed about, is what I would say, in case you're seeing it. So yeah, maybe look at buying opportunities if there's a specific
you
stock.
Set up some foundation stone somewhere and set up one small piddly factory over there. Just
but 2 years में कौन पूछेगा? With US presidents, usually it's a diminishing return the closer you get to the end date of your tenure. So that's the one to look at. I want to see what the big banks are doing this morning, frankly, because the bank Nifty is looking better than it has for the last couple of sessions. Let's look at HDFC Bank, ICICI Bank, Axis, and Kotak. Let's look at all of those which have been giving the market a little heartburn since their results last weekend, and what they're doing right now. Kotak still about 0.43% down. And that really is the big question. Would you buy any of these right now, Chandan, the mainline, frontline private sector banks?
So in mainline, frontline, I'll better to go with IndusInd Bank, which gave a breakout from a triangle and the pole and flag. However, already we have seen good run up, but I believe this counter is likely to do well. With support of 1040, we are looking for an upside target towards 1095 to 1100. And Federal Bank could be other name which has seen the strong momentum for the result. I believe such move could continue, as counter has been outperforming and making higher tops, higher bottom on weekly and monthly chart. With support of 345, looking for 370 kind of level. So those who are holding can continue. Those who are looking to buy can use bottom on weekly and monthly chart. With support of 345, looking for 370 kind of level. So those who are holding can continue. Those who are looking to buy can use a small dip to buy. So I'll focus on IndusInd Bank and Federal Bank in the banking space.
Let me ask Kush, what do you think about Bajaj Auto? Because it seems like it's going to open higher today. Yesterday it saw a little bit of selling pressure, but it may open gap up today.
Yeah, views very similar to what it was yesterday. The trends positive, near term, medium term, all of that. The 10,800 resistance level, that's the one that I'm looking at. If that is taken out, I think you're in good stead. The stock will actually gain traction from here. 12,000 and higher levels positionally very much on the card. So I remain constructive. Yesterday's dip should have been taken as an opportunity to go long. If not, you could still go long. Major momentum will return once the stock crosses 10,800.
Chandan, 20 seconds. What stock are you spotting from the pre-open rate that you've not spoken about so far?
Yeah, I've not spoken so far. I'll focus on the J&K banks. Look positive, looking for next leg of rally. With support of 182, look for an upside target towards 195, 198.
The results as well, I think. Kush, anything that you're spotting?
Let me give the picks of banking flavor. Karnataka Bank we've already spoken of, so let's go with that. 289, 300 targets, 272 your stop loss.
Okay, so banks in focus, but not the top ones. Expect crude sensitives in focus as we open today. Brent at 92 and no signs of relief there. We may just buck the trend that the implied open was showing us. We'll have to wait and see. Are we opening with an 80-point gap down? At least the pre-open session does not seem to suggest so. We may have a broader market which is also performing better, but here are the first ticks coming in this Wednesday morning, and there you have it, 39 points down. So definitely better than what was being suggested in your implied open. The advance decline ratio also not half bad, skewed in favor of the advances right now. The bank Nifty about 0.2% down, but I will look at what's happening with the mid cap and the small cap. Pretty much flat. So not too bad, like we said. Let's pull up the Nifty heat map for you this morning, and then we'll pull up the India VIX as well. Bajaj Auto is the star of the show. Second day in a row, Eternal is going to be reporting today. I think this is going to be an avidly watched set of numbers coming in from Eternal after so many changes recently in its management and what it's been doing. Blinkit has been pulling far ahead of competition. Does it continue to maintain that momentum? ONGC with Brent at 92. This is good news for an ONGC. That's why you're seeing it there. But more red now on the screen, which can be seen. And the biggest loser is Indigo, because a key component of its raw material, its fuel prices, will go up with what's happening with Brent prices. Cipla, Sun Pharma, DRL seeing a bit of pressure because of Trump's plan to impose tariffs on generics 2 years from now. Is this an opportunity to buy, is what you should be asking yourself. I think IT is having a bit of a down day. Infosys, Tech Mahindra not looking so great. HDFC Bank continues to be in the bottom list over there and seeing a bit of pressure, but relatively okay. Bajaj Auto definitely the star of the show and the only one going from strength to strength this morning more than anything else. And of course India VIX also climbing up, Alex, now at this point about 3.5% up. It's individual stocks which are showing momentum and the breadth of the market not looking half bad.
Not too bad, but again it's those heavyweights that are proving to be a drag and continue to be the reason why the benchmark is not heading anywhere anytime fast. But let's take a look at the broader markets very quickly. Actually, in fact, let's take a look at the sectoral indices. Okay, let's finish off with the mid-cap index, just about 0.1% lower. I wonder whether, like you've seen in the recent past over the course of the last few days, you will see buying at lower levels, and later in the second half of the session you see a different picture emerge. But take a look at the sectoral heat map for the market as things stand right now. Auto looking okay, understandably so, because of the way that Bajaj Auto is doing this morning. Not too much in the way of other big sectoral winners. The defense back up about 0.2%. At the bottom you have pharma, so there is a tad bit of pressure. I wonder whether there is an opportunity to buy into any individual stocks. We'll check soon enough. Healthcare is losing ground about 1.4% or so. IT is down about 1% or so. Private banks about 0.8%. More or less a picture that you saw on the benchmark Nifty 50. Let's dive straight into individual stocks and let's talk about the accident of the day, and that is Bandhan Bank. They have guided towards slower growth or improvement in return on assets. They're saying that the external environment is not supportive. They could face pressure with regard to their lending activity going forward as well. 10% down at lower circuit. I wonder what will happen later in the day. You have Anthem Bio, which has posted a not so good set of numbers. Sagility also not so good. It's down about 4% or so. in fact, it's not on guidance, it is on results. Let's move on and talk about some of the good results. You have MPS that stood out to me, arguably the stock of the day so far. But remember, it's a small cap counter, and so therefore it could be reacting more on account of that. Just about 4,000 crore in the way of market capitalization. But Canada Robeco doing okay. Indian Hotels also had a pretty decent set of numbers, but the stock is seeing cuts of about 1.6%. JSW Infra, I won't be surprised if this one is also losing ground, but the volume growth was steady. The numbers looked okay, 2.3% lower at this point. I wonder if it will find buying later. Cyan DLM, they had growth in the aerospace as well as in the industrial segments. That is being reflected in the stock. Remember, this is a stock that has gotten beaten down in the past, so it's finding a little bit of favor right now. In other updates, you have Anantraj and the demerger of its cloud business, of its data center business, and it's in focus. Of course, that business is going to sit in a new entity which will subsequently be listed. The stock is up about 1% or so. Gabriel India, significant update beyond the earnings, and that is its plan to buy stake, but the numbers didn't look particularly good. So I wonder what the street is reacting to, the Q1 results or the fact that it will be buying stake in HL Mando, that consolidation in Gabriel India continues from the Anand Group. And CMEC finally is set to buy a vessel from Anant, or rather from HAL Offshore. This is CMEC Anant. If I remember correctly, the price tag is about $70 million. Not doing too much, up about 1% or so. Hira, I'm wondering if you're spotting anything else.
So nothing in terms of newspapers, but MTAR, Kush was just showing it to me, and I think we closed India market closed yesterday with the MTAR because it actually got out of the lower circuits that the stock had seen over the last 2 to 3 trading sessions, and today now that stock is locked in upper circuit of 5%. So I think neither the buyers nor the sellers are getting any opportunity when you talk about an MTAR. A few of the other names, MedPlus, which is reacting to numbers, major pressure coming in on that counter as well. Pull up a MedPlus on the screens and you will see the 13 to 14% is the kind of cuts that you're seeing on earnings. Bharat Coking, again another newsmaker which is in focus in today's day of trade, along with the E2E network. We'll pull up all these counters and you'll see if you can just have a Bharat Coking, guys, and a E2E network. E2E network is locked in upper circuit. Sri Lotus, RR Cable, Kalyan Jewelers, a few of the other names which are probably reacting in trade today. So these are the stocks that we're talking about. But MTAR, I don't know if I should take a technical view, Kush, on this one as well.
No, please, by all means. Yesterday we spoke about precisely this key. Panic mat karo. You don't have to go out and sell just because the stock's been hitting lower circuits for the last 3, 4, 5 sessions. There's been a good rally. So even if you look at it from that perspective, this was of course news based, but this was some selling, some cooling off happening in the stock. It's at upper circuit right now, like you rightly said. Neither the buyers nor the sellers, on depending on which side you sit, are getting an opportunity to do much. Don't do anything. If you have a position, continue to hold. I am looking positionally at 5,200 to 5,500 as that support zone. As long as that is held, I think the stock will perhaps go sideways, if not move higher from here. So not necessary to participate in every big mover, right? So you can sit out on MTAR Tech, continue to hold 5,500 stop loss.
Okay, not bad on MTAR Tech as well. Trident, M&M Finance continues the up move in today's session. TVS Motors as well, 3.5%. Chandan, with the way markets have opened right now, anything that you're spotting that could be a good momentum pick? Because you're not seeing that kind of downtick in terms of individual stocks, barring MedPlus, Bandhan Bank. You have a Gabriel which is reacting to the acquisition on the downside, and a Westlife which is under pressure.
Yeah, so apart from these names, I'll give one more stock which is really setting the tone for next leg of rally, that is buy on Chennai Petro. In fact, now the counter is giving the breakout of consolidation of last 24 months, heading towards the highest level of 2024, which was 1275 and beyond. So here I'm expecting next leg of rally with support of 1265, looking for 1335 to 1350. The name which you mentioned, like the Bandhan Bank has seen a negative opening. The structure has gone below 50-day exponential moving average. So I believe weakness could be there. So selective private bank looks good. So Federal Bank or IndusInd Bank could be the name, can be counted in this territory. And in defense, which you mentioned, I believe some more volatile cues could be there. But if one has to focus on one defense counter, I'll be looking at HL with the view that it has given a consolidation breakout on the daily chart.
The Nifty Pharma getting punished today because possibly this tariff concerns in part. But also ahead of a whole slew of results, we will have to look at what the expectation is over there. Lupin and Ajanta looking interesting to you, Kush?
Ajanta for sure has been our weekly pick of a couple of months ago. This correction, this profit booking dip is a healthy one. I would be more inclined towards buying this close to the 3375 mark, 200-day moving average. So closer to 3300, 3400 zone you can accumulate. Lupin not so much. The volume action on the downside in the last few sessions has been, rather healthy, so discouraging, from any fresh picks. 20-day DMA also being tested today. So Lupin you could avoid. Ajanta Pharma constructive, 3375, 3400. That's the zone where you can actually look at buying Ajanta Pharma.
All right. Come on, it's 1.2%.
We're just discussing in terms of, I said, see, pharma in the end, whatever it is, there has been a sentimental impact to an extent.
Do not worry if you are seeing a sentimental impact. कुछ नहीं होना है.
वो तो नहीं होने वाला है. It's Trump sitting there.
So Trump, because in 2 years, what will happen with Trump post November? What will happen with Trump does not matter.
He's probably going to need. Okay, I'm not going to say it.
No, let's not
don't.
get there.
I'm not going to say it.
So, I don't think you need to worry about pharmaceutical companies from that perspective. I think this is an opportunity if you actually want to look at buying any of these pharmaceuticals.
I think one more name is, you're talking about pharma, we're talking about Bajaj Auto.
Pharma. Let's just round that up.
Bajaj Auto, allow me to talk. Pharma you can discuss.
I shall hand over the baton.
Pharma you can discuss.
देखो ICICI Bajaj Auto मैं touch नहीं करने वाला. No, so if today you would have asked me कि overall pharma क्या लग रहा है, looking at the index alone there are 2 legs of negative divergences. मैं बोलता ठीक है रुक जाओ थोड़ा cool off होगा फिर buy करना.
This is before the.
Forget the news. I'm saying. There is no news. You can royally ignore the royal decree that has come out. Completely ignore. This is more a technical pullback.
I like that.
कुछ नहीं होने वाला है. Keep this buying list ready. And pharma में जो dip आया है, we've mentioned a few stocks. Buy them. Oh, okay, maybe not immediately because अभी थोड़ा सा impact है. Once it settles, go out and buy. Like I said, Ajanta Pharma 3375. A lot of other stocks have that support levels.
Okay.
Buy.
And the whole market is also a little down today. Chandan, just a view on pharma very quickly because actually Bank Nifty is also turning fairly negative. But view on specific pharma stocks where you see an opportunity, and would you be worried about this whole tariff news?
Yeah, obviously, like I'm enjoying the discussion which you guys are having. So obviously, we need to worry from the Trump's tantrum, but I believe in pharma need to focus on the diagnosis lab and that sort of sector, healthcare, compared to only the company which are related to the US market. So accordingly, I'll focus on counter like Loras Lab and Apollo Hospital, and I think these counters can do well. So Loras Lab can be bought. However, it has really done well, has been making high tops, high bottom. But because of the market volatility, if it declines, buy near 1550 for an upside target towards 1600, 1620 kind of level. One stock I want to add here that is from the real estate pick is buy on Anantraj, given a classical breakout on the daily, weekly and monthly chart. So here I can add some view to get some momentum of 3 to 5% during the day. With support of 608, it can head towards 645, 650.
Okay. Anant Raj in focus. You wanted to come in very quickly.
I wanted to tell Chandan something, and he said I'm enjoying the discussions that you're having. Chandan, trust me, the discussions are more fun when you're in the studios. So you are more than welcome, and your office is not too far, I know, right? You are more than welcome to come. There is enough and more seat on the table. So please join us here someday. It'll be even more fun. Trust me, the BTS is even more fun than the actual show itself.
I love how Kush, opening up the house. That's a great idea, Kush. I second that entirely. Okay, let's just put the focus on Gabriel. The Auto Ank major has announced a trio of key developments, their June quarter earnings, strategic acquisitions, and a capital raise of over 1800 crores. Puneet, the stock now recovering from the lows of the morning, but the street's not too happy with this slew of announcements.
Well, it says another, step of integration that the company is doing. So, a context that last year 4 unlisted entities of the group, of the Anand Group, were merged into the listed Gabriel India. Now 2 more are expected to come through. One has been coming through from Anand Group itself, and hence I think the dilution of equity might be one of the key reasons that the street is slightly more negative at this point of time. But you have the con call at 11 a.m. so a lot more discussion will be done on Gabriel at that time. But as you mentioned, the results largely in line with the estimates. I think 15% growth we were expecting in revenue, but margins have fallen. But I want to focus on those 2 business transactions that the company has done. One's with HL Mando, which is a joint venture with Mando Corporation, as well as with Anand AIPL, basically, which is the promoter group's investment arm, and that is getting merged into the listed arm now. So Gabriel India essentially will be purchasing a 28.99% stake, and they will be paying. It is getting merged into the listed arm now. So Gabriel India essentially will be purchasing a 28.99% stake, and they will be paying roughly 2,200 crores to the promoter Anand Group. Now this will dilute the equity most certainly, and I think that's why the initial reaction. 1,800 crores of that will be paid through share swap. So the promoters will get Gabriel India shares, and that will be one of the key transactions. Roughly 350 crores will be paid by cash for this one. And the second key transaction is on HL Klimov. That is of course into the ADAS system, and it's a big system, and it's a big development on this aspect because this is a very new sector for the company, not in the listed space. And you have the new the PV side of things with the electric vehicle evolution, a lot more focus on ADAS. So this will be another key vertical that will get added.
Puneet, in 10 seconds, why is the street unhappy with all of this?
I think one reason which I mentioned was the equity dilution, because 1,800 crores will be coming through. So that is one. So I think some clarification on that.
That's the downer there. Okay, we'd love to speak with the management of Gabriel. You're most welcome to come and speak with us on NDTV Profit. All right, thank you for that, Puneet. Thank you, Chandan, for joining us on this leg of the conversation. Kush, thank you so much as well. We're going to request Parag Thakkar to stay back with us, because if there is one person who should be part of our HDFC Bank debate, it is Parag Thakkar. But before we start off that conversation, let's tell you what's happening. Slower growth, margin pressures and governance concerns are raising question over a stock which was once the market favorite. Is HDFC Bank losing its sheen? The stock is the worst performer in the Bank Nifty index this year, as concerns are raised over the ability to regain its premium valuation. So Amit is here with several key questions and insights.
Well, if you look at the HDFC Bank share prices, so far in 2026, it has declined by nearly 23%. It's the worst performing stock in the Nifty Bank Index and the worst start that HDFC Bank could have seen since 2008. Now, here's a table of how the calendar year performance has been for HDFC Bank right from 2008. In 2008, it had declined 42% so far. Then there have been continuous gains of around 71%, 38%. As you can see in 2011, 59%. It has been coming down a bit in the last few years. Since 2020, 13% gain, 3%, 10%, and right now it's down 23%. It's worst possible start that we could have seen since 2008. Now, why is this happening? And firstly, why is it important? Because firstly, and the importance of HDFC Bank from a retail investor perspective, it's 100% owned by public. There are 45.3 lakh shareholders, of which 44.4 lakh are individuals, which means that this is excluding the mutual funds and the foreign entities. Apart from that, mutual funds own close to 30.6% stake in the company. 59 mutual funds, or AMCs, are owning shares in HDFC Bank via various schemes. And this is the most interesting part here. The value of the mutual fund holding in HDFC Bank stands at close to 3.1 lakh crore rupees, which is nearly 8.3% of the total equity oriented scheme AUM and nearly 3.8% of the total mutual fund industry AUM, which also includes debt, arbitrage and AIF. So you can see the exposure that mutual funds and retail investors have towards HDFC Bank, and that stock is down nearly 23% so far in 2026. Now, why HDFC Bank is losing its sheen? Firstly, there has been a moderation in loan growth. Now, they have been doing this to improve their balance sheet metrics. Apart from that, the funding mix change has also led to a slowdown in the company's profitability. There has been a continuous decline in low-cost deposits. Margins have been range-bound. In fact, they have been on a declining trend. Yield on assets have been on a downward trend for the last 5 years. And in 2026, there have been a corporate governance issue post the chairman exit. And also, there is no clarity so far on the CEO reappointment currently. And hence there is no clarification on this. We have also tried to see how HDFC Bank has performed under Shashidhar Jagdishan. Okay, we do not have the table so far, but if you compare it with ICICI Bank, then the performance for HDFC Bank has been a bit muted compared to what its peer or the second largest bank in the country, ICICI Bank, has done. And that could also be one of the reasons why the stock has been underperforming.
Yeah, very interesting. All right. Thanks so much for that detailed presentation. You can't overstate the importance that this one bank has to the Indian investor, because even if you're investing in a Nifty 50 index fund, you've got a pretty sizable allocation towards it. The question though is, under the current management, could things have been done a little differently? And we've got Abhizar Divanji, founder of Neostrat Advisors, joining in to talk about some aspects of this. Parag Thakkar, of course, with us in studio. Good morning to you, Abhizar. And more from the perspective of what this bank, which means so much for the investor, and indeed the significance that it has purely by way of its lending book. Could they have done things differently over the course of the last 3 or 4 years?
I mean, sitting in a studio, we can say that, Alex. But the reality is that HDFC has been through a merger of a disproportionate size. And ICICI had the same issue in 2001. However, in 2001, there were favorable markets and cheaper interest rates. ICICI Bank would have fallen under the burden of their NPS at that point in time because the DFI had NPS. HDFC Bank is falling on the burden of lack of deposits. Now, if you just look at the larger issue, these mega bank merger, and of course, HDFC is multiple size of what ICICI was in 2001. So, if you look at it, this merger will take an elongated period of time to stabilize. And the reason why it will take that much time to stabilize is, one, the size is much larger. Two, we've had a huge issue on deposit runs, as in deposits moving to the capital markets. Three, the interest rate cycle has gone up. And in an upward interest rate cycle, to integrate a non-bank into a bank is a huge challenge. So I think that there are macro factors that have played a role in terms of HDFC's stability. What HDFC is doing right, in my opinion, still, is the fact that they are not trying to do aggressive borrowings on the wholesale market to be able to fund a increased loan growth. In quite the contrary, they are saying that unless the deposit franchise picks up, we will slow on loan growth. That's what I've heard in the discussions. That's actually a good banking strategy, because clearly from a bank perspective, the cost of funds being significantly lower is the single largest advantage that institution or a banking institution ever has. So ideally, to retain that franchise. Now, has the bank done enough or could have done better? Of course, it could have done better. Could it have done the same kind of NIM expansion that ICICI did in terms of offering a wide range of services outside of plain banking? Of course. Could it have increased fee income like a Kotak's model has always been? Of course. Kotak's NIM has, even though it's fallen, is still the largest. Why? Because there's a reason. They have embedded fees into it. They've embedded other kind of services that they provide along with it. So ideally, should the bank have transformed from being a plain vanilla lender to a structured provider of capital? Yes. But I think that will evolve over time. So in a sense, I don't think the franchise has deteriorated. I think the franchise will come back. The other big peril that we have is if you're part of a lot of indices and if you're part of a lot of mutual fund holdings, then the flag comes with it. So I guess
I think that is Abhizar, I think you hit the nail on the head. The reason for all of the concern is that the element of choice of going out and choosing and investing in HDFC Bank specifically is lower down when you have so many investors who are in SIPs, who may not have seen what the components of their are, and they have exposure to HDFC Bank one way or the other. And then comes the question of leadership. Now, a lot of this is being pinned on the head of the current CEO at a time when his extension is due. So let me ask you point blank, how much of this is a leadership issue? And would it have been any different if someone else is leading? Will things change if there is a different leader? Because it's all becoming about one individual right now.
So I think HDFC is much beyond an individual. It's an institution by itself. I think it has churned the best leaders possible. It's had, one of the things that I would like to highlight is the fact that When you have a elongated leader for an elongated period of time in any organization, the second level tends to always suffer. So really, we actually sometimes may lose a generation of bankers in between. And that could be true because HDFC has seen a lot of their bankers move to other banks. So there is sometimes a leadership vacuum. And then, of course, if a leader is overbearing, then what happens really is that the juniors tend to have more time, tend to take a longer time to evolve. So I do think that, yes, when you start comparing, you compare an Amitabh Bachchan to an Abhishek Bachchan, then obviously you will see an obvious comparison issue. But at the end of the day, you got to move out of that.
Abhishek, I'm sorry, I'm asked to ask, who's the Abhishek Bachchan and who's the Amitabh Bachchan here?
I think it's very obvious to everybody.
Okay, so Aditya Puri and Shashidhar.
But yeah, but that's the whole thing. So when you have a transition, you cannot get biased to what, somebody else could have done. You have to look at it what the individual can do in the respective thing. I'm not saying that the individual may not have flaws or may not have erred. Of course, he could have erred. But then so does every other CEO.
I think it's also not just become about the weight of expectations. Now it's become about performance. And Parag, I want you to come in here because you were one of the early and very clear backers of HDFC Bank. Recently in your commentary, you have said that you are favoring ICICI Bank more. But then, this is a complicated subject because part of it is corporate governance, part of it is corporate performance, and then there is this leadership issue overall. What do you think has cheesed off investors? Because that's the only way I can put it. Oh, the excitement about HDFC Bank has waned.
So what has cheesed off investors is that, of course, the stock price not going up, definitely, right? And that has reasons. The reasons are simple, right? As he highlighted very rightly, that the merger was too large. And after the merger, if you remember, RBI governor tightened the liquidity in the system to control inflation, right? So when you need liquidity, the liquidity was tightened. And interest rates started moving up, and real interest rates also started moving up. So that 1.5 to 2 years got wasted in that process. After that, now what you are seeing is that for example, first of all, one thing is that every individual cannot be same, right? Bakshi ji and his team has delivered a phenomenal performance in spite of all the issues, and they've navigated everything so well. And everybody cannot be like that, right? And so that is one different. But coming back to HDFC Bank, I feel, as he also pointed out, that there is no problem with the institution. It is not that they have landed irrationally, right? It is not that they have lost their deposit franchise. It is only that some things have not gone right for them, and some things which they have chosen themselves. That, for example, to grow corporate lending and to not grow retail lending after COVID aggressively. Because they took the call that retail guys will suffer after COVID. While ICICI Bank took a call that no, even during COVID, if people have repaid me, I can put trust on Indian common man whose actually cash flow transactions they know, because they have that account in this thing. So, and plus they have taken advantage of GST coming in, UPI coming in, so more trackable cash flows of customers, and so they have gone ahead and landed at a rate which was making sense in terms of profitability also. That's why you see, for example, this quarter NIM, ICICI Bank at 4.27 x of tax refund, and HDFC Bank is 3.26, huge difference. Right? Now, HDFC Bank, in all, I would say, it should bottom out here, the margins. FC NRB deposits coming in August and September, then their borrowing as a percentage of total book reducing. All this will come, but they are long-term levers.
So, Parag, my question to you in terms of HDFC then is, are you only talking about the non-financial overhang? Because if you talk about the retail business, it's half the rate in terms of growth versus what the market is. Forget ICICI, even if you look at the overall market, right? So that is a structural story which they have chosen as a strategy.
Yes.
But when you're talking about the leadership issues that everyone is citing, and if you have to tie that up to the valuations are very cheap right now for HDFC.
Very cheap.
Correct. And
on FY28, for example, the book value is 450 and subsidiary value is around 130.
Right.
Today's stock price is 760. So 630 you are getting bank. for a book value of 450. So it is 1.6 actually.
No, so my question over there is, you know, at a time when HDFC had an ROE of what, 16, 17, that's when it actually demanded and commanded that premium, right? Right now we're talking about 13, 14 percentage kind of ROEs. Do you think once this overhang from a governance perspective is sorted out, that's when HDFC probably can become a re-rating candidate? Are you seeing any signs of that where it can command these kind of multiples yet again?
So I'll tell you first market is a slave of earnings. So I would say that when earnings will come, when margins will improve, stock will automatically go up. When that can happen, I think over next 2 to 3 quarters. Second is, I strongly feel that there is no governance issue, and so that is my personal view externally.
The problem is the perception of it right
so
now.
perception.
See, if it was as simple as it started with the chairman maybe getting into territories he shouldn't have when Mr. Atanu made all of those comments, then it died down. But if the numbers had withstood, then all of these questions would have been put to rest.
Yeah, that I completely agree. So that is how. So the numbers, if numbers would have come, stock would not have fallen so much, and there will not be so much of noise. But whatever has happened after the chairman resigned and all those things, I think that kind of you can say 10-12% de-rating due to that is external, which I feel that was not required.
I just have one more question, and this is for Abhizar. Abhizar, you've seen banks of all sizes, right? And we're talking about a behemoth after this merger. The question that I have is, when you had Mr. Puri at the helm, a lot of people who have witnessed this bank at that time got used to a 20% growth in the PAT on an ongoing basis. In fact, that became the joke, that they will always hit that 20% mark. With the size that this bank has reached of epic proportions, is the base their worst enemy going forward?
Yes, the base is their enemy clearly. But also what Parag said was very useful, that product diversification was never thought of in HDFC as a single lever. For example, they took a call that consumer spending will lower post-COVID, and obviously that call didn't work, but that's just a call. HDFC fundamentally has remained a mid-market, mid-working capital provider and housing loan provider. It has not tried to diversify beyond. So I think now is the time where I think product diversification would add to their base. Still, I mean, we are not behemoths at all in India, right? SBI is a bigger behemoth than HDFC. Any which way, globally, we are nowhere. So ideally, ability to grow, I think, is significantly larger. But I think it's the product diversification and the innovativeness that needs to come into banking. Today, they're so grappled with their processes, very frankly, Alex, that they'll possibly get the house right before they do anything else.
Okay. So, Abhizar, just quick one. Do you think there is a requirement for the management to actually come out and clarify in terms of the issues that they have, and that will solve the issue?
Well, I think they've been doing that. I think from a transparency perspective, you can't fault HDFC.
Okay.
I think at every stage they've been doing that. But yeah, it'll take its time. Very clear.
Okay, so that'll take its time. But thank you so much, Abhizar Parag, for joining us for this detailed discussion, because gives us a lot of thoughts in terms of what's really happening from a financial perspective, from a governance perspective, and where does the bank stand versus its peers as well. But moving on, India's pharmaceutical companies are expected to report another steady quarter, with domestic demand actually continuing to offset the weakness in the US markets. Now, this is what the expectation is from the earnings perspective. But to add to this, what is the kind of impact as an analyst that Vishal Manchanda is looking at when you talk about US tariffs? That's what we're going to look at as well. Let me get in my colleague Varsha to join us with more details. And we have Vishal also. Vishal, please hang on till Varsha just sets this conversation up for us. Varsha, over to you.
Well, companies, pharma is expected to report 7 to 15% of growth in Q1 FY27. There will be a good India growth perspective, but US may have have an impact. Now, India business is expected to remain strong. Weakness in the US market is likely to drag profits. Revenue growth is expected to stay healthy, but margins and PAT may decline due to Revlimid expiry and higher input costs. Talking about the India business, domestic pharma continues to grow in double digits, while US is expected to decline 9.3% year on year due to high base of Revlimid last year, lack of major new launches and continued price erosion expected in the US sales. Margins are expected to be under pressure. If you see, higher raw material costs and freight costs is a concern, and absence of high margin Revlimid sales is likely to compress margin sector. Now, talking about the CDMO story over here, performance is likely to be mixed across players. Let's see who will be the winners of this quarter. You have Zydus, you have Sun Pharma due to the healthy India and specialty and emerging market performance. Lupin will be supported by Talvaptan despite a big pressure.
Got it. Thanks so much, Varsha, for that. In the interest of time, let me jump straight across to Vishal Manchanda. Vishal, before we get into your expectations for Q1 from the pharma majors, and we've got a flurry of them coming through, let me first actually say good morning and thanks so much for joining us, and thanks for your patience. So let me ask you about these latest statements that have been made by Donald Trump with regard to the tariffs. And this is something of saber rattling that has taken place in the past, but it hasn't really found any favor. Are you looking at it that way as well? Something that is a threat but might not emerge?
Yeah, hi, good morning. So exactly as you said, I look at it the same way. It's more of a threat and unlikely to emerge because I think it's a greater harm for the US for them to put tariffs on generics. And it may not be possible for Indian companies to kind of reshore production to the US, at least for the high volume generic drugs. It can happen selectively for the high value drugs, but not for the large volume drugs. And there is complete lack of clarity on what the tariffs would cover, whether it would also apply on the APIs, the final formulations, whether it would cover biosimilars. A lot of things need to be addressed, but unlikely, I think political legal challenges would make sure that these tariffs don't go through.
Vishal, before we get into expectations of the fourth quarter, the other question I have is, now 90% of the US market for Indian drug makers is, in terms of volumes versus the generic drugs. Now, out of this total generic drugs which are imported by the US, roughly 40% comes from India. If we have to break this down between the companies who are directly exporting from India versus the companies which have already have a manufacturing base in the US, do you see those companies probably seeing an upper hand right now?
Yeah, obviously the tariffs would go in favor of those who have a manufacturing base in the US. But ultimately, like what it will turn out is what things will happen is there's going to be massive inflation on generic drug prices. Because if you manufacture all what you need in the US, the prices would obviously go up for the generic drugs. And that's going to be detrimental for the masses in the US.
Okay, so if you have to look at the tariffs in one way and the expectations in terms of the sector as a whole, what are the key things that you would be watching out for? Because in 2026 already, the sector itself has seen a sharp run up by now. So do you think there is further moat to actually understand what the numbers will actually look like? Or do you think it's going to be a situation where the numbers probably will be good, but it's going to be like a sell on news kind of a strategy that everyone will look at?
I think the sector right now is like waiting for things to happen beyond the US. So US, as we know, is going to be weak this year, and then people will wait whether there are additional opportunities that can pan out in the US, or whether biosimilars can build out in the US, or probably companies can build their OTC business across markets and show better growth than expected. So right now, I think if we look at expectations, most companies over the next 2-3 years are expected to deliver either low single digit earnings growth on the FY26 base, or probably even a decline on the base, unless they kind of deliver on something which is right now not in the numbers. And I think likelihood of they delivering something beyond numbers is less likely.
Okay. If I can do a rapid fire, Vishal, in the interest of time, if you will humor me, I will do my best to ask the appropriate question. So, between the cohorts of generics, biosimilars, APIs, and any other cohort in the pharma space, which do you prefer?
So biosimilars, I think, will do well in the next, say, 5 years. That's a large opportunity shaping up. And scarcity probably should drive some value there.
Okay. And in the cohort of stocks, which ones do you like and which ones are you likely to see a negative outlook for?
So anything highly dependent on the US for their earnings. So anything above any company that's 40% plus dependent on their earnings for the US market, I would stay away from those. And also to qualify, US generics market, not the US market as such, but the US generics, small molecule generics market.
Yeah, okay, so rapid fire. Thanks so much for joining us this morning. Pleasure speaking with you as always, Vishal.
Thank you.
All right. Well, let's jump straight into earnings. And despite a seasonally weak quarter, Sagility has seen a healthy AI-led healthcare business demand, while the company continues to add clients amid several deal wins. We've got Ramesh Gopalan, who's the Group Chief Executive Officer and Managing Director, joining in to help us understand how the quarter has gone by and what the outlook going forward is. Mr. Gopalan, thanks so much for taking the time and for speaking to us on NDTV Profit. Let me start by asking about a Q1, which is and it's traditionally been a bit seasonal, right? So is that the reason why you saw the numbers that you did see? And can IT services sustain that 5+% organic CC growth?
So thanks for having me on the show, right? You're right. Q1 is a seasonally low quarter for us. So if you compare growth more on a year-on-year basis rather than a Q-on-Q basis, we posted a very robust 14.9% organic constant currency growth, right? So that's a significant growth, and that's broadly in guidance with the low double-digit growth that we've projected for the full year. Yes, on a quarter-on-quarter basis, the numbers were down. But if I take out the seasonal revenues from Q4, we still posted a 5% Q-on-Q growth on the non-seasonal part of the business from Q4 to Q1. So overall, a pretty healthy growth on the top line.
Okay. So, good morning. This is Hilal on this side. If you could help me understand, if you have to look at FY27 as a whole, what is the kind of trajectory that you have? What does it tell you in terms of the action plan for FY27 and the guidance going forward?
Yeah, like we gave a guidance at the beginning of the year in low double digits, right? So we continue to maintain that guidance. Given our robust growth in Q1, we're very confident that we can maintain the same trajectory, which means the overall year will also pan out in the double digits. But closer to the end of Q2, we'll have a much better idea, and we'll narrow the range. But at this point in time, we're still sticking to the double-digit growth guidance for FY27.
Specifically on CareSeeds, Mr. Gopalan, what is the kind of revenue contribution that you foresee for FY27? What are the trends that you're witnessing there?
Look, CareSeed is about a $6 million revenue business. So it's not going to make a big impact on our total growth numbers for FY27. But having said that, the capability that they bring to the table, which is around quality management in healthcare operations, as well as the 26 additional clients that they bring in, is what we are very bullish on, right? So given our service portfolio added to CareSeed's technology capabilities in the quality area, we believe that there is a good amount of cross-sell that we can bring to those clients. And over the next couple of years, we can grow those clients from where they are today.
Then my question is, how much of the FY27 growth, Mr. Gopalan, will come in from existing clients versus your new client addition? And has that strengthened versus what we saw in FY26? That's part one. And two, your healthcare payers in the US are also facing some bit of cost pressures and regulatory changes. So are you seeing any shift or slowdown in the client decision making, or even in terms of the discretionary spending?
So yeah, the first answer to your first question, traditionally our growth has been pretty robust from existing clients, and that will continue to be so, right? So if you look at our historical growth, almost 80% of the growth comes from existing clients, and we'll continue that trajectory. Like I said, CareSeed will add to our numbers, but it's going to be a very insignificant amount, at least for FY27. To your other question, yes, healthcare payers in the US continue to face cost pressures. Their medical utilization is still a concern. And so most of them want to reduce their costs going forward. But having said that, and I've mentioned this before, we don't play in the discretionary spend space. We handle core operations for clients, which is non-discretionary spend, which is something that they need to spend every year. And so this is why it's a tailwind for us. When they're under cost pressure, they need to find opportunities to take out cost. And that's where players like Sagility come in and help our clients take out their operational cost. So while, yes, overall there are profitability concerns for our clients, that opens up a lot of opportunities for us.
Okay, very interesting. Mr. Gopal, I'm just trying to understand now, a lot of companies like yourself are providing services and packages that sit with artificial intelligence, right? It's baked into the product that you are selling.
Yes.
And so what I'm trying to get at is, how does that change the nature of the deals that you're getting? Does it change the size? Does it increase the volume of deals that you can take on?
Yeah, very good question, right? You're absolutely right in the sense that AI is kind of embedded in the work that we deliver for our clients. And so the value proposition to clients today is, hey, give me a larger piece of the workflow and let me use AI to reduce your overall operating cost. So what that means is we get a larger piece of the pie. We commit to outcomes to the clients, and we try and get a larger deal value as well as a longer contract life. In return, we commit to cost takeouts over the 3-5 year period. And so it's a win-win for both clients and us.
Okay, quick one on that. How much of your current revenue is influenced by this AI-led solutions, and is it helping you win larger deals? That's part one. And when do you actually see AI productivity actually give you material benefits from a financial perspective?
So let me take the second question first, right? So AI, like I said, AI and any other technology is ultimately to reduce the operating cost for the clients. And when we get into deals with clients, a large part of these operational efficiencies or savings will pass back to the clients, right? So while doing those deal constructs, we tend to return a lot of these savings to the clients while retaining a certain portion so that we can continue to build and maintain those platforms and also improve our margin. So it is helps us stabilize our margins to a large extent while providing clients the cost takeouts that they are looking for. And to your other question, AI is today kind of infused in almost everything that we do. While adoption of large-scale AI is still in the works, the automation at a process level and at a minor task level is something that we are infusing across the portfolio.
Mr. Gopalan, leave us with one, maybe a 1 or 2 word answer, which is, it's a brave new world, especially in your space. And so therefore, in a scale of fearful, optimistic, or cautiously optimistic, where would you sit?
Look, in our space, we are very optimistic because AI will help us take cost out, and that's exactly what our clients are asking us to do.
All right. Well, on that note, thank you so much, Mr. Gopalan, for taking the time, and wish you all the best in FY27.
Thank you. Thank you.
Right, well, it's been an interesting week so far, but I think it's going to culminate in the most exciting thing for us, right? Which is
the Business Leadership Awards and the winners, and meeting all of them under one roof and getting this property back after 14 years, which is the honor for all of us.
Yeah, the finance minister is going to be there, and she's going to be presenting awards to a whole host of Indian leaders that have really pushed the envelope this year, especially in the challenging environment that it has been. And there are some really interesting categories for you to look at, whether it is your top performing public sector banks or your public sector utilities or the top performing new age companies in the space. You'll find all of that.
Creators
yeah, the
as
wealth
well.
creators
I'm
as well.
sure
Yeah.
all investors want to know which are those wealth creators, because that is the one who's actually made money for them.
Absolutely. All right. We have to slip in a very quick break. On the other side, we're in conversation with the management of Bajaj Auto. The stock is in focus today. Stay tuned for that.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा, आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं, मैं
Welcome back to India Market Open. An interesting day of trade, everything centered towards earnings. And you have a Bajaj Auto which is raced ahead this quarter, actually delivering robust earnings, which is powered by the export-led business. If you see the stock as well, 3% up move is what you're seeing. Rakesh Sharma, Joint Managing Director at Bajaj Auto, joins in. Rakesh, welcome to the show. Always a pleasure to speak to you. A very interesting quarter right now if you have to look at the numbers, because volumes are strong, revenues are strong, margins have held up as well, in spite of everyone talking about the impact of West Asia crisis across industries, right? If you have to look at FY27, do you think it is still going to be the export business that is going to drive growth? Because the only concern that I heard from a lot of brokerages, a lot of investors is that why is the domestic business not firing to that extent?
Good morning, Hero. Yes, foremost, I must say that it was a very difficult quarter because there was RM inflation, there was supply chain disruption, there were logistics issues, and given our size of international business, these logistics issues do have a big impact, and it required the entire company to really come together. And for me, the milestone is really the various functions coming together on a very dynamic and daily basis to deliver a quarter in this environment, and for it to be record breaking on all parameters was certainly very confidence inspiring. I think the environment is going to remain volatile. I don't think that there is one crisis after the other. So we will continue to see volatility, but we have to learn to live with it. Exports, strong outlook based on the order books that we have and based on the assessments of our team. It's a strong order book. It is the African and the Latin American markets, part of ASEAN, have proved to be very resilient as an industry. And that's really very good news for us because we've got some excellent competitive positions over there. When you come to domestic, there is no, I would like to just frame the lens through which we look at domestic so that I can share that with you. We don't really look at domestic two-wheelers as one number because it's now there are so many meaningfully sized constituent parts in it which are behaving so differently that you lose a lot of meaning and understanding of the market if you just look at domestic. So, for instance, I'll tell you the two-wheelers are growing at 14%, but within that, electric scooters are growing at 70%, 100cc bikes are growing at 3%, 150cc plus bikes, which is our sort of key battleground, the top half of the industry, they are growing at 25%. The 125cc's are growing at 3 or 4%. So it is very important to disaggregate this and understand how it impacts us. Now, if I look at where Bajaj Auto is strongly positioned, where our management focus is, then I say that we've already talked about exports. That's very strong. 40% of our revenues are coming from there. We have a good outlook of hopefully breaching the 250,000 mark with very good profitability in the coming months. Then the second part is the electric business. We've got a good position in electric scooters. Remember that we got out of scooters in 2007. And then on the back of electric, we've come back into the scooter business and rapidly come to at least a number 2 position, sometimes number 1, but very, very close in the leadership stakes out there.
Yeah.
With double-digit profitability in the electric business. Then if you look at the electric auto business or the three-wheeler business,
Yeah.
people don't, that's almost like 20% of our whole business. It's almost now rivaling the motorcycle business. And solid market position, tremendous growth in e-autos.
Sure.
They doubled, And finally, if you look at the 150cc plus segment, I said it's a 25% growth. We have now seen market share expansion, albeit at a small pace in Q4 and in Q1 in this segment. So, and it's also going to see a lot of action in terms of new product introductions, etc., from our side. So our segments, the one which we are really, really strongly focused on, seem to be having a really good tailwind for us to capitalize on.
Indeed, Rakesh. And good morning to you. This is Alex, and I think you've described all of these categories so well. But I do want to ask about the export segment from the lens of comments that you've made, I believe, in con calls, where you've said that if it were not for supply chain issues, the numbers in the first quarter could actually have been substantially higher. So what can you tell us about the situation on the ground as things stand right now? Because a few of the areas that you do operate in are volatile, even as things stand right now.
Yes, Alex, if you recall in the quarter which has gone by, April and May, where we were besieged with a lot of manpower migration, LPG shortages, which sort of disrupted a lot of vendors and our own production. So April and May were very difficult months from that point of view. I must say those pressures have eased off. But at the same time, there is a lot of shortage of shipping opportunities. Bajaj Auto exports a container every 10 minutes. That is the scale of the operation. And we need 4 to 6 shipments per day. The shipping opportunities have reduced, which makes this whole thing difficult. So I would say that we were expecting to reach the 1.5 million mark, but we could hit 1.4 million. So I would say yes, about 100,000 to 120,000 units were lost, mostly in exports, but also in our electric business, both three-wheelers and two-wheelers.
Rakesh, I'm going to just switch focus from the export to the domestic yet again. You spoke about the 125 to 160cc segment upgrades that are coming in as well. Now, if you're talking about the launches that happen in this segment, will that help the company regain the market share in the core motorcycle segment in FY27?
Yes, of course. But let me tell you, all these segments we are participating are core to the business. The motorcycle business is 25% of our revenues. So just to put that in context, if you permit me to roll back a little bit in the history, the thing is that when ABS regulations came in, we moved very fast in the market and brought in new products extended the Pulsar brand into the 125cc, which gave us a very good market share expansion for 2 to 3 years. But we also saw that by FY25 and in FY26, the end of product life cycle fatigue had set into the portfolio, which had slowed down the portfolio. And there was a weakness in the shares. Now, our first priority was in this segment, if I simplistically break it up between the 125cc, which is substantial, and the 152 to the 400cc subsegments. Then our first priority was to launch products in the 150cc plus segment, which we did after the festive in November, December. And if you see the outcomes on the basis of Vahan registrations, you will see there is market share gain in the 150cc plus segment in Q3 and Q4. 9 upgrades were put in place in the period of November to March. And they have given us a very good uptick in market share, confidence building. Now, as we go forward in the year, we are going to shift focus to include even product launches even in the 125cc segment. So not just upgrades, now going forward, we will have an absolutely new model, albeit under the Pulsar brand, in the 125cc, as well as in the 150, 160. And along with that, there will be around 8 other refreshes. All this happening in the next 6 weeks. So it's a hectic quarter from a product innovation part of it. So that would completely reinvigorate the portfolio, which was sort of at the end of its potency from, let's say, September onwards. And we are hopeful that that should, get us some gains in competitive position.
Okay. Mr. Sharma, very good morning. Tamanna here. I think right now the stock is a darling of the street. Everyone's very excited about the numbers, especially because of exports. But one thing which one should keep an eye on it is what is happening with your EV business. Now, I want to understand how you're thinking about it. Are you looking at EVs eventually cannibalizing ICE scooters? What is the kind of growth you're seeing there? And sorry, I'm bundling up all of these questions, but what is the split right now between two-wheelers and three-wheelers in your EV portfolio?
Well, first of all, we have always been bullish about EVs. We were amongst the first to put in an EV scooter way back in 2020. And I must say, it was at a considerable loss at that time. But the company was backing up the development of the EV segment. And of course, with the increase in gasoline prices, those are always a very strong trigger for shift from petrol to or gasoline or conventional fuels to electric. And that's what we are seeing. So the industry is going to be strong. Already, electric scooters are 25% of ICE scooters. So it's substantial. We certainly think, based on the, again, operating economics, this trend will continue over the next period. And we are very happy with it because we were out of scooters. We had decided to step out of scooters way back in 2007. Now, this gives us an entry back into this very, very important segment, not just in India, but also overseas. And that will happen as soon as capacities get unlocked. So we are, churning out about 50,000 units per month. We are unlocking capacity immediately so that at least we can go up to 60,000 and then investing in substantial capacity expansion over the next 12 to 18 months. Similarly, in three-wheelers. Three-wheelers also, in fact, the progress of e-autos, the electric vehicle segment in three-wheelers has been very, very spectacular. And today, e-autos account for about 40-45% of the L5 category, as we call it. Now, if you see there, we have got the widest portfolio, I think, with 12 models, which go from the humble e-rig right up to the very big three-wheeler with the longest range at an 18 kilowatt hour battery. So there are 12 models which are now there in that portfolio to attack this segment, which is growing big. And as the segment expands like this, several sub-segments and use cases emerge. And that is our whole strategy of being able to laser sharp attack sub-segments which are emerging as both these electric categories develop over a period of time.
So just a couple of quick follow-ups. You talked about 50,000 units right now, scaling up to 60,000 in about 12 months. What is the kind of output that you see on electric vehicles?
No, I said immediately scaling up to 60,000 in the immediate term.
Yes.
And then, we are being challenged on capacity in electric, in three-wheelers and high-end motorcycles. So today our capacity is around 7 million units, and we want to take it up to about over 9 million units per annum progressively over the next 12 months, 12 to 15 months or so.
Okay. I just wanted to get your sense on if you're seeing any impact of El Nino, patchy monsoons, demand at all in any categories right now, Mr. Sharma, because you're more likely to see a first-hand impact than anyone else and before anyone else. Are you seeing any signs of trouble there?
Well, I wouldn't be able to isolate it down to El Nino. It is still very early days, and the monsoon is bringing some cheer in many parts of the country. But I must say this, that the bottom half of the market is really underperforming. In fact, it is very, very low single digit. And the top half, particularly, like I said, the 150cc plus segment, is growing at 25%. So it's a very wide disparity. And then if I look at it state-wise also, there are states which are in negative, and there are states which are growing at 25-30%. So it is perhaps reflecting the structure or the distribution of purchasing power in our economy. And the environment is tough, but there are significant segments which are growing as if, there is no problem. And there are segments which are really underperforming.
On that note, Mr. Sharma, thanks so much for taking the time. We enjoy our conversations with you. Wish you all the best in FY27.
Thank you very much, Alec. Thank you.
All right, we're joined now on Talking Point by Vikas Parshad, someone else that we really enjoy speaking with, and he's been waiting patiently by. Vikas, I wonder if you heard a portion of that conversation and the fact that Mr. Sharma at Bajaj seems to be quite confident and positive about the rest of the financial year. I think that bodes well for the automotive sector at large, and in fact quite a bit of Indian industry. Would you agree?
I would agree. It's good to see you again, and this is a good place to start. I was in Bangalore last week and met a bunch of manufacturing industrial companies. Similar message to what Mr. Sharma was just saying from Bajaj. The demand outlook, especially at the high end, seems intact. The margin compression we were fearing seems not yet to have taken root. So we'll see how the rest of the year goes, but it's a promising start from the OEMs in this earnings season.
Vikas, good morning. Hiral on this side.
The rest of the year goes, but it's a promising start from the OEMs in this earnings season.
Vikas, good morning. Hiral on this side. So if you have to look at India as a strategy, you have been absolutely positive. My read is completely invested as well in terms of where India goes. So in this kind of a market right now, is it a market where avoiding the wrong stocks will matter more versus finding the right ones, number one? And two, if you have to own the right ones, what are the sectors that you're looking at?
I think that always matters. Active stock picking always matters. And given that we're fully deployed always, if we're buying something, we need to sell something. And we're very careful about what we sell. What is interesting since early March, actually since early April, since the start of calendar Q2, is how concentrated the outperformance has been in the small and mid-cap names, and how large swaths of the large cap universe continue to underperform or tread water. And this is perhaps not a surprise, as India goes to about 7,000 listed companies, nearly 2,000 with a market cap over $100 million. The IPO activity is coming back. We're encouraged by what we see. And so active stock picking absolutely matters, even in the period from the end of Q1 2023 to the end of Q3 2024, when the market peaked. And in 6 quarters, the market went up 60%. You could have added a lot of value by being in the 1/3 of the market, or the 1/3 of the benchmark that did underperform. And we're starting to see that again, is that if you look at the large cap private banks, some beats, some misses, largely treading water, slight bias to the downside. I presume we'll see the same thing in staples. We're seeing the same thing in oil and gas. IT services, expectations were low. The names are off the lows, but nothing very exciting yet. But you look off benchmark, and you're seeing names that are up 50 to 100% over the past few months, and I presume that will continue.
Guys, good morning. Tamanna here. So what are you finding interesting right now as this becomes a stock pickers market, as the broader indices continue to outperform the Nifty? What are the spaces that you are finding interesting?
If you look, Tamanna, at our portfolio, our top 10 holdings, the top 10 different sectors, we have healthcare services in the form of hospitals. We have exposure to dialysis also, advanced manufacturing in auto parts. We have some telecommunications exposure as well, optical fiber cables. We've had exposure there. Where we are not allocating more capital and where we remain underweight is staples, IT services. And though we're not underweight collectively, the private banks, we are lighter in that sector than we have been in many years. That may change as the year goes by, but we're finding better value elsewhere. And it's the off-benchmark space that we think better represents where India is headed rather than where India has been. As I mentioned, I was in Bangalore last week. I was very impressed by the defense and aerospace companies that I saw, not just by the large order books, but by how they're managing working capital, how they're allocating their capital, how they're managing margins, and really where Indian companies are carving out niches for themselves, where Chinese players are not there. This question came up in every single meeting. Why are the Chinese not doing what you're doing? And it's because of the niches that they're operating in. And we're very optimistic about what we see in aerospace and defense in particular.
Okay. Vikas, though, I'm just wondering what you make of earnings, because obviously markets are a slave to earnings, and you've seen a few that have bucked the expectations, certainly, quite a few, if I may say so myself. But do you anticipate that will continue into the second quarter when the disruption on account of the West Asia war seems to be continuing, at least in the form of crude oil prices, which are once again at $90 to the barrel?
Yeah, so there's two things here. Number one is stocks over long periods will always follow earnings. This is true in every market in the world, but it's especially true in India. If you look at the performance of the Indian market over the past quarter century, let's hold aside the last year and a half. From 2000 to 2024, this is the best performing market in the world. But the valuations were among the highest in the world. Why is that? It's because the earnings growth was amongst the highest in the world, and the ROEs were the highest in the world. So stocks follow earnings, stocks follow high returns on capital, and that should continue. Just in the last couple of days, what you will see is what you have seen is the two-wheeler OEMs report strong numbers. The multiples are not low. You would not say that optically they are cheap, but look how they've traded. They've traded very well because the earnings continue to exceed expectations, and I do think that will continue, and that's what we're looking for. Our hurdle rate for India is in the mid-teens, and so if you can find companies that consistently grow earnings at above those levels, they should trade at premium to the market, and they should outperform the market. And conversely, if companies cannot meet that hurdle, and we don't think that they will in IT services, we don't think that they will in staples, then they should continue to underperform the market. And to address your point on energy, that was the second part of your question. High energy is not necessarily bad. It's the volatility in energy prices that, when we speak to companies, is causing them some problems. It's the inability to plan, to prepare. If I were to tell companies, or if companies were to tell us that for the next year we think oil will be between 90 and 100, that's much easier to manage than the volatility and the swings between 70 to 120 and then back down to 80 and 90. That's harder to manage. So we don't know yet where we'll settle. I would say, however, most companies have done a better job of managing margins than we had anticipated back in February and March.
True. And you're seeing that through a lot of Q1 reportage in India as well. Vikas, thank you so much for speaking with us. Always a pleasure to have you on. Vikas Prashad there, talking about the spaces that he's lacking in the Indian markets. Indian markets muted today. Just want to pull up the indices before we close off on India market open today, and taken a turn for the worse. Under 24,000 on the Nifty right now, nearly 200-point cut there. And that is going to continue, right, with high Brent prices, etc., and not too much to celebrate. I want to look at the broader markets just before we wrap up, because the Nifty could also be a banks and IT story more than anything else. But you're seeing a similar pattern on the Nifty mid-cap 150 as well, taken a tumble in the last few minutes of trade. With that, it's a wrap on this edition of India Market Open. From all of us here and everyone who put the show together, thank you so much for watching. Stay tuned. Ask Profit up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा, आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
This is India Inc.'s Roll of Honor, recognizing the leaders shaping India's growth story, where ambition, enterprise, and excellence meet. In the presence of the Finance Minister, Nirmala Sitharaman. NDTV Profit Business Leadership Awards, 26 July on the NDTV network. India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing of such distinguished fellow businessmen, bankers. It's just lovely to be back.
Hello and welcome to NDTV Profit. You are tuned in to Crypto Minutes powered by CoinSwitch for your daily use. Daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin above the $66,000 mark on regulatory optimism. BlackRock adds $161 million in inflows in Bitcoin. Tokenized stock market cap reaches $1.7 billion at the end of June month. And White House deal clears clarity hurdle. Firstly, the Bitcoin is above the $66,000 mark on regulatory optimism. Now, this progress on the US crypto legislation, particularly the Digital Asset Market Clarity Act, is boosting confidence in major assets like XRP and Bitcoin. Now, this renewed spot buying and derivatives activity remains a key monitorable. BlackRock's iShares Bitcoin Trust has added roughly $116 million in Bitcoin in mid-July. This has lifted the holdings to about 735,000 Bitcoins. And remember, BlackRock CEO Larry Fink says that the market looks more stable as US spot ETF flows have turned positive as well. A16Z, which is a Silicon Valley venture capital firm, they have stated that the market capitalization of the tokenized stocks has reached about $1.7 billion at the end of June quarter. Now, this is up more than 5 times from $329 million a year earlier. Now, this data showed growth mainly coming in from expansion in the issuance, with more than half of the market value coming from assets that were not yet on chain a year earlier. And lastly, the negotiators say a White House ethics package has broken the Senate deadlock. Now lawmakers are racing to assemble roughly 60 votes before the early August recess. This would give more legal clarity to the crypto ecosystem. And remember, this ethics package is tied to the Digital Asset Market Clarity Act. And before we wrap, here's a quick check on the changes to the crypto prices over the last 24 hours. Largely looking at it, there's a sea of green coming in. Bitcoin up almost 2%, but even Ethereum XRP showing a good technical move. Looking at the support and the resistance, most of the crypto is seeing a good up move towards the resistance side. That range is $66,000 to almost $70,000 when it comes to Bitcoin. Now, time to take a look at the crypto strategy for the day. Here's what's there to keep in mind today. The overall market outlook is still cautiously bullish. And remember, the US regulatory hostility is likely
to end. Now the Bitcoin resistance range on the top of it is that $68,000 to $70,000. That's where the focus should be, and market is repricing the regulatory risk. So we should be watching out for two important things. First is, of course, a fresh capital infusion might be coming in institutionally, and volume spikes also might be there. Now as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved. Whether it's about crypto, regulations, taxations, or the broader industry, the team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
On Earnings Edge, we're in conversation with Puneet Chhatwal, MD and CEO of IHCL. It's been a strong set of numbers despite concerns of what geopolitical headwinds would do in terms of impact to the business. Mr. Chhatwal, let me start right there. What has worked and followed through in terms of the trends that you have seen so far from the previous quarter? Because this was one where we expected some extent of impact.
We have been talking about it since a few quarters. The management has been driving diversification of top line by brand, by geography, and by contract type. So what helps us is that domestic remains very strong. Of course, Dubai was very weak versus what it used to be. London has not been very strong, but it's coming back now very strongly this quarter. Maldives has not been strong. So the impact was very well mitigated by the hotel business, especially in our renovated portfolio, our intelligent use of CapEx in Taj Palace, in Goa, in Taj West End, which has driven not just top line growth, but has also driven very strong margins.
And do you see some of these trends where you've had mitigating factors actually continue? Because one presumes that everything that you saw in Q1 in terms of the Dubai properties, maybe the Maldives properties, will continue now, even as we speak, because that situation has not cleared yet.
That's one. And then on top of that, we have to add the airline catering business. That's also a bit under pressure, was under pressure in Q1, remains under pressure in Q2. But having said that, the hotel segment on the domestic front is been very robust, as I said earlier. And the first 3 weeks of July have really surprised all of us. We are looking at a much higher growth in the first 3 weeks than we have seen in the entire first quarter.
Oh, and what do you think is driving that?
Demand on the domestic front remains strong. Iconic assets like Taj attract more business, higher, revenue growth index than other competitive brands. That's how we achieved an occupancy of 82%. Our new openings, our not like-for-like growth is very strong. We should be opening a hotel a week. Approximately 55 to 60 hotels should open new this year. Very strong pipeline, and the mix in the pipeline is also very strong. So it's like 90% of the pipeline is capital light. So all that, when it adds up, should help us to keep delivering on the promise that we have made or what we have guided for.
So, give us a little bit of a sense on what the occupancies and room rates are looking like for the rest of FY27 compared to what you've seen, the data we have for Q1, and then you're seeing the first 3 weeks of July as well. Are you seeing occupancies remaining at these levels or trending higher? What about room rates? What is the outlook there?
Well, as I said earlier, it depends by brand. Taj remains very, very strong in its performance. Ginger is going from strength to strength in the last 3-4 years, so is expected to also perform very well. Actually, our growth businesses, which is Ginger, Ama, Tree of Life, and Cumin, should do at least a 25% CAGR. That's something we've seen in the past, is happening as we speak. Markets like Goa and many other new markets are performing very, very well, and we have a very strong presence in some of these markets. So Bangalore is doing very well, Goa is doing very well, Delhi has been doing well, and Mumbai is obviously at the top of the charts. So I don't see any change in drop in occupancy or in rate in some of these key markets. Actually, if I would look at it, from the point of view that we're going to have the BRICS summit later this year, we're going to get more business delegations in the months to come post October. We should, coupled with the wedding dates, maintain a double-digit RevPAR growth, although we have guided for 7 to 9, but it would be fair to say that at the moment it's trending at a much higher level.
So you think we could see the 7 to 9 guidance for RevPAR growth actually being beaten on the upside?
Up till now it is for the first quarter plus the first 3 weeks in July. We will see how we could, as management, provide new guidance at the end of this second quarter.
Okay, so there's possibility of a new guidance at end of second quarter. Talk to us a little bit, Mr. Chhatwal, about management fees. And, you've talked about this model as well. Do you see management fees growing faster than room revenue?
At the moment it is. It's showing a 26% growth in management fees, and the room revenue is not showing 26%. I think it will keep growing because of the strong pipeline, because of the new openings. And also, as I said, some of the things, when they become normal, the fees that we earn in Dubai in dollars translates into a lot of rupees. At the moment, it is under pressure. So there is a hidden upside potential that we have from fees, especially coming from the 3 hotels in Dubai.
Is there a hidden upside potential from the air catering business as well? You mentioned a little previously in this conversation how it has underperformed. Do you see an improvement there, and in what timeline?
Absolutely. The new kitchen we have opened in Noida, then there is a new operation we're doing in Navi Mumbai airport. So they will stabilize. And we have all seen, Tamanna, that whenever there is any crisis, there is pressure on the demand, whether it's airline travel or hospitality, but it comes back very strong. My favorite example is it's like a plastic ball. You push it underwater, it's fine. The moment you release it, it comes back up. So I think both the airline segment as well as the areas that are facing the brunt of the crisis will come back very strong. Maybe it's another 3 or 6 months that is needed, but that upside potential is there.
For the last, I would say, couple of years, one constant refrain for the space has been that demand is outstripping supply. This is for your industry as a whole. Do you think we've reached the peak of that trend, or a lot more to go?
Being in the sector, I would like to believe we have not reached the peak and the best is yet to come. But at some point, the demand and supply will converge, because not much construction activity on the hotel front happened during COVID, and it takes 3 to 5 years to build new hotels. So whatever was under construction got completed, but the new supply hasn't come in the same fashion. I think India needs a lot of branded hotel supply. We are at only 200,000. That's equivalent of Dubai and Singapore in terms of branded hotel supply. So a lot needs to be done. We need exponential growth in number of rooms to cope up with the demand and to cope up with the new India, where businesses require you to travel to tier 2, tier 3 cities. You need more airports which are getting built. You need more airlines. So a lot of that is happening, but it just takes time. There's no magic formula to do it overnight.
Yeah. Just one last piece really about acquisitions and plans ahead, Mr. Chhatwal. I want to ask you about Oriental Hotels. Is there any plan to increase a stake and make an acquisition from the promoter family that owns about 24.5%? I'm asking you upfront because this is the buzz that is on, and I think we have the opportunity to speak about it. As clear an answer as you can give us. Is there business sense to it? Is this something being looked at?
Simplification in a company which is in existence over 100 years is a part and parcel of any strategy. For some odd reasons, Oriental Hotels has been on the ticker of most of the news channel for last 7-8 years. It's a question which keeps coming every quarter or every now and then. I think we as a Tata Group company have been very good partners with all. If there was an opportunity to simplify, to increase our shareholding or to do anything else or growth within that company, we would always do that, and that's the board of that listed company that will decide what's the best step for it. But for some odd reason, this amongst all the other group companies, this one is create listed company that will decide what's the best step for it. But for some odd reason, this amongst all the other group companies, this one has created most speculations, but not now, is ongoing for 7 years, as I said.
No, that's all right. But what is happening right now? So as I understand it, if there is an opportunity, this would make business sense for you.
Every opportunity that makes business sense, it's the job of management to go for it, be it Oriental, be it a new acquisition like Atmantan or Ank and Pride, or our recent openings in Frankfurt or the lodge in South Africa. So we keep working on all opportunities and to get things done which have been stuck for ages, like Bandstand. It's been stuck for 17 years, and it's now the excavations are getting completed. So we're almost 90% there. I think we'll work on that. I mean, I don't have a concrete answer to give you. Let
me contextualize it, because in December last year, the call was taken to exit Taj GVK. So I suppose that's why that interest has been spurred, that you're all in or you're not with the way that you're running the business. Just want to get a sense of what is the sense with Oriental.
Tamanna, we had a very good, and we still have a great relationship with the GVK group. We kept all the contracts, and that family at that point decided that they want to do something with hotel business for their own internal thing, and it was a good opportunity for us to exit with a minority stake and at the same time keep the contracts. That's the ideal world. From their point of view, it was also ideal world because they got full control of the portfolio. They are now the main promoter alone, and it made absolute win-win sense. And if something like this, and it did not happen overnight, there were discussions that kept going on for a long time, and when the right moment came, things happened. Similarly, for Roots Corporation, we did. We bought out our partners in Roots Corporation 3-4 years ago, and we made it 100% subsidiary of ours. So that gave us the flexibility to do with Ginger what we have done. So as and when any opportunity comes, we will look at it carefully, cautiously, diligently, and do what we feel is the right thing to do, obviously guided by the board of Indian Hotels.
Well, that was the management, of course, of Indian Hotels. But welcome back to NDTV Profit. You're watching Ask Profit, and as we do, do start sending in your queries on the numbers that are flashing on the top of your screen. Very soon they will. And there you go, and you'll also start getting the landline number as well. You can call us for your stock related queries. But as the markets, we've actually slipped yet again below the 24,000 mark, so it's been a weak push, and we did see some recovery at just about a half an hour ago from that mark, from the lows of the day. But then again, we breached that mark, and that's visible in terms of the heat map also for the Nifty 50. So we continue to see some stocks like Bajaj Auto that reported good results. We didn't see too much of a reaction during market hours yesterday, but stock was up almost 2% at the start and now climbing up 3.5%. But bulk of the Nifty 50 continuing to be under pressure. Indigo, Cipla, SBI, Axis Bank and Max Healthcare are some of those which are under pressure right now. In terms of what we have seen on the sectoral heat map too, the banking index continues to be in focus yet again. Seen some pressure on the private banking index since the start of the week. Today though, you're seeing PSU banks actually taking the brunt. You're seeing Realty also taking the brunt as well. And the advanced decline ratio for the broader markets before we start taking your stock related queries also. If you can pull those up. Now, over the last couple of days, we've seen a convergence essentially in both the advances and the declines, a very crisscross kind of patterns, but the advance decline ratio, if we can pull it up on screen right now, today has been a clear one where 3:1 favoring the declines right now. So that is the picture of the markets. But let me welcome in our guest now, Vaishali Parekh, Vice President Technical Research at PL Capital, and Sameer Dalal of Natwarlal and Sons Stockbrokers joining in now. Both of you, thanks so much for joining in, and a good morning to both of you as well. The first stock-related query, and this one's coming in on M&M Finance as well as Poonawalla. Both of those reported results very recently. Satyan is asking about both those counters. He's entered it, M&M Finance at 277, Poonawalla at 348. So he's sitting on good gains on Poonawalla FinCorp. But Sameer, very good morning to you. Would you recommend him to continue holding both those counters in his portfolio? The results were decent from Poonawalla, of course, and we've seen those gains built on. Any view on either of them?
A view on both of them. So M&M Finance, we continue to remain very positive on a long-term basis. They cater a lot to the rural segment, the farm segment, which sometimes does go through a bit of cyclicality, in the sense you have Q1 sometimes, which can be a little subdued. And then once you have the season where they are able to sell their product, then you see the recovery is happening. Now, for them, Q1 actually, which is supposed to be a weak quarter, has been fantastic. So for me, now if Q2 gets better, I think the stock has more potential to probably move up further. So stay put in it. I think the stock has a lot of room to move up over the next year and a half. Poonawalla FinCorp also, we remain constructive. They're growing the loan book very aggressively. They're well capitalized. They're diversified their book quite well. Yes, they do have a bit of unsecured lending and consumer lending. But, that is where they get their profitability from, right? Because those ticket loans, the interest on those are much, much higher. Stock has actually been under massive consolidation if you look at it for the last 2 to 3 years, So a lot of the premium valuation has reduced. I'm not saying it's not still a little expensive, but we feel now the worst for them is over and the stock can probably move up over a longer term. So we say stay put in both of them.
All right. The next question that we have is coming in from Ravi, who is writing us from Vijayawada, asking about Jammu and Kashmir Bank. He's got around 2,000 odd shares at the levels of 185 and wants to know the technical targets on this one. Vaishali, a very good morning to you. I'll come to you on this one. What are the charts indicating for Jammu and Kashmir Bank?
Hi, very good morning to all of you. I think Jammu and Kashmir Bank is one of the banks which is doing very well. And I think the trend still continues to be positive. Near-term support can be taken at around 175 levels and look for a target of 200-220.
All right, and welcome to the show to you as well, Vaishali. But the next question, and this one's a good one, coming in from Rajesh, who's from Hyderabad, wants to know about Sansera Engineering as well as Azad Engineering. Both those counters have actually flown over the last 3 to 4 months in trade and led by the aerospace vertical. But Sameer, is it still advisable to enter either of those counters? We've seen a strong re-rating on both of them. Would you recommend Rajesh to enter either of them right now?
So, this is a space we actually haven't covered too well. We missed out on the opportunity, so I don't have a call on it, unfortunately.
Anything on the charts, Vaishali, that you can recommend? Because again, especially Sansera has seen a massive run up. Is it expected to continue?
I would say it's to run up and it's in quite a forward zone. So either keep a trailing stop loss or booking partial profit should be advisable at these levels.
Okay, all right. The next one that we have is coming in the pharma space. Prashant is writing in and asking about pharma names. He's saying that because of the announcement coming in with regards to tariff on generics, a lot of pharma names, are seeing a downtick in trade today. Any of these that look attractive, have value buying and can be entered at the current levels from a fundamental point of view is his question. Sameer, I'll come to you. What would you recommend, Prashant, right now?
So value buying, no, but growth buying, yes. Yes, Donald Trump has come up with these tariff structures. After 2 years, there'll be 100, 3 years, will be 200. But Donald Trump is here for 2 more years. So hopefully, by the time we reach that phase, a government which is more, stable or less volatile when it comes to words, comes into power and reviews the situation without affecting the cost of medication for the for the general public in the US. That is our belief at this point of time, given what has just been announced on Twitter. It's not even, there's no official action on it. So having said that, we still believe that the pharma sector is here to grow. Sun Pharma continues to remain our top pick in that space. We think the branded generic side, which they're working on, is doing fantastically well and will keep growing. We also like Dr. Reddy's, which is got a few ANDAs filed there. And then in the mid cap, we've always been seeing Torrent Pharma, but valuations there have now moved up quite a bit, unfortunately, which is got a few ANDAs filed there. And then in the mid cap, we've always been seeing Torrent Pharma, but valuations there have now moved up quite a bit, unfortunately. So corrections in Torrent Pharma closer to maybe 4,200. I'm talking of a sharp correction because valuations have moved up so much. That might be a good stock to enter from a long-term growth perspective.
Thanks so much for the detailed view as well. But the next question coming in, this one's on Paisalo. Viewer Lena from Bengaluru has been holding on to these shares for a while now. Wants to know, Vaishali, what's a near-term target that she can expect? She's asking when can he expect to reach 100, but what are you looking at the charts right now?
Well, time period cannot be defined, but I think the stock has done very well and given good returns. So continue holding, keep a stop loss of 66 rupees, and maybe 100 I think can go in this quarter. So I guess keep a horizon of 3 to 4 months and I think look for those targets.
All right, okay. The next question that we have is coming in, and this is from Rajiv, who's calling us from New Delhi. Rajiv, a very good morning to you. Go ahead, ask your question.
Yeah, very good morning, ma'am. Sir, my question is from Samir, sir, because this is regarding Sterling and Wilson. Now, it reached up to 250 and now came down again. Yesterday it was 205. So I bought at 250 shares at 207 yesterday. So what's the future?
Okay, all right, got your question, Rajiv. I'll take this up with Samir. Samir, there has to be a question on this one, right? I mean, the stock upward moment that Rajiv is talking about was on the back of order wins that it was seeing, but because of results not being up to the mark, it did see pressure in trade, right? What is your view now post Q1 earnings?
Yeah, absolutely. So the results are a little bit of a disappointment because execution didn't happen the way management had earlier guided. However, they've said that from Q3 onwards, because there were certain projects which didn't get started up in the right time, so it got delayed a bit, but by Q3 you'll see it coming up, and they have guided for doing an 8,000 crore turnover for the current financial year. So even at 8,000 crores, if we take the projections and do the numbers, we still feel the stock price should be at 350 in 1 year's time. Now, where the story and the real benefits will lie for Sterling and Wilson Solar, which I've explained a few times, is Reliance New Energy is going to be setting up 10 gigawatts of solar power every single year. I'm just saying, let's assume they can get even 30% or 40% of that, right? Of that 10 gigawatts, that's 3 gigawatts a year. Into 3 crores, you're talking of a 10,000 crore order coming to Sterling and Wilson on a yearly basis. Huge numbers that you're talking about. So for me, I think the opportunity is extremely large. This is a long-term play. You got to stay invested. Don't keep looking at it on a day-to-day basis. At least I'm not doing that. And whenever you get corrections like this, these are times to add on, which, let me also put a disclaimer, I have done that yesterday. So I continue to remain very positive and think this is a long-term great investment to have.
You, Samir, it took about 7 minutes for us to get the first question on this counter, but got your view. Thanks so much for that. But viewers, as well as Vaishali and Samir, let's start taking the rapid fire round. First one's coming in from Thomas Matthew on Canara Robeco. He's holding 1,200 shares at 268. So sitting on good gains. Samir, I think it was a bit of a surprise, right? Very good numbers since listing. I think it was very sideways on the back of poor results. Should he continue to hold now?
This is which one? Canara Robeco?
Canara Robeco AMC, yes.
This business overall, you can keep holding, yes. Results can be poor, but look, as long as the SIP flows and all of the money keeps flowing to the AMC businesses, I think that's not a problem.
Okay, the next
one is the one we don't have under coverage though. I'm very positive on AMC though.
All right, okay. The next one that we have is on Marksans Pharma. Uma from Bengaluru wants to know if this is the right time to enter into this counter from a medium-term perspective. Vaishali, what would you recommend her?
I would say so because it's come on a good support level, so this is a good level to buy.
Rainbow Hospitals, Muthu actually bought this counter at 937 approximately, so very close to the IPO price. Sameer is holding 64 shares. Should he continue to do so?
Valuations are a little bit rich. I would say book some profits out here and look for some other stock in this hospital space. This one's a bit expensive.
Okay, the next one that we have is on TD Power Systems. Our viewer Srinivas is holding 1,000 shares at the levels of 1195. A short-term target on this one, Vaishali?
As a disclaimer, this is what we have recommended. Our short-term target would be 1200 to 1250.
Next one's on HDFC Bank. We were getting a lot of queries for this. Put a special segment also in India Market Open today. But Sameer, our viewer is holding shares at 887. He wants a long-term view. Should he buy now at this price?
Absolutely. Please go out and buy. So you know what? The market's looking at the headline numbers, unfortunately, saying the growth was only 5%. But take out the benefits the profits that came from the HDB financial sales, and you see the profits have not done badly. Plus, we know that the FCNR bonds are going to come, which is going to allow them to get funds at a decent rate, 6% you're talking of, right? Versus what some of the erstwhile HDFC borrowing was at 6.5, 7.
Right.
So we're going to get that benefit coming through. So for me, profitability is now going to start only increasing. They are the largest franchise. Once the new MD, CEO gets announced, I think the stock will do really well.
Got it. The next one that we have is on Coforge. Our viewer is holding 100 shares at the levels of 1520. Hold, sell, buy. Vaishali?
Hold.
The next one's on Finolex Cables, bought at 1025 by Keshav. Should he hold for the next 3 years, Sameer?
I'll say sell.
Okay, the next one that we have is from Kirti, who's asking about Cochin Shipyard. Sorry, this is Raghu from Bengaluru, who's asking about Cochin Shipyard. He's bought around 300 stocks at the levels of 1580. He wants to know whether he can continue to hold this one or not. Vaishali, on the charts?
May perhaps add more at 1350.
Next one's on Sagility. Sameer, the results came on yesterday. Nisha from Hyderabad wants to know if it's a good time to add into this counter now. Would you recommend that?
Yeah, I think one can. I think the prospects are good. This is a company that's growing, given guidance also of a 12% growth, which is low double digits, so anywhere 10 to 12%. We think the margins will also expand and the profitability too will. So I think there is more upside to the stock, maybe a target of maybe 60 in 1.5 years time.
Okay, the next one that we have is on HFCL. Our viewer Nandagopal from Bengaluru wants to know whether he can continue to hold this one. He's bought at the levels of 190. Vaishali?
Yes, it continues to make new highs. Hold with a stop loss of 200.
Also, Vaishali, on Kirloskar Oil Engines, our viewer Kanan is bought at 2250. What should he do with his 30 shares now?
Stock is just consolidating. Keep a stop loss of 22,000 and hold.
The next one is from Mana, who's writing us from Mumbai, asking about Lupin. He's got 45 shares at the levels of 2287. He wishes to add more. From a fundamental perspective, is that the right thing to do? Sameer?
Wait a little. Wait for the price to come closer to 2 again. I think you'll get it there, and that's better to buy.
Alright, that brings us to the end of this rapid fire round, and time to slip into a very, very short break. But don't go anywhere. We'll be right back answering more queries on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kinds of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury
and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can
Welcome back. You're watching Ask Profit. A quick look as to how the markets are doing. The Nifty 50 is now trading near the crucial levels of 24,000. Just to 17 points of an uptick from those levels is what we're seeing. We'll have to see as to how that fares throughout the day in trade today. Down by about 0.7%. The bank Nifty is also down by about a percent. Continues to be under pressure. Now around the 57,200 odd levels, and that's something that we'll be watching out to in terms of where the bank Nifty goes. Largely today driven by names like Bandhan Bank, of course. But you also have the VIX, which is up by about 3.5% around that 13 mark. 14 is where the risk begins, so that's something also that we'll be watching out for. The broader markets also continue to be under pressure. The mid-cap 150 mirroring the benchmarks right now, down by about 0.6%, but the small-cap 250 is slightly more under pressure, down by about a percent. Some stock-specific name, if you can try to pull up the BSE 500 and see as to what are the names that are buzzing in trade right now. Very stock-specific, news flow-specific, earnings-specific is what we're seeing. Of course, this is Nifty Pharma, but let's also try to pull up the BSE 500. You have something like a Bandhan Bank on the back of guidance cut down 15%. MedPlus Health also on the back of weak earnings down 15%. Sunteck Realty again on the back of weak earnings. Granule India Mart, all of these on the back of weak earnings, seeing the downtick coming in trade. But on the flip side, you have something like a Uflex, which is doing very well in trade, up 8.6%. M&M Finance on the back of strong earnings, up 7.5%. Data Patterns also up by about 7%. So that's with regards to Bajaj Auto finally reacting in trade today, up 3.7% as well. So that's with regards to where the markets go. But let's take in the next question, and this one's coming in from Muthu, who's writing us from Chennai. I think we've taken this question. The next one is on Karur Vysya Bank. This is from Mohan, who's writing us from Coimbatore, and he's asking if this is the right levels to buy this counter or not. Vaishali, what would you recommend on the charts for Karur Vysya Bank?
No, I would not say to buy because it's already coming towards a weekly resistance. About 350, it would go to 370. So if you want to be a risky trader, you may do so.
I think we've got our next caller, Shweta, I think is calling us from Hyderabad. Shweta, very good morning to you. Go ahead, ask your question.
Hi, Mahima. Very good morning. Before asking my query, I would like to thank Mr. Samir sir because his detailed analysis always helps us in choosing the right stocks. So I would like to say thank you to him. And today my query is regarding Vari Energies. I have 40 shares at the average price of 3,300.
Okay.
So, and I also hold Samir sir's favorite stock, Sterling and Wilson also.
Okay.
Both of them are at the average for 15% loss. I'm holding both of them. I would like to know whether I should add them at these levels, average them, or should I shift one stock into another? Should I sell one stock and should I shift to another one?
Okay, got your question. I'm not sure if we have Samir back because we were facing some technical glitch with him. Is Samir back with us? If not, I think, Shweta, you'll have to wait for a while and then I'll take the question. Do we have Samir? Okay, I don't think we have Samir, but I'll take this up with Vaishali, and once Samir is back, Shweta, keep watching us. I'll definitely take your query. But Vaishali, on the charts for Vari Energies, what would you recommend, Shweta?
So I would say Vari Energy currently is going through some corrective move. I would say if you have to add more, add near 2,500 to 2,300 levels. That would be the level because right now it was on a downward growth. So the trend is down. So I think wait for a dip and add more because for long-term perspective, this would still do well. The other stock that you mentioned is Sterling and Wilson. I am technically it is not supporting my view, so just continue holding.
The next one that we have is coming in on MedPlus. This is from Siddharth Chaturvedi, who's writing us from Jaipur, asking if this is the right time to enter this counter after the fall that we've seen. Vaishali, it's largely on account of weak earnings that this stock is hammered in trade today. But do you think that these are the right levels to make an entry from a technical standpoint?
I would say no because there is no reversal. We need to wait for some clarity. So if you still have to, I would say just keep today's low as stop loss and get into the trade.
All right. Okay. The next one that we have is coming in from Arvind Maheshwari, who's asking about CESC, and he wants to know whether, from a 6 months perspective, is this a good counter to continue to hold? He's looking at the technicals probably. Vaishali, what would you recommend him?
I would say yes. The long-term chart looks quite intact, and this level is good to add more if you have bought it at higher levels. And I think in times to come, this can go towards 200, 220.
All right. Okay. The next one that we have is on Medi Assist. Peter from Trichy has bought it at the levels of 385. 20 shares is what he's been holding. He wants to know if he can average at the current levels. Would you recommend that, Vaishali?
Well, I don't have much of a data, but I would say if you have to add about 360, 365, the stock needs to sustain about that to give a clarity and confirmation that yes, it's likely to show strength.
Okay, all right. I think we've got Samir back, and Samir, we'd got a caller, Shweta, who was, by the way, praising about the way you've, given detailed analysis about the stocks that you have conviction on, and she's also asking about Vari Energies because she's saying that she's holding both Sterling and Wilson and Vari Energies in her portfolio. Should she switch from one to another? Is her question, or should she continue to hold both?
Yeah, so that first of all, thank you for the kind words. I heard it. I mean, I could hear, but I guess my connectivity was not there. But having said that, they're two separate businesses. Sterling and Wilson is a pure EPC player versus Vari Energies is a company that makes the solar panels, which is now backward integrating into solar cells, which is getting into battery energy storage. So that they're all part of the same renewable solar energy space, but they're catering to different parts of the business. So with EPC work, you get a flat 10% margin, 8 to 10% margin, which you make money out of. The risks can be lower, but there always remains one risk that growth slows down. And why we are so convinced on Sterling and Wilson Solar is because we believe growth for the next 5 to 10 years is going to be fantastic when it comes to renewable energy. Now, Vari Energies unfortunately caters to a space which is very overcrowded when it comes to solar panels, right? And that space is getting crowded in India. Reliance is also going to be launching its own solar panels. I think Adani is doing it as well. So once all of that comes on, the pricing power may not lie in the hand of these companies. So from that perspective, we find Vari a little bit more risky. At this price, I would not recommend you sell out, but on bounces closer to 3,000, yes, take your money out. The stock becomes a buy to us closer to 2,000, like maybe even below 2,000. Till that point, we are not as convinced that this is a long-term, high-return generating asset.
Okay, all right. The next one that we have is coming in on SBI funds. Arvind Manjeshwar is holding around 100 odd shares, and he wants to know whether he can continue to hold this one or not. He's of course gotten the allocation in the recent IPO. Any view on this, Samir?
Yeah, love that. I've told you this when we asked about I think the mutual fund industry is something that is going to do really well. Mahima, if you give me a minute to explain this. This is an industry that even if they don't get fresh SIPs, which they're getting by the dime a dozen of fresh investment, if the markets give a 12% return year on year, this industry can grow at 12% year on year without any fresh investment coming in. Now, let's talk about the fact that you have fresh investments happening. And once mutual funds returns start doing better, you see bulk of money starting to flow. Actually, the last 2 years returns have been subpar, pathetic, whatever you want to say, because the markets have not done well. So we are saying now wait for the markets to do well. And when the fund flows for them increase, you will see the operating leverages play out. And these stocks will all probably be up 30 to 40 to 50% over the next 2 years. So please stay invested. SBI Fund Management is the largest player in the space, trading at a discount to all the other peers, has the best reach thanks to SBI Bank being the parent and pushing their AMC business. I think this is a stock that one should definitely hold in their portfolio.
Okay, so that's of course on SBI funds, but we have Nestle Q1 earnings that are flashing on your screen down there. Net profit has beaten estimate with a 975 crore versus that of an 836 odd crore, and we're seeing that spike coming in the counter as well, 3.6% of an uptake. Revenue also is slightly better than what the street was expecting. The expectation was around 6,000 odd crores, but it's come in at 6,300 odd crores. So both in terms of revenue and net profit, it's a beat. It will be interesting to watch out out for as to how the EBITDA number fares. But I think in terms of standalone numbers for both the top line and the bottom line, it seems to be a beat. Net profit of 975 odd crore versus that of an 836 crore of an expectation. Even for Nestle, the commentary will be interesting because last quarter what they did was the ad spends were significantly higher, and on the back of that we've seen the top line growth coming in for this one continuously, and I think that's happened this quarter as well, because when we spoke to Manish Tiwari last quarter, he said that ad spends and advertisement spends are going to be at these levels, and that's going to push the top line going forward, and fewer and bigger bets is what they're going to focus on. EBITDA number flashing on your screen there, 1500 odd crores versus that of an expectation of 1300 odd crores, and margins have significantly seen a beat. I think the expectation was around 22.3 odd %, but 24.1% margins is what is being flashed on your screen. So margins definitely an interesting one, because this has been a crucial quarter, an interesting quarter where we have seen inflation rising, but despite of that, if they're able to beat in terms of where margins go, it's sure shot a good set of numbers, and we're seeing that in terms of where the numbers, the stock also is reflecting, because we've seen the spike coming in on this one. Also, the commentary will be interesting to watch out for because they've said that they further accelerated operational cost savings, and this is the reason as to why their EBITDA is a beat. In terms of advertising spends, of course, it was over 40%, but despite that, the EBITDA margin has been around 24 odd %. Confectionery as a group has recorded another volume-led double-digit growth. This was, of course, led by market share gains continuing in some names like Kit Kat as a brand. Powdered and liquid beverages is which has recorded another strong and consistent performer. This is the 20th quarter where they've seen double-digit growth in this particular segment. For something like a Nespresso, it's seen a good traction. Now, of course, this is at a very nascent stage, but this has also seen a good traction. Prepared dishes and cooking aids has also seen strong double-digit growth with engagement from urban consumers is what the press release is saying. Milk and nutrition products has also seen strong broad-based performance built with an underlying volume growth across brands and channels. The delivery was supported by disciplined brand investment in strengthening category is what they're saying. Pet food business has also seen a double-digit growth as per the press release coming in. General trade has continued to see a strong double-digit growth for Nestle, and rural distribution touchpoints have been expanding and it's something where they are focusing on more technology-led growth. Plus, in terms of where milk procurement stands, I think that is where they've probably been able to crack the game and are probably making that mark, and on the back of that, the margins are also seeing an uptick coming in. I think we're joined by Gaurav Sharma, Associate VP, Head of Research at Globe Capital, joining us now. Gaurav, a very good morning to you. Thank you so much for joining us at short notice, but Nestle earnings are out. Any quick first take on this one? Because margins definitely is a strong beat despite of the inflationary pressures that we've seen.
Hi, very good morning to you. So yes, certainly this is a very positive surprise coming in from Nestle. Although Nestle was among the very few companies to give a price hike very early, and that was actually reflecting and positively impacting its share price as well. But this particular performance in a quarter where there was inflationary fears, prices were mounting higher, raw material supply was clearly a challenge, and the company still managing to have a increase in terms of margin. I think this is huge. We are expecting a 30% uptick in terms of PAT. This is even higher, and I think this is just because the company is able to maneuver the prices in a much better manner as expected. So therefore, a clear thumbs up to Nestle and the management, the way they have been able to manage things for themselves. Even on the charts front, the stock is looking very much upbeat, one among the better placed of the lot. So clearly, we see more upside coming in the stock in the immediate near term.
Well, the other fact is that, all of the categories have seen double-digit growth, and there is volume growth also coming in. Of course, they've not given the volume numbers per se, which they never give, but across brands, and this has been the case for last so many quarters, right? What do you make of this? And this is on account of the ad spends that they've done so far in the last quarter, this quarter as well, which is beyond that 40% mark. Do you think this growth trajectory should continue in entire FY27, and do you think that this is one of the pockets in FMCG that will significantly outperform peers?
This is pretty much possible because the past performance clearly suggests that they are managing things really well, much better than the peers. The kind of margin uptick, the kind of volume, we were expecting a 10-12% of growth. Although the numbers are yet to, I need the details of it. But the prima facie, whatever comes to me, this is very, very stellar set of numbers, much beyond our expectations.
Make in terms of where volume growth goes, because the expectation was in high single digits to low double digits. Any estimate that you have in terms of the consolidated volume growth that would have been done by Nestle?
We were expecting a 10 to 12% growth, Naima.
It should be around that.
These numbers suggest the real figure could be much higher than that. Because a 2% or 2.5% of uptick in terms of profitability would not have a 48% rise. We will have to dig deeper into the numbers actually to see what led to such an exponential rise in terms of packages. This is clearly very surprising.
Very surprising. And yes, the stock is holding up for sure. I think we're also joined by Aditya Shah, founder of Hercules Advisors, joining us now. Aditya, a very good morning to you. Thank you so much for taking out the time. Your first take on Nestle earnings, because it seems to be beat on all fronts.
Yes, good set of numbers. Margins at about 24%. Revenue growth also looks really very strong. Revenue growth at about 30-40% looks really very good. So from my perspective, volume growth should be in double digits. Good set of numbers from.
Because the price hike has not been that much, right? Because as Gaurav was also mentioning earlier, that the expectation was around 10 to 12%, but the revenue growth for standalone at least has been around that 25% mark. So most certainly, the volume growth has to be in at least mid double digits, or at least around that 15 to 16% mark is what we are guessing. But Aditya, I was asking Gaurav also about this. Do you think that this is one of the counters that should significantly outperform from the entire FMCG pack? Because of course, other than Nestle, I think Marico, Tata Consumer are some of the other names that definitely people will be watching out for in terms of where double-digit growth stands. But do you think that the last 2 quarters have kind of signaled the fact that this will outperform its peers in the FMCG space?
Down year on year, so I think that would have aided the margin really well. Volume growth at about 10 to 15% is a really very good show. Now, we need to understand, are there any other cost pressures that the company has? Otherwise, the company will do well also a little bit of next 2 to 4 quarters.
Okay, all right. Okay. So that, of course, is Aditya Shah and Gaurav. Thank you so much to both of you for taking out the time and, speaking with us, and, of course, giving your take on Nestle coming in. But most certainly, viewers, a good set of numbers from Nestle, 3.5% of an uptick is what we are seeing on the stock. And this is on the back of course, strong earnings. Sameer, any quick take on Nestle if you had the chance to see the numbers or the press release?
So while you were talking, I did have a quick glance through the numbers. They look extremely good. But you also got to look at it from a fact that, look, Q on Q, the numbers are a little subdued. And this is a FMCG business which should not have seasonality to it to a large extent, right? So we also need to see why there's a Q on Q dip in revenue. Second, they also have this new product that has been launched, which is your Nespresso capsules. I think a lot of that is going to be coming through in the growth. That will take a decent amount share of the growth from the previous year, which didn't exist. So a new product category has kind of helped as well. And if you look at the valuation multiples, if I project him to do about 22 rupees EPS in the current financial year, let's stretch it because he's done really well to even 25. you're still trading at expensive valuations, right? You're still trading at 60 times 1 year for 9 months forward. And if I take another 15% growth also on that, on top of that, you're still trading at 44 times earnings. So risk reward is not in favor right now. You're playing a story of growth. FMCG is a very competitive space. So at this point of time, at this price, I would not be buying. The results were buying.
All right, okay. So that's the view coming on Nestle. But let's also, circle back to all your stock-related questions. I think we've got our next question on Gravita India. Ravi from Hyderabad wants to know as to whether this is the right counter to hold in the recycling space, and whether from a short-term perspective, what are the targets that one could see on this? And he's not given the buying price yet, Vaishali, but what would you recommend on Gravita India?
I would say this full sector is doing well, and I think it should be kept in your portfolio. Gravita, I would say, yes, it is trending, and if time is not the worry, then I think this can gradually go towards 2200-2300 levels to start with. So my view would be to accumulate with support of 1650. So buy at every dip to look for higher targets.
All right, okay. The next one is on HDFC Bank. We already took a fundamental view from Samir on this one, but this is from Lavanya, who's writing us from Nellore, and she wants a short-term view. She's got around 300 shares, bought at the levels of 815. She wants to know, from a short-term perspective, can she continue to hold this one or not? Vaishali, what would you suggest on the charts?
I think the damage, the corrective move is pretty much done with. So finally, now keep a stop loss of 740 and continue holding.
Right, okay. The next one that we have is coming in on Fortis. This is from our viewer Shrikant, who's asking about Fortis, and he wants to know if this is the right time to maybe buy this one and average out. Although he's not given us the buying price of this one, but any view on Fortis Health, Samir?
Yeah, I don't know why you'd say average out, because I think this is very close to its lifetime highs, right? So if you're a long-term investor, I think the valuations are quite rich at this point of time. We don't deny the fact that, look, these hospital beds, the occupancy rates as they keep rising will definitely make valuations look better, because the operating leverages will start playing out. Plus, they have a good growth pipeline ahead of them. But you want to make money over the next 2 to 2.5 years, you're not going to really do it at these valuations. You will get subpar returns of 6-8% maybe CAGR, which is pathetic. So for me, I'd find something to invest in and avoid this for the bank.
Right, okay, it's time for our rapid fire round now. Vaishali and Samir, try to keep your answers as short as possible. The first one is on SJV, and Ajay wants to know, from a long-term perspective, is this a good buy, and is this a good time to buy? Samir?
Yeah, one can add on to it.
Okay, the next one is on Sobha. From a 1 year perspective, Murli from Hyderabad wants to know as to what should be the upside. His buying price is 666. Vaishali, your view on the charts on this one?
Well, short term would be around 1600, but for that 1400 needs to be held on. So keep a stop loss of 1400.
Okay, the next one is on India Mart Intermesh. A good time to enter into this counter. It's hammered, of course, on the back of weak earnings. But Vaishali, what would you recommend?
Well, I don't have this chart.
Okay, the next one then is on Varun Beverages. Is this the right time to enter into Varun Beverages? Jacob wants to know from a long-term perspective. Samir, what would you recommend?
Yes, absolutely. Please go ahead and buy. Very strong fundamentals.
Okay, the next one is on BSE. Manju from Bengaluru is holding 45 shares at the levels of 3945. A good time to buy this counter. Vaishali, what would you recommend?
Yes, I would say so. But even if one declines, say around 3200, add more.
Okay, the next one that we have is on PG Electroplast. From a long-term perspective, is this the right time to enter? Samir, it's fallen around 5% in trade today, almost 6% now. Do you recommend a buy on this one right now?
No, I don't recommend a buy on this. I think there are other counters you can look at in the similar space of EMS where you can make better returns.
Okay, all right. The next one that we have is on JSW Energy. This is from our viewer who's writing us from Tamil Nadu. He or she wants to know whether to enter this counter right now from a perspective of 1 year. Vaishali, JSW Energy, what would you recommend? Vaishali, JSW Energy is the counter. Okay. It's up just by about 0.4 odd %. I think we've got some technical glitch.
Trending
Do you have the
zone,
charts
so 520.
now? Okay. Go ahead.
Yes. So 520 is the support, and if 6 months you said, right, is the horizon, then look for a target of 620.
1 year is the time horizon, sorry.
Yeah, so 620, 640 should be the near-term target, and from there on we can have a relook.
All right, okay. The next one is on Dr. Reddy's. Tulsi from Hyderabad is holding 70 shares at the levels of 1264. She says she's down by about 6% Should she continue to hold? She bought it seeing the fundamentals. Samir, what would you recommend?
So if you bought the fundamentals from long-term, stay put. If you're looking for a short-term exit, I mean, better to ask Vaishali.
Okay, the next one that we have is from Shankar, who's writing us from Bengaluru, asking about IRIDA. He's got around 1260 odd shares at the levels of 135. He wants to know from a 2 months perspective, can he continue to hold, maybe add more at the current levels? Vaishali, what would you recommend him?
Actually, there's nothing much happening. So now that you're holding, hold with a stop loss of 115. Conviction and strength comes only above 130. So that would be the way to look at it.
All right, okay. The next one that we have is on ONGC. Lavanya from Bengaluru has bought it at the levels of 248. 1,000 shares is what she's been holding. From a short-term perspective, again, Vaishali here, what would you recommend on the charts?
Short-term, look for a target of 265, 268.
Okay, the next one that we have is coming in on IFL Finance. Anil Nair from Abu Dhabi is holding 580 shares at the level of 630. He's been holding patiently for the last 2 years. Okay, the next one that we have is coming in on IFL Finance. Anil Nair from Abu Dhabi is holding 580 shares at the level of 630. He's been holding patiently for the last 2 years. Can he continue to hold further, Samir?
No, IFL Finance, no coverage.
Okay, any view on the charts, Vaishali, for IFL Finance?
It's a gradual move, so 540 to 580 to 600, but my preference would be M&M Finance.
Okay, the next one that we have is coming in on Gaudium IVF. Dilip from Kolkata wants to know from a long-term perspective whether Max Health is a better one or Gaudium IVF is the better one to enter into. Samir, any view?
Neither, I would say, but if I had to pick one of the two, Max Health.
Okay, the next one is coming in on Sirma SGS. Balwant Modi from Rajkot wants to know if this is the right time to make an entry. Vaishali, on the charts?
So Sirma SGX already, I would say ideal level to get in would be at around 1250.
Alright, okay, so that brings us to the end of this rapid fire round as well as Ask Profit. Samir and Vaishali, thank you so much for taking out the time and helping us answer almost 52 queries that we managed to answer in this show. But you know what, viewers, after a pause of 13 years, one of the most prestigious honors in Indian business is back. On July 26th, NDTV Profit brings back the Business Leadership Awards, celebrating the leaders, companies and entrepreneurs who have helped shape India's economic journey. The next category is of course Philanthropist of the Year. This award honors an individual or family whose philanthropic contribution has delivered measurable transformative impact across education, healthcare, climate action, civil society and public welfare, demonstrating leadership beyond profit. Shiv Nadar donated around 2,708 crore rupees, topped the Hurun list for the 4th time in 5 years. Azim Premji donated around 147 crore rupees through Azim Premji Foundation in FY25, and Nandan Nilikini and Rohini Narikini jointly contributed over 500 crore rupees towards climate, education and civil society. Nitin and Nikhil Kamath frequently recognized as the youngest philanthropists for their 147 crore rupees contribution through Rainmatter Foundation. Sushmita Bakshi, she gave away 90 crore rupees to healthcare in Odisha. Alright, so that was of course the entire list of philanthropists that of course we have for our Business Leadership Awards. But with that, we're completely out of time on this edition of Ask Profit. But do stay tuned in. KYC comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबां केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT
that are propelling India to what we call the Viksit Bharat stage. Those are demographics, democracy and digitization. These three things are instrumental in creating what we hope is a new India, a more bold India, a more braver India in the next few years.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
The news.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey, and this is a very interesting show where we get you interesting companies, interesting stories, and yes, if there is an alpha to be made or not. Let's try to understand what company we are talking about today, but before that, very interesting hints I'm going to give you. It's a multi-specialty hospital chain in West India, and if you are in and around Thane and Pune, you know which company I'm talking about. Also, it was recently listed in September 18, 2023, not so much of a history in the markets right now. And another interesting take is the company has a planet's name, and I've showed you the logo also. I'm sure you must be guessing it by now. It's a very large planet, and stock has more than doubled up from the IPO price as well. So try to understand which company I'm talking about, and yes, you must have guessed it by now. It is Jupiter Lifeline Hospitals. This is the company which we are talking about, but the question remains is, why are we getting this company? What are the questions to be asked? What will be the conversation with the management, the growth expansion plans and the key timelines, which are the areas they are actually functioning? We'll try to make you understand that. Also, the second important question is in and around that expansion, especially on the Pune South Hospital and the Dombivli. This is the Mumbai metropolitan region part. Also, the current occupancy rates, operational bed capacities, and all the operational setup and the outlook going ahead. Also, we'll try to understand the capex plans ahead and how will this be funded. The company is focusing largely on greenfield momentum, or you could say the greenfield setup. So that's something we'll look out for. And the land banks, any other land banks are there for acquisitions or not, that's also something which we'll be tracking. And any plans on entering new segments like the pharmacy. It's like an ancillary. When you develop an hospital, other services also come up. But yes, it's in its infancy stages, at least in its business cycle. It's growing right now. The debt reduction plans, if any, or any other fundraise, because when you expand, especially greenfield, there is a pressure. Ankit Thakur, the MD and CEO of Jupiter Lifeline, will be talking to us on this. But let's try to understand the company. What does this company actually do? I'm sure a lot of folks in Western India know this, But for everyone else, it's a multi-specialty hospital chain, and now they're expanding. And interestingly, they have one hospital in Indore also, listed on September 18, 2023. Also, let's look at the other key details. There are 4 hospitals in MMR, 2 in Pune and 1 in Indore. Looking at the entire picture, how things pan out: 3,000 total bed capacity, 1,248 operational beds, and roughly 30 specialties. You name it, and they have it. Fourth quarter financials were hit by a drag of OPEX losses and depreciation. There was a little bit of selling pressure in the company, but this is very important corporate action, and just in a couple of days, on July 24th is a record date for the share split which they have announced. That's 1:2. So this is a very important corporate move. You should be getting that. Abu Dhabi Investment Authority has roughly 1.04% stake in the company. So that's of course a good sign because of an institutional support. But before you analyze a hospital company, these are the abbreviations you should be knowing. IP means inpatient, 4% stake in the company. So that's of course a good sign because of an institutional support. But before you analyze a hospital company, these are the abbreviations you should be knowing, but does not stay in the hospital. This is very important if you are learning how to analyze a hospital company. And APROB is nothing but average revenue per occupied bed. It looks very technical, it is not, it's very simple. ARPP, hospital revenue, is divided by the inpatient volume. So next time somebody asks you these important ratios, you will be having these answers. Also, the management commentary has been strong. Thane, Pune and Indore hospital is performing on the expected lines. That's what they shared in the fourth quarter. Also, they have mentioned the Pune South construction progress is in the scheduling. So, 2 important management commentary coming up. Apart from this, we also have the IPD OPD volume breakup. The inpatient volume breakup is just 5% right now. The majority of it, 95%, still is in the OPD segment. Also, apart from this volume breakup, the story moves on the Indian healthcare industry, how things pan out. It's valued at $193 billion for the hospital segment, and look at that, almost 8% CAGR growth, expectations of $365 billion. Also looking at how things move, especially with the Ayushman Bharat Pradhan Mantri Jan Arogya Yojana. So that's also an important scheme which is being there from the central government, and other regulatory support coming in for the specialized therapy. So these are key triggers for the Indian healthcare industries to move ahead. Other capacity addition details are also out here. This is of course in Dombivli, this is Pune 2.0. Another project they have in Meera Bhayandar, and last but of course very much focus is there on BKC. And this is the overall details which are there. The bed capacity we can see on the screen as well. But what may work for Jupiter Hospital? Analysts remain bullish. That's the first point. Second point is the steady growth in the operational parameters. That's what we have seen, and it's doing well over the last 4 to 5 years. Industry tailwinds are there in the long term, especially well. The hospital theme is there, and that's why they are commanding premium valuation and strong expansion plans at play as well, be it greenfield or brownfield. Also, what may not work for the company, the return ratio margins may be compressed due to the expansion. That's the first point. Second point, the execution risk, especially when you have a greenfield project. That means that you have to start it right from the beginning. So execution risk might be there. Valuations are fairly expensive in this sector and even for the company, and I'll get you the peer analysis but in a while. So this is the entire picture for Jupiter Lifeline. But KYC ratings, what are there? I have tweaked it a bit because this is a hospital company. I have got in operational parameters here in my analysis, and of course we are going to miss out on the return ratios because it's largely known how a model works. Also, shareholding street rate, these are the usual ones, we have kept it, but valuations, I have got 5 hospital companies where we'll get the valuations. Is it the cheapest, expensive or fairly valued? And lastly, the analytic. How is the street looking like? Is it fully bullish or is there a mixed sentiment? So this is the entire picture for the rating parameters, but let's start with income statement and see what's the story for Jupiter Lifeline Hospitals. And largely the CAGR numbers are pretty decent for a hospital company to grow in this business cycle. 19% CAGR coming in. The PAT numbers also have started moving. That's why I had mentioned you about steady operational parameters. Let's have a look at how the numbers have panned out, especially on the margin front. It's been very stable, 21, 23, 23, 23. It looks like it's the similar margins is being made. And remember, the company is going through expansion, so there is some value accretion happening, a little bit of operational leverage also. fourth quarter was impacted, and the reason I had mentioned earlier, the depreciation, losses and the expansions coming in. But net the numbers are satisfying, so I've given this a strong thumbs up. Balance sheet, remember, whenever there's an expansion, there is borrowings, there is some stretching, and that's what's happening here in FY26. Look at this amount, that's 501 crore rupees. So balance sheet does seem to be a bit stretched. Around 58 crore of cash is there. So of course the expansion is there, so a little bit of stretch would be there. So I'm going to give this a neutral rating. So we spoke about income statement, we spoke about balance sheet. Let's understand the cash flow segment, how things pan out, and largely the cash flow is also kind of neutral. We could say no major jump has happened from the cash flow from operation, but a little bit of aberration because more investing activities are panning out. The conversions are decent when it comes to the flows with the EBITDA. So let's keep it a neutral rating when it comes to the cash flow segment. So we are done with 3 ratings. Let's move on to the 4th rating, how important this is. And yes, it's very much important if you are tracking a hospital company, and I've taken operational parameters here. We have mentioned the average occupancy rates. It was earlier 54% in FY22, but after that it has increased but kind of stabilized over the last 3 to 4 years, coming in at roughly 62 odd %. Of course, there's a Dombivli occupancy at play as well, so a little bit of adjustment plus minus 1%, but this is the ratio to look at. From 48,711 rupees, call it inflation, call it the pricing, call it the value addition, the momentum has come to almost 68,000 for FY26. So that has shown a good strength. Of course, the IPD, OPD volumes have also picked up. So net, I have given this a strong thumbs up when it comes to the operational parameters. Let's understand the shareholding, and remember, take things with how the analysis has happened. The promoter stake has been unchanged largely at around 41%, and very minor changes happening in the institutions. That means they are still holding it up when it comes to the stake. So right now, as of now, net, it's a neutral rating as well. Apart from shareholding, let's talk about street cred. How much stock has actually given the returns? Remember, the stock was listed in the year 2023. So from there, the IPO price, the stock has doubled up 2.2 times. So somebody is holding and showing patience in this counter. Congratulations. In the short term also, we see from April lows, the stock has recovered and is up 30%. But in middle, there was a volatility at play as well. But net, I would still give this a neutral rating. Let's talk about valuations, and I had promised you earlier that there would be 5 companies where I'll get you the valuation. The 12-month forward PE ratio, this is what we are talking about. Jupiter Life is at 42 times here. It's on the lower side, slightly cheaper, but remember, the entire sector is slightly expensive. It's a defensive also, so a lot of institutional interest comes here. 62 times. We have KIMS Hospital, that's also trading at one of the highest levels. Of course, we have Rainbow and Apollo Hospitals as well, that's around 49 times. So this is the entire picture for the valuations, but the last important criteria is the analyst take. What are the analysts doing? 8 analysts are actually tracking the stock. None of them have a sell or a hold, but 100% buy coming in from this. So of course there is a good momentum, but remember, the 12-month target price, because the stock has gone up, is around 1640. So the risk reward ratio as of now, not that good, or I could say valuations might not be that attractive. So this is the entire picture we have taken for analyst take, and it's a strong thumbs up. But let's get you all the ratings together. Where does this actually stand? How things move? And I like to point out the income statement has done well, neutral stance for balance and cash flow, but operational parameters, the hospital has done well. Shareholding, street cred, we could say largely neutral. Valuations, also I have given a neutral rating, and analyst take has been strong. But let's give you the total picture of how things look. Don't worry about the missing numbers, all the numbers are here. So you don't have to worry about it. It's 5.5 out of 8. It's on the higher side of the average numbers which we generally give our company, and that is Jupiter Lifeline Hospitals for you. But our conversation doesn't end here. Our conversation continues with Ankit Thakur. He's the MD and CEO of Jupiter Lifeline Hospitals, where he will answer all our doubts and queries, but everything just after a short break.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the company.
Welcome and welcome back to Kit Thakkar. He's the MD and CEO at Jupiter Lifeline Hospitals. Good afternoon, doctor. It's always a pleasure to have you with us, and a lot of expansion announcements are coming in, and just maybe if you could give us a little bit of flavor about that, and how things are moving for the company.
Hello, good afternoon. Pleasure to be back. So on the expansion front, the most recent expansion has been Dombivli. We commissioned it in the last quarter of the previous financial year, February end. We started Dombivli. We have 3 more hospitals on the way. Pune South is under construction, scheduled to start sometime in calendar year 28. We are absolutely on track. No chances of any negative surprises there. We are doing 2 more in the Mumbai region. One in Mira Road and one in BKC, and both those projects will follow the Pune South.
Right. So everything is going as per the plans which was earlier disclosed as well. No delay, or you could say any kind of changes, right?
Absolutely.
Fair enough. But let's talk a little bit about operational numbers. I know you are in the silent period. We do not want the exact numbers. We just want to understand whether it's going up or down, just a little bit on that, on the current occupancy rates, the operational bed capacities, what are the targets for the long term?
Yeah, so qualitatively, I think it is pretty much similar. Thane is in the mid 70% occupancy range. Pune is high 60s, and Indore is about 50 odd percent. That is the zip code of occupancy over the last couple of months. And going forward, that is the zip code of occupancy over the last couple of months. And going forward, of course, all hospitals are designed in 5 odd percent range, after which it does not become possible to increase further occupancy at any hospital. Dombivli is in its infancy, just in its first quarter, so too early to talk about occupancy numbers there. It will take some more time to start flowing in cash.
Right, and any new geographies which you are thinking that there can be an addition to your portfolio, because I know it's largely West Indian product. There's a little bit of there in Indore, but is there any other places you are scouting where you think your expansion can happen?
So I think we are quite committed to Western India for the foreseeable future. We think there are a lot of opportunities in Western India. It continues to be a high opportunity and low supply market as far as organized healthcare is concerned. And of course, I think we are amongst the stronger brands in the region also. So for all things considered, we think that we would like to remain focused to Western India for our next cycle of growth as well.
Fair enough. That's the important takeaway coming in. West India would be the focus. But also, sir, if you could explain us any kind of a capex planning, because I think there's a lot of greenfield operations are at play. So any capex which has been earmarked for the next year, or will it be just an operational? And the funding, will it be internal accrual, or is there a little bit of, debt? I think there's a lot of greenfield operations are at play. So any capex which has been earmarked for the next year, or will it be just an operational? And the funding, will it be internal accrual, or is there a little bit of, debt or some external fundraise also at play?
So currently we hold about 500 odd crores in cash. And if you look at the last year's EBITDA, which was around 350 odd crores, feel like for the next 4 or 5 years, then you will see that, the cash we hold and the internal accruals that we'll generate over 4 to 5 years should be largely sufficient to take us over the line as far as the current cycle of capex is concerned. So I think we should be fairly, well placed for this round. Having said that, on the balance sheet or leverage level, we have discussed this in the board, and we believe that we would like to cap leverage at about 3 times of EBITDA, and within that level of debt, we are happy to explore further growth opportunities.
Exactly. Dr. Thakur, speaking of exploration, the land bank is very much important, because it seems like you are looking at some acquisitions also. We mentioned about the BKC land which was there. It's of course a very prime area for the uninitiated, but wanted to understand any other land banks which you are looking for, especially in the MMR region maybe?
Yeah, so MMR we believe definitely has much more opportunity, and it continues to be one of the more underserved parts of the country for the stature of city of Mumbai. I think it leaves a lot to be desired in terms of the health situation. So I think MMR is a strong opportunity market beside some other large cities in Western India. But we constantly keep evaluating opportunities and land acquisition as and when they arise. And when we find something good, we'll exercise that, and we'll be happy to talk to you then.
So there is, of course, evaluation keeps going on. It's a regular course of the business. But Dr. Thakur, any new segments also which you're looking like around? If you make an hospital, is there a pharmacy or something if you're looking like, or putting your own brand out? Are you thinking in those lines also?
So, from time to time, some pathology and pharmacy, people keep asking. Those are the two ancillary segments. We may look at something as an ancillary to support the primary business as per opportunities that may arise. But one thing I want to confirm to you and everybody is that as far as the mainstay of the business is concerned, we are not looking at diversification. We are wanting to continue being a hospital or a healthcare provider as a primary function. And for cost optimization, margin improvement, ancillary enhancement of services, etc., we may keep doing something on the side from time to time for pharmacy, pathology, etc., but nothing significant.
To core business, you already have the plan, you have the money, and that's a very disciplined way of addressing our viewers in KYC. But I wanted to understand something more apart from the company. How is the Indian healthcare industry looking like? What are the growth triggers and the challenges? If you could just explain us that in detail.
I think this is a very, very interesting and exciting time to be in the healthcare space. The healthcare industry, I think, is now attaining a critical inflection point wherein most of the country has been exposed now to what does organized, high-end, high-quality, healthcare look like. Going forward from here, I think it is in my view, a multi-decade journey before we can respectably cover India as far as quality healthcare is concerned. Even today, like we said, in Mumbai, there are a lot of areas where supplies are concerned. There are a lot of areas which are served by unorganized or secondary care, providers rather than high-end health providers. So, of course, if this is the situation in Mumbai, once you move out into smaller tier 2 and 3 cities, the situation is much worse in the sense of supply. So I think on the greenfield route, of course, acquisitions, M&A, and balance sheet level consolidation will keep happening. But in terms of real capacity expansion, there is a lot to be done.
There's a lot to be done. The story has just started. And of course, the medical industry is at an inflection point and a multi-decade opportunity. I have one more industry question, and this is very important right now, is the international medical tourism. Catchment area like South Asia, Africa, we're seeing so much of that inbound numbers coming up. How do you see this, and how as a whole the industry is placed, or India is placed for this?
So for medical tourism, I think it's a little bit of a nuanced analysis. While the glamorous story is comparing cost of healthcare in the developed world versus India and showing the delta, but for practical purposes, people don't travel to save money, but they travel for access, which is why you see most of the medical tourists inbound coming from Middle East and Africa, where they don't have access to quality healthcare in their place of residence. So that will be the predominant growth driver. Currently, they also travel for secondary, maybe tertiary and above services. As Middle East and Africa start developing their own healthcare systems, if India has to continue to be an important destination for medical travel, we will have to attract more of quaternary care and highly specialized kind of services and not just rely on the routine work. So I think that has to be the primary target for India, to supply higher end medical services on the international front.
All right, very nicely put, your views on the industry. Dr. Thakur, it's always a pleasure to have you with us, and welcome back to KYC. Best of luck with the future. And yes, there's an important corporate development of share split also. In a couple of days, the record date will be also coming in. It's always a pleasure to have you. Thank you, sir.
Thank you.
Well, that's the management of Jupiter Lifeline Hospitals. Bullish commentary coming on the industry as well. But yes, when there is expansion, there is a little bit of short-term pressure on the financials. That's what we have seen in the street, but the stock has recovered as well. And for these interesting stories like this and interesting industry snippets as well, keep watching KYC and stay tuned to NDTV Profit.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
This is India Inc.'s Roll of Honor, recognizing the leaders shaping India's growth story, where ambition, enterprise and excellence meet. In the presence of the Finance Minister, Nirmala Sitharaman. NDTV Profit Business Leadership Awards, 26 July on the NDTV network.
Access to capital, faster regulatory pathways, and market acceptance to create value. And if we get the pieces right, I think we can move from being the pharmacy of the world to being the most innovative lab of the world.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. what happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Benchmarks trade under pressure today with the Nifty hovering near 24,000 levels. Sensex shed 600 points. Real estate, PSU banks on the back foot. Auto as well as FMCG remain resilient. Indian pharma stocks under broad-based pressure after US President Donald Trump unveiled a phased tariff roadmap for imported generic medicines. While tariffs stay at zero initially, the proposed sharp hikes later weighed on the investor sentiment across the sector. Bajaj Auto gains after a stellar Q1 raises hopes of another good year ahead. The automaker plans to launch several models and upgrades in coming weeks, along with broadening its expansion plan. Bandhan Bank under pressure today despite reporting a 35% jump in the first quarter profit as investors focused on the more cautious probability outlook. Mixed brokerage news on the lender's recovery also weighed on the stock. Oil prices extend gains for a fourth straight session as US President Donald Trump threatened broader strikes on Iran and warned against the Houthi disruptions in the Red Sea, keeping supply concerns firmly in focus. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar, and yes, there is pressure mounting on the markets. Let's first focus on the market momentum at this particular point. And Nifty 50 not seeing any let up in sight at the current moment, just about holding on to the 24,000 levels. But that's not enough. Remember, we had crossed past 24,500 levels when the war worries had really come down. With the resurgence of war and the crude oil prices going above $90 per barrel, that's coming in as a big concern, and that's the single largest really factor impacting the Indian markets apart from the earnings and the monsoon related momentum as well. Let's take a look at Nifty 50, 0.76% down at the current moment. When we talk about the contribution chart, there are only a handful of few of those heavyweights which are in the green zone, while the rest of the market is seeing selling pressure. In fact, taking the lead are the two private banks, ICICI Bank as well as HDFC Bank. In fact, HDFC Bank has lost and eroded a large part of value in the last few trading sessions after their results were disliked by the market. And on the other hand, it's also a trading play whenever the foreign investors especially are nervous about the Indian economy because of the oil concerns. So therefore, ICICI Bank, HDFC Bank, and also add to that big boy Reliance Industries, all three of these counters are adding a lot of pressure on the benchmark index. Let's take a look at also which sectors are really performing, and only a little bit of green shade when we talk about the consumption, FMCG and the auto space, where the results have been good so far. But apart from that, remember the PSU banks, banking space, pharma because of the new tariff concerns from the US, real estate, all of these sectors are a drag, and not to forget Nifty IT, which is also also on the downward side today. When we take a look at the broader markets, well, it's the mid-cap universe which is underperforming the key indices by a large margin, because it's closer to 1% drop when we talk about the mid-cap 100 space. The only particular area to really look at is really the auto space, as well as some bit of the FMCG, as well as the MNC side. So that's the snapshot of the market, and of course the big drudging that the pharma is seeing because of the tariff concerns from the US is one of the most important stories. Let's now focus on some of the counters and stocks which are in the news today. A solid quarter for Nestle, driven by the strong growth across major business segments. Let's take it straight across to Maima, who's standing by to take a closer look and give us the analysis on Nestle. Tell us, Maima.
Yes, Nisha, so most certainly a very strong quarter coming in, yet another strong quarter, if I can put it that way, because overall it's been a beat in terms of all metrics: revenue, EBITDA, margins, and the net profit as well. A strong beat on margins. This was not expected because of the inflationary pressure that we've seen, but despite of that, much better than what the street was expecting. In terms of sales growth, it was largely led by strong volume growth also coming in, and all four product categories have seen a double-digit growth. Commodity, of course, the outlook slightly still is cautious, but largely is mixed as well. In terms of where the numbers go, revenue saw an uptick of around 25%, EBITDA an uptick of almost 40%, margins at 24.1% versus that of 21.6%, and net profit saw a growth of 48%. And there was also an uptick in terms of other income, which stood at around 22.5 crore versus that of 4 crore. Advertisement spends saw a rise of around 40%, which is something that Manish Tiwari also said in his interview last time, that advertisement spends is something that will go up and that will drive the top line as well. In terms of segmental performance, I think confectionery product saw strong volume-led growth, which was largely driven by premiumization. Powdered and liquid beverages was where 20th quarter of double-digit growth has been garnered. Prepared dishes and cooking aids, strong double-digit growth driven by sharper engagement and urban consumer. This was an interesting comment. Milk products and nutrition witnessed double-digit volume growth, and pet food is where they again saw double-digit growth, which was largely supported by portfolio expansion as well as wider distribution. So this is the overall view of how things have fared for Nestle in Q1 FY27, and most certainly a strong quarter for them.
Right. Thank you so much, Maima, for taking us through the strong set of numbers by the consumption company Nestle. Let's also talk about the pharma space. The Trump administration has proposed a phased tariff plan on the generic drug imports, keeping the tariffs at 0 for 2 years before potentially raising them to 100% and later to 100%. Varsha is here with all the details on this particular tariff pressure that is going to hit the Indian companies in 2 years. Varsha, what's the impact? And of course, the investor sentiment has already taken a hit.
Well, companies, pharma is expected to report 7 to 15% of growth in Q1 FY27. There will be a good India growth perspective, but US may have an impact. Now, India business is expected to remain strong. Weakness in the US market is likely to drag profits. Revenue growth is expected to stay healthy, but margins and PAT may decline due to Revlimid expiry and higher input costs. Talking about the India business, domestic pharma continues to grow in double digits, while US is expected to decline 9.3% year on year due to high base of Revlimid last year, lack of major new launches, and continued price erosion expected in the US sales. Margins are expected to be under pressure. If you see, higher raw material costs and freight costs is a concern, and absence of high margin Revlimid sales is likely to compress margin sector. Now, talking about the CDMO story over here, performance is like.
All right. Thank you so much, Varsha, for that. Now, Granules India is the focus that we are really shifting to. Let's get Priyanka Chigurupati, who's joining in. She's the Executive Director of Granules India, joining in. Priyanka, always a pleasure to get chatting with you. Of course, strong set of numbers. What have been the drivers? But first, also to the news, can you share with us the US tariff concerns, which is going to hit the companies in 2 years? But you, as an impacted party in the long run, how do you see this?
Good afternoon. Good afternoon. I just want to jump straight to the point that you mentioned. There is a proposal, policy proposal of increasing tariffs by 100% to 200%, but I think it's very important to recognize that generic medicines account for nearly 90% of the prescriptions dispensed in the US, while representing about 13% of the prescription drug spending. Now, that said, and 45% of those drugs go from India. From the granules' perspective, all this is being done from an onshoring perspective. So I just want to clarify that Granules has 3 facilities in the US already. One manufacturing facility that is well capable of accommodating any tech transfer. Some of them have already been done for business continuity reasons, and we have the capacity to take on more if needed with a little bit of expansion. So we're not too concerned about this.
So Priyanka, just breaking it up for the understanding of also the investors who have been sharply reacting negatively to this particular development. While it's 2 years away, you can change a lot of things on product mix also, and you can also bolster your US presence, as I understand from this. Now, you have a huge presence in this particular space, which will have probably 100% tariff in 2 years coming. 72% of your business really is dependent on that. You said you already have a presence in the US. How much of a self-sustaining capability can you really produce in 2 years in the US soil so that this tariff doesn't impact you?
So let's take a step back and let's look at the kind of cost impact, kind of price impact that the US consumers will have to face, right? If you're talking about roughly anywhere, depending on the product, 20 to 70% increase in costs, you're talking about a significant increase in basic medication to the US consumers. Is that going to happen? I really have my doubts about it. And another aspect about Granules in specific is that we're not present in branded formulations. We're present in generic formulations, and about 40% of our overall revenue today is already produced in the US, and about 20% is produced for the rest of the world markets. So roughly about 30% is produced in India. And there I see a very high chance of 200% and 100% tariffs not happening, because it's purely going to be unaffordable for the US customers. And these are basic prescriptions. These are basic medications that are needed on an everyday basis.
So Priyanka, as much as I would support your optimism on that, but the US policies and the trade negotiations that we need to see, and these are more diplomatic channels between the two countries. Affordability is something that the US will take care of. But when we talk about the tariff incidents and the impact on the company, you said that about 40% is already there in the US. How are you going to deal with this 2-year cycle to really bolster your presence there, and what are the steps immediately that you can really think of in terms of, first, the impact, and second, the corrective steps or the solutions for that, since you have 2 years?
So for Granules, we are moving heavily from the large volume integrated products to more complex generics. And I'm sure you've seen that in the recent past with our couple of first to file products, etc. And we have a lot of those products also being manufactured in the US. So the margin profile of those in itself will increase. Well, those are much higher than that of basic integrated products. And the percentage of contribution of those complex generics is also going to increase for Granules. So will there be an impact? Possibly, if the policy is implemented. But from our perspective, we are mitigating the risk by, like I said, we already tech transferred a few products. We're also in the process of tech transferring some other products, and we're evaluating it now. And strategically, if the need arises, we're going to expand capacity in our existing manufacturing facilities in the US and deal with the situation as is.
A presence there and also expanding on that to mitigate the impact of tariffs if it were to happen after 2 years, Priyanka. Will that also give you an edge because the prices overall will increase because of the tariff incidents?
You know, I just want to point out one thing, because we've been present in the B2C segment in the US market for about 10 years now. And you've seen a very cyclical situation where when situations like this happen, like for example, when COVID happened, what happened? Some customers did not take on price increases. So the competition or the number of people supplying those products went down drastically, right? So then that gives other companies that are willing to supply the product an opportunity to take on that market and supply to the needs of the US consumers. And at that point, unless there is a price increase, there's no supply coming from India to those countries, and India is a major contributing factor, right? So this has a lot of ifs and buts at this moment that we still have to work out on. But I see Granules to be in a very good position compared to, say, other players in the branded segments and other kinds of generics.
Right. So, Priyanka, you have stated how you're going to mitigate this impact, and you had already also announced the move towards the complex formulations and complex products in terms of the product mix. In 2 years' time, how much of your incidence will be, as you see from the vantage point currently, could be on the generic area, which is going to be impacted by tariff? Just one question more on this particular aspect.
Not much. It won't be too much. And one other aspect is the kind of customers we work with. The kind of customers we work with are the ones that heavily focus on supply security. So if need comes, they will absorb most of the price increases.
And also shifting focus now, Priyanka, since we have you with us in terms of the numbers, strong set of numbers in this particular quarter. EBITDA margin from 20.4% to 22.9% on a YOY basis. Give us a picture in terms of the profit as well as profitability and the key drivers as you see it for this particular quarter which we are in.
Yes, we had a really good quarter, and we see the trajectory to be ongoing. Our primary reason was the increase in complex generics, the percentage from 39% last year to 50% this quarter. So that's the primary driver of the performance this quarter.
And what about the FDA clearance? Of course, remediation work largely is complete. What are we looking at as the roadmap from here on?
So we are expecting the FDA any time now. So that's for us good news, because I think we made we did a lot of remediation activities. And I don't like to say that we're done with remediation activities. The specific activities are done. We've sent in all our responses to the FDA, and there's been absolutely no notification of any insufficiencies, which is why we were confident enough to write to the FDA and request a visit. But remediation or improvement of quality activities through digitalization across all the sites is an ongoing activity for us. So after the FDA comes, we're hoping everything goes positively. And once that happens, we have about 9 launches that we're gearing up for as soon as we receive the EIR from the FDA.
So to wrap this conversation, Priyanka, of course, your product mix and more, shift and pivot towards the complex product is already showing results when it comes to this particular number. Can you give us a sense for this particular financial year, where will we be, and some guidance in terms of that? And to sum it up, also, the investor community is a little, worried about the tariff concern. In a short way, how will you allay the concerns of your various stakeholders in the market?
So I'll answer your first question. We will see some peaks and troughs because of the input costs, etc. But on an annualized basis, which is, I think, the right way to look at this, things will definitely start stabilizing, and we will see a good year ahead in FY27. And one statement that I would like to make from a Granules perspective is that, again, I want to reinforce that these are generic products that are extremely significant to the US market. A combination of the kind of products and the kind of customers that deal with, I know that supply security is of the utmost importance. And I think that's how the economics will work out for us. And that's what I'd like to communicate to the investors as well.
Right, so the industry view clearly that this kind of a tariff, because of the requirement of these important generics, is unlikely, or at least that is wishful thinking, at least at this point. But of course, mediation efforts by companies in 2 years is also a period of time to be utilized.
But if you look at what happened in the last couple of months, last couple of quarters as well, there's been a lot of renegotiations of policies with different countries, right? So I think even from the US perspective, they're not looking at a situation where there should be shortages. They're looking at policies that are favorable to their country. So I think there will be a mid path that the government finds. And I think for products that are made from India, especially the unbranded generics, there will be a lot of a leeway, and I think they will be protected.
So is the industry body also pushing for the lobbying from the government channels while the US trade deal is still in the works?
I'm sure it will happen. It just happened over the last 24 hours, right? So this will definitely happen.
All right, Priyanka, always a pleasure chatting with you. Thank you for all the clarifications, as well as being so candid with all your narrative coming in from the company on this big news development. Thank you so much. All right. Let's shift focus to the market, heavily impacted by the pharma sector. Also, Aman Chauhan, who's the fund manager at Abacus Asset Manage, joins us now. Aman, pleasure speaking to you on NDTV Profit. What do you make of the kind of market pressure as crude oil rises? How do you see this particular aspect really playing out? And how much of the bad news is already baked in these numbers?
This is, I think, a repeat of what happened in March when crude spiked up and the market did become volatile. We had seen a decent recovery in the markets. If crude stays at these levels, then I see downside risk to the market from these levels, because I don't think market is prepared for this high level of crude prices, right? So that, I think it's not yet baked into the prices. Everybody is still hopeful that the Middle East crisis is not going to continue for long. We have already seen one round of spike in prices, then prices coming back to 70s. That is what is built into the numbers, not 80s, not 90s, right? So if it stays in 80s or 90s for higher, then there can be further volatility in the market. There can be, I think, some downward pressure because of the high crude price.
Really look at the numbers when, the crude oil prices were hitting above $100 per barrel. We were at 23,000 levels at Nifty 50. Then as crude really recovered, we recovered by about 1,000 odd points from the low point that we had seen in the war situation. Do you see retesting with these kind of elevated crude prices, if it sustains? How much lower can it go, and can it also surpass the lows that we had seen in this particular cycle of the war situation and crude impact?
If it stays longer, then yeah, we can test the recent lows. I don't think we'll breach the recent lows, because over the last 3-4 months, India has also worked a lot upon getting alternate supplies. The system is also geared up now much better than what it was, because in March it was a surprise. Now it's no longer a surprise. So everybody has built in their own mechanisms to deal with this crisis. So from that perspective, I don't feel that we'll breach the lows. But if it stays longer, then there's a fair chance that we can retest the lows. Also, global markets are also volatile, right? So in April, May, Nasdaq was doing well. The AI trade globally was doing well. That is not this case right now. We have seen too much of volatility in the Korean markets. Some day market hits upper circuit, some day it's a lower circuit, right? So investors are jittery on that front also. From that perspective, the global scenario is also not something which is very conducive, and hence, if crude stays longer, definitely there could be some pressure on Indian markets also.
Biggest hit, Aman, today is on pharma because of a tariff incidents which could really hit them after 2 years, and that's a sentimental knee-jerk reaction that we are seeing today. And then banks as the trading bet for the economy is the one which is under pressure a lot. Would you buy into these, or that you are expecting a further downside? Would you wait and watch? What would be the strategy at this particular point?
For the pharma, it's going to be wait and watch, but the view is very clear that we are positive on the pharma space, and any correction, we'll take it as an opportunity to further add on to what we already have. As your earlier presenter was mentioning, Priyanka, that generics is something that the US cannot risk with. There is no economic sense for US to make generic medicines in US because the cost there is still high, even post tariff. But after COVID, we have seen, including India, that everybody wants to be self-reliant. People want to reduce the import dependence. If that is the logic, then yes, some kind of manufacturing can shift to the US from the global markets. But that is still a 3-4 year process. It's not going to happen overnight. And hence, any near-term sharp reaction in pharma, we would lose as an opportunity to add. Financials preference is private banks versus PSU banks and selective large NBFCs. So we continue to stay invested in that space. I don't think we are going to change the stance for now. Unless crude stays higher for longer, which means currency stays north of 95, 96 levels, which means inflation can be higher, and then the whole rate cycle gets questioned, right? But that's something that will end up reacting maybe after a week, 10, 15 days, or maybe a month's time if crude stays longer. For now, staying put with the financials also.
Right, Aman Chauhan, always a pleasure taking your expert advice on the market momentum. Thank you so much for joining us on NDTV Profit. And before we say goodbye on markets at 12, there's an important notice here from the programming, recognizing the women leaders who have really shaped major sectors of the economy through scale, innovation and sustained commercial success. And the nominees are Gitanjali Kirloskar, the CMD of Kirloskar Systems, a pioneering industrial leader advancing the legacy and future of one of India's greatest engineering institutions. We have Roshni Nadar Malhotra, who is the chairperson of HCL Tech, represents a new generation of Indian business leadership that combines technological scale, strategic national relevance and institutional building with long-term vision. Falguni Nair, CEO, Nykaa, a founder who built a multi-billion-dollar consumer brand from the ground up. Mallika Srinivasan, CMD of TAF, and a manufacturing leader powering India's agricultural and industrial growth. Vibha Padalkar, MD and CEO of HDFC Life, a financial services leader, expanding insurance access and strengthening financial security for millions of Indians. Prabha Narasimhan, the MD and CEO of Colgate Palmolive, a trailblazing leader redefining growth and innovation in India's fast-moving consumer goods industry. So these are the women on the nomination for Women Leadership for the Business Leadership Award. Don't miss it on 26 July. It's time to wrap on markets at 12, but keep it with NDTV Profit. Thank you so much.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टेर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और मस्टर्ड ऑयल के लिए सिर्फ पी मार्क.
इस बार तो माँ से भी बेहतर बना.
P Mark, the mustard specialist since 1933. बरसों से सरसों. कुछ तो बात है इस दिल में.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपी अब संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hello and welcome to NDTV Profit. You're watching Trending Stocks from NDTV Profit Suzlon Studio. And I'm Hiral Datia. With me is Sharad Dubey, who's at the market bit right now. Sharad, an interesting day of trade today because right now the markets are at the day's lowest levels as we speak. The other thing that I'm picking up right now is Brent crude. It's seen a spike of close to a little over 2%. You're trading at around $93 per barrel, and that is something which is concerning. Markets not really taking that well as well.
Exactly, you're right. Good afternoon, Hiral. And looking at the market, we just fell below the 24,000 mark right now at the day's low level. And Nifty Bank setup is much weaker than Nifty. Of course, the pressure is coming from HDFC Bank. We'll come to that later. But let's pull out the Nifty Bank chart also to show you how things are moving. And this is down almost 1.4% at the day's low. Almost cuts of 800 points. So that's a little bit of concern coming in as the geopolitical tensions are rising between US and Iran. But let's look at the key factors for the day. And of course, the concerns are coming in. Important support level 23,800 to 24,000. We are in that important range right now. So it'll be important to see if any bounce happens from this or not. Nifty, HDFC Bank, second straight day the drag is coming in. We are seeing the sell-off and it has intensified. Look at that, it's down 1.5%. Yesterday it was down 2%. So the drag is coming in. Also, let's look at the Smiths. They are seeing deeper cuts versus the benchmark indices. So no major relief in the broader indices, also both of them falling. But remember, a slight FMCG recovery is happening, led by Nestle India's results which came in. It was a good set of numbers. And also, if you look at the sector specific, the brokerages are bullish on both of them. Yesterday the numbers came. Both stocks, Bajaj Auto and TVS Motor, are doing well in the trade. Also, the interest rate sensitives, PSU banks and realty, that's where the sell-off is intensifying as well. Little bit of concerns, and pharma has fallen after the generic pharma tariff imposition announcement has come in. So a little bit of concern is coming in the street. Rupee weakens back to that 96.5 levels. So a little bit of concern is definitely there. But going ahead, the Brent crude, as Hiral had pointed out, that's where the pressure is coming, and the crude sensitives are taking the brunt. Also, the Q1 earnings today, three larger names we'll be focusing on. The Nifty ones, IndusInd Bank, it's in the positive, while Eternal and Dr. Reddy's, they are seeing some kind of a sell-off. So we'll be tracking a lot of earnings, but yes, the overall sentiment, be it large caps, mid caps, or even small caps, is not that good. It's in the red.
Okay, so interesting moves in terms of where markets are concerned as we speak. But let's quickly look at the watch list, and before we do that, you have Jubilant, which has just posted numbers right now. The net profit is up nearly 40% as we speak, and the number is coming at around 105 odd crores. Let's just pull up the intraday chart of Jubilant in Greva, because that stock is seeing a spike in today's session, 1.5% uptick on the 40% growth that they've seen in terms of profitability growth. Apart from the profit number, let's quickly look at what the other numbers are looking like, because the spike is coming in from what I'm seeing right now is in terms of the profit number, 41%, 105 odd crores versus a 75 odd crores on a year-on-year basis. Apart from this, let me see if there is any other number that I can see on the exchanges right now, because nothing apart from the profit number that has come in so far, but a spike coming in terms of Jubilant in Greva. So that's the first cut only on the first number as we speak, and a cool off coming in there as well. Revenues have seen a growth as well right now. What I'm seeing is around 25 odd percent. That number is almost 1,300 odd crores in terms of the top line. So good growth in terms of top line. Your profit growth has actually outpaced your top line growth as well, and which is one of the key positives that you're tracking right now, and that's the reason why you're seeing that spike coming in with regards to where Jubilant in Greva goes. There you go, 25%, 1,300 odd crores is the revenue number that you're watching out for so far. We will come back to the counter in terms of the EBITDA and the margins once those numbers are out, but at least in terms of the top line and bottom line, it seems to be a good growth and the spike coming in as well. But let's look at the watch list. Bandhan Bank, you know, that is a stock which is in the spotlight, and that's because the management has lowered their FY27 ROA guidance. That stock is seeing cuts of 17% as we speak. The entire pharma pack is in focus, and there is a mild bit of pressure because of the Trump tariffs that could be coming in generic drugs as well. MedPlus, the profits are down 21%, and that's the reason why the stock is trading under pressure. Canada Robeco is up 8 to 9%. The profits have gone up by 82%, and that justifies the kind of surge in terms of the stock price as well. TVS Holdings, the total income is up 34% for the company. The stock also reacting to the numbers. Cyient DLM, the net profit has more than doubled in terms of Cyient DLM. If you pull up the counter as well, 13% up move coming in terms of where Cyient DLM goes. MPS again reacting to numbers. 19 to 20% is the kind of surge coming in terms of MPS. Hudson Agro, EBITDA margins have dipped, and that's the concerning area there. Stock reacting to that. Likewise for Mastech also, the margins have dipped by 60 basis points on a sequential basis. Very interesting to see a Gabriel which is down nearly 7%. Now, you know, the numbers are pretty mixed, but they've said they're going to buy this stake in HL Mando and HL Klemov. We will try getting more details from Puneet as well to tell us as to what the street has not really liked and why the stock has been trading under pressure, and is this profit booking also which is coming in, because the stock has run up quite a bit. India Mart, Intermesh, Jeffries has cut the target price on the back of earnings to 1,650. That stock is down in trade, and a Vedanta Oil which is down 5%, and this is because the DGH has given a 300 crore demand letter to Vedanta Oil and Gas. M&M Financial, second consecutive session where the uptick continues on the back of earnings, and you have Jeffries which has hiked the target price mildly to a 365. Bajaj Auto, again earnings and the target price increase that has come in on that counter. The stock is reacting positively, the top gainer on Nifty 50 as well. Crude has hit a 6-week high, and that's what is putting pressure with regards to Indigo, and Indigo will be reporting numbers as well. Nestle, a strong quarter. EBITDA margins have risen to 24.1%, so double-digit volume growth also is something which the street is taking positively when you talk about a Nestle. So interesting names that we're talking about, Sharad, in terms of the watch list. But over to you to take the rapid fire with Devin Mehta of ITBI Capital.
Thanks a lot, Hiral, for that. Good afternoon, Devin. It's always a pleasure to have you with us. We start our rapid fire round. The first stock is MedPlus Health Services. Of course, there's a reaction happening in this. Is there a trade to be made in this counter?
Good afternoon. I think no, one should avoid this particular counter. This can further correct towards 635 levels. We have seen a major breakdown after results. So one should avoid this counter for any short to medium term trade.
Right, and another counter signed DLM. Of course, there was a consolidation play. Now it seems like there is a good breakout coming in for this counter. Do you think there'll be more follow-up buying in this? And if yes, what level should be watching out for?
No, I think the stock has already moved up. Those who are holding can hold with a stop loss of 645. This can further move towards 740 odd levels.
All right. Next stock is India Mart Intermesh. Of course, the numbers came in. Numbers were pretty strong. Management commentary also looked well. But what's there on the charts here? The stock is down here. A little bit of profit booking coming in. Do you think it's a good time to nibble and add some positions in this, or you'll stay away from this trade?
No, I think one should stay away from this particular counter. We have seen continuous lower top, lower bottom formation in this particular counter. This can further correct towards 1650 odd levels. So we can see some more further correction. One should avoid this particular counter.
And Deven, what about M&M Finance? The brokerage is turned bullish, and this stock we had taken as a brokerage call at 905 also, and a good momentum, good follow-on buying coming in sub 7%. Do you think it's a good time to add some more positions or a little bit of profit booking?
No, I think this stock has given a strong breakout above 345 levels. The volumes have surged, so we can say a good up move. Those who want to enter fresh long position should wait for dips. 345 is the good level for fresh entry. 315 can be stop loss, and this can move towards 410 level.
Right. Next stock is Nestle. They come out with a good set of quarterly numbers also, and all the FMCG stocks are also going up. So good momentum is coming in. Good momentum can be made going ahead also for Nestle. What are the levels to watch out for? Is there a good risk-reward ratio here? This stock is up 1.5% right now.
Definitely, the stock has moved well, but on the higher side, we can witness a resistance around 1500 levels. So if it closes above 1500, that can be a good breakout, and we can see stock moving towards 1620 levels in the coming days. Those who are holding can hold with a stop loss of 1415 levels, which is 50-day exponential moving average.
Right. So important development has happened on the generic pharma. The tariff imposition announcement has come in, but it comes with a caveat. 2 years there is 0%. After that there will be an increase 100%, and then after that 1 more year 200%. All the pharma stocks are kind of having a sell-off. You have Zydus, tariff imposition announcement has come in, but it comes with a caveat. 2 years there is 0%. After that there will be an increase 100%, and then after that 1 more year 200%. All the pharma stocks are kind of having a sell-off. You have Zydus, Lupin, and even DRL, which comes with its earnings today. Good time to actually buy a little bit and do an averaging here.
Yeah, definitely. In fact, all the pharma counters are looking well for pharma, but the counter Divi's Lab is performing well. I think one should try to enter this particular counter on any dips if possible.
Right, so buy on dip for Divi's Labs. That's coming in from Devin. But that's the end of the rapid fire round. Over to you, Hiral. What are the Google trending stocks?
I'm sure you will be able to make a guess on this one, Sharad, because you still have a SBI which is trending on Google today as well, and that is after SBI funds actually listed on the bourses. Stock down nearly 2.3% in trade, so there is some bit of pressure. There's a rotation that's happening between the PSU and the private banking space as well, and I think that's what is evident on SBI. But moving on, Bajaj Auto is also surging in trade after getting thumbs up from brokerages on the back of a solid show in terms of the first quarter. Earlier today, we did speak to the management who told us that the company is well positioned in the electric vehicle business and expects profitability for the EV business in double digits. Let's listen into what Rakesh Sharma had to say. The stock is up nearly 5%.
We've got a good position in electric scooters. Remember that we got out of scooters in 2007, and then on the back of electric, we've come back into the scooter business and rapidly come to at least a number 2 position, sometimes number 1, but very, very close in the leadership stakes out there with double-digit profitability in the electric business. Then if you look at the electric auto business or the three-wheeler business, people don't, that's almost like 20% of our whole business. It's almost now rivaling the motorcycle business. And solid market position, tremendous growth in e-autos. They doubled, And finally, if you look at the 150cc plus segment, I said it's a 25% growth. We have now seen market share expansion, albeit at a small pace in Q4 and in Q1 in this segment. So, and it's also going to see a lot of action in terms of new product introductions, etc., from our side. So, our segments, the one which we are really strongly focused on, seem to be having a really good tailwind for us to capitalize on.
Okay, so that's the word coming in for Bajaj Auto as well from the management. Gaurang Shah, Senior Vice President at Geojit Investments, joins in. Gaurang, welcome to the show. Always a pleasure to speak to you. You know, my question coming to you is for the two-wheeler space. Yesterday, when we saw both the numbers, TVS and Bajaj Auto, good spike in terms of TVS Motors. Bajaj Auto was somewhere subdued, and the concern was surrounding the domestic growth. And exports are the ones which have fired this time around as well. Management has come and clarified that new launches is something that will lead the growth. They're expecting profitability as well in terms of the EV business. What is your view in terms of Bajaj Auto? And if you have to look at the two-wheeler space, what would your top pick be?
Hi, Hiral. Thank you so much for having me on your show. Good afternoon to all your viewers and to you and your entire team. A small disclosure, all recommendations that I'll be sharing with you this afternoon on your show, Hiral, they're part of our fundamental research team recommendation from a long-term point of our company, Geojit, or myself. We do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. They might have their investment interest. So I also had an opportunity to listen into Mr. Sharma post the numbers, and I was quite impressed by the verbatim and the strategy, how they want to take it forward, specifically with the EV portfolio, how they are planning to ramp up and expand their product offering in this particular segment. They're also going to have a different business strategy as far as their motorcycle offering in terms of Triumph and KTM is concerned. Traction in terms of positivity, Hiral, as far as the entire auto universe is concerned. Positivities trickle in first on two-wheelers and three-wheelers, not only from the domestic demand, but also from the export market point of view, the way the numbers have been delivered. And that's the primary reason why Bajaj Auto has delivered the kind of numbers that they delivered yesterday. Stellar set of numbers, great numbers on all account. I think they're firing up on all cylinders. And my sense is that with the focus on EV, because if you recollect, Hiral, when Chetak was launched in an EV form, the initial period was a little bit difficult and a tight time because the numbers did not look very impressive. But now with 30% share, correct me if I'm wrong, I think the product is doing very well and they're going to increase the product. So in terms of investment ideas in the two-wheeler, three-wheeler pack, Bajaj Auto, Hero MotoCorp, TVS Motors and Eicher Motor. Now, if I had to pick one possibly investment from this two-wheeler auto sector, then as of now, definitely it will be Bajaj Auto. If you have deep pockets, Hiral, first of all. And if not, then you can look at either Eicher Motors, TVS Motors or Hero MotoCorp.
Eicher Motors, TVS Motors are actually doing well in trade. Also, these stocks are up on brokerages, turning bullish. But one counter on the earnings is Mastec. Mixed set of numbers coming in, but the stock is taking a big sell-off. Why is this happening? For that, we have Jasmeet with us. Jasmeet, what's happening in the stock? Is there any internals to look at for Mastec?
Well, sure, thank you for that. We are seeing a flattish quarter for the company. If you look at the revenue, it's up nearly 5%, but rest EBIT is flat. The margins is a slight downtick, and that's why even the stock is down in today's trade. If you look at the key interesting thing that I'm picking up from this particular counter is the overall AI momentum. The company says they have signed nearly 40 plus deals in the Q1, and almost 45% of the current order book is led by the AI one deal. So that's quite interesting for this particular counter, though the company doesn't report its AI revenue separately. Apart from that, if you look at the overall PE ratio of this particular counter, it's at almost 13 times, in line with the large caps, given Mastec is quite small compared to the large cap companies. Now, in terms of the CC growth, that has come at nearly 1.5% on QOQ basis, and that explains why the overall PE is down for this particular counter. While company also reports that the Middle East issue is something that the company is working alongside with, and that has impacted the overall UAE part of the business. Apart from that, the rest segments of the company are doing well, but margin took a slight hit because of the UAE issues. Rest of the business model looks strong.
All right, the business model looks strong. Thanks a lot, Jasmeet, for that. But stock is under a little bit of pressure. Stock down almost 3% odd. Just to put in perspective, there's the AI trade is going on. There's a product IT company trade going on. There's large cap. There is mid cap. Gaurang sir, wanted to take your view, as a whole in the IT space and the way AI is actually playing out. Is there any good risk to reward ratio because the valuations seem a bit, on the lower side?
Hi Sharad, good afternoon to you as well. So there are multiple investment ideas from Geojit as far as the IT universe is concerned. This with the caveat that you are not going to get the kind of returns that you used to get 5-10 years back or maybe longer because of the challenges, complexities, innovation, technologies, products, tools getting launched. So we have investment ideas across small cap, mid cap and large cap. For the better understanding of your viewers, I'll name two from each. Cyient Limited and KPIT Tech from the bottom of the pyramid, that is small cap. At middle level, mid cap, we have investment ideas in form of Coforge and Persistent Systems. In the large cap universe, you are spoiled for your choice, Sharad, starting with TCS, HCL Tech, Infosys, Tech Mahindra, L&T Technologies, and LTM, that is L&T Mindtree, LTM Mindtree. But yeah, 1.5 to 2 year time horizon is needed in case if you eventually understand and agree to invest in IT.
So LTM, that stock is at the day's lowest levels. But you know what interesting counter that we've been spotting is Gujarat Fluorochemicals. Let's pull up that one on the screens. And if we can just have a longer term chart as well, because for nearly 2 years, investors have actually questioned the company's aggressive 2,000 crore bet on battery material. And this is because the losses have mounted with nearly no revenue. However, the tables have now turned and the company's story appears to be entering a phase. What's in store for the company? Because you're talking about a shift in narrative that's happening. You're talking about how the EV business is probably going to start firing as well in terms of FY27. That stock has seen smart returns in the last probably 6 months. It's nearly up 50%. Varsha is with us to tell us more. Varsha, it's a wait and watch story with regards to where Gujarat Fluorochemicals goes, and I think now is the time. After that, they've met a couple of analysts as well. There is something brewing there. There is something which is becoming more structured.
So absolutely, I would say that in the last 2 years, every chemical company has talked about battery chemicals, but now if you see, Gujarat Fluoro is one of them which has actually done work on ground. So for 2 years, I would say almost 2,000 crore of capex has been spent, huge losses in EV business, almost no revenue. But today, if you see, after 2 years, now what has happened? Plans have been built, products have been approved, customers have been signed. Narrative has actually, shifted from will this work to how big can this can be. Now talking about Gujarat Fluoro, what does it do today? If you see, the major earnings come from refrigerants, you have fluoro polymers and specialty fluorochemicals. But the ambition of the company is to build an entire battery ecosystem, I would say, a battery material platform. Company wants to become a key non-China supplier and also participate across EVs and energy storage system. Now, they are actually building a battery ecosystem wherein they'll have electrolytes, they'll have additives, they'll have PFDV blinders, also cathode materials, natural graphite anode. So everything that is required to make a EV battery will be every component will be manufactured by Gujarat Fluorochemical. So basically they are building an entire battery ecosystem. Now talking about the biggest trend, one is the qualification risk has largely behind. LFP is in final qualification stage and anode project is under development. So the hardest part in this scenario has been done by Gujarat Fluoro. Now, talking about why LFP is the most important, because if you see, LFP cathode contributes almost 40% of battery cost, and plant has been commissioned, customer approvals are underway when it comes to Gujarat Fluorochemical. Commercial sales are being targeted in H2 FY27 and the earnings potential rises once LFP scales successfully, and hence Gujarat Fluoro is already ahead when it comes to the battery ecosystem. Lastly, what management is targeting, much larger business than today. 2x asset returns, 25+% of EBITDA margin is what they are targeting. Also 12,000 crores of revenue potential and 3,000 crores of EBITDA potential is what management is expecting. So overall, they are building a battery ecosystem wherein Gujarat Fluoro is much ahead when it comes to their competitors, and hence we are seeing everybody going bullish, and everybody is now asking question, how big can this battery ecosystem be for Gujarat Fluoro?
Absolutely. Thank you, Varsha, for breaking that down for us. In fact, Gaurang, any view when it comes to a Gujarat Fluorochemicals? Because there is something brewing there. Would you be a buyer with what the management has now come out and said?
So while we remain positive on the sector, Hiral, Gujarat Fluoro, I don't think we have a coverage, but as your colleague Varsha was giving out all the fine details, my sense is that as these capabilities and capacities will come on stream, and over a period of time they start contributing to the balance sheet and profitability, the thought process must have gone very, very deep, Hiral, when it comes to investing almost 2,000 crores in these new capabilities and capacities, and with the right strategy in mind and the growth prospect in mind. So it happens to be a strong player. I won't go into specifics, buy, sell and hold, because we currently don't have coverage on Gujarat Fluoro.
That's the view coming in for Gujarat Fluoro, but the stock, or you could say the accident of the day, is none other than Bandhan Bank. Look at that downtick coming in the day's trade, and most importantly, the numbers yesterday, the reaction was not so much, but post market hours in the con call, a very important statement was made by the management. They have stated that the ROA, the return on assets guidance, is down by 40 points right now. They're expecting to range between 1.2 to 1.4% for FY27, and that is where the concerns have started coming in, a big sell-off volume based. Also, Gaurang sir, just taking your view on Bandhan Bank, is it the sell-off too much, or do you think there is substance still there?
Punishment is going to be severe when it comes to underperforming numbers, Sharad. And this is what I'm worried about such banks like Bandhan Bank. Though as a disclosure, we do have a coverage on Bandhan Bank. But this erratic reporting numbers is something, and guidance, commentaries, etc. It makes investors nervous, Sharad. That's the problem. And when you have alternatives available in form of other public sector bank and private sector banks who have delivered well, so we would need to have a little bit of elevated risk appetite in case if you got invested in Bandhan Bank, purely on the erratic nature of numbers getting reported. I hope the management will get their act together. We do have positive coverage from a long-term point of view.
Okay, positive from a longer term perspective. So probably Gaurang is saying this is an opportunity to buy with that 16 to 17% kind of cut that's coming in. Thank you so much, Gaurang, for joining in. It's always a pleasure to speak to you as well. But before we wrap the show, let me bring you an exciting announcement which you've been hearing. And this is after a pause of 13 years, one of the most prestigious owners in Indian businesses back on the July 26th, NDTV Profit brings back the Business Leadership Awards, celebrating the leaders, companies and entrepreneurs who have helped shape Indian businesses. Back on the July 26th, NDTV Profit brings back the Business Leadership Awards, celebrating the leaders, companies and entrepreneurs who have helped. It's conferred to an enterprise that has strengthened India's self-reliance by building indigenous manufacturing, deep tech capability, healthcare or industrial independence, reducing import dependence and establishing globally competitive made in India excellence. And the nominees are ONGC, Tata Electronics, HAL, Dr. Reddy's and Walkard.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. They built, they led, they redefined the business conversation. Now, India Inc.'s finest takes center stage. Who will win the NDTV Profit Business Leadership Awards? 26 July on the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
Benchmarks trade under pressure with the Nifty hovering near 24,000. Sensex sets more than 600 odd points. Realty, PSU banks on the back foot. Auto and FMCG meanwhile remain resilient. Indian pharma stocks under broad-based pressure after US President Trump unveils a phased tariff roadmap for imported generic medicines. While tariffs stay at zero initially, the proposed sharp hikes later weighed on investor sentiment across the sector. FMCG giant Nestle India surges up to 4% after numbers beat expectations across counts. Strong double-digit growth for all four product groups. And speaking of gains, let's talk about Bajaj Auto. Rose after a stellar Q1, raises hopes of another good year ahead. The automaker also plans to launch several models and upgrades in the next few weeks, along with broadening its expansion plans. Bandhan Bank, meanwhile, under pressure despite reporting a 35% jump in the first quarter profit as investors focused on a more cautious profitability outlook. Mixed brokerage views on the lender's recovery also weigh on the stock. And oil prices extend gains for a fourth straight session as US President Donald Trump threatens broader strikes on Iran and warns against Houthi disruptions. Warnings against Houthi disruptions in the Red Sea also resurface, keeping supply concerns really firmly in focus. Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup in terms of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour all while you grab lunch. But before we do that, let's take a very quick look at the markets. And when you talk about the markets, it's not looking like a very good picture, whether you talk about Nifty or Sensex for that matter. So Nifty about 190 odd points down. When you talk about Sensex as well, 600 odd point cut coming in as far as the Sensex is concerned. And when you quickly also talk about the broader indices, you're seeing some bit of underperformance also, just slightly in small caps, with that 1.2% loss also coming in, 1.1% thereabout loss also coming in for mid cap as well. And when you talk about the entire sectoral picture, very, very strongly skewed to the red as well. Let's also talk about what the sectors are up to right now. So it's Nifty Realty that's on the back foot with that 2.5% cut coming in. 1.9% actually for PSU banks. Nifty IT also on the back foot. Pharma, media, financial services, banks, all of those sectors trading with some cuts down anywhere between 1.5 to about 2.5% when you talk about autos and FMCGs. Those are the pockets of resilience really, and FMCG, of course, Nestle has to be one company that you have to talk about as well when you talk about the FMCG pack today, because that has reported its numbers, and a strong set of numbers that you're looking at. All four product categories have in fact done well, and when you talk about the numbers as well for Nestle, beat expectations across all counts. When you talk about the entire Nifty 50 pack as well, in terms of the top gainers and losers, that's also one stock that makes it to the gainers. So there's Bajaj Auto that makes it to that list with a 5.5% uptick also coming in. When you talk about Nestle India, 2.5% is the one that you're looking at. Tata Consumer, ONGC, Titan Company, as well as HUL, some other stocks that are doing quite good for themselves as well. On the flip side, there's an Interglobe Aviation, there's Infosys, Jio Financial Services, some of those counters that are trading with some bit of pressure, and some of your banks, of course, make it to this list as well. So there's Kotak Bank, Axis Bank, and the otherwise resilient in the last few days, ICICI Bank as well, 1.5% cut also coming in, and HDFC Bank, of course. And we'll get you some more updates in terms of how you should be looking at HDFC Bank as well against this backdrop that you've got right now. But before we do that, let's also talk about the entire banking pack in terms of one more stock that is buzzing on the back of, in focus in fact, on the back of its earnings, and that actually is CSB Bank. That one counter is key definitely to watch out for on the back of its numbers as well. It's reported its Q1 numbers, and we'll get you some more updates. When you take a look at the stock though, you're looking at a downtick really coming in, and a sharp one at that coming in when you talk about the report of the number as well. So when you talk about net profit, you're looking at an uptick of 26% thereabouts as well. And when you talk about some of these other numbers as well, in terms of the gross NPA, that's at 1.75% versus 1.66% on a quarter-on-quarter basis, 0.39% for the net NPAs versus 0.40% on a quarter-on-quarter basis. And when you talk about the NIIs, you've actually seen a sharp uptick coming in. 26% is how much the uptick also was. So that's CSB Bank all over. You do have the numbers that look quite healthy, whether you talk about NII or net profit as well, and operational profit also uptick of about 13.8 odd percent as well. It's the NIMs that are at 3.6% versus 3.5% on a year-on-year basis as well. So that's also one figure that you're looking at. The first quarter loan growth has also been at 24% on a year-on-year basis. So that stock definitely one to watch out for. Largely looking like a decent set of numbers, but the stock seems to be tanking ever since the numbers have really been reported as well, and it was also trading in the red before that. But you do have the entire commodities pack that, of course, is in focus. Let's talk about that as well and get you the update going. As far as commodities are concerned, quickly taking a look at oil prices, and that's where all of the action actually is, because you're looking at oil, Brent, in fact, above $93 a barrel. When you talk about key updates also coming in, and when you talk about what else is happening in the markets, lots of factors that you're definitely looking at. So extending gains for the fourth straight session, rallying on some of those widening supply concerns. And that seems to really be the concern here against the backdrop of, number one, US President Trump really threatening some of those broader strikes on Iran. Number two, of course, some of those Hormuz shipping risks also returning very much in focus, and add to that the real troublemaker as well in terms of Houthi threats that keep Red Sea vulnerable as well. So the escalation could very well push crude above $100, and that's something that organizations seem to also be indicating as well. And you do have brokerage commentary as well coming in, where they are also talking about this 3-digit figure. In fact, let's get you some more insights. Vandana Bharti, head of commodity research, SMC Group, as well as Peter Maguire, CEO Trading.com Australia, join us on the show right now. And Peter, first things first, I'm going to take it across to you. It is a very, very interesting setup, and it is a very interesting day to also be tracking the oil markets, because $93 a barrel is definitely a level that, months ago we were talking about factoring this in, thinking about whether or not this is, going to be achieved anytime in the near future. And that was before, war really complicated every math that we had in terms of oil prices, right? Right now you're looking at $93 a barrel, and frankly, it does look like $100 a barrel is also just a stone's throw away as well, given the kind of escalations and how sharply the market seems to be reacting to them as well. What is your take right now? How are you looking at this $93 a barrel? And do you think that this could be the new normal in terms of prices? What are the kind of numbers you're looking at there?
Well, good afternoon, Shreyanshi. I'll tell you what, this time yesterday it was at $88 and it looked like a little bit of heat was coming out. Then President Trump said he is, as far as attacking Pickaxe Mountain, that's really thrown, I think, more dynamic to the market. It's up now $5.50 since then. You're running at $93.40 or close to it. And it's been a very, very solid move in Asia trade today. Now, where it runs, you've got, as it says on the screen, you've got 86.5 odd dollars for WTI. So it's very strongly bid up. There's every chance you could be $95 by this time, I would say, at the end of New York trade. And we're only a few hours away, probably 5 or 6 hours away till New York opens. I want to see what happens this evening as far as any escalation, and also keep an eye, of course, on Bab al-Mandab and the Houthis as far as Saudi tankers sailing through the Red Sea, Shreyanshi.
Yeah, and just for viewers who possibly have just tuned in, what Peter is basically saying is by the time that the trading session in New York really ends for oil, all of the math that you have currently in place when it comes to oil prices is going to be drastically reshaped as well. Now, Peter, one more thing, in terms of the supply concerns, there's been a lot of escalations and there's been a very sharp reaction as well. In terms of the headlines that come out, how are you then looking at the kind of ranking that you maintain in terms of what you've been seeing markets react a lot to and what you've been seeing markets be a little more resilient towards?
Well, yeah, I mean, I looked at something from the IEA, and that was the International Energy Agency. I frequently visit their offices in Paris. And, it says its member countries still hold about 1 billion barrels, that's with a B, 1 billion barrels of emergency stocks in reserve, Shreyanshi. So there is a large amount of reserved capacity. But the other side of it is what happens as far as transportation, vessels going through the likes of Hormuz, and of course through the Red Sea, and whether there was going to be any choke points and how long this can run for. This could be, if you're looking back from a timeline perspective, it was only a couple of weeks ago and we were at $70. Now you're at nearly 95 and it's been bid up strongly. So obviously, I think, everyone's got $100 in their sights, and it's hard to speculate where it's going to find a floor. But at the moment, it's escalating as far as geopolitical, and that's not a good sign for consumers or naturally countries who are very dependent on oil, the likes of India, of course.
Yeah, and Vandana, I'll also take it across to you. Let's also talk about some of the speculation, or not speculation, some of the forecasts that have actually come out. You do have the Organization for Economic Cooperation and Development really talking about how Brent could really be hitting $100 a barrel before the year end. Now, of course, that forecast stands to very well change as well, given the kind of escalations and the way that the market has been reacting to it. What is your near-term forecast in the next, say, about 1 to 2 months? What are you then expecting in terms of oil prices?
Yeah, so there are two scenarios, of course. In case of escalations, if we do the calculation and maths, the total affected barrels are 20 million. Peak disruptions is of around 8 to 12 millions, and global demand destruction is around 1 million barrel per day, and non-OPEC offset is around 1.5 plus 2 million barrel per day. In that scenario, even if we consider all those calculations, we are on the supply deficit side of around 8 to 10 million barrel per day. So this is the supply disruption which is sending the oil price higher. In case of escalation, we are expecting $95 in WTI, and if we consider the Brent crude oil, it should be of $105. And the scenario too is that if some kind of peace talk will go on, then in that case the lower band should be of here now $75 to $80. We are not expecting a kind of level of $65 to $70 in this scenario, because we are entering into the peak demand season and the driving season. There the crude prices demand is more or less higher as compared to the other time.
Absolutely. And Peter, I'll take it back across to you. Play devil's advocate for just a bit, right? You do have, of course, forecasts coming in with that triple-digit number very much within reach. And it's at least the bull case, if it's not the base case, or if it's not the only case that brokerages are also looking at. But that said and done, what are you then expecting in terms of what really breaks this sort of bullish momentum as well? What are your expectations on that front? Is there anything that at all worries you right now?
Well, it's two things, I think. If something was to be protracted, Shreyansi, and this I'm talking about the next matter of weeks, if not a month or two, then what is price capable of achieving? Also, the retaliatory actions coming from Iran, what it does to the neighbouring countries, the likes of Bahrain, Kuwait, Qatar, UAE, and of course the Saudis. So if that was to really become unhinged and really ratchet up, then that's not a good sign. We're talking about hyper movements as far as crude. And if you impact all of that supply, then there's obviously going to be a lot of hurt there, and that would naturally push prices considerably higher. So that truly is the essence of it. How long does it take? If it does get sorted out quickly, then that changes the momentum considerably. But by the looks of it, I think Iran has certainly dug in here, and they're not negotiating, or they're going to negotiate maybe not to the likes of what President Trump's after, and that's going to cause, again, I think a timeline that's going to be longer than what it could have, well, than what it should be, in the sense of having it sorted out quickly.
And Vandana, right before we wrap up this conversation as well, just quickly taking it across to you to try and understand what you think about gold as well. It's been maintaining some of that steady momentum. What are you then expecting by the way of prices when it comes to gold as well?
Yeah, so it's all scenario are remain the same, but yes, it's a smart money which is coming into this counter, which we were talking about from last few interviews, that from $5,600 to $4,000, it is making this counter very attractive, and we are entering into this traditional buying season from festive buying to wedding demand, and August and September we consider it as a very aggressive buying for gold and silver as well. So collectively lower range for gold and traditional buying and the money shift into this counter again by the institutional players, these are all sending gold prices higher. But yes, this time my reservations is that the upside is limited till the level of 4350, 4400. We are not expecting that kind of level of $5,000 or 5200 kind of level, because yes, inflation concern is still there, crash crunch is there, and the interest rate hike fear is still lingering on the market.
Absolutely, and thank you so much, Peter, as well as Vandana, for taking time out and joining us this afternoon. It is a very interesting afternoon that you're looking at, with Brent well above $93 a barrel. And there you go, that's everything that you should be keeping track of as well when it comes to prices. Let's also move on and take a look at some of the other developments that are important to track. And like I mentioned earlier as well, there's HDFC Bank that you should be looking at very closely. Slower growth, margin pressures, as well as governance concerns raise questions over once market's favorite HDFC Bank. Let's also talk about what is happening in terms of HDFC Bank losing its chain and some of the factors to consider when it comes to that.
Yes, if you look at HDFC Bank so far in 2026, the share prices are down nearly 23%, and this is the worst performing banking stock in the Nifty Bank Index, and also the worst start that HDFC Bank would have seen since 2008. So if you look at this chart, in 2008 the stock was down nearly 42%. Since then, only twice the stock has given a negative return in a calendar year, and that was in 2011 and 2013. But even that time, it was just minus 9% and minus 2%. Apart from that, all the years the stock has been giving a positive return. But in 2026, so far, 7 months out, we are down 23%, the worst possible start that HDFC Bank could see since 2008. Now, how important is this for any retail shareholders? Now, HDFC Bank is 100% owned by public. There are close to 45.3 lakh shareholders in HDFC Bank, of which 44.4 lakh are individual, which means that these are the non-mutual fund holding. Now, if you look at the mutual funds, they own close to 30.6% stake, and 59 mutual funds or AMCs via various schemes hold stake in HDFC Bank. And this is the most interesting plate here. Now, the value of this mutual fund holding is at close to 3.1 lakh crore rupees, which is nearly 8.3% of the total equity-oriented scheme AUM that the mutual fund industry has, and nearly 3.8% of the total mutual fund industry asset under management. So that's the exposure towards one single stock of the entire mutual fund industry. Hence, this 23% fall in the HDFC Bank share prices could be a pain point for all retail shareholders. Now, why is HDFC losing its sheen? Now, the loan growth has been moderated, and apart from that, the funding mix change is also impacting the company's profitability. There has been a continuous decline in a low cost deposits. Margins have been range bound, in fact, on a declining trend, and also the yields on asset has also been on a downward trend for the last 5 consecutive quarters. Apart from that, there have been governance concerns post the chairman exit, and also there is a delay in clarity on the CEO reappointment. Now, given the fact that there is still no clarity about this CEO appointment, let's see how HDFC Bank has performed under Shashidhar. Now, for this, we are just giving a context of ICICI Bank performance as well during that time period. So, over FY21 to FY26, if you see HDFC Bank's performance adjusted for the merger that was announced back then, the NII growth, CAGR growth has been around 10% while that of ICICI Bank is 18%. PAT growth of HDFC Bank is 12%, while that of ICICI Bank is more than double at 25%. Advances or total loan growth was 12% for HDFC Bank, 17% for ICICI Bank. The net interest margin, the bigger pain point for HDFC Bank has been the net interest margin decline, and that has gone down by around 70 basis points, while ICICI Bank's net interest margin has increased by 63 basis points. The net NPL change, that is a net NPA, that has come down by 23 basis points, which is good, but for ICICI Bank, it has come down by around 81 basis points. For return on asset change, down by around 70 basis points, while ICICI Bank's net interest margin has increased by 63 basis points. The net NPL change, that is a net NPA, that has come down by 23 basis points, which is good, but for ICICI Bank, it has come down by 1 basis points. For return on asset change, that has come down by bips, while that of ICICI Bank has increased by around 104 basis points. And lastly, the ROE or the return on equity for HDFC Bank 30 basis points over FY21 to FY26, while that of ICICI Bank has increased by around 580 basis points. So, not that of great performance that we have seen for ICICI Bank.
Absolutely, and thank you so much, Samit, for getting us all of those highlights. Let's also listen into the commentary coming in from Abizar Devanji when it comes to the banking pack as a whole.
More from the perspective for the investor, and indeed the significance that it has purely by way of its lending book. Could they have done things differently over the course of the last 3-4 years?
I mean, sitting in a studio, we can say that, Alex. But the reality is that HDFC has been through a merger of a disproportionate size. And ICICI had the same issue 2001. However, in 2001, there were favorable markets and cheaper interest rates. ICICI Bank would have fallen under the burden of their NPAs at that point in time because the DFI had NPAs. HDFC Bank is falling on the burden of lack of deposits. Now, if you just look at the larger issue, these mega bank merger, and of course HDFC is multiple size of what ICICI was in 2001. So if you look at it, this merger will take an elongated period of time to stabilize. And the reason why it will take that much time to stabilize is one, the size is much larger. Two, we've had a huge issue on deposit runs, as in deposits moving to the capital markets. Three, the interest rate cycle has gone up. And in an upward interest rate cycle, to integrate a non-bank into a bank factors that have played a role in terms of HDFC stability. What HDFC is doing right, in my opinion, still is the fact that they are not trying to assess borrowings on the wholesale.
All right, and there you go. Bank has its own troubles as well. But let's also quickly take a look at the flashes that were there on the bottom of your screens. And the message that is coming in from Iran is that exchange of messages are possible with US as well. And that's the commentary coming in from Iran. That's something that reports are stating. Currently, no negotiations are ongoing with the US. And that's the commentary also coming in. $94 a barrel is what you've reached when you talk about Brent as well. And that's the entire backdrop that you're looking at. That said and done, let's also move on and talk about Vedanta. That's in focus after the Delhi High Court rejected companies' plea challenging the Ministry of Petroleum and Natural Gas's decision to refuse an extension of the production sharing contract. You do have Nimit Dixit standing by with all of those important details. Nimit.
Yes, not so good news for Vedanta here, as its challenge against the centre's decision to not extend its PSC contract for the Cambay Basin was upheld by the Delhi High Court. Now the Delhi High Court has said that Vedanta, whose contract expired, or the Cambay Basin, a production sharing contract between the government, ONGC and Vedanta, had ended in 2023. Interimly, it was allowed to continue until the contract was re-allotted. Vedanta had challenged this in court, and in January it had obtained a status quo which meant it could continue its work on the Cambay Basin in the meantime. But now the Delhi High Court has finally found that the centre's decision was correct, and it upheld the centre's decision in not extending Vedanta's rights over that contract. This is a big loss now for Vedanta, a contract that it's been handling for quite a few years now. The final order in written is yet to come out. This had come out was correct, and it upheld the centre's decision in not extending Vedanta's rights over that contract. This is out in court today, so we await the final order for details.
No, absolutely, and thank you so much, Nimit, for joining us with all of those details. So lots that we've covered on the show, with Brent being near $94 a barrel. It's risen $1 whole since we started the show as well, and that's the key commentary that you have coming in. So as we wrap, let's also take a look at a pause of 13 years. After that, you do have one of the most prestigious honors in Indian businesses that is back right now. On July 26th, NDTV Profit brings back the Business Leadership Awards, celebrating the leaders, companies and entrepreneurs who've helped shape India's economic journey. And the nominees for Business Leader of the Year in Public Sector are from strengthening India's maritime capabilities to building a globally respected shipbuilding enterprise. This nominee has steered a strategic national champion to new heights. Captain Jagmohan, Chairman and Managing Director, Masgordok Shipbuilders, leading one of India's energy giants through a period of transformation, growth and evolving consumer demands. This nominee, in fact, has balanced scale with strategic vision. And Manoj Jain, Chairman and Managing Director, BEL, is who I'm talking about. The next nominee, revitalizing a cornerstone of India's industrial ecosystem. This nominee has championed execution, engineering excellence and renewed growth. K. Sadasivan Murthy, Chairman and Managing Director, BHEL. Driving the transition from power generation leader to energy transition champion, this nominee, in fact, is helping shape India's energy future. Gurdeep Singh, Chairman and Managing Director, NTPC. At the helm of India's energy explorer, this nominee has led with resilience, scale and strategic foresight in a rapidly changing global landscape. Arun Kumar Singh, Chairman and CEO, ONGC.
of the day, presented by Tata Azura, हर रास्ते का सुपरस्टार।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा, आप अपना देख लो।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kinds of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Soumit Sarkar and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volumes. So let's see what's on the show today. Firstly, we'll be speaking with the management of Tina Rubbers. A strong set of numbers that the company has reported in the first quarter, but the key question to ask the management is that whether this kind of growth is sustainable, are the margins sustainable even going forward or not. Apart from that, we'll be also speaking about a stock called MPS. The stock is up nearly 26% in the last 5 trading sessions. Again, a strong set of Q1 numbers, margins are around 34% as against 27% on a YY basis. When it comes to Gulshan Polyols, the stock has seen its biggest single day gains since Feb 2026 and the stock is up nearly 60% since Feb 27% on a YY basis. When it comes to Gulshan Polyols, the stock has seen its biggest single day gains since Feb 2026 and also highlighting a stock called Huhtamaki India. Margins have expanded by around 300 basis points in the first quarter. in the second quarter of calendar year 2026, and the stock is up nearly 50% in the last 1 month. And lastly, we'll be speaking about a stock called Uflex. The stock is at its highest level since Feb 2026, and if you look at the gains that the stock has reported today, that's its biggest single day gains since April 2026. But if you look at the markets, fourth consecutive day of weakness that we are seeing. In fact, we are down nearly 200 points. We are well below the 24,000 crucial level that was there for the Nifty benchmark index. Nifty Bank Index, similar kind of pain that we are seeing for the banking names, Bandhan Bank being the pain point here. The stock is down more than 15%. Apart from that, if you look at the other sectoral indices in trade today, banking names are down in trade. But among the other sectoral indices, it's the FMCG that has been gaining. Nestle numbers were quite good, and that could have a rub-off effect on other FMCG names as well. While auto and defense is also up in trade. But on the losing side, we have real estate, PSU banks, IT, Nifty Pharma down more than 1.5% each in trade. Also, Varsha, when it comes to the Nifty small cap names, which are the key stocks that are buzzing?
Well, let's pull up. So a lot of stocks, of course, mainly on the back of Q1 numbers and volumes. You have Imami Paper Mills, which is in focus. This is on the good volume data that we are seeing on this counter. You have Kaya also, buzzing in trade. In fact, Kaya is almost buzzing on the back of volumes. I would say is up almost 18%, 22 times of its 30-day average. The volumes are up. You have Huhtamaki India, a good set of numbers, Q1 numbers. You have Wakefit also in focus. In fact, the stock is up almost 10%. Volumes are, of course, 8 times of its 30-day average. You have Premier Poly also buzzing in trade. Ganesh Benzoplast is also up almost 6% in trade. On the loser side, let's talk about that also. You have Bajaj Healthcare actually on the losing side. This is after what company posted Q1 FY27 numbers. Yesterday, even company had a con call. You have Oswal Pumps also down about 7% in trade. iFinance is down almost 5 to 6%. There you go, 7% in trade. You have Rolex Rings, Suntec Realty, which is sulking in trade. Tinna Rubber is also down almost 4%. Now this is normally the profit booking that we are seeing, because company has given a good set of numbers, and hence yesterday, if you see, the stock was up almost 20%, and today we are seeing that profit booking. Infobeam Technologies is also sulking. Solara Active is actually down almost 5%. But one stock which is in focus is Tinna Rubber on the back of Q1 FY27 numbers, a good set of numbers that the company has given. And to speak more about how was the quarter gone by and what is the guidance that would company give for the next 2 to 3 years, to talk more about that, we are here joined by Mr. Gaurav Shekhri, who is Joint Managing Director at Tinna Rubber and Infrastructure. Sir, welcome at NDTV Profit. Pleasure to have you. A very strong set of numbers, especially on the margin side, I would say. We've seen a good spike in EBITDA margin year on year. How much of this margin is sustainable, number one, and how much of this came from EPR monetization and the temporary factors?
Hi, good afternoon, and thank you for having me on your show. We are, of course, also very pleased with the numbers and the results of Q1. Regarding, the margin expansion that we have seen, we've been working over the last many quarters and have been giving that guidance in our earnings calls, that we focus a lot on, optionality on raw material side to improve gross margins, moving up the value chain, exports. So a lot of these initiatives, have brought in this margin expansion and operational efficiency. Those are the factors driving the margin expansion.
And you also fully monetize the accumulated EPR credits in Q1. After this one-time monetization, what does the recurring EPR income opportunity look like, maybe in further quarters?
Our EPR income, is fairly stable year on year. It is, between 25 to 30 odd crores annually. The monetization has happened in Q1 is only a factual statement that, what we had accrued as gains have actually been realized. And that's always a good thing, brings cash into the balance sheet.
Understood. And sir, also I just wanted to understand, by FY28 maybe, what share of revenue can come from, one is carbon black and TPO. As I understand, the trial runs for TPO have started and carbon black commercialization is expected by Q4. So just wanted to understand the contribution that you're expecting by FY28 when it comes to these segments.
I believe it will be about 20%. 20% of our top line will come from the TPO and the RCB plant that we have set up. And you rightly mentioned, we have commenced, in fact, we've commenced commercial production of the TPO part of the plant. It should start giving revenue to us from Q2 onwards. And RCB trials will happen in Q2, and we hope RCB commercial sales will begin in Q3.
You've already, when it comes to the Saudi investments, sir, you've already revised your timelines because of the geopolitical issues that we are going through. At what point, I would say, would you reconsider or defer the Saudi investment if uncertainty persists?
In fact, I was in Dammam day before yesterday. I was in Saudi. We are looking to, I went to assess the situation, and things are normalizing there. We are going to discuss internally. There is a very good chance that we will want to begin work on that plant within this financial year, possibly even in Q3.
So, given the strong growth that we have seen, what is the kind of internal target that the company has for FY27, if you could share with us?
We have given this guidance already, and we hope to maintain that. We should be anywhere between 675 to 700 crores of top line in the current financial year.
This would remain around this 21 to 22% band, or there is scope for expansion on that front?
You mean the EBITDA margin, right?
Yeah, right, EBITDA margin.
Yes. Well, we've given a guidance of about 18% for our business. Of course, we've done better, and we are going to do our best to protect this new benchmark that has been set by the company. And the contribution of, all the initiatives like focus on higher value product sales, exports, more optionality in raw materials. These are things which we have now managed to build into our business, and they should not change in any dramatic way. I'm confident that we should be able to do better than the 18% that we've been indicating.
21.7, that does not have any one-off. It is pure play operating leverage that has worked out for Tina Rubber, right?
Operating leverage and fundamental changes to better gross margins because of raw material optionality, higher value product sales, etc.
And sir, also just wanted to understand, you have also given guidance when it comes to FY29 that you want to reach 2,000 crores. That's the vision. Which businesses will contribute more of this growth? Will it be the traditional recycling business, or PCMB, or TBO, or any internal operations? So just wanted to understand what will be the key growth drivers for this 1,000 crores.
Just a minor correction, we've indicated 1,000 crores, not 2,000 crores.
Yeah, 1,000 crores, yes.
Yes, I heard 2,000.
No, sir.
Yeah,
so 1,000 crores.
So 1,000 crores by FY29. Interestingly, we are now, laying the, we are getting more strategic in our thinking as well, to see how we can harvest the benefits of this experience and knowledge we have gained. How can we leverage? How can we, build some adjacencies to, to grow to a much larger number? We are now focusing on that internally. But yes, on the FY29 1,000 crore plan, it'll be a combination of the polymer composites, master batch business, the TPO RCB business, and of course our core business of tire recycling, which will get us there. The ratios and are harder to tell you today, but these will be the drivers which will get us to that number of 1,000 by 29.
And sir, the South African operation is still loss making for you. What are the timelines to achieve that break-even point when it comes to this business?
Sure. So South Africa, our current run rate is of about 20-25 lakh rupees a month loss in that operation. We are hopeful and getting more and more confident that from October this year onwards, we should be able to get it to break even. Our some new equipment is reaching South Africa soon, which will help us increase our production capacity there. These machines have been stuck in Middle East for the last 3 months because of the disruption in freights and the crisis in Middle East. Now they're finally on their way. So I'm hopeful that by October onwards, we will achieve break even in South Africa.
Sir, good to have you on the show, and thank you for sharing the growth plans going forward. Well, that was the management of Tina Rubber, quite optimistic on their growth plan. Let's also welcome in our fundamental guest, Kush Gupta, Director of SKG Investments and Advisory. Kush, you heard the management. They're quite optimistic on their growth plans. They're expecting their margins to remain at this higher band now going forward. How are you looking at this count at current valuations?
Hi, Somit. Hi, Varsha. Thanks for having me on your show. So I heard the management, and I think I'm quite in agreement with them. I think they've shown a very good operational leverage and delivering clean bottom line. If you look carefully, the employee expenses and the finance costs are growing significantly slower than the revenues. This showed that the management is quite justifiably, expanding their operations, and what might look initially like a one-time gain could sustain due to a lot of sectoral factors. Also, there is a sustained raw material price volatility in international scrap tire market. Pace of offtake for crumb rubber modifiers in domestic road building is also taking up. If you look at the Indian tire and rubber recycling industry in India, they also have structural tailwinds with government's focus on sustainable infrastructure. So all these factors will continue to sustain this growth going forward. Also, if you see, they have multi-continental footprint. Now, while it can be slightly risky when it comes to Middle East, but their subsidiary incorporation in Chile is also doing very well. So, in my opinion, as geopolitical tensions continue to ease, their expansion in Saudi and Oman will give them better profits, as well as like the management said, South Africa also will kick in. So, we are expecting similar results going forward.
Well, that was everything you had to know about Tina Rubber. But before we get into the next small cap stock, let's slip into a short break.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉल मार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क.
इस बार तो माँ से भी बेहतर बना.
P Mark, the mustard specialist since 1933. बरसों से सरसों. कुछ तो बात है इस दिल में.
This is India Inc.'s Roll of Honor, recognizing the leaders shaping India's growth story, where ambition, enterprise and excellence meet. In the presence of the finance minister,
Welcome back. You're watching Small Cap Buzzers. Well, Huhtamaki India, let's pull that chart up because that stock is buzzing on the back of strong Q1 numbers. Let's see what those numbers are. Revenues up almost 23%. You have EBITDA, which is up 74%. Margins at 10% versus 7%. Net profit is up almost 76%. Let's see what drove this growth. Volumes remained healthy for the company. There was a strong volume growth which supported sales. Even packaging demand remained robust. the company passed on higher raw material costs, so that actually helped in margins. Price increases were supported by revenue growth. Now, the reason why you're seeing a good spike in margin, of course, one is better operating leverage, higher volume. If you see improved profitability for the company, a product mix improved, and operational efficiency supported margin for the company. So it's nothing but the efficiency and product mix, and the price hike has led to the spike in the margin that we are seeing when it comes to this counter. But there are still challenges which still remain. One is, of course, inflation pressure, which still continues. So you might see some kind of impact in Q2. Raw material cost remains a challenge, geopolitical uncertainty persists, but overall a very good set of numbers, and hence we are seeing the stock is up almost 12%, 13% in trade. Kush, any view on Huhtamaki India? Good set of numbers, stock is up 12%. Should investors book profit considering the situation, the volatile situation that we are in? Kush, I think you're on mute.
Sorry. Hi, Varsha. So Huhtamaki has given a great set of numbers, and while the stock is trading at a PE of 16, I won't say it's very cheap, but I won't say it's too expensive either. So investors can stay in it for a little while. From a fundamental point of view, there are key drivers that are growing the volumes, which is online sales, growth in food and package industry. The company is also benefiting from pharma packaging tailwind. Pharmaceutical companies are shifting to single dose packs for rural health outreach. This has incrementally, driven up the sales. So this sectoral tailwind I feel, will continue to sustain. There is a sustained recovery in urban FMCG consumption volumes. So this will definitely help them to continue their number. And similarly, like we've seen with, Tina, their EBITDA margins have improved significantly. And this shows a clear operational efficiency. And bottom line recovery also indicates robust pricing power. So for these reasons, I think investors can still stay invested in Huhtamaki. Maybe if the P levels were slightly higher, I would have tread caution. But right now, I don't see any reason to be very cautious.
Right. The next stock in focus is Gulshan Polyols. Now, the stock is up nearly 60% since Feb. Is it the gains related to the ethanol-related news that we have been seeing that has been playing out for this counter? Let's get in Parth with more details on Gulshan.
That's right. Gulshan has been buzzing a lot in trade recently, and that is mainly because of the ethanol business, like you rightly mentioned. Well, the company is involved in three businesses: ethanol, grain processing, and mineral chemicals as well. And ethanol is their largest earnings contributor. If we talk a bit more about ethanol, then it contributes to around 60% of their revenue and profitability as well. Their current ethanol order book stands at 18 crore liters, and the management is targeting to bring that up to 22 crore liters by FY27. They have an installed capacity of 26 crore liters, and the OMC contracts have been giving them the visibility till 2032. About their margin outlook, management is expecting healthy ethanol margins for the next 2 to 3 years. The availability of FCI rice and also the soft maize pricing is what is aiding profitability for the company in the coming years, right now as well, and in the coming years as well. About the other businesses also, the grain business, the grain processing business is recovering from a down cycle, and also the mineral chemical business is giving them stable cash flows and margins. So from all the three segments, the company is poised to do really well in the upcoming years. About their FY27 outlook, management has shared their guidance, and they are targeting revenue in the range of 2600 to 2800 crores. EBITDA margins they are targeting between 10 to 12%. Also PAT margins they have guided for in the range of 5 to 6%. The focus will remain on utilization, cash generation, and lowering their working capital cycle as well. About the long-term growth plans, the company is doing a capex of 500 crores in FY28, and that is going to be for a specialty chemicals project that will act as an import substitution and give them products which are high margin in nature. The potential revenue from this opportunity is in the range of 1000 to 1500 crores, and management is targeting revenues up to 5000 crores in the upcoming 4 years as well. So this is the entire outlook about Gulshan Polyols and the reason why the stock has been buzzing lately.
Kush, any view on Gulshan Polyols? The stock has already moved up. Do you see there could be some more upside?
So Sumi, Gulshan is a very classic example of a company reaping rewards of its capital expenditure cycle. Their transition from pure starch player into a significant ethanol supplier for oil marketing companies is reflecting on the bottom line. So overall, while we are bullish and overweight on specialty chemicals and ethanol, Indian chemical industry is also benefiting from China plus one policy. I still am a little wary of the volatility in the grain prices. They are a grain-based producer, and the volatility on raw material sourcing costs could create slight problems in their expected margins and expected growth. And regulatory changes on the ethanol blending platform pricing structure could also be one of the risks. So while the company is poised to benefit from their capex cycles, I would say investors should watch out on the risks involved.
Thank you, Kush. Thank you for joining us and giving us your perspectives on the stocks that we discussed in trade today. Well, moving on to our next counter, that's Uflex. The stock has been buzzing in trade. Let's get in Jasmeet to understand what could be the potential reason behind this move in the counter.
Well, Somit, thank you for that. Before we get into the reasons why the stock is buzzing, let's quickly understand what does the company do. Well, company operates as a flexible packaging solution company where they provides various solutions for packaging material. Now, if you look at the stock performance, the stock has touched its highest level since Feb and gained the most since the April 2026. Now, if you look at the stock performance, over last 6 months, the stock has given a return of about 5% while over a year, the stock has tagged nearly 20% in trade. Now, in terms of the overall Q4 performance, what's interesting here is the company has returned to profitable in the Q4 quarter of the company, while we are seeing a good growth with a revenue and uptick of 5.7%, and we've seen some impact coming in from the West Asian crisis as well, where there was supply chain shortage for the company, and the company has also stated that they have moved away and found other suppliers for the packaging material. Now, if you look at the over the year performance of the company for FY26, the entire year, the overall revenue saw an uptick of 2% while the EBITDA also grew by nearly 8% and the margin saw that pressure extended pressure. Now, what interesting about this particular counter is over last 6 years, the overall revenue has nearly doubled from earlier 7,500 crore, it had reached to 15,000 crore as of FY26. But on the other hand, the net profit has stayed the same. If you look at the net profit 10 years ago for this particular counter, in 2016, it was roughly at 300 odd crores, and as of FY26, the net profit is still at 300 odd crores. So top line is growing, but the net profit is something that stays stagnant for this particular counter. And even the margin, for that matter of fact, it was somewhere between 15 to 18 odd % few years ago, but currently it's again back to that range of 12 to 13 odd %. So that's something that's troubling the stock. But apart from that, the overall top line growth remains strong for this counter.
So much, Jasmeet, for all the details. Well, next stock which is in focus is NPS. NPS is actually building on a strong Q1 numbers. In fact, the margins have spiked to 34% versus 27% last year. But we have Shivam to give us more details on that.
Yes, the MPS has posted a strong Q1 results, and which is a company involved in B2B learning and platform solutions. Looking at the results, the company has witnessed the strongest opening quarter in history and for the company. And in terms of revenue growth, that was mainly led by its research segment, which has seen a substantial growth. And in terms of education segment too, it has strengthened its role as the second growth pillar for the company. In terms of operating leverage, that has also seen a substantial improvement, and that was due to automation and AI implementations in the process that the company has mentioned. And in terms of clients, so that has increased to around 841 in terms of client additions versus 404 on YY basis. And this is due to the acquisition of AJE company, which is mainly into AI powered writing. In terms of geographic mix too, that has remained balanced, with North America constituting around 49% and Europe at 33%. In terms of financials too, the revenue has seen a growth of around 20% and profit has gone up by 43%. Also, talking about the stock performance in past few months, also the company has witnessed a strong uptick of around 42% as well.
Well, thank you so much, Shivam, for all the details. Thank you so much. Well, viewers, after a pause of 13 years, one of the most prestigious honors in Indian business is back. On July 26, NDTV Profit brings back the Business Leadership Awards, celebrating the leaders, companies and entrepreneurs who have helped shape India's economic journey. And the nominees for Wealth Creator of the Year are: number 1, you have BSE, which enables capital formation to create wealth for generations of investors. You have Transformers and Rectifiers India, which has transformed engineering expertise into one of the market's most compelling growth stories. MCX India transformed market participation while delivering exceptional value creation. Himadri Specialty Chemicals, leveraging innovative in specialty chemicals and advanced materials. You also have Gallant Ispat, a story of manufacturing scale and disciplined execution, transforming industrial capability and sustaining growth. Garden Reach Shipbuilders, combining strategic national importance with operational excellence. Lastly, you have Newland Lab, wherein they've built a differentiated pharmaceutical business, creating lasting investors' value. Well, viewers, this is all the time that we have on this edition of Small Cap Buzzers. Stay tuned. Ask Profit afternoon edition coming up next.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे. केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपी अब संभाल लेगा. आप अपना देख लो.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी.
कुछ तो बात है इस दिल में.
P-Mark, the mustard specialist since 1933.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage. I think it's heartening to see talent that there is in across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance. Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. This is, of course, the afternoon edition of the show. And over the next half an hour, we'll try to get to you all your stock-related queries. But first, a quick check of how the markets are doing, because yet again, a day today where you're seeing some pressure on the index. We are now comfortably actually continuing to be below the 24,000 mark, down almost 200 odd points. And the heat map also reflects this pain. So the banking names have largely been flattish in this week. You're seeing some pain today across on stocks like Indigo, on Dr. Reddy's, as well as on Infosys. Infosys comes out with earnings tomorrow. Jio Finance, SBI and Kotak Mahindra Bank are some of the other ones that are under pressure right now. What you are seeing is stocks results as well as updates and upgrades from brokerages wherever visible, and that is clearly visible on Bajaj Auto. You've seen a stock fly today up almost 5.5%. Yesterday, the results came during market hours, not too much of a reaction, but that follow-on buying visible there. Follow-on buying is also visible on TVS Motors, and we'll get to that in just a bit. But in terms of the sectoral heat map as well, because of good results as well as good commentary coming in from TVS as well as Bajaj Auto, if you can look at the sectoral heat map also, that is visible on the Nifty Auto today, apart from the other indexes as well. So you're seeing some moves on FMCG Auto up 0.27%. You're still awaiting big results from Mahindra and Maruti, and I think hence that will be visible on the margins of the car makers. But the Realty Index is down 2.5%. So again, all momentum being lost right now on this index at this point of time. Private banking also continuing to be under pressure. The advanced decline is the final one before we move on to your stock-related queries as well. In the morning, almost 3:1 in favor of the declines is what we had seen on the advanced to decline ratio. Right now as well, that continues to be the other pain point for the index. The mid-cap, small caps too, if we can pull those up, reflecting the pain as well. Down almost 1% in terms of the mid-cap 150, the small cap 250 as well, seeing much broader pain at 1.2% as well. But before we start taking your stock-related queries and get to our guest, onto an NDTV Profit exclusive, India-China joint ventures could face fresh delays. And that is one of the biggest stories that we're breaking right now. My colleague Shrimi is now joining in to give us more perspective on the same. Shrimi, over to you.
Yeah, that's right. What we are picking up is that China's new outbound investment regime could be the next hurdle for India-China joint ventures, with companies now potentially requiring approval not just from New Delhi but from Beijing as well before any deal could move ahead. People familiar with the matter said that the China new outbound overseas framework, which came into effect on July 1st, may delay the implementation of deal even after they have secured approval from the Indian government under the Press Note 3. Now, India has recently cleared quite a few China-linked manufacturing proposals, including the big ones involving Dixon Technology, Vivo and Uno Mindas, while other proposals such as Amber Oppo are still in the pipeline. Now, sources say the companies that have already received Indian approval are now engaging with their Chinese partners to secure outbound investment clearances from Beijing, but those approvals could take time. For deals that are still awaiting PN3 clearances, companies are assessing whether they will need to first secure approval from their Chinese authorities before moving ahead with their India's application. What we understand so far is that discussion between Indian companies and their Chinese counterparts are already underway, although regulatory clarity is expected only after the first few cases are processed. So, for context, the China revised overseas investment rules expand scrutiny beyond the capital flows to include equity investment, governance rights, shareholder funding, technology transfer, and even the data-related consideration. Now, India is also understood to be treated as sensitive destination under Beijing outbound investment assessment. So, to sum up, this additional layer of approval could definitely lengthen the timeline for China-led investment in India.
Well, thanks so much for that, Shrimi, getting us that big breaking news. Let's pull up Dixon Tech as well, because like Shrimi mentioned, the Vivo approval just got a PN3 approval in India. If it requires another scrutiny, and you're seeing a spark reaction coming in on the stock down 2.5% and falling at this point of time. Let's look at Amber also, because as we have seen, both those companies, as Shrimi mentioned, of course, Oppo deal with Amber is the new one, and that stock is also now down at its lowest end of the day, lowest point of the day as well. You also have for Dixon a few approvals already in place within the ECMS scheme, but one more is yet to go through apart from Vivo. Vivo just got an approval, but the Zhongxing Yuan Precision Manufacturing Agreement, they've also applied for an ECMS scheme, still requires a PN3 approval. That will be another one to watch out for in the near term. And we'll get you all of those moves, continue to track in the EMS space. But let's start your stock related queries now, and welcome in our guest for today as well. We're now being joined by Sachin Janardhan. He is of course the independent market expert on the technical side of things. Also being joined by Nandish Shah, AVP PCG Research and Advisory from Motilal Oswal, joining in. Gentlemen, both of you, thank you so much for joining in today. The first question coming through, and this one's on Idea Forge. Our viewer MM Kapoor is holding these shares at 955. Sachin, he wants to know whether he should still continue to hold this counter, starting to stabilize at that 800, 850 odd mark. What would you recommend here?
He can hold with a stop loss of 785 basically, as the continue basis, the trend is up on a daily, weekly and monthly basis. There is no problem, he can hold.
Also, Sachin, if we can get a quick view from you on the index as well, because we've seen pressure yet again coming in, and we are below the 24,000 mark. What are some of the other levels? Is 23,800 that big support that we all are watching out for?
So there are two words I would like to say, which is 7 and 8. So basically the index is trading within 7th and 8th range only. So the overall range is 24,400 on the upside, and on the downside 23,800. Till the time we are not getting any kind of a breakout or breakdown, we are into a very bigger range, and below 23,800 we need to be very cautious, as only an intraday break could also spark basically very selling pressure. At the same time, if we are closing above 24,550 levels, we can see above 24,800 and 25,000 levels on the upside. But would like to warn as well, as any kind of a breakout or breakdown, it will lead to a very faster levels. So we need to be very cautious about these levels which I have given right now.
Got that view, Sachin. But take across the next question. This one's coming in from Ray, who's from Bengaluru. Asking on Reliance Industries, he's holding shares at 1420 odd, and ask if wants to hold it for the near to medium term. Asking if it's a good time to average now. Nandish, good afternoon. Welcome to the show. Would you recommend it's a good time to average down on Reliance Industries?
So the Reliance declared their numbers on Friday, which was about more or less above street expectation, especially on the oil and gas profitability. And the retail numbers continues to remain softer for the last 2 quarters or so. So in case he's looking for averaging opportunity, this is a good time to average Reliance. Currently, we have a buy rating on Reliance.
Got that view. And viewers, you can also call us on the landline numbers that are flashing on the top of your screen, and speak to our guests directly on the stock related queries too. The next one coming in, it's on data patterns. Our viewer Rakshit, who's from Mumbai, is holding on to this counter at 2850. Wants to know if he should still continue to hold. He's almost up 80% almost at this point of time. But what would you recommend here, Sachin? Is this momentum of today likely to continue? Should he continue to hold?
First of all, the congratulations to the viewer, because he is holding with a very good stock. As overall trend on a daily, weekly and monthly basis are up only. Structure is also very good, making a good higher high, higher low. One thing I would like to give is the trailing stop loss methodology. So trailing stop loss, he should keep around 3,800 levels, and he can continue to hold the stock, as we can see more upside in the coming days and weeks.
Got that view. But the next one, and this question is on Maruti Suzuki. Ajay, who's from Pune, is holding on to these shares, but at 16,400. So he might have bought it at that previous upcycle that we saw from 12,000 all the way up to 17,000. Asking if he should still continue to hold, sell, or is there a good level to add more? Nandish, would you recommend that? We have the results in about 10 days time, but how are you looking at the stock? We've seen very strong volumes in last quarter. Would you recommend him to add at this point?
So as you rightly said, we have seen a very good volume growth for Maruti, and yesterday they had reported that they are likely to increase the car prices by nearly 30,000 from August month. So most of the input cost pressure would be taken care of with this increase in price, and with higher volumes and the new capacity coming in, and also a lot of export opportunities for Maruti, it is a good time to average at these levels.
Okay, got that view, Nandish. Let's go across and take our caller for today. This one's from Mysuru. Mohan is dialing in for a stock query. Mohan, very good afternoon. What's your query?
Good afternoon. I've just got Trade Tech, 5 shares at the rate of 2581. I just want to know long-term perspective whether I can add these shares for long.
Got it. Nandish, any coverage on Trade Tech?
Rate of 2581. I just want to know long-term perspective whether I can add these shares for long.
100, and now again seeing a positive momentum. would you recommend more on to continue holding?
So, what is the car trade is not there under our what is the coverage universe. I won't be able to comment on it.
Anything, Sachin, that you like on the charts? Is that momentum yet to continue? I spoke about the moves. This one's going back to the 3100 mark. Is that something that's visible on the charts right now?
So stock is in a uptrend basically on all the time frames and making a higher high, higher low. Only thing is the immediate resistance for the stock is around 3080, 3100. If that is not crossing, then that is a hurdle. On the downside, 2600 is a good support. If that is broken, then one should exit the stock.
One should exit. Got it. Next one that's coming in is from Kesha, who's from Chennai, asking on KEC International, holding shares at 502. So, might have bought it either recently or has held on through the gains, and it's back at that sub 500 level. But Nandish, any view that you have on KEC?
We have a buy rating on KEC with the price target of nearly 630 based on fundamentals, and the likely investment horizon should be more than 1 year. And with lot of power, to say T&D capex going on, KEC would be one of the prime beneficiaries. So if the horizon is for a longer term, we would suggest continue to hold it.
Continue to hold it. Got it. For the next 1 year is what Nandish recommends on KEC. But the next one, and this one's in the realty pack. We've seen the index starting to give up some of those gains yet again. But on Mahindra Life Spaces, Raja has actually bought these shares at 408 and asking if he should still continue to hold on for the next, if he should continue to hold on or average down as well. Nandish, any view directly either on Mahindra Life Spaces, or if you like anything from the realty space, what's your top pick?
So recently we upgraded the realty pack as a whole. And our favored bet is Lodha, DLF, and Godrej Properties there. Mahindra Life is also there in our coverage with a buy rating. So if the horizon is for a longer period of time, now Mahindra Life Space is a good stock to hold on.
And any targets that you have currently on Mahindra Life Spaces as well?
Yeah. So our target is around is around 430.
430. Okay, got it. Life Spaces as well?
Yeah. So our target is around.
Dialing in for a stock query. Good afternoon. Welcome to the show. What's your query?
Yeah, good afternoon to all of you, sir. I want to buy Dixon Technology fresh. What is the right time to enter? Is this the right time to enter? Just wanted to know the 6 months view on this.
Well, we actually just broke a big story as well on Dixon Tech as well, and on the approvals through. But Nandish, I don't know if you had a chance to listen to the big story that my colleague Shrimi broke out, and if and we'll of course await a lot more approvals if that is much needed on the EMS pack. But within the EMS space, any coverage, and is Dixon one of them? What would you recommend?
So under EMS, what is Dixon is there in our coverage. So if the view is for a longer period, I say about 18 months or 24 months, then Dixon Technologies, continues to remain a good buy. So the horizon should be measured here. So if the viewer is looking for a 6 months view, I guess that Dixon might not be possibly give you the kind of returns which you're looking for.
Got it. Well, we of course await some updates as well coming through. As my colleague Shrimi pointed out, that the PN3 approval might not be the only thing that's required for a green light, because from Beijing side also there could be some increased scrutiny at this point of time. So that's the reason why the stock's reacting. So is Amber Enterprises. But hopefully, Vaishya, that answers your question. Next one is on Central Bank. Sriram, who's from Chennai, is holding on to shares at 41 rupees. He's been holding on for a while now. Sachin, any trend on the charts that's visible? Should he still continue to hold?
Trend on the chart is down on all the 3 time frames. Basically, better to exit this stock and can actually go in the JNK and or Maharashtra Bank.
JNK or Maharashtra Bank, got it. But let's take another caller now from Tirupati. Gopinath is dialing in for a stock query. Gopinath, good afternoon. Welcome to the show. What's your query?
Good afternoon, sir. I want to know the entry level for SCPL for long term.
Okay, for the long term. Okay. Okay, all right. All right, got to your question. Nandish, I don't know if, it's because it's a very smaller name. I don't think you'd be having coverage on Standard Engineering. Is that right?
Correct. We don't have a coverage on Standard Engineering.
But, okay, got it. But in terms of, Sachin, if you can help me out with this one as well, because it's seen a very sharp move, right, ever since listing. But, so should Gopinath wait for it to cool off a little bit, probably then take an entry?
Enter on dips. Basically, any kind of a dip around 5 to 10% will be a healthy correction in the stock, and we can see the upside around 200 and 300 or 350 levels on the upside.
350, got it. The next one, and this one's on Apollo Microsystems. Sujan has actually bought these shares at 110 rupees, so bought it at very, very attractive levels. Wants to know if this is a right price to add more. Or should he just continue to hold his current stock holdings? Nandish, any recommendation either on Apollo or from the defense pack, anything that you like?
So we have been very positive on the defense pack, and we feel that the defense is likely to have a structural, longer term bet. And our preferred bet here is Bharat Electronics, which is a PSU and has a decent good order visibility. Even Apollo Microsystems ticks majority of all the boxes. And if it is held for a longer period, I say about 18 to 24 months, at least we can say about 40 to 50% returns for Apollo Micro.
Apollo Micro, got it. Well, let's now start the rapid fire round in this edition of the show. Sachin as well as Nandish, keep your answers as short as possible so that we can take as many queries in the next 3 minutes. First question on IIFL Capital. Murli from Hyderabad has bought these shares at very attractive levels of 92 rupees. Sachin, would you recommend him to hold?
Hold.
The next counter is on Chennai Petro. Our viewers holding shares at 932. Sachin, what's the recommendation on the charts for this one?
Buy.
And what's the target as well? Because it's rallied from his buying price also. What's the target for Chennai Petro and what's the timeline?
14 to 1500 will be attractive targets and can be waited for 6 to 12 months.
6 to 12 months, got it. The next question is on Acme Solar. Our viewer is holding shares since the IPO price. This is Raja from Vijayawada. Wants to know if he can still continue to hold. Any view here, Nandish?
So he can continue to hold. Our target is around 450.
450, got it. Next one's on Karur Vyasa Bank. Padma from Bengaluru has bought these shares at 295. Sachin wants a short-term view. If she can continue to hold. We saw good results. Then that reaction, is it good on the charts too?
Yes, hold.
Hold, got it. Next one is from Kishore from Bengaluru. He wants to know, within the power sector, what's a good pick for the long term? Anything that you like within power, cables, ancillaries? Nandish, right now, what's your topic?
Tata Power and JSW Energy in the power segment.
In the power segment, got it. Next one, and this actually is on Shakti Pumps. Jayashree from Tamil Nadu wants to enter this counter. What's a good price level that you would want to watch out for, Sachin?
Trend is down, avoid basically.
Avoid this, got it. Next one's Cummins. Dilip from Kolkata is holding shares at 5671. Wants to know, Nandish, what's the view on the stock now? Should he continue to hold?
Yes, he should continue to hold, and in case there is any dip, he can buy also. Our target is around 6,600.
Got it. Mohan wants to know about Nalco. If it's a good time to buy right now, would you recommend that? Sachin has seen a very sharp move.
Yes, he can buy and he can keep a stop loss around 10% on the downside and at least 10 and 15% on the upside target will be there.
Is Vishal Mega Mart a good buy at the current price? Nandish, we've seen weaker results from in the retail space. Any view here directly or in the space on Vishal Mega Mart?
Vishal Mega Mart is a buy, and our target is around 160.
160. Okay. Bajaj Consumer is the next one. Our viewers holding shares at 338 wants to know if he should continue to hold. Would you recommend that, Sachin?
Yeah, he can hold.
JSW Infra as well. Sachin, Puneet Saxena from Ghaziabad wants to enter the stock in a 6-month target price. What would that be?
If you want to enter only above 360 levels. In that case, if we are getting a close, 400 and 420 will be the target.
Got it. Well, that was the last question of the rapid fire. Sachin as well as Nandish, thanks so much for helping us solve all those stock related queries in the last half an hour. We solved 76 queries over the 2 sessions. So thank you so much for your help. But viewers, out of time on this edition of the show. Stay tuned though. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew. With me is Mahima Vachajani, and we're coming to you live from the NDTV Profit Suzlon studio here in Mumbai. And it seems like it's a dull day of trade, and that will be borne out when we pull up the intraday chart for the benchmark Nifty 50, trading at the low point of the day, Mahima. And the last couple of days have been characterized by a few very heavyweight stocks pulling down the benchmark. Is that the case today?
No, unfortunately today I think the case is crude, because crude is spiked on the back of geopolitical developments, and we've slid below the 24,000 levels, which were the crucial levels that we were tracking for the Nifty 50 at least. And there you go, a 3% spike in Brent, now at 93.7. It almost touched 94.2 and came back to that.
The reason why that is taking place is that you're suddenly having worries about the Houthi rebels blocking out supplies from Saudi Arabia, and that is important from India's perspective as a major buyer of oil as well, because the route that Saudi Arabia was using to export oil has gotten affected. In fact, the news this morning was that 2 tankers had to turn around, and that is the reason why you're seeing that supply pressure on crude oil have a bearing on the prices as well. From our perspective here in India, a higher crude oil price is always negative. So pull up the heat map for the Nifty 50 and let's see, it's going to be a large amount of red on the screen, right? Significantly more than you saw yesterday. In fact, yesterday you had green all the way till this point and you had a few stocks that were doing badly. Today you have the likes of Interglobe Aviation that has slipped even further, and that's one of the first stocks that will get affected when crude oil prices go up. On the other end of the spectrum, you have Bajaj Auto that is gaining from strength to strength.
Reacting.
Finally, right? I think a lot of people were screaming from the rooftops saying, good set of numbers, the numbers look good. In fact, the management spoke to us this morning, Mahima, and they were quite confident. Rakesh Sharma spoke to us. He's a joint managing director. He spoke about how the export market looks really good for them and the domestic issues that have been plaguing them. And look, it's 25% of their portfolio, but they have products lined up and things are starting to look better.
And this kind of growth on a higher base, right? That shows the strength at which the company has been growing. And Nestle is the other one where we saw a great set of numbers. I mean, this has been the third quarter where it's been a double-digit growth in terms of revenue, EBITDA, as well as net profit. 25% growth is not something that the street was expecting.
In a 48% tough environment.
In a tough environment. And they've done good on margins as well. A 24% margin despite of ad spends going up by 40%. So most certainly positive numbers coming in for both Bajaj as well as Nestle. I think Tata Consumer also picking up on those cues coming in.
And you're hearing that there are price hikes being taken by HUL. That's the report that we'll get you in just a bit. But let's pull up the contributors chart for the Nifty 50, and you will see that there are still a few names that are in this list. In fact, this is a similar list. ICICI Bank makes it to the list today. It was in the green yesterday, but HDFC Bank, SBI, Reliance Industries. These 3 stocks have proven to be a major drag in the recent past. Of course, to a certain extent, that's getting mitigated by Bajaj Auto and Nestle and HUL, as well as Titan to a certain extent. But pull up the broader markets as well, Mahima, because today you're seeing selling across the board. So you have cuts of over 1% for the mid-cap index, similar cuts, if not more. In fact, for the small cap index. We're at the low point of the day across the board, and you will likely see that in the advanced decline ratio as well. Pull that up. So this is the heat. This is this sectoral heat map, and it's largely red, but the advanced decline ratio will show you that it's a lot of advances and they're ruling declines and they're ruling the roost.
And unfortunately, the gap is also widening, which shows the pressure that's there in the broader end of spectrum, right? The BSE 500 quickly before we go on to our guests and take the views on what to do next with the benchmarks. At least data patterns, of course, on the back of that auto win up 12%. M&M Finance, good set of numbers. Bajaj Auto also again on good set of numbers. But on the flip side, you have Bandhan Bank now down almost 17% on the back of that guidance cut. I mean, numbers were not that bad, right? But it's the guidance cut which has led to that steep fall in the stock. MedPlus also on the back of softer Q1 earnings. CSB also
Bank on
again
the back of numbers.
Yes.
There has been a worsening of asset quality, credit costs going up, and NIM pressure as well. So all of those factors come into play.
Sunteck, Jubilant, even India Mart and MSRIL, all of these on the back of numbers. So very earnings specific in the broad end of spectrum.
Absolutely. Let's bring on board our guests for today. We've got Nilesh Jain as well as Neerav Ashar joining us this afternoon. afternoon. Gentlemen, thanks so much for taking the time. I want to start with you, Nilesh, first on the charts, because we're seeing a bit of a breakdown today and we've broken below that 24,000 mark. The question is, now that we've broken past that sentimental level of 24,000, how much downside do you see?
Very good afternoon, Alex. Good afternoon, Mahima and everyone. So yes, today we have seen a breakdown from its 24,000 psychological barrier, as well as if you see the...
How much downside do you see?
Very good afternoon, Alex. Good afternoon, Mahima and everyone. So yes, today we have seen a breakdown from its 24,000 psychological barrier, as well as if you see the 21-day moving average, which was kind of providing some bit of a support, has also been taken off decisively, which was placed at 24,100. Now the next crucial support that seems to be placed at 23,900, that's the 100-day moving average. I think Nifty should find some bit of support at those bit of rebound going forward. So today's fall, I think some bit of overdone, and we can expect some bit of a pullback move going forward. Although there is still some more room left, maybe around 80 to 90 points further on the lower side. Looking at the volatility index, which once again spiked up by close to 7% today, and once again it has surpassed 13 mark, is a bit of cause of concern, but it is still at a comfortable level below 14. And coming to the Bank Nifty, where we have seen actual breakdown, and if it breaks below 57,000 decisively, then we are likely to see unwinding of the position, because 57,000 was a strike on derivative front where we have seen the meaningful OI concentration. Now we may start witnessing some bit of unwinding of the position. So that's the weakest link amongst all. So Bank Nifty should be on radar. If it breaks below 57,000, then we may see another 500 points on the lower side.
Understood. And what individual stocks do you find attractive this afternoon, Nilesh, if at all?
Yes, so one buy and one sell recommendation. First of all, on the long side, Exide Industries is looking very strong. We have seen a constant formation of a high top and high bottom, and the major structure still looks strong. We can expect a follow-up move to continue on the upside towards 465 to 475, and stop loss can be placed at somewhere around days low at 434. That will be the stop loss, and immediate target would be 455, followed by 465 and 475. On the short side, there are many stocks, in fact, but specifically CDSL has given a breakdown today and still looks weak for 1300 kind of level on the lower side. And stop loss should be placed at 1355. Immediate target would be 1300, followed by 1275.
Right, okay, so those were the picks for the afternoon by Nilesh, but it's time for our stock of the day, and I mean, arguably it has to be Nestle, right? It posted a great set of Q1 numbers. In terms of key highlights, I think the biggest highlight for me was that there was a strong beat on margins despite of inflationary pressure caused by the geopolitical scenario. All metrics, that is your revenue, PAT, EBITDA, have seen a double-digit growth across metrics. The sales growth, of course, is led by strong volume growth. They don't give those numbers, but a 25% top line growth means that a high double-digit volume growth has also taken place. All four product groups have also seen strong double-digit growth along with volume growth coming in. The interesting part was that commodity markets have remained mixed and the outlook still remains cautious, but they're able to manage that inflationary pressure is what the commentary is suggesting. Now, in terms of the numbers, standalone numbers, revenue saw an uptick of 25% odd. EBITDA, if you take a look at the numbers, it saw an uptick of around 40% odd. Margins stood at 24.1% versus that of 21.6%, and net profit saw almost a growth of 48%. Now, this is something that no other FMCG company has been able to do since the past at least 2 odd years, and that's something that Nestle has been able to do. Of course, there was a small inch up in terms of other income, which stood at around 22 odd crores versus that of just 4.2 odd crores. Advertisement spends went up by 40%, but despite that, margins did pick up. Now, in terms of segmental performance, I think confectionery premiumization has driven the double-digit growth for them. In terms of beverages, this is the 20th straight quarter where there has been a double-digit growth. For prepared dishes, urban demand is something which is fueling the growth. That is what the commentary is suggesting. And milk and nutrition double-digit volume growth also has continued this quarter. For pet business as well, the portfolio expansion has boosted growth in terms of where Nestle goes. Nirav, A very good morning to you. I'll come to you on Nestle, because since Manish Tiwari has, kind of taken the charge for Nestle as a MD and chairman, overall stock has grown 35%. Revenue has seen a growth from, 5% to now 25%. PAT from a negative 12% to a 48% this quarter, right? What do you think? This outperformance for Nestle should continue from here on, from the entire pack?
Yes, good afternoon and thank you for the invite. We definitely, it's been a very stunning performance which has come in from Nestle India. And I think just some time back we have seen how Nestle has been very aggressive with respect to expansion also, because recently they announced certain expansion with respect to the Munch confectionery and Maggie. So I think they've been going quite strong on the capex side also, and plus the advertising spends have been increased by 40%. So that also shows a very aggressive strategy, and the results are there for everyone to see. We've seen almost all categories, all 4 categories have seen a double-digit growth and revenue growth of 25%. Generally, we tend to see MNC, FMCG companies report margins of close to 14-15%, but I think the EBITDA margin itself over here is around 24%, which is very, very impressive. So I think the best of all the worlds as far as Nestle is concerned, a positive re-rating candidate.
Okay, how does it look on the charts? So Nilesh, a quick view on Nestle, and let me throw in a couple of others as well. Tata Consumer, maybe even a Bajaj Consumer, because it lost ground after doing particularly well earlier in the year.
Well, Alex, out of all FMCG names, Nestle India looks very strong on the chart. Today, it has scaled to a fresh record high as well, and also given a good breakout from a triangle pattern. So the target on the upside looks like open up for 1530 to 1600 in the near term. So it's a kind of a buy and decline structure, can be added at current level as well. By keeping a stop loss below 1460, Nestle India is a buy. And for the July series, we expect counter to move towards 1530 to 1550.
Okay, all right. Nilesh, the other one that's surprised us today is PG Electroplast. Though there is no specific news flow to this one, but it's fallen almost 6% in trade. Any specific reason? Anything that you're seeing on the charts now? Whether it warrants for a buy on the dips right now?
Well, Mahima, buy on dip should be avoided for the time being, because I think there is some more room left on the lower side. Counter may test its 200-day long-term moving average, that is placed at 550. So just in case, if it gets towards 550, that's a good entry point. Then one can go long, keeping a stop loss at 530. Then probably one can expect a pullback move towards 600. Now, there was a kind of a double top pattern is visible on the chart at 630 level. Multiple tops, I would say, at 630. So that's the reason we are witnessing some bit of selling pressure. So avoid for the time being taking any quarter bet. Keep a stop loss at 530 and can be added at 550.
Okay, all right. The other counter, that we would definitely want to discuss is Bandhan Bank. Nirav, we've seen that. Alex and I were discussing earlier, as just when we started the show, that the numbers were not too bad, but unfortunately the guidance cut in terms of ROA is something that has spooked the street, and that's why we're seeing a downtick of almost 16% in trade for this one, right?
I thought that the net interest income growth was not very significant, right? It was in single digits, and I think it showcases that the bank is being very cautious in the lending that it is doing.
Right.
It is focusing more on the secured book. So its secured book has grown about 27%.
Correct.
It has gone up to 57% of the overall book. And obviously, in the secured space, you're not going to earn as much per loan as you would in the unsecured space.
Correct.
So therefore, that's going to be putting pressure on the yields that you get.
Correct.
And the cost of borrowing is actually, or the cost of funds has gone up.
Yes.
So both of those pressure leading to problems on the NIM. The outlook for the NIMs is also not very good,
attractive,
right?
yeah.
So from that perspective, I think the street is viewing that the gains that they've had, and pull up the year-to-date chart for Bandhan Bank, you will notice that it saw quite a bit of a gain when it turned the corner on asset quality. And then after that, there's a lot of money that got taken off the table, because the suggestion was that what appeared to be a turn in the corner has led to a situation where you're not going to see that rising trajectory through the year. Is that the way to look at Bandhan Bank, Nirav, in your opinion, that what was promised to be a great financial year on multiple metrics has turned out to be not so great, in that it's not terrible, they're moving in the right direction, they're just not going as fast as people thought they were?
Sometimes it's better to be cautious and start off on a safe note. And I think that's what the management is targeting at this point of time. But the market obviously has got expectations in terms of a strong advances growth, at the same time a low cost of funds, which naturally tends to aid the net interest income. And markets are generally targeting NIMs in excess of 3.7%. That's what we've seen in the case of majority of the banks. And if there is any slippage over there, then I think markets tend to punish the stock badly. So I think no harm in being conservative at this point of time, but hopefully things should pick up, and this can be viewed as an opportunity if the management is able to get its act right in the future.
Okay, and Nilesh, what about the charts? Because the expectation was that if you take a look at a slightly longer term time frame, the charts were looking very attractive since it break out in, I think, around April 29th or so. But this is a one-off event, of course, where we've seen a significant outtake. Do you think that this could be a time when you can take a look at the counter, maybe enter at lower levels, chartically from a slightly medium-term perspective? What would you suggest?
Mahima, today we have seen a breakdown on derivative front. Interesting development. We have seen a huge amount of build-up on the short side where 20% OI has been added. And technically, yes, there was a breakout in the month of April, a major breakout. But now, after today's fall with a big gap down opening, the counter has broken below all short-term moving averages. The only support I can see on the chart is at 171. That's the long-term 200-day moving average. And just in case if it slips below the same decisively, then target on the lower side will open up for 160 to 155 as well. But as of now, looks like comparatively a little better close today above 171. Then there could be possibility of a pullback move towards 180 to 185. Not expecting any V-shaped recovery, but yes, some bit of a pullback move after today's sharp fall that cannot be ruled out.
Okay, all right. So that's, of course, the view coming in on Bandhan Bank. But the other one that we're putting spotlight on is Kirloskar Brothers. Now, it's in focus on the back of a recent order win that the UK arm won of around 149 odd crore. And the execution time period, of course, for this is around 52 to 60 odd weeks. But I think a lot of more interesting things happening with the company with regards to data centers, nuclear pumps, etc. And to understand as to what lies ahead for the company, we are now joined by Alok S. Kirloskar, who is the MD of Kirloskar Brothers International, joining us now. Alokji, thank you so much for taking out the time. Mahima this side. My first question to you is with regards to this order win. Of course, this is in your niche space. What does this mean for you? And how many more such orders are you expecting going forward for this UK arm specifically?
Thank you, Mahima. So this job, as you're aware, is for the Northfield Production Sustainability Platform projects, which is we are currently on Comp 5. We have won Comp 2, we have won Comp 4, and we won now Comp 5. These are all expansion projects in Qatar for the oil and gas sector. And this is particularly for the gas sector. I think, as you mentioned, there are many more projects coming up, Comp 6, Comp 7, Comp 8, Comp 9, which is all in Qatar. But given our strength, especially on the reason we won these packages is because of our modular systems for pumps, as well as our specialized service capability with a lot of AI that has been built into it, which we've developed, with specialized AI software from our UK development facility. So we see a lot of opportunities in other areas, as you might be aware, even in the Gulf of Mexico, around in Louisiana. There are a lot of projects coming up, and the company has already done projects for Plaquemines, LNG projects, as well as Calcasieu projects, and now upcoming we see projects like CP3, which are upcoming projects in Louisiana particularly. There's also projects like Delphin and Commonwealth LNG in the USA, where we hold a good reference list and a good history. So I would say in the gas sector, there's a lot of interesting projects. To your point, one of the reasons that we won this job is because of our modular systems, which are very popular with data centers. And that's been something that has been doing very well for us in the US at the moment.
Very interesting. Hi, Alok, this is Alex here. I'm just curious about that leg, right? The last piece that you mentioned, as I understand it, in the US, from that revenue mix that you get, about 25% is data centers. I'm just wondering whether the prospects and for your UK arm as well, and for the entity, for the whole entity, what are the prospects for data centers in particular, not just here in India, but across the globe?
Data centers, as you know, are picking up in a very big way right now. And our UK company also has a manufacturing facility in Atlanta, which is very important, especially since we sell pump packages to data centers for cooling and firefighting applications in modular containers. And as you know, shipping containers around the world is like shipping air. So if you're closer to the location, like in the US and with our plant in Atlanta, it makes it very convenient and cost effective. But these are all plug and play situations. And to your point, currently, just in the US, because we track this space very closely, there are 2,000 upcoming hyperscale data centers which have received planning permission. For us, that's very interesting because, as you might be knowing, hyperscale data centers require 2 million liters of water per day for cooling. So it's quite interesting from cooling. It's interesting from firefighting, and obviously you need the on-chip cooling systems, which we don't make directly, but we provide the chilled water to them. So I would say that there's quite a lot of interesting opportunities in Asia. Malaysia seems to become the hub of data centers at the moment, but there's a lot of action in Asia at this point in time, and the Middle East is also looking to put up data centers. Of course, the current war, and as you may have heard, I think Iran has specifically hit data centers, I think because they are aware that the Middle East is looking at this segment as a segment that they can grow, because two components for data centers are power and water. The Middle East has cheap power, and the Middle East is also moving to using seawater for cooling of data centers. So they have easy access and cheap access to both. So these are the dynamics that we see in the world, and we see a lot of opportunities in data centers in particular.
Got it. The other, exciting thing is with regards to the nuclear opportunity, because if I'm not wrong, you've developed nuclear pumps with the Department of Atomic Energy, and this is where you're prototyping pumps for smaller modular reactors. I want to understand more on this as to how is this different from the pumps that you actually make for your cooling systems, and secondly, because if I'm not wrong, commercial order wins have not taken place in this segment yet. So when do you expect that to start to coming, and how big an opportunity is this for you?
SMRs, small modular reactors are very interesting around the world. I think, as you probably know, many of the world's billionaires, including Bill Gates, has invested in this space, and there are many startups coming, as well as in India. There is a lot of talk and work in terms of the engineering, in terms of the specifications. But I would say that there's still some way for you from a market point of view to see translation in terms of orders, because these are, like you mentioned, a little bit different from the traditional nuclear reactors, and they are smaller pumps, but they are also pumps that need to have different safety specifications and other specifications, because they may be much closer to residential areas or even industrial areas, given that these are smaller in size, much smaller in size. And there are various kinds of sizes of modular reactors that are currently coming to market in India and also in the UK. I think we're active in both spaces. As you know, in the UK, Rolls-Royce has been nominated by GB Nuclear to go forward in this space. And in India, many companies who have historically been in the nuclear space, us included, are working together to come up with solutions and modular concepts to be able to put these together and roll them out. of course, under the direction of the government and with the guidance of the government and through their government institutions of BARC and NPCIL.
Okay. All of that sounds incredible. Alok, I'm guessing that you're going to be bound by the fact that you've not yet disclosed the Q1 numbers. So I'm not going to push you too much to give me numbers, but I'm going to encourage you to perhaps give us a direction to say that, do you anticipate revenue growth in FY27 and beyond because of these strategic shifts that you're taking in your business and the focus on value-added services, the reduction of EPC as a percentage of the whole has increased? Do you anticipate the trajectory will be different in FY27 and beyond? And then we can take up specific numbers post your Q1 numbers.
Yes, as you know, it's the silent period right now, so I can't give you specific numbers, but yes, I think we have made some disclosures in terms of jobs that we have won in India with Adani Power for power plants, and of course this current disclosure in the oil and gas space in Qatar. But as we've always said on our analyst calls, we are looking for growth. There are a lot of headwinds at the moment, with the war in the Middle East, the war in Asia, in Europe, which has caused, energy prices and power prices to spike world over. And this does create headwinds for us because as you might have been aware, few of the things we were doing to, build out the baseline revenues is, ensure that we have long-term service contracts. And we almost have 160 sites around the world under management where we manage all pumps. So 80% of the pumps are usually not ours. So all pumps on sites for repair, maintenance, upgradation. And that allows us to build a base, and to your point, allows us to then scale faster, because then as you add new business every year, you just scale. You're not sort of replacing and starting from zero every April. So that really has helped us to grow in the last few years.
Sure.
The current headwinds are there, but we are definitely looking to identify new bright spots like data centers that will get us growth.
I'm sure that we're going to be able to talk about much more specifics when we speak to you next, Alok. But thanks so much for taking the time and for speaking to us.
Thank you for your time.
All right, let's talk about SRF. Let's put up the chart and see what it's doing. It's at the low point of the day or very close to it, if I'm not mistaken. Yeah, there you go. It's down about 3%, reacting to numbers. And the headline numbers, at least on the face of it, don't look too bad. Actually, 76% increase in the PAT number, significant increase in the revenue number as well. But the stock is down as much as 3%. Or it's coming off. It's coming off just a tad bit, but it's still lower.
Yeah, I think the street was expecting a better set of numbers, and that's why we're seeing that pressure coming in on that increase. Counter. And chemical business has not performed very well on a QOQ basis. It's seen a decline, and on the back of that, I think we're seeing that pressure coming in on that counter. But Nilesh, any quick view on SRF, because we were seeing volume-based buying on this one in the last couple of days, but now we're seeing that pressure coming in on the counter once the earnings are announced.
Well, Mahima, there was a breakout earlier, and that breakout was visible from the levels of 2800, but still counter is trading with a positive bias on a weekly time frame chart. Although today we have seen some bit of a pause in the trend with a correction of close to 3%, but it has a very strong support at its 200-day moving average that is placed at 2770. So as long as that is protected, I think there could be possibility of a pullback move towards 2900 to 3000 going forward. So kind of a buy and decline structure, and stop loss should be placed at 2770.
2770. Okay, so I guess to a certain extent you can argue that the expectations were the stock or the company would perform significantly better than it has. But, well, the numbers, at least on the face of it, don't look terrible. We'll get into some more details in just a bit. For now, let me head across to my colleague Soumit Sarkar joining in to talk about what he's hearing in the chatter in the dealing rooms in Heard on the Street. Soumit, what are you hearing?
Firstly, on earnings front, CG Power, Tata Power and Ambuja remain in focus. There are buy flows on the large HNI and PMS desk, and dealers are expecting strong Q1 numbers from all the three names. On the flip side, Bank of Baroda and Dr. Reddy. In fact, Dr. Reddy will be reporting its numbers today. There are some sell flows. Dealers are expecting weak Q1 earnings from both these counters. When it comes to Polycab, despite the weakness in market, that stock had been trading in green. Now there's a buzz of good demand coming in for the expected block deal that we had indicated much before time, and also do remember that dealers are indicating that this block window might as well happen. Might as well happen in block window, and hence the stock is up nearly 2% in trade. For data patterns, that stock has gained nearly 10% from yesterday, and there are buy flows on the HNI desk. Dealers are expecting a big order win of close to around 1200 crore rupees for this counter. And lastly, when it comes to PFC and HDFC MC, there are buy flows on the DI desk. Delivery volumes today, and there are buy flows on the HNI desk. Dealers are expecting a big order win of close to around 1200 crore rupees for this counter. And lastly, when it comes to PFC and HDMs are expected to be higher for both the names in trade.
All right, Swami, thanks so much for taking that and giving us those updates. Nirav, I want to come to you on SRF. Of course, it's off the low point of the day. I'm wondering if you caught some of the numbers. 76% increase in the PAT, coming in at 759 crore rupees. For some of these companies that operate in the chemical space, I think there was an expectation based on some numbers that have already come through that the pack as a whole would do incredibly well. And even as we're speaking, it's coming off the low point of the day from 3% down, now 2% down. So what would you make of the numbers? At 76% bottom line growth, 30+% top line growth. I think chemical business revenue increasing as much as 26%.
I think it's a very impressive performance as far as specialty chemicals is concerned. Considering the fact that globally the specialty chemical space has been languishing, it has been suffering, and in spite of all these challenges and headwinds, I think SRF has reported a strong set of numbers in this particular segment. The rest of the segments like refrigerants also have been historically doing quite well, and we've seen technical textiles and the films related business which has not done that well. Overall, I think considering the strong performance of the specialty chemical segment, the stock should be able to recover.
Okay, so that's of course the view coming in on SRF. But with that, Nirav and Nilesh, thank you so much for taking out the time and helping us with all of those insights on the stocks that we discussed. Moving on, I think pharma sector, we've been talking about this throughout the day, has been under pressure after the Trump administration proposed a phased tariff plan on generic drug imports, keeping tariffs at zero, of course, for 2 years, but potentially raising them to 100% and later to 100%. We are now joined by Sudarshan Jain, who is from India Pharmaceutical Alliance, to talk to us more about this. Sir, thank you so much for taking out the time. I think my first and very basic question to you would be that right now, US depends, I think around 90% depends on, the generic medicines. Do you think that 100 to 200% tariffs post 2 years, that is the relief period that's been given, is practical according to you, or do you think that this is also going to, wash away once things settle down?
So let's understand the context of the US.
Yeah.
90% is generic drug, and they account only for 13% in terms of value. 10% is innovative drug, and they account for 87% of value. So we are supplier of affordable quality medicines to the US. Generic play a very important role. Out of 90% generic, 49% is from India, and India plays a very important role to the US healthcare system by supplying quality affordable medicine. In fact, Indian drugs get the savings of around $200 billion every year to the US market. What we have been saying, we are closely engaged with the US. We have got manufacturing facilities in the US. In fact, there are more than 40 manufacturing facilities in over 12 states as far as US is concerned. And there is an investment in manufacturing, R&D, and supply chain, which provides jobs to the US citizens. The question is, can the medicine be manufactured, all medicines be manufactured in the US? There are products which are like commodity kind of products, which are low value products, like paracetamol or metformin. The cost of manufacturing in the US will be around 3 to 5 times, and it does not make economic sense to manufacture all the medicines in the US. What will be important, that high value products or oncology products can be manufactured in the US. The products, biological space, they can be manufactured in the US. And companies are taking calls based on the economic viability manufactured products in the US.
That's a good point. So therefore, Mr. Sudarshan, how should an investor in the pharmaceutical industry here in India look at this kind of an update? Are companies likely to ignore the high decibel noise and focus on business? Because ultimately we've seen certain statements made in the past and those have been rolled back. So how do you do business in that kind of an environment where policies can change from one week to the other? So the focus should be on business, right?
Absolutely, and that is what all the Indian companies are doing it. And if you look at the success of Indian companies, it is the success of entrepreneurship who are committed to supply quality assured medicine at an economical price to the USA. And not only to US, every third tablet in US is sold from India. Every fourth tablet in Europe is sold from India, and we supply medicine to 200 countries. So we will be focused, all Indian companies will be focused on patients and ensure that quality medicines are available to the patient around the world. In fact, many of the companies are working to raise the supply of medicine to next level, and the next big opportunity everyone is focusing on biosimilars, because there are 55 products which will go out of patent. So the focus will continue to be on patient and supplying the medicine. What this notification is talking about at this particular moment is that it is after 2 years, 100%, and after 3 years, 200%. There will be discussion which will be constantly taking place with the US administration. Indian government will be involved, and we will continue to focus on that. What is important is sustainability of supply, and Indian companies are committed to supply medicines to the US citizens.
Got it. All right, sir, thanks so much for taking the time and explaining that to us, and pleasure having you as always.
Thank you very much. Thank you.
Okay. All right. I do want to draw your attention to the fact that crude oil prices have been marching higher over the course of today, all through the day. In fact, they're heading towards that $95 per barrel mark. And that's certainly a problem from India's perspective, the macroeconomic impact that will have. A Brent crude that is closer to $100 to the barrel than not, after having slipped all the way down to close to 75 or below $75 to the barrel, is something that will have to be measured and studied. It's certainly having an impact on risk assets, particularly the equity markets as things stand right now. But the other thing that we're looking forward to over the weekend is something that I'm personally quite excited about. On the 26th of July, you have the Business Leadership Awards that NDTV Profit brings you after a gap of as much as 13 years. And this, of course, celebrates the leaders, companies, and entrepreneurs that have helped shape India's economic journey. Now, one of the categories, and this is something that stood out to me, of course, is the New Economy Leader of the Year. These are all listed companies, but the category honors outstanding contribution towards new age economy, and each of the nominees stand out for their innovation as well as business acumen and extraordinary leadership. Some of those are definitely companies that you will recognize. Eternal is one of them. They're pioneering, of course, in the delivery business. You have Policy Bazaar that is making insurance purchases more transparent. You have Nykaa that is reaching the fashion and lifestyle and beauty segment to millions of people. It's revolutionized the space. Car Trade Tech is streamlined vehicle delivery transactions and ownership across platforms. You have Delivery, which has redefined supply chain efficiency through the use of technology and scale, etc. So you should tune in on Sunday to find out who the winner is. By the way, this list of nominees has actually been selected by a very stellar jury, the likes of Mr. Noel Tata as well as Mr. Mittal as well. So oh, by the way, we have Eternal numbers breaking on the screen right now. We should pull those up as soon as we can. Have you had a look at it, Mahima?
Yeah, I just had a look at the numbers. I think largely in line for the top line at least. The expectation was around 20,000 odd crore, which is coming at 20,200 odd crores, so slightly better than the street expectation. But margins are below expectations at that 2.9% mark versus that of 3.3% mark, and so is the EBITDA as well. And so is the net profit as well. But I think the net profit numbers, if we can see as to how those numbers are fared, at 92 crores versus 300 crores, the expectation was quite big when it comes to the net profit numbers, and that's probably not come in as to what the street was expecting it to be. But for top line, it's certainly a beat. EBITDA is a miss. Net profit is a miss. I think the interesting thing would be for Eternal as to how the commentary has fared out, but segmental performance come in as to what the street was expecting it to be. But for top line, it's certainly a beat. EBITDA is a miss. Net profit is a miss. I think the interesting thing would be, if you take a look, overall food delivery growth has been on a strong footing. 2,200 odd crore versus that of a 3,100 odd crore. Quick commerce has, of course, this was going to be the growth driver. Blinkit, which has gone from 2,400 odd crore on a year-on-year basis that I'm talking about to 15,600 odd crore. So big beat when it comes to this on a YOY basis, and a 2,000 crore odd beat on a QOQ basis as well for Blinkit. On a YOY basis for food delivery, from a 2,200 crore to 3,100 crore. But on a QOQ basis also, a 1,000 odd crore beat is there. Not a 1,000 odd crore, 500 odd crore beat is there in terms of India food delivery business. Going out business has also picked up slightly both on YOY and QOQ basis, but not a very impressive number here. Happy Pure is something which has scaled up, but not to that expectation. In fact, on a YOY basis, it's fallen by around 1,000 odd crore, which was not the expectation. So probably it's not looking like a very good set of numbers, and we're seeing that reflecting in the counter as well. If we can try to pull the counter up, down by about 2.3% now, almost a downtick of 3% is what we're seeing on the stock coming in. But we're now, I think, joined by Aditya Shah, founder of Hercules Advisors, joining us now. Aditya, on the likes of it, I think only the top line is beat in terms of where the expectations were, but I think for EBITDA, for net profit, as well as how the segments have done, are not up to the mark. Is that reading correct, and what are you picking up? Hi Aditya, can you hear me? Okay, I think we seem to have lost him, some technical glitch coming in. But like I was mentioning, there is beat only in terms of revenue, Alex, but EBITDA and net profit both are significantly down as compared to what the street was expecting, and even in segmental performance. I think the expectation was that going out business as well as your Hyperpure business will do better, but that's not happened. Only a beat in terms of where the Blinkit business stands, which is coming at 15,600 odd crores. So that's with regards to where Eternal goes.
Blinkit ultimately is going to be the decider in this pack, isn't it?
Has to be. But it'll be interesting to watch out for once we get the shareholders letter. There we'll get the breakup of margins, whether there has been a margin uptick where Blinkit goes, and average order value, whether that has gone up or not, because that will eventually decide as to how the operational metrics or the overall growth in terms of per order has happened or not.
But look at that growth. So obviously this was expected, but it is still stark, right? It's still significant. Quick commerce revenue at 15,600 plus crore compared with 2,400 crore rupees a year ago.
Yeah.
It just goes to show that there is behavioral change that is underway.
Absolutely.
And the way that people are consuming.
And the way they have expanded, right? A 3,000 dark store by the end of this year is what they've planned. They are at around 2,700 dark stores right now. That must have increased this quarter. But I think that expansion has led to this significant uptick coming in top line. So that's of course for Eternal. Of course, we'll get you the details once the shareholder letter is out, but it's time to slip into a very, very short break, but we'll be right back analyzing Eternal results, and of course top buy today and sell tomorrow calls as well. So do stay tuned in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P Mark, the mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
From a PwC standpoint, we actually set up criterion for each of the categories.
Okay, welcome back. You're watching India Market Close, and we're looking at Eternal and the numbers that it has posted, and of course, seemingly a couple of those line items coming in below expectations. Certainly, that net profit number, 92 crore rupees, compared with expectations of over 300 crore, is a miss. And the revenue more or less in line with expectations, above 20,000 or thereabouts, but the EBITDA has come in at just about 600 crore rupees compared with consensus estimates that have pegged it at 660 crore rupees or thereabouts, I believe. Or maybe lower than that. But let me go across to my guest today, and we've got Shivangi Sarda, who's an analyst, equity derivatives and technical at Motilal Oswal, as well as Deepak Shenoy, the Chief Executive Officer of Capital Mind Mutual Fund. Thanks so much to the both of you for taking the time. Deepak, let me come to you first on this. It just struck me, right? I'm looking at the quick commerce business, Blinkit business, and the revenue that they've gotten. We'll come to know what the margins are there. But 15,600 plus crore rupees compared with 2,600 crore rupees in the year ago quarter just goes to show how stark the shift has been. But if you look at something like an Eternal, what are the metrics that you would look at? Because the PAT number is certainly lower than expected. I think you're on mute.
Oh, am I? Can you hear me?
Yeah, I think I can hear you now.
Sorry, yeah, I just shift microphones. So can you hear me now? Is it okay?
Yeah.
So you can't access this particular company because they shifted from a marketplace model to a self-owned inventory model last year in June. So it is not a like-to-like comparison. So what earlier they used to do was only count the marketplace commission of the goods sold on their their e-commerce, quick commerce platform as their revenue. That was maybe a much smaller number than the total order supplies. Now, since they own the inventory, you'll see two things. One is a massive increase in depreciation and amortization costs in comparison. And because of, massive, I think in comparison, we don't know how those line items have come by. But second layer would be a much higher revenue number and therefore a much higher expense number in comparison, because now they own the inventory, they're paying for the inventory also. So you have to look at the difference between the two. It's not easy to compare, but it is essentially not comparable in this quarter at all. It may be they've given in the shareholders letter maybe 100% increase, but it's not the 2,400 all the way to.
It's not necessarily comparable. It's therefore shouldn't be read as that stark. But how would you study a company like this as a prospective investor, right? They've managed to, at the very least, break into the black, which some of their peers are not managing to do. But they're going to bleed for some time, right? And the competition is rife.
So A, the competition is higher, but B, they're also earning a significant amount of other income. I think they earned more other income than their net profit this quarter. So essentially the core business is not profitable yet. It will take some time, I think, before it gets there. It's getting better on the numbers, but overall you've had this problem of the profitability not really coming from the core business itself, whether that business was food delivery or whether it was quick commerce. And this is across the platforms. And now there's a third platform that will list, and perhaps that competition, and then there are other players getting in from Amazon to The Flipkart has its own thing, Big Basket has its own thing. There's a bunch of other things that are coming in. The urban areas are getting into more heated competition. I think this is a difficult game to play with, and plus, when you become into an inventory-led model, your inventory losses tend to be quite significant. So for some of the larger retail players who own inventory, especially grocery, you're talking of 3 to 5% of turnover going towards inventory loss costs in that sense, or maybe even 1 or 2% if you're very efficient. And if you're earning only a 2% margin, then what's left after that, right? So you have to go beyond this point. The other part is also the food delivery business, which has been a cash cow, is also under threat in different ways. There are more players coming into that market as well. Rapido's one. So there are these challenges. Exciting space, but again, very competitive, very hyper competitive. So I would say just wait and watch until the other income isn't the determinant of profits.
That's a good way of putting it. Shivangi, let me come to you on the chart for Eternal. It's come back into the green after stumbling a tad bit intraday. What are the charts indicating to you?
Very good afternoon, Alex. Thank you for having me. So we've seen that Eternal has been one stock which has bottomed out on the larger time frame per se. On the monthly basis, we've seen that it has been forming higher lows from the last 4 months, for that matter. And now, even after consolidating at the higher zones, one thing is clear that lower levels buying can be seen very swiftly and smartly, which is kind of pulling it back on the upside. Now, of course, Eternal looks quite positive on the immediate basis as well, but it is definitely a portfolio stock too. So now we're looking at the next immediate targets of round about 300 levels. And positionally, we could look at 310, but immediately 300 is what you can watch for a support of 285.
Okay. All right. I want to draw your attention to a stock in the auto ancillary space, and this is Gabriel India. Of course, it posted its numbers for the first quarter just a short while back. It didn't really look very exciting, but I think the stock is reacting to two strategic acquisitions, and it's part of the Anand Group's bid to consolidate its auto ancillary companies into one entity. This is an exercise that began last year. Let's go across to Puneet because he's lined up a bull versus bear case for Gabriel India. The stock has gained quite considerably over the course of the year so far, and if you look at a 12-month chart as well, but it's lost ground today, Puneet.
Well, most certainly, and I think it's just because the size and the scale of what we might expect in terms of debt as well as equity dilution are some of the aspects that will hamper the stock. But the big news that earnings largely in line with estimates, but they bought stake of the promoter family in HL Mando Anand, and the joint venture also, the second one announced with Clemo as well. So those are two big acquisitions, and HL Mando Anand is actually one of the bigger subsidiaries that they have in the unlisted space that will now come into the listed Gabriel India. Now, last year, June 2025 is when you saw 4 entities actually getting consolidated, and hence that sharp run up. But these acquisitions will dilute equity in the near term because they will be issuing new shares to promoters as a swap rather than a cash that they will be giving in to the promoter Anand Group. So 1,800 crores of the acquisition of Mando Anand will be given to promoters, 350 crores will be cash, but that will have an impact at least in the near term on the equity as well as the interest cost going forward. The second part that they will have to actually raise a lot of debt, almost 1,000 odd crores is the minimum criteria. Upwards could be around 1,500 crores as well. Is something to watch because they have announced Clemo's acquisition of a joint venture with the company for 935 crores, and hence that will put some further pressure. But this acquisition of Clemo India will help the company enter the newer high growth spaces like ADAS, and that is continuing to show very, very high growth, and hence could be positive in the medium to long term. The third one that they will now create one entity having braking, steering as well as the ADAS platform once it goes through into an integrated platform, so they can offer that combined solution to its OEM partners, and that will be another big positive. But they do need to monitor the restructuring timeline as well as the high interest cost at this point of time. And finally, the last one, that 70% of now part of the unlisted entities in the Anand Group are now part of the listed entity. So that will be one key factor. 30% yet to come through, but valuations do price in a lot of positives for the benefits that are yet to come through. So that is the bull and bear case for Gabriel India. It's been a very sharp run from 400 rupees to 1400, but there is a lot to watch out for the 2030 target for the company.
All right, Puneet, thanks so much for getting us those details. We were talking about, at the start of this show, crude oil prices, and the fact is that they continue to climb. As I look at the screen, they're at 95, very close to $95 to the barrel. And Deepak, this is the big concern at this moment. It seems that the Indian equity markets can't really catch a break, at least when it comes to the external front, right? Because that's a problem that doesn't seem to be going away. So the earnings on one hand have actually been supportive. You look at the consumer goods companies, you look at a couple of FMCG companies, Nestle earlier in the day, they've managed to retain margins, and several companies have managed to do that. But how long does that last?
Yeah, I think this war situation is something that we've you're unable to model it, because none of all these things are driven by a lot of seat of the pants kind of comments from political leaders that perhaps did not behave like this in the past, and therefore you can't model what your input prices are going to be if you're especially dependent on crude and so on. So there is a problem, but as much as I like to say that, I think given the flakiness of the political leadership of each of these, wherever these countries are, it appears that a lot of these problems are created for the short term and solved in the short term, because nobody wants a long running war meaningfully impacting the economy. Now remember, when Russia attacked Ukraine, if the oil prices went to 140, and now the war is still going on, but the oil prices fell a lot, fell to $60 in the interim, despite Russia being in and out of that external market for a while. And now when this war, whatever happens now, it might still result in eventually oil prices going down, because I don't think it's in America's or most of the Western countries' benefit to have oil prices high and therefore affect their inflationary. And already their bond yields are back to new highs, much higher than they were earlier. In fact, the US 30-year is now at, I think, 20-year highs. In the sense, it's the highest since 2005 or something. So given that, I don't expect this war to last too long, and therefore, this spike may be temporary. And that's the probably hope, or the reason why the Indian markets aren't crashing 15-20%. It's probably down a little, and that's just normal reaction. I think we will eventually see a comeback down, when go to below $80. But I'd always said that by the end of the year it will go. I was surprised it went already in June, but it's back up to 95. I think it'll still go back to 80 by the end of the year. And then we'll have more normalized. So if you're thinking longer term, you're fine. If you're thinking short term, I don't know what to tell you, because there's so much inconsistency in what is happening right now.
The one stock, and we were debating this in the newsroom, and we wanted to speak to you about it. And we were speaking about HDFC Bank, and I think a lot of people scratching their heads, Deepak, about what to do with this bank, right? Because for a lot of people, you don't really have a choice. Most mutual funds have this stock, and if you own an index fund, you effectively own 10% HDFC Bank, and it's been underperforming left, right, and center. So what is the approach that you should have as an investor? What should your expectations be? Is it going to take all of FY27 to turn this behemoth around, or can it be sooner?
So just for the record, we have a mutual fund. We don't have HDFC Bank in our FlexiCap fund. So I know it's a little bit different for us.
Yeah.
We own more mid-cap banks. And one of the things is they don't qualify in some of the criteria we've had. The problems in these banks, and I won't specifically say HDFC, I think it's also the whole banking, the large cap banking pack, is that they've never had to deal with the kind of competition that they're now seeing in almost every part of their business, whether it is credit cards, whether it is home loans, whether it is auto loans. Home loans are getting massively attacked in by the public sector banks who are offering vintage loan takers much lower rates. Remember, a big NBFC merged with a big bank. That NBFC loans of the earlier time frames were connected to something that they called PLR, and those PLR based rates are effectively higher than what banks might offer today, and therefore they are encroaching on that territory. Auto loans are getting encroached by both early stage startup created digitally sourced loans, and also from the perspective of the reach of the other banks in the system as well. So all of these factors result in higher competition, lower NIMs, not because your credit costs went up. In fact, your credit costs went down, but because your competition is driving prices down, and rates, the differential between the rates you can offer and the rates you are able to get on the borrowing side are going to be converging. And this is a natural phenomenon. We need to be paying lower interest on loans taken by India. And these 4% NIMs are not sustainable in an era where inflation itself has come down quite considerably. So I would say valuations have corrected. The business is just about the same as it was, with maybe marginal differences. In fact, a lot of the business construct has improved. Some of them have gotten into corporate. The lower NIMs there correspond to much lower credit costs now, and therefore there is a much more stable banking system at a faster growth rate with lower NIMs. But I don't think the lower NIMs there correspond to much lower credit costs now, and the market's giving this credit to any of the large private sector banks. The mid-cap banks seem to be getting more of that credit, and they're performing better as well. And it'll take some time. I don't know whether it'll be FY27. I don't know it'll be FY28, but I don't believe we should start thinking of these 3.54% NIMs as where these targets should go. I would rather focus on earnings growth of these banks while NPAs and ECL levels. ECL is a better way to look at things. It's just that the banks are delaying it right now. But where these targets should go, I would rather focus on earnings growth of these banks while NPAs and ECL levels. ECL is a better way to look at things. It's just that the banks are delaying it right now. But eventually the ECL levels banking system that's growing faster without adding too much NPA because of maturity and digitalization, if you may, of the entire system that allows for better underwriting.
Nearing the market closing, so Shivangi and Deepak, thank you so much for taking out the time and giving us all those insights on the stocks that we discussed. But a quick look as to how we're closing today's day, because it's been a crucial one. We've seen a significant amount of pressure for the benchmarks, now closing below the 24,000 levels of 194 points of a downtick, and downtick of around 0.8% for the Nifty 50. The Nifty Bank continues to be under pressure, now below the 57,200 levels as well, down by about 1.2%. But you have your broader end of spectrum, which also is significantly underperforming the benchmarks. The mid cap 150 now down by about 1.14%, and the small cap 250 down by about 1.3%, and that is reflected in the advanced decline ratio as well. If you can try to pull that up, because that gap has widened throughout the day, and very stock specific action with regards to news flow, earnings, etc., is where we are seeing that kind of pressure coming in. So declines around 1900 odd declines versus that of 700 odd advances. I think it will be interesting to see as to how the heat map of Nifty looks like right now, because more reds of course than the greens on this one, but you still have Bajaj Auto now almost gaining about 6%, closing 6% higher. Something like a Nestle also doing very well now by about 3 odd percent. Tata Consumer following footsteps of Nestle doing fairly well. Eternal has now turned into green and is up by about 1%, though not very strong set of numbers, but still seeing an uptick of around 1%. But one stock that's getting hammered is Indigo, and has to be, right, because of rising crude prices. Aviation turbine fuel gets expensive, and that's why we're seeing a downtick of around 3.6% on Indigo. Dr. Reddy's ahead of earnings is down by about 2%. We'll have to see as to how earnings fare. Geo Financial also down by about 2%. Infosys also earnings tomorrow, down by about 2 odd percent, and SBI is also the other one which is down by about 2 odd percent. And that closing bell is ringing, and we'll have to see as to how the Nifty has ended overall. The Nifty 50 below the 24,000 levels for sure, down by about 0.8 odd percent. The sector heat map quickly, and then the BSE 500 before we wrap up the show. Only FMCG, auto, so consumption has done fairly well as a basket, but you have realty which took a knock, down by about 2.6 odd percent on the developments happening on the geopolitical front. PSU banks taking that knock, down by about 1.8%. IT also seeing a downtick for around 1.6 odd percent, and private banks also taking a knock. Pharma, of course, on the back of the tariff news coming in of around 100% after 2 years and 200% after that. And you also have oil and gas that continues to be under pressure. So that's with regards to where the sectors go, but completely out of time on this edition of India Market Close. From everyone who put the show together, Alex and myself, thank you so much for watching. Stay tuned for more news and updates on the other side.
Co-powered by CoinSwitch.
Hello and welcome to NDTV Profit. You're tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin above the $66,000 mark on regulatory optimism. BlackRock adds almost $116 million in Bitcoins. The tokenized stock market reaches $1.7 billion at the end of June quarter. And lastly, White House deal clears clarity hurdle. Well, those were the top crypto headlines at this hour. And remember, crypto investors today, they can buy, sell, swap and even transfer digital assets through the year. Now, why is it important for them to understand the tax implications of these transactions instead of just treating them all the same? Listen into what Siva Venkataraman, the CFO at CoinSwitch, had to say.
That's a really important question, because tax reporting follows the economic outcome of a transaction and not necessarily how an investor thinks about the transaction. Think of it this way. When you buy a crypto asset, you're simply exchanging cash for an asset. You haven't made a profit yet, so there is generally no tax triggered at that point. But the price you paid becomes your cost of acquisition, which is critical because it determines how your gains are calculated when you eventually sell that asset. A sale is different though. The moment you sell, you have completed that investment journey. Any gain or loss can now be measured, making it a taxable event that needs to be reported. TDS at the rate of 1% would have already been deducted when you made the sale. So remember to claim that from your 26A statement. A crypto to crypto swap is where many investors get surprised. People often assume that because no money came back into their bank account, there are no tax implications. But economically, you sold one asset to acquire another. The tax system looks at that substance of the transaction, not whether cash changed hands. Hence, buy, sell, swap are all different events, and they all cannot be treated the same way when it comes to tax.
Interesting, Siva, but if there is one habit every crypto investor should build before the next financial year begins, what would it be? Listen in.
I would say that investors should keep track of every transaction throughout the year, instead of doing it only during the tax filing time. When you understand the tax implications of your transactions, maintain accurate record as you invest, and periodically review your portfolio activity, the tax filing process becomes much simpler and less error prone and helps you stay compliant. Of course, if you invest or trade through a large crypto exchange like CoinSwitch, they will give you a tax P&L similar to the one that you get from your stockbroker. Tax filing becomes much easier with this tax P&L.
Thanks a lot, Siva, for that. But as we wrap, remember you can reach out to CoinSwitch's dedicated helpline from where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
We are over, Jimmy.
हे लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपी अब संभाल लेगा। आप अपना देख लो।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
द मस्टर्ड स्पेशलिस्ट सिंस 1933 बरसों से सरसों।
कुछ तो बात है इस दिल में।
That are propelling India to what we call the Viksit Bharat stage. Those are demographics, democracy and digitization. These three things are instrumental in creating what we hope is a new India, a more bold India, a more braver India in the next few years.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter finance.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार।
Hello and welcome. You're watching Market Express and I'm Himakshi Bahugna. Let's get straight into the show and see how the markets have really fared today. First, the viewers' risk-off mood has weighed on the Dalal Street as benchmarks have extended their losses with Nifty back around 24,000 levels, while Sensex is also dragged around 800 points. Broader markets have seen deeper cuts in trade today, with small cap and mid cap index ending with over 1% cut. And in terms of sectoral trades, intense selling was witnessed across realty, PSU banks, media, and even IT stocks. And on the other hand, FMCG and auto counters have bucked the trend with the fresh buying in trade. And now let's start with Nifty earnings. Eternal's first quarter shows strong growth across its businesses, but profit comes in below the street expectations. Revenue continues to expand, and this has been led by Blinkit and quick commerce, while margins, they remain under pressure. And the company has also reported a sharp turnaround in Blinkit's profitability, highlighting the growing contribution of its fast delivery business. Next up, we have Nestle India, which has reported a strong first quarter performance with consolidated net profit jumping 48% to 959 crore rupees, while the stock has gained around 4% after the results. And revenue has also posted healthy growth, and this has been driven by double-digit expansion across all the major product categories. The company has said that quick commerce and e-commerce, they continue to be the key growth drivers for the company. Next up, we have Bandhan Bank, which has reported a steady first quarter performance with net profit rising 35% annually to 502 crore rupees. Asset quality has also improved marginally there, while net interest margins, they remain stable at 6.2%. However, the management has struck a cautious tone, cutting its return on the assets guidance due to the margin pressures and even macroeconomic uncertainty. Next up, we have Adani Power, which has reported a strong set of first quarter numbers with consolidated net profit rising 42% year-on-year to 4,806 crore rupees. Revenue has climbed 34% to 18,902 crore rupees, and this has been driven by higher power demand. EBITDA has surged nearly 40%, while the EBITDA margin has expanded to 42%. Next counter to look at is CSB Bank. So the shares have fallen over 7.5% after the private lender reported a 26% sequential decline in the net profit for the first quarter. So the drop in earnings came despite healthy business growth, as higher operating expenses and even the provisions, they've really weighed on the bottom line. Next up, we have Adani Green. So the first quarter comes in strong, with the earnings and revenue seeing healthy growth from the previous quarter. A sharp rise in operating profit and even stronger margins, they really boost the performance, while the absence of a one-off loss booked last quarter has also, it has also supported the bottom line, and the numbers underline continued momentum in the company's renewable energy business. Next up, we have Mahindra Holidays, which has reported a softer quarter, while revenue continues to grow higher. Higher costs really weigh on the profitability, pushing the company into a loss. And operating performance, also comes under pressure, with margins narrowing from a year ago, and also suggesting a challenging start to the financial year for the leisure hospitality player. Next counter to look at is Gabriel India, which has reported steady first quarter growth, but the bigger story is its expansion push. Alongside its results, the company has announced 2 strategic acquisitions and even a sizable capital raise. The deals strengthen Gabriel's presence in steering, braking and even automotive electronics, and this is also marking a significant step in its transformation into a broader auto components player. Next counter to look at is JSW Energy, which has delivered a strong operational quarter, beating the estimates across the metrics, and the company has added record renewable energy capacity in the period and also remains on track to meet its annual expansion target. While higher depreciation and finance costs really weigh on the profit growth, execution remains strong as the company scales up its clean energy portfolio. And viewers, Hindustan Unilever has continued to raise prices across key products as cost pressures linked to the Middle East conflict persist. And according to the industry channel checks, HUL has increased prices of Rin detergent and Dove shampoo in July. Now, this is the 4th price hike for the 1 kg Rin pack since March, while Dove shampoo has seen its first increase since conflict began. So elevated palm oil prices and even sharply higher packaging costs, they really continue to pressure the input cost, also prompting selective price hikes for the major. And viewers, Zepto scored a legal win in a trademark dispute, with the Delhi High Court restraining a lending firm from using the Zepto name. So the quick commerce company argues that the customers were confusing the lender with its own business, leading to reputational risk, and the court has said that Zepto has established prior use and goodwill in the brand, granting interim relief. And here's the Delhi High Court has dismissed Vedanta's plea challenging the centre's refusal to extend its production sharing contract for the Cambay Basin offshore block, and the contract had expired in 2023 and the company had sought a 10-year extension under the 2017 policy. With the court upholding the government's decision, the earlier status quo order on ONGC's takeover of the block will no longer apply. And NDTV Profit has learned that China's new outbound investment regime could become a fresh hurdle for India-China joint ventures. According to sources, Beijing's approval may now be required even after projects receive India's Press Note 3 clearance. Now, existing and proposed partnerships, including Dixon Vivo, Uno Minda, and also Amber Oppo and PG Electroplus, may need additional approvals from Chinese authorities. Viewers, OpenAI has revealed that one of its advanced artificial intelligence agents went rogue during an internal security test, escaping its controlled environment and even accessing the internet. Now, according to the company, the autonomous agent then compromised the infrastructure of AI startup Hugging Face while attempting to complete its assigned objective. Now, OpenAI has said that the incident occurred in a testing environment and is being used to better understand and even strengthen safeguards around increasingly capable AI systems. Viewers, artificial intelligence company Anthropic is stepping up its push for AI regulation in the United States. The company has announced another $20 million donation to advocacy group Public First Action, taking its total contribution this year to $40 million. Now, the move underscores Anthropic's growing efforts to shape AI policy and even support measures aimed at addressing the long-term risk associated with rapidly advancing artificial intelligence. Viewers, let's look at some national news now. The flood crisis in Assam has intensified dramatically, with 21 people losing their lives in a single day, taking this year's death toll to 31. And more than 5.6 lakh people across 16 districts have been affected, with Sivasagar emerging as the worst hit region. And rescue and relief operations are in full swing, with the Indian Army and Indian Air Force evacuating stranded residents and even delivering emergency assistance. And Chief Minister Himanta Biswa Sarma is set to visit the affected areas as authorities step up the efforts to manage one of the state's worst flood spells this year. Year's Parliament remained deadlocked as repeated disruptions over the NEET paper leak issue brought proceedings in both the houses to a standstill. While Union Ministers Kiren Rijiju and JP Nadda said that the government was ready for a discussion on paper leaks and other issues, the opposition insisted that Education Minister Dharmendra Pradhan must resign before any meaningful debate could really begin. Now, with neither side willing to back down, repeated adjournments once again dominated the day's proceedings. And with neither side willing to back down, repeated adjournments once again dominated. And the Cockroach Janata Party says that it is ready to hold talks with the government, but only at a neutral venue. Party leaders have ruled out meeting at a minister's office or residence, proposing locations such as Jantar Mantar or the Constitution Club instead. So the development comes as thousands of protesters continue to gather at Jantar Mantar, with the party warning that the crowds will swell further if their demands remain unaddressed. And amid the escalating protests, the centre has ordered the deployment of 20 additional CRPF companies to Delhi, even as Union Minister JP Nadda is expected to meet a CJP delegation. Here's a significant development in the ongoing protest, as Union Ministers JP Nadda and Jitendra Singh met activist Sonam Wangchuk at Medanta Hospital in Gurugram. So the meeting comes just the day after Wangchuk was shifted from Safdarjung Hospital while continuing his indefinite hunger strike, raising expectations of possible dialogue as the high-profile protest continues to draw national attention. And the Cockroach Janata Party's agitation is gathering momentum beyond Delhi, with fresh protests erupting in Mumbai despite the police action. Hundreds of students and young demonstrators have assembled outside Shivaji Park, defying rain, detentions and multiple FIRs. Raising slogans demanding accountability and the resignation of the Education Minister Dharmendra Pradhan, protesters have said that the movement would continue until their demands are addressed. Fierce terror has struck Jammu and Kashmir once again, where the police constable killed in a militant attack at Anantnag's Lal Chowk. So the officer was deployed on Amarnath Yatra security duty when terrorists opened fire. This marks the first terror attack in the valley since the deadly Pahalgam attack in April last year. Security forces have launched a massive search operation as investigations into the attack continue. The United States say that it remains open to negotiations with Iran, but believes that Tehran is not serious about ending the crisis. Now, Secretary of State Marco Rubio has made the remarks as tensions have intensified across two of the world's most critical energy corridors. The comments come after Saudi oil tankers reportedly reversed the course in the Red Sea following fresh threats from Yemen's Houthi rebels, adding another layer of uncertainty to global energy markets. And the Middle East conflict has widened further, with Iran launching retaliatory attacks on Bahrain, Kuwait and Jordan after the US carried out its 11th consecutive night of strikes. Now, President Trump has also warned that another suspected Iranian nuclear site could be targeted soon, prompting Tehran to threaten a broader regional escalation. And even as military action intensifies, diplomatic efforts continue, with mediators stepping up talks to prevent conflict from spilling into a wider regional war. Here's the Middle East conflict is showing no signs of easing as of now. US President Donald Trump has warned that Washington could soon strike, Pickaxe Mountain, which is suspected the underground Iranian nuclear facility. And at the same time, Trump has also threatened to take care of Yemen's Iran-backed Houthi rebels, if they follow through on plans to blockade Saudi ports. So the twin warnings underscore the risk of the conflict widening further, with both nuclear tensions and even critical shipping routes now firmly in focus. And the Middle East conflict has intensified further, with the United States carrying out its 11th consecutive night of airstrikes on Iranian military targets. Iran has activated their air defense over Tehran as explosions were reported in parts of southern Iran. Meanwhile, Houthi threats against Saudi shipping have forced some oil tankers to turn back, raising fresh concerns over global energy supplies and trade. And the escalating conflict is keeping the markets on edge as geopolitical risks continue to mount. Viewers, earlier today we spoke with Abizar Divanji, founder of Neostrat Advisors, and Parag Thakkar, head fund manager at Fort Capital, on whether the banking sector is losing its shine. Let's listen into a snippet of that conversation.
More from the perspective of what this bank, which means so much for the investor, and indeed the significance that it has purely by way of its lending book. Could they have done things differently over the course of the last 3-4 years?
I mean, sitting in a studio, we can say that, Alex. But the reality is that HDFC has been through a merger of a disproportionate size. And ICICI had the same issue 2001. However, in 2001, there were favorable markets and cheaper interest rates. ICICI Bank would have fallen under the burden of their NPS at that point in time because the DFI had NPS. HDFC Bank is falling on the burden of lack of deposits. Now, if you just look at the larger issue, these mega bank merger, and of course, HDFC is multiple size of what ICICI was in 2001. So if you look at it, this merger will take an elongated period of time to stabilize. And the reason why it will take that much time to stabilize is, one, the size is much larger. Two, we've had a huge issue on deposit runs, as in deposits moving to the capital markets. Three, the interest rate cycle has gone up. And in an upward interest rate cycle, to integrate a non-bank into a bank is a huge challenge. So I think that there are macro factors that have played a role in terms of HDFC's stability. What HDFC is doing right, in my opinion, still, is the fact that they are not trying to do aggressive borrowings on the wholesale market to be able to fund a increased loan growth. In quite the contrary, they are saying that unless the deposit franchise picks up, we will slow on loan growth. That's what I've heard in the discussions. That's actually a good banking strategy, because clearly from a bank perspective, the cost of funds being significantly lower is the single largest advantage that institution or a banking institution ever has. So ideally, to retain that franchise. Now, has the bank done enough or could have done better? Of course it could have done better. Could it have done the same kind of NIM expansion that ICICI did in terms of offering a wide range of services outside of plain banking? Of course. Could it have increased fee income like a Kotak's model has always been? Of course. Kotak's NIM has, even though it's fallen, is still the largest. Why? Because there's a reason. They have embedded fees into it. They've embedded other kind of services that they provide along with it. So ideally, should the bank have transformed from being a plain vanilla lender to a structured provider of capital? Yes. But I think that will evolve over time. So in a sense, I don't think the franchise has deteriorated. I think the franchise will come back. The other big peril that we have is if you're part of a lot of indices and if you're part of a lot of mutual fund holdings, then the flag comes with it. So I guess
think that is Abizar, I think you hit the nail on the head. The reason for all of the concern is that the element of choice of going out and choosing and investing in HDFC Bank specifically is lower down when you have so many investors who are in SIPs, who may not have seen what the components of their are, and they have exposure to HDFC Bank one way or the other. And then comes the question of leadership. Now, a lot of this is being pinned on the head of the current CEO at a time when his extension is due. So let me ask you point blank, how much of this is a leadership issue? And would it have been any different if someone else is leading? Will things change if there is a different leader? Because it's all becoming about one individual right now.
So I think HDFC is much beyond an individual. It's an institution by itself. I think it has churned the best leaders possible. It's had, okay, one of the things that I would like to highlight is the fact that, when you have a elongated leader for an elongated period of time in any organization, the second level tends to always suffer. So really, we actually sometimes may lose a generation of bankers in between. And that could be true because HDFC has seen a lot of their bankers move to other banks. So there is sometimes a leadership vacuum. And then, of course, if a leader is overbearing, then what happens really is that the juniors tend to have more time, tend to take a longer time to evolve. So I do think that, yes, when you start comparing, you compare an Amitabh Bachchan to an Abhishek Bachchan, then obviously you will see an obvious comparison issue. But at the end of the day, you got to move out of that.
Abhisar, I'm sorry, I must ask, who's the Abhishek Bachchan and who's the Amitabh Bachchan here?
I think it's very obvious to everybody.
Okay, so Aditya Puri and Shashidhar.
But yeah, but that's the whole thing. So when you have a transition, you cannot get biased to what, somebody else could have done. You have to look at it what the individual can do in the respective thing. I'm not saying that the individual may not have flaws or may not have erred. Of course, he could have erred. But then so does every other CEO.
All right, viewers, with that, it's a wrap on this edition of Market Express. Stay tuned to NDTV Profit for more news and updates.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
Jimmy?
Hey, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपी अब संभाल लेगा. आप अपना देख लो.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क.
इस बार तो माँ से भी बेहतर बना.
P Mark, the mustard specialist since 1933. बरसों से सरसों. कुछ तो बात है इस दिल में.
This is India Inc.'s Roll of Honor, recognizing the leaders shaping India's growth story, where ambition, enterprise and excellence meet. In the presence of the Finance Minister, Nirmala Sitharaman. NDTV Profit Business Leadership Awards, 26 July on the NDTV network.
I got blooded in the stock market in the early 90s when Narayan Murthy and Infosys went public, and forever after that we've been spoiled. We look for businesses run by entrepreneurs like Narayan Murthy who have boldness, who have vision and a great sense of corporate governance. So some of the qualities that we admired in the stocks we invested, we also look for those in the entrepreneurs that we invest in. So those are the best qualities to look for.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage. I think it's heartening to see talent that there is across India Inc. We should be awarding companies and individuals who have focused not only on growth.
Market ends lower for the third consecutive session today. Nifty ends below the 24,000 mark. Nifty breaches the psychologically crucial level after 8 trading sessions as US-Iran downplayed the true stocks. Oil prices extend gains for a 4th straight session. Brent rises $95 a barrel for first time in 6 weeks as US President Donald Trump threatened broader strikes on Iran. Nifty Pharma drops nearly 2% after US President Donald Trump unveiled a phased tariff roadmap for imported generic medicines. While tariffs stay at zero initially, the proposed sharp hikes later weigh on investor sentiment across the sector. Nestle starts the year with strong growth across major business segments in Q1. All matrices beat the estimate, sales growth led by strong volume growth, while quick commerce company internals revenue crossed the estimates and nearly tripled year-on-year basis, but profitability fell short of the street expectations in the first quarter. Adani Green Energy posts a strong quarterly performance. Consolidated net profit more than doubled sequentially to 845 crore rupees, while the revenue rises 26.5%, while Adani Power's net profit rises 42% YOY on the back of robust operational performance. India-China joint ventures could face fresh delays, according to NDTV Profit exclusive. China tightens India investment rules, may need Beijing nod even after India's P-Note 3 approval. US Defense Secretary Pete Hegseth highlights the financial impact of war against Iran, says it has cost about $37.5 billion so far as he defended President Donald Trump's funding request during a heated Senate hearing. Yet again, a stormy day in the parliament with opposition protesting inside the parliament over the NEET paper leak issue. Parliamentary Affairs Minister Kiren Rijiju says that government is ready to have discussion on the NEET paper leak issue. Assam floods wreak havoc, at least 21 dead in the last 24 hours, while 12 killed in tunnel collapse in Sikkim and several trapped. Rescue operations underway. Hi there, you've joined us on Profit 360. I'm Nisha Podar, and let's take you through all the top headlines and the news in the world of business that you need to know about. First, let's begin with the market and the equity market dynamics today. And the risk of mood really weighed on the Lal Street as benchmarks really extended their losses, with Nifty back around 24,000 levels, while Sensex also dragged around 800 points and lost that particular amount in the trading session. Broader markets, they saw deeper cuts in the trade today, with both small as well as the mid-cap indices really ending with over 1% cuts. Let's take it straight across to my colleague Jasmeet, who's standing by with a complete roundup of the market action today. Jasmeet.
Well, a weak day for markets today. Nifty 50 ends in red and down about 0.8%. In terms of top losers, we have stocks like Indigo Aviation and Dr. Reddy losing the most in Nifty. Now, in terms of Interglobe Aviation, it's down about 3.5%, while Dr. Reddy lost nearly 2% in today's trade. If we look at the broader market, while that underperforms the benchmark in today's trade, Nifty Midcap 150 ends in red. And in terms of the top losers in Midcap 150, we have both the IT stocks, that's Oracle Financial Services and Emphasis, both losing the most. And talk about the Oracle Financial Services, down about 7%, while Emphasis lost nearly 4.5%. If you look at the small cap 250, when that ends in red, loses about 1.2%. In terms of top losers, we have GSPL and Bandhan Bank both losing the most, while Bandhan Bank saw a drop of nearly 17% in today's trade. If you look at the sectoral trend, all sectors end in red, barring Nifty FMCG and Nifty Auto, while Nifty Realty becomes a top losing sector in today's trade, and Nifty Realty lost nearly about 2.5%. In terms of top losers in Nifty Realty, we have stocks like Brigade Enterprise and Godrej Properties both losing nearly 4%. If we look at the top gaining sector, we have Nifty FMCG, which gained about 0.5% and emerged as the top gaining sector in today's trade. If you look at the key stocks that gained the most in Nifty FMCG, we have stocks like Emami and Nestle both gaining the most. In terms of the second consecutive day key trends, which we are seeing in today's day, is Nifty Auto, which is up for the second consecutive day in a row, seeing the strong momentum for the second day, while we have Nifty Metal and Nifty Pharma, which snaps its 2 days of gaining streak and ends in red in today's trade, while lastly Nifty Oil and Gas, Nifty PSU Bank is down for the second consecutive day in a row.
All right, Jasmeet, thank you so much for getting us all the details about the highlights in the market. In fact, we spoke to market experts, Vikas Pershad, the portfolio manager for Asian equities at M&G Investments. And he says on the outlook for India, he shares that why he remains selective on the consumer staples while also staying positive on healthcare services and the automotive space. He also explains why the recent pickup in IPO activity is an encouraging sign for the market. Listen in.
Top 10 holdings, the top 10 different sectors. We have healthcare services in the form of hospitals. We have exposure to dialysis also. Advanced manufacturing in auto parts. We have some telecommunications exposure as well. Optical fiber cables, we've had exposure there. Where we are not allocating more capital and where we remain underweight is staples, IT services. And though we're not underweight collectively, the private banks, we are lighter in that sector than we have been in many years.
All right, so that's the outlook coming in on the equity market. And let's now take it forward and check also the other markets which are impacting the equity market. Remember, crude is one of the biggest factors on which both our money market as well as the equity market is really reeling under the pressure of, and crude oil is feeling the heat of the rising geopolitical tensions, with Brent crude breaching $95 a barrel for the first time in 6 weeks. In fact, the latest prices surged after the U.S. Secretary of State Marco Rubio really warned that Iran is in a lot of trouble. While rupee, remember, also weakened 0.4% and closes at 96 rupees 57 paise against the US dollar. Remember, 96.5 is what it has really retested in the last few days when crude has really escalated, and the lowest, historic lowest level for rupee is very close to 97 to a dollar. Shreyansi is right here with all the details on the factors to watch when it comes to the crude price escalation. Shreyansi, it's coming in as a big worry for the Indian economy and the equities market.
Absolutely, Nisha, and it's not every day that you see crude prices rising $5 a barrel, not one or two, but $5 whole a barrel from this morning until this evening as well. And when you talk about some of the factors, there's actually disruptions on all sides when you talk about the crude flows as well. So on one side, you're looking at the Hormuz disruptions that are very much continuing. The escalation is very firmly in place, and some of the commentary seems to be indicating a little bit of a stalemate, which is something that markets are concerned about. Add to that, the kind of flows that are trickling in and out of Hormuz as well, that's quite the concern. Add to that, the Houthi militants and the maritime embargo that has really come in from them as well. And that's something that's quite a concern. You do have tankers today returning from Saudi as well. And that seems to be adding some more trouble to that entire list. Add to that the entire Black Sea disruption as well. And that's also something that you're looking at as a key concern. And what you've got after that is a summation, a very different forecast than the ones that we're used to in terms of crude prices. In fact, Goldman is suggesting that $120 a barrel is not unimaginable at all. They see it happening by the fourth quarter. You do have Bernstein coming out with similar commentary. You do have similar commentary, in fact, across the board when you talk about brokerages. And $100 a barrel very much seems to be the case by the end of the fourth quarter.
All right, Shreyansi, thank you so much for putting all that into perspective. Of course, this is one of the top headlines when we talk about the India today because of the crude impact, and that's what has impacted our equities as well as the money market. Now, another important aspect and also an overseas factor in impacting Indian market. The Trump administration has really proposed a phased tariff plan on generic drug imports, keeping tariffs at 0 for 2 years before potentially raising them to 100% and later to 200%. Varsha is here with all the details and who gets impacted. Varsha.
First of all, yes, we might see some kind of, sentimental impact today considering the tariffs that have been announced by Trump. Now, overall, if you see, tariff could rise to 100% in year 3 and tariffs could further rise to 200% thereafter. So, no tariffs for first 2 years. So, Trump is actually giving a window to pharma companies to go and set up their manufacturing base in US. Now, also, let's talk about companies, pharma companies with highest, US exposure. You have Granules India, wherein 76% of contribution is from US. You have Lupin at 42%, Torrent Pharma at 10%, very little contribution. Zydus Life at 40%, Gland Pharma 53%. So, whole lot of companies have actually presence or a contribution coming from US. Now, let's talk about companies which already have plants in US and might not have that much of impact. You have Aurobindo Pharma, wherein they have meaningful, manufacturing presence in US, a better position if domestic US production is incentivized, and they are the potential beneficiary if policy is implemented. You have Sun Pharmaceutical Industries, wherein they've acquired US-based healthcare firm which is Organon, so we might not see some kind of impact there. Ceneris Pharma has already US manufacturing exposure, could gain from preference for local manufacturing, which all companies might see some kind of pressure. One is of course Dr. Reddy's, you have Cipla, you have Zydus. Why? They do have US manufacturing footprint but still depend meaningfully from India based production and could face sentimentally negative reaction over there. Biocon, if you see, biosimilars and generics are largely supplied from India and Malaysia, so you have some kind of pressure there also. If tariff eventually materialize, there will be neutral impact on two companies. One is of course Alkem Pharma, wherein largely dependent on Indian manufacturing. US generics is not a core problem for the company. Torrent Pharma, very limited earnings dependence on US generics, almost 9 to 10% coming from US in FY26. So overall, yes, we might see some kind of sentimental impact, but Trump has given that 2 years of window to go and set up the manufacturing base in US, and many companies are actually setting up their base in US.
All right. In fact, we spoke to a few companies. In fact, we spoke to Priyanka Chigurupati, who's the executive director at Granules India, on the proposed US tariffs on generic drug imports. And she explains why she believes 100% to 200% tariffs on Indian medicines may not be practical. Listen in.
You're talking about a significant increase in basic medication to the US consumers. Is that going to happen? I really have my doubts about it. And another aspect about Granules in specific is that we're not present in branded formulations. We're present in generic formulations. And about 40% of our overall revenue today is already produced in the US. And about 20% is produced for the rest of the world markets. So roughly about 30% is produced in India. And there I see a very high chance of 200% and 100% tariffs not happening, because it's purely going to be unaffordable for the US customers. And these are basic prescriptions. These are basic medications that are needed on an everyday basis.
All right, so that was about the big pharma disruption that really took place, about a tariff which is going to kick in after 2 years, as has been proposed by the US. Now on to an NDTV Profit exclusive. India-China joint venture could really face fresh delays. In fact, Shrimi joins us to give us more perspective and details on what she's picking up from her sources when it comes to this particular trade negotiation. Shrimi.
That's right. What we are picking up is that China's new outbound investment regime could be the next hurdle for India-China joint ventures, with companies now potentially requiring approval not just from New Delhi but from Beijing as well before any deal could move ahead. People familiar with the matter said that the China new outbound overseas framework, which came into effect on July 1st, may delay the implementation of deal even after they have secured approval from the Indian government under the Press Note 3. Now, India has recently cleared quite a few China-linked manufacturing proposals, including the big ones involving Dixon Technology, Vivo and Uno Mindas, while other proposals such as Amber Oppo are still in the pipeline. Now, sources say the companies that have already received Indian approval are now engaging with their Chinese partners to secure outbound investment clearances from Beijing, but those approvals could take time. For deals that are still awaiting PN3 clearances, companies are assessing whether they will need to first secure approval from their Chinese authorities before moving ahead with their India's application. What we understand so far is that discussion between Indian companies and their Chinese counterparts are already underway, although regulatory clarity is expected only after the first few cases are processed. So, for context, the China revised overseas investment rules expand scrutiny beyond the capital flows to include equity investment, governance rights, shareholder funding, technology transfer, and even the data-related consideration. Now, India is also understood to be treated as sensitive destination under Beijing outbound investment assessment. So, to sum up, this additional layer of approval could definitely lengthen the timeline for China-led investment in India.
All right. Thanks so much, Shrimi, for getting us all those source-based information. Let's move on. And Eternal has really reported a strong set of first quarter numbers. Revenues crossed estimates and nearly tripled year on year, but profitability fell short of the street expectations. In fact, net profit came in at 92 crore rupees, well below the street estimates, and EBITDA margins also missed the forecast. The biggest positive, however, was Blinkit, which really continued its strong momentum with sharp revenue growth and swung to an EBIT profit. Mahima joins in to break down those numbers and also tells us what really worked for Eternal in this quarter. Mahima.
Alright, so as far as Q1 for Eternal goes, I think it was a slight beat in terms of where the top line stands, because revenue came in at around 20,200 odd crores versus that of an estimate of around 20,000 odd crores. But overall net profit is where there was a miss in terms of where estimates go. An estimated amount was around 300 odd crores versus that of a 92 crore that they did in Q1 FY27. EBITDA stood at around 594 crore versus that of an estimate of 664 crores, slight miss here as well. And overall, in terms of margins, that came in at 2.9% versus that of an estimate of 3.3%. But I think overall, in terms of segmental performance, food delivery saw a net order value growth of 20%. Blinkit net order value growth was at 88%. Hyperpure is where the real pain is this time, because overall the net order value for Hyperpure has gone down by 55 odd %. Going out business net order value accelerated to 60%, but that's a very minuscule part of the business. In terms of the commentary coming in from the shareholder letter, I think the important one was that going forward, they're expecting premiumization through launch of gourmet stores, which will be the goal from here on. They've invested around 3,000 crore of capex so far in the past 4 years for expanding their dark stores. This is a number that they've never given, but now they've disclosed this number. The key metrics in terms of capex per store stood at around 2.5 crore, NOV per day stood at around 11 lakh versus that of 7 lakh earlier. So there has been a significant jump there. And I think the major commentary saying that the competitive intensity remains high, but that has become more predictable is something that the street has probably liked, and that's why we see the stock turning from red to the green. And pricing-led growth requires sustained cash burn is what they still believe. And lastly, in terms of cash balance, that increased by around 300 odd crore on a QOQ basis to 18,288 odd crores. So this is the overall view of how Q1 has panned out for Eternal.
All right, thanks Mahima for bringing it down for us, and it's a hectic earnings day for all of us. Today, Adani Green Energy has also kicked off the new financial year with a strong quarterly performance. Consolidated net profit more than doubled sequentially to 845 crore rupees, aided by the absence of the one-time loss recorded in the previous quarter. In fact, revenues rose over 26%, while the EBITDA jumped more than 38%, driving the margins close to the 90% mark. In fact, the numbers really reflect the continued operational strength and also improved profitability for the renewable energy major. Also, Adani Power is the next one, which has also reported a strong first quarter, with consolidated net profit really rising 42% year-on-year to 4,806 crore rupees on the back of robust operational performance. In fact, the revenue climbed 34%, while the EBITDA surged nearly 40%, helping margins improve to 42% and delivering the company's highest ever quarterly EBITDA from continuing operations. In fact, the company also plans to raise up to 15,000 crore rupees through a QIP and some of the other routes, is what they stated. Now, the slower growth margin pressure and the governance concerns really raise questions over once market favorite HDFC Bank. Is it losing its sheen? The stock is the worst performer in the Nifty Bank Index this year, as concerns are raised over the ability to really regain its premium valuation. Somit is here with the several key questions as well as the insights.
If you look at HDFC Bank, so far in 2026, the share prices are down nearly 23%. And this is the worst performing banking stock in the Nifty Bank Index. And also the worst start that HDFC Bank would have seen since 2008. So if you look at this chart, in 2008, the stock was down nearly 42%. Since then, only twice the stock has given a negative return in a calendar year, and that was in 2011 and 2013. But even that time, it was just -9% and -2%. Apart from that, all the years the stock has been giving a positive return. But in 2026, so far, 7 months out, we are down 23%, the worst possible start that HDFC Bank could see since 2008. Now, how important is this for any retail shareholders? Now, HDFC Bank is 100% owned by public. There are close to 45.3 lakh shareholders in HDFC Bank, of which 44.4 lakh are individual, which means that these are the non-mutual fund holding. Now, if you look at the mutual funds, they own close to 30.6% stake, and 59 mutual funds or AMCs via various schemes hold stake in HDFC Bank. And this is the most interesting plate here. Now, the value of this mutual fund holding is at close to 3.1 lakh crore rupees, which is nearly 8.3% of the total equity-oriented scheme AUM that the mutual fund industry has, and nearly 3.8% of the total mutual fund industry asset under management. So that's the exposure towards one single stock of the entire mutual fund industry. Hence, this 23% fall in the HDFC Bank share prices could be a pain point for all retail shareholders. Now, why is HDFC losing its sheen? Now, the loan growth has been moderated, and apart from that, the funding mix change is also impacting the company's profitability. There has been a continuous decline in a low-cost deposits. Margins have been range-bound, in fact, on a declining trend, and also the yields on asset has also been on a downward trend for the last 5 consecutive quarters. Apart from that, there have been governance concerns post the chairman exit, and also there is a delay in clarity on the CEO reappointment. Now, given the fact that there is still no clarity about this CEO appointment, let's see how HDFC Bank has performed under Shashidhar. Now, for this, we are just giving a context of ICICI Bank performance as well during that time period. So, over FY21 to FY26, if you see HDFC Bank's performance adjusted for the merger that was announced back then,
All right, it's Dr. Reddy's Labs which has really announced its quarterly numbers, profits at 444 crore rupees versus the estimate of 737 crore rupees. Now, the revenue stands at 8,100 crore rupees for the company versus the estimate of 8,221 crores, and EBITDA is at 861 crores versus the estimate of 1,398 crore rupees. So, the EBITDA margin at 10.6% versus the estimate of 17%. Varsha is right here to break it down for us for a quick analysis. Varsha, it is a miss on several fronts.
Yes, absolutely. And you know, the weaker numbers were actually expected, but this is a miss when it comes to overall parameters. Now, there was a sharp fall. Let's find out the reasons why there was a miss. There was a sharp fall in Revlimid, that is the cancer drug revenue. 240 crore semaglutide inventory API related hit was also there, which has actually impacted the overall numbers. North America business, if you see, fell sharply. US revenue dropped 35% year on year. Main reason was lower Revlimid sales. Now, this was expected because last year base when it comes to Revlimid was very high. A street was already expecting a sharp decline, and company itself said that it is transitioning beyond Revlimid. Now, the major hit in this quarter was also certain semaglutide batches failed specifications, which we recently saw, and company booked almost 239 crore provision, and impact came through inventory write-offs and related costs, and hence we are seeing that miss over here. India on the brighter side, I would say India continues to deliver almost 17% year-on-year growth. Growth came from new launches, acquired brands, and price increase. Talking about the margin analysis, if you see, gross margin disappointed. Last year it was 56.9%. This year it came at around 46%. Reasons: lower Revlimid, semaglutide issue, generic pricing pressure, and higher solvent cost due to Middle East disruptions. So these were all the reasons that's why we are seeing a miss when it comes to Dr. Reddy's.
All right, so it's a big miss, Varsha. Thank you so much for breaking it down. And of course, the stock reaction tomorrow will be something to be watched out for very, very closely. So Dr. Reddy's by far is a miss in the quarterly figures. Now, the showdown really continues in Parliament and on the streets over the paper leak issue. In fact, in the Parliament, the opposition is adamant on really demanding the Education Minister's resignation. In fact, earlier this morning, Congress leaders protested in the Parliament in the black outfits as a show of protest. Parliamentary Affairs Minister Kiren Rijiju also said that the government is ready for a debate in the Parliament over the paper leak issue. Meanwhile, the Delhi Metro has shut 16 stations amid the CJP protests, and in fact, traffic diversions are in place, but it has really led to traffic congestion at many places in Delhi. So there is a fair bit of chaos on this particular bit. In fact, let's hear out what the government's take has been and what is the reconciliation or the solution that it's really looking at.
शुरू से सरकार ने कहा है कि महत्वपूर्ण मुद्दे जो भी है और नीट एग्जाम पेपर लीक को लेकर के हम चर्चा के लिए शुरू से तैयार हैं। अभी भी हम तैयार हैं। हमने कांग्रेस के नेताओं को बताया, बाकी पार्टी के नेताओं को भी कहा है कि सरकार चर्चा के लिए तैयार है, लेकिन चर्चा कैसे हो इसका एक निर्णय चेयरमैनशिप का अध्यक्षता में सबसे मिलकर के बात करके हम तय कर सकते हैं।
All right, huge ruckus in the Parliament in the monsoon session. With that, it's a wrap on this edition of Profit 360. But do keep it with NDTV Profit. Thank you so much for joining in.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P Mark, the mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time. Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Access to capital.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300 क्या सर्च इंजन के
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey, and this is a very interesting show where we get you interesting companies, interesting stories, and yes, if there is an alpha to be made or not. Let's try to understand what company we are talking about today, but before that, very interesting hints I'm going to give you. It's a multi-specialty hospital chain in West India, and if you are in and around Thane and Pune, you know which company I'm talking about. Also, it was recently listed in September 18, 2023, not so much of a history in the markets right now. And another interesting take is the company has a planet's name, and I've showed you the logo also. I'm sure you must be guessing it by now, and it's a very large planet, and stock has more than doubled up from the IPO price as well. So try to understand which company I'm talking about, and yes, you must have guessed it by now. It is Jupiter Lifeline Hospitals. This is the company which we are talking about, but the question remains is, why are we getting this company? What are the questions to be asked? What will be the conversation with the management, the growth expansion plans and the key timelines, which are the areas they are actually functioning? We'll try to make you understand that. Also, the second important question is in and around that expansion, especially on the Pune South Hospital and the Dombivli. This is the Mumbai metropolitan region part. Also, the current occupancy rates, operational bed capacities, and all the operational setup and the outlook going ahead. Also, we'll try to understand the capex plans ahead and how will this be funded. The company is focusing largely on greenfield momentum, or you could say the greenfield setup. So that's something we'll look out for. And the land banks, any other land banks are there for acquisitions or not, that's also something which we'll be tracking. And any plans on entering new segments like the pharmacy. It's like an ancillary. When you develop an hospital, other services also come up. But yes, it's in its infancy stages, at least in its business cycle, it's growing right now. The debt reduction plans, if any, or any other fundraise, because when you expand, especially greenfield, there is a pressure. Ankit Thakur, the MD and CEO of Jupiter Lifeline, will be talking to us on this. But let's try to understand the company. What does this company actually do? I'm sure a lot of folks in Western India know this, but for everyone else, it's a multi-specialty hospital chain, and now they're expanding. And interestingly, they have one hospital in Indore also, listed on September 18, 2023. Also, let's look at the other key details. There are 4 hospitals in MMR, 2 in Pune and 1 in Indore. Looking at the entire picture, how things pan out, 3,000 total bed capacity, 1,248 operational beds, and roughly 30 specialities. You name it, and they have it. Fourth quarter financials were hit by a drag of OPEX losses and depreciation. There was a little bit of selling pressure in the company, but this is very important corporate action, and just in a couple of days on July 24th is a record date for the share split which they have announced. That's 1:2. So this is a very important corporate move. You should be getting that. Abu Dhabi Investment Authority has roughly 1.04% stake in the company. So that's of course a good sign because of an institutional support. But before you analyze a hospital company, these are the abbreviations you should be knowing. IP means inpatient, which is admitted to the hospital. OP is outpatient, which receives treatment but does not stay in the hospital. This is very important if you are learning how to analyze a hospital company. And APROB is nothing but average revenue per occupied bed. It looks very technical, it is not, it's very simple. ARPP, hospital revenue, is divided by the inpatient volume. So next time somebody asks you these important ratios, you will be having these answers. Also, the management commentary has been strong. Thane, Pune and Indore hospital is performing on the expected lines. That's what they shared in the fourth quarter. Also, they have mentioned the Pune South construction progress is in the scheduling. So, two important management commentary coming up. Apart from this, we also have the IPD OPD volume breakup. The inpatient volume breakup is just 5% right now. The majority of it, 95%, still is in the OPD segment. Also, apart from this volume breakup, the story moves on the Indian healthcare industry, how things pan out. It's valued at $193 billion for the hospital segment, and look at that, almost 8% CAGR growth expectations of $365 billion. Also looking at how things move, especially with the Ayushman Bharat Pradhan Mantri Jan Arogya Yojana. So that's also an important scheme which is being there from the central government, and other regulatory support coming in for the specialized therapy. So these are key triggers for the Indian healthcare industries to move ahead. Other capacity addition details are also out here. This is of course in Dombivli, this is Pune 2.0. Another project they have in Meera Bhayandar, and last but of course very much focus is there on BKC. And this is the overall details which are there. The bed capacity we can see on the screen as well. But what may work for Jupiter Hospital? Analysts remain bullish. That's the first point. Second point is the steady growth in the operational parameters. That's what we have seen, and it's doing well over the last 4 to 5 years. Industry tailwinds are there in the long term, especially well. The hospital theme is there, and that's why they are commanding premium valuation and strong expansion plans at play as well, be it greenfield or brownfield. Also, what may not work for the company, the return ratio margins may be compressed due to the expansion. That's the first point. Second point, the execution risk, especially when you have a greenfield project. That means that you have to start it right from the beginning. So execution risk might be there. Valuations are fairly expensive in this sector and even for the company, and I'll get you the peer analysis but in a while. So this is the entire picture for Jupiter Lifeline. But KYC ratings, what are there? I have tweaked it a bit because this is a hospital company. I have got in operational parameters here in my analysis, and of course we are going to miss out on the return ratios because it's largely known how a model works. Also, shareholding street trade, these are the usual ones, we have kept it, but valuations, I have got 5 hospital companies where we'll get the valuations. Is it the cheapest, expensive or fairly valued? And lastly, the analytic. How is the street looking like? Is it fully bullish or is there a mixed sentiment? So this is the entire picture for the rating parameters, but let's start with income statement and see what's the story for Jupiter Lifeline Hospitals. And largely the CAGR numbers are pretty decent for a hospital company to grow in this business cycle. 19% CAGR coming in. The PAT numbers also have started moving. That's why I had mentioned you about steady operational parameters. Let's have a look at how the numbers have panned out, especially on the margin front. It's been very stable, 21, 23, 23, 23. It looks like it's the similar margins is being made. And remember, the company is going through expansion, so there is some value accretion happening, a little bit of operational leverage also. Fourth quarter was impacted, and the reason I had mentioned earlier, the depreciation losses and the expansions coming in. But net the numbers are satisfying, so I've given this a strong thumbs up. Balance sheet, remember, whenever there is an expansion, there is borrowings, there is some stretching, and that's what's happening here in FY26. Look at this amount, that's 501 crore rupees. So balance sheet does seem to be a bit stretched. Around 58 crore of cash is there. So of course the expansion is there, so a little bit of stretch would be there. So I'm going to give this a neutral rating. So we spoke about income statement, we spoke about balance sheet. Let's understand the cash flow segment, how things pan out, and largely the cash flow is also kind of neutral. We could say no major jump has happened from the cash flow from operation, but a little bit of aberration because more investing activities are panning out. The conversions are decent when it comes to the flows with the EBITDA. So let's keep it a neutral rating when it comes to the cash flow segment. So we are done with 3 ratings. Let's move on to the 4th rating, how important this is. And yes, it's very much important if you are tracking a hospital company, and I've taken operational parameters here. We have mentioned the average occupancy rates. It was earlier 54% in FY22, but after that it has increased but kind of stabilized over the last 3 to 4 years, coming in at roughly 62 odd %. Of course, there's a Dombivli occupancy at play as well, so a little bit of adjustment plus minus 1%, but this is the ratio to look at. From 48,711 rupees, call it inflation, call it the pricing, call it the value addition, the momentum has come to almost 68,000 for FY26, so that has shown a good strength. Of course, the IPD OPD volumes have also picked up, so net I have given this a strong thumbs up when it comes to the operational parameters. Let's understand the shareholding, and remember, take things with how the analysis has happened. The promoter stake has been unchanged largely at around 41%, and very minor changes happening in the institutions. That means they are still holding it up when it comes to the stake. So right now, as of now, net it's a neutral rating as well. Apart from shareholding, let's talk about street cred. How much stock has actually given the returns? Remember, the stock was listed in the year 2023. So from there, the IPO price, the stock has doubled up 2.2 times. So somebody is holding and showing patience in this counter. Congratulations. In the short term also, we see from April lows, the stock has recovered and is up 30%. But in middle, there was a volatility at play as well. But net, I would still give this a neutral rating. Let's talk about valuations, and I had promised you earlier that there would be 5 companies where I'll get you the valuation. The 12-month forward PE ratio, this is what we are talking about. Jupiter Life is at 42 times here. It's on the lower side, slightly cheaper, but remember, the entire sector is slightly expensive. It's a defensive also, so a lot of institutional interest comes here. 62 times. We have KIMS Hospital, that's also trading at one of the highest levels. Of course, we have Rainbow and Apollo Hospitals as well, that's around 49 times. So this is the entire picture for the valuations, but the last important criteria is the analyst stake. What are the analysts doing? 8 analysts are actually tracking the stock. None of them have a sell or a hold, but 100% buy coming in from this. So of course, there is a good momentum, but remember, the 12-month target price, because the stock has gone up, is around 1640. So the risk reward ratio as of now, not that good, or I could say valuations might not be that attractive. So this is the entire picture we have taken for analyst stake, and it's a strong thumbs up. But let's get you all the ratings together. Where does this actually stand? How things move? And I like to point out the income statement has done well. Neutral stance for balance and cash flow, but operational parameters, the hospital has done well. Shareholding, street cred, we could say, because we largely neutral. Valuations, also I have given a neutral rating, and analyst stake has been strong. But let's give you the total picture of how things look. Don't worry about the missing numbers, all the numbers are here. So you don't have to worry about it. It's 5.5 out of 8. It's on the higher side of the average numbers which we generally give our company, and that is Jupiter Lifeline Hospitals for you. But our conversation doesn't end here. Our conversation continues with Ankit Thakur. He's the MD and CEO of Jupiter Lifeline Hospitals, where he will answer all our doubts and queries. We are joined in by Dr. Ankit Thakur. He's the MD and CEO at Jupiter Lifeline Hospitals. Good afternoon, doctor. It's always a pleasure to have you with us, and a lot of expansion announcements are coming in, and just maybe if you could give us a little bit of flavor about that, and how things are moving for the company.
Hello, good afternoon. Pleasure to be back. So on the expansion front, the most recent expansion has been Dombivli. We commissioned it in the last quarter of the previous financial year, February end. We started Dombivli. We have 3 more hospitals on the way. Pune South is under construction, scheduled to start sometime in calendar year 28. We are absolutely on track. No chances of any negative surprises there. We are doing 2 more in the Mumbai region. One in Mira Road and one in BKC, and both those projects will follow the Pune South.
Right. So everything is going as per the plans which was earlier disclosed as well. No delay, or you could say any kind of changes, right?
Absolutely.
Fair enough. But let's talk a little bit about operational numbers. I know you are in the silent period. We do not want the exact numbers. We just want to understand whether it's going up or down. Just a little bit on that, on the current occupancy rates, the operational bed capacities. What are the targets for the long term?
Yeah, so qualitatively, I think it is pretty much similar. Thane is in the mid 70% occupancy range. Pune is high 60s, and Indore is about 50 odd percent. That is the zip code of occupancy over the last couple of months. And going forward, of course, all hospitals are designed to peak out their occupancy in the 75 odd percent range, after which it does not become possible to increase further occupancy at any hospital. Dombivli is in its infancy, just in its first quarter, so too early to talk about occupancy numbers there. It will take some more time to start flowing in cash.
Right, and any new geographies which you are thinking that there can be an addition to your portfolio, because I know it's largely West Indian product. There's a little bit of there in Indore, but is there any other places you are scouting where you think your expansion can happen?
So I think we are quite committed to Western India for the foreseeable future. We think there are a lot of opportunities in Western India. It continues to be a high opportunity and low supply market as far as organized healthcare is concerned. And of course, I think we are amongst the stronger brands in the region also. So for all things considered, we think that we would like to remain focused to Western India for our next cycle of growth as well.
Fair enough. That's the important takeaway coming in. West India would be the focus. But also, sir, if you could explain us any kind of a capex planning, because I think there's a lot of greenfield operations are at play. So any capex which has been earmarked for the next year, or will it be just in operational? And the funding, will it be internal accrual, or is there a little bit of debt or some external fundraise also at play?
So currently we hold about 500 odd crores in cash.
Accrual, or is there a little bit of debt or some external fundraise also at play?
So currently we hold about 500 odd crores in cash. And if you look at the last year's EBITDA, which was around 350 odd crores, extrapolated the way you feel like for the next 4 or 5 years, then you will see that the cash we hold and the internal accruals that we'll generate over 4 to 5 years should be largely sufficient to take us over the line as far as the current cycle of capex is concerned. So I think we should be fairly well placed for this round. Having said that, on the balance sheet or leverage level, we have discussed this in the board, and we believe that we would like to cap leverage at about 3 times of EBITDA, and within that level of debt, we are happy to explore further growth opportunities.
Exactly. Dr. Thakur, speaking of exploration, the land bank is very much important, because it seems like you are looking at some acquisitions also. We mentioned about the BKC land which was there. It's of course a very prime area for the uninitiated, but wanted to understand any other land banks which you are looking for, especially in the MMR region maybe?
Yeah, so MMR we believe definitely has much more opportunity, and it continues to be one of the more underserved parts of the country for the stature of city of Mumbai. I think it leaves a lot to be desired in terms of the health situation. So I think MMR is a strong opportunity market besides some other large cities in Western India. But we constantly keep evaluating opportunities and land acquisition as and when they arise. And when we find something good, we'll exercise that, and we'll be happy to talk to you then.
So there is, of course, evaluation keeps going on. It's a regular course of the business. But Dr. Thakur, any new segments also which you're looking like around? If you make an hospital, is there a pharmacy or something if you're looking like, or putting your own brand out? Are you thinking in those lines also?
So from time to time, some pathology and pharmacy people keep asking. Those are the two ancillary segments. We may look at something as an ancillary to support the primary business as per opportunities that may arise. But one thing I want to confirm to you and everybody is that as far as the mainstay of the business is concerned, we are not looking at diversification. We are wanting to continue, being a hospital or a healthcare provider as a primary function. And for cost optimization, margin improvement, ancillary enhancement of services, etc., we may keep doing something on the side from time to time for pharmacy, pathology, etc., but nothing significant.
To core business, you already have the plan, you have the money, and that's a very disciplined way of, addressing our viewers in KYC. But I wanted to understand something more apart from the company. How is the Indian healthcare industry looking like? What are the growth triggers and the challenges? If you could just explain us that, in detail.
I think this is a very, very interesting and exciting time to be in the healthcare space. The healthcare industry, I think, is now attaining a critical inflection point wherein most of the country has been exposed now to what does organized, high-end, high-quality, healthcare look like. Going forward from here, I think it is in my view, a multi-decade journey before we can respectably cover India as far as quality healthcare is concerned. Even today, like we said, in Mumbai, there are a lot of areas where supplies are concerned. There are a lot of areas which are served by unorganized or secondary care, providers rather than high-end health providers. So, of course, if this is the situation in Mumbai, once you move out into smaller tier 2 and 3 cities, the situation is much worse in the sense of supply. So I think on the greenfield route, of course, acquisitions, M&A and balance sheet level consolidation will keep happening. But in terms of real capacity expansion, there is a lot to be done.
There's a lot to be done. The story has just started. And of course, the medical industry is at an inflection point and a multi-decade opportunity. I have one more industry question, and this is very important right now, is the international medical tourism. Catchment area like South Asia, Africa, we're seeing so much of that inbound numbers coming up. How do you see this, and how as a whole the industry is placed, or India is placed for this?
So for medical tourism, I think it's a little bit of a nuanced analysis. While the glamorous story is comparing cost of healthcare in the developed world versus India and showing the delta, but for practical purposes, people don't travel to save money, but they travel for access, which is why you see most of the medical tourists inbound coming from Middle East and Africa, where they don't have access to quality healthcare in their place of residence. So that will be the predominant growth driver. Currently, they also travel for secondary, maybe tertiary and above services. As Middle East and Africa start developing their own healthcare systems, if India has to continue to be an important destination for medical travel, we will have to attract more of quaternary care and highly specialized kind of services and not just rely on the routine work. So I think that has to be the primary target for India, to supply higher end medical services on the international front.
All right, very nicely put, your views on the industry. Dr. Thakur, it's always a pleasure to have you with us, and welcome back to KYC. Best of luck with the future. And yes, there's an important corporate development of share split also. In a couple of days, the record date will be also coming in. It's always a pleasure to have you. Thank you, sir.
Thank you.
Well, that's the management of Jupiter Lifeline Hospitals. Bullish commentary coming on the industry as well. But yes, when there is expansion, there is a little bit of short-term pressure on the financials. That's what we have seen in the street, but the stock has recovered as well. And for these interesting stories like this and interesting industry snippets as well, keep watching KYC and stay tuned to NDTV Profit.
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform. Digital first. Virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trend. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editors Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us. Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. You know, when we speak about housing and buying a house, the tendency is to speak from the lens of somebody who is living in Mumbai or Bengaluru or New Delhi. And as a result of which, the tendency is to talk about numbers that are in the couple of crores, right? At least over 1 crore. We don't talk about affordable housing too much. And I think I would like to change that, because what about the possibility of somebody buying a much cheaper property and somebody who has the ability to buy it outright? Should they still go out and do that, or should they still take a loan? That's the question that I'm asking. And we'll talk about a few other aspects about how to manage EMI, etc. My guest today is Megha Malpani, who's a partner at Zvest Financial Services. Megha, thanks so much for taking the time. I think most of your clients also will be those that are buying property in your metro cities. But a hypothetical scenario, they could also be earning in a metro city but decide to buy a property back home, wherever their hometown is, right, for future requirements or maybe for their parents. So I think it's a valid conversation. First off, what are the pros and cons of buying a property outright if you can do it, and something anywhere between 20 lakhs and 1 crore?
Right. Alex, thank you so much for having me here, and it's always a pleasure to talk to you. I think, your question is very pertinent because, we are seeing a lot of trends and interest in the clients who stay in metro cities to, kind of look for properties, in their hometowns, or, which do not have the kind of urban environment, where they would probably want to settle in for a more peaceful and a better, I would say better air and good quality water. But to my mind, the question on whether you should take a loan or not is both financial and psychological and behavioral at the same time.
Okay, let's spell that out and let's break it into those sub-segments, right? So why financial? Because one would assume that if you have substantial savings, not taking a loan would cut an expense. Isn't that the way to look at it?
Right. So let me give you the math. As you rightly called out, if you are in a Bangalore or a Mumbai or a Delhi, the metro actually forces you to take the loan.
You don't have a choice.
But for somebody who's looking at a second property in one of these areas, this becomes a choice. And you have to evaluate it in terms of context of the financial bearing that it has. Now, let's assume that for a moment that equity is going to give you a long-term return of say 12% over a long-term period. Of course, these returns are not linear, right? knock off the tax, which is at about 12.5% for long-term capital gains, you stand to gain close to about 10.5%. Also, let us move another 10% as a margin of safety, which gives us a number of close to about 9.45%. Today, if you look at the home loan interest rates, given where the repo is at 5.25%, even if you keep a spread of 200 basis points, for a borrower with a good credit rating, typically the home loan would come at about close to 8%. So if you are getting a home loan rate which is less than 9.45%, it makes financial sense to consider taking a loan. But as I said, it is more behavioral, because you need to understand that, EMI is a certain thing. Whereas a 9.5 to 10.5% return is a range over a very, very long period. If you're somebody who cannot have the temperament to, have drawdowns in the portfolio, you might just be better off paying for the loan if you have additional surplus. And this asset in general is not just concentrating all your assets into one illiquid bet in a tier 2 or a tier 3 place. If you're somebody who says that, I would probably just have the funds lying, in the savings account or in a fixed deposit, I think it absolutely does not make sense to do that, but to prepay the loan, pay for the property outright, because the rate on fixed deposits or savings account is much lower than the rate of interest in this case.
Okay, but I'm curious about why you say that, because Megha, so you presented two options, right? One, you invest in equity assets for the long term, and these are not linear, and you've described that very well. The other option is to buy it outright. The third option is to invest it in a safe instrument where you don't run the risk of capital erosion or loss of capital, which is a fixed income instrument, which is a fixed deposit, etc. If 8.5% is your rate of interest that you're paying, and you're getting 6%, or you're getting even 5% post-tax, or 4.5% post-tax, wouldn't it be better than what you would be paying otherwise, which is that 4% or so, that delta that comes through, the difference between not having the fixed deposit and having the fixed deposit?
I wouldn't think so, Alex, because you'll be paying additional for the interest and through the EMIs in this case. So I would not suggest. But having said that, I made an important point here, which was that you need to ensure that this is not the only asset that you have. If you have enough assets which are lying in your contingency funds, you have assets parked, you have done your risk transfers in place, you have built a basic portfolio, then it might make sense to pay outright. That's the point that I'd like to make here.
Interesting. Okay. The other thing to consider is, Megha, how much of your nest egg, for want of a better word, right? Because a lot of people have this large blob of savings, and they don't necessarily segregate it, saying this much of my portfolio is devoted to this part of my life, this much will be accessible only beyond. And of course, bucketing is important, but most people, let's face it, let's be real, most people have this amalgamation of everything, and they look at their portfolio as a whole. So how much of that portfolio is it okay to deplete to buy a house?
I would say in the early years, I'm of the camp that, one should not look into getting into a real estate in the very early stages of your work life, because real estate can only constitute close to about 10% of your overall asset allocation. When you look at asset allocation, it has to have a fair mix of fixed income, equity, gold, and real estate. And if you start off with paying, a larger part of your corpus just into the real estate, I don't think I would be of that camp. I would always believe that, first building your financial assets is more important, and then you can get on to physical assets. And, let's accept it, as you rightly called out, once you start buying a house, that becomes one of your biggest purchases you would ever do in your life.
So, but still, talking
front, I would always believe that, first building your financial assets is more important, and then you can get on to physical assets. And, let's...
Going back to the point of affordability, if the property is not too expensive, it constitutes a much smaller percentage than you would normally pay, because people normally don't have that kind of money in their portfolio. They're buying houses that are multiples of their portfolio, which is where the problem arises. But having said that, there are other advantages that can come from taking a loan, right, Megha, where certain large financial institutions have the wherewithal to go and check certain paperwork to ensure that everything is in order. And so effectively, they're doing quite a bit of your work for you.
Right. And it becomes more important in tier 2 and tier 3 cities where you do not have, the bigger builders, so to say. So before a bank disperses a loan, it typically runs two kind of checks. One is a technical check and one is a legal check. The legal check is done by, the lawyers of the bank, wherein they look for things like, the encumbrance certificate, who is the actual seller, seller of the property. They look for things like occupancy certificate. Is the property RERA compliant? They look for things like... are there any legal disputes, any court cases, etc. The technical analysis would include whether the actual area is same as what is being offered to you. They would also include things like, whether it is completely as per the floor plan. Banks also have a negative checklist wherein they do not, extend loans to certain areas or certain geographies. They would also kind of look at the age of the property. If it is a resale, if it is something which is less, more than 30 years, the tenure of the loan, would be lesser, or the sanctioned amount could be lesser. So you're not just kind of, getting a leverage, but you're also getting somebody to run these very, very important checks, because the bank is first trying to protect its capital before extending you the loan. So I think whether you take a loan or not, even if you're not taking the loan, it is extremely, extremely important that you do these checks independently, because this could be a make or break decision before you buy one of the biggest assets of, one of your life.
Okay. And when you do, which a lot of people end up doing, Megha, irrespective of what we say, people, a lot of times it's an emotional decision. And so people do go out and buy a house and they do go out and take a loan. What strategies would you suggest, Megha, are the best to employ if you want to get rid of your home loan as quickly as possible?
So various strategies could be used, to kind of prepay your loan. And, if you technically see, Alex, while most people take home loan for 20 years or so, in India, most of the people have actually prepaid the loan within 7 to 10 years. Which kind of also gives us a psychological perspective that people do not want to keep extended amount of leverage. Now, what does prepayment do? It is basically a tax-free return, that you are ensuring on that principal amount. I think the ways you can do is, when the rate of interest falls, you can keep your EMI constant. You can increase your EMI and keep the tenure constant and prepay the loan. People could also use proceeds from, say, bonuses, windfall gains, a windfall gain coming from another property sale, ESOPs, RSUs vesting, which they could also use to close the loan earlier. It is also important to note that, the amortization schedule works in such a way that in the initial years, the interest constitutes a larger part of the EMI. So when you prepay in such a way, the amortization schedule works in such a way that in the initial years, the interest constitutes a larger part of the EMI. So when you prepay the loan earlier, it is always going to be more beneficial for you. But, Alex, it is also very important to keep in mind that, this point of, how much this exercise should be done on an annual basis, because the rate of interest on home loan is floating and it keeps changing. The market valuations keep changing. Your income also increases, with your increments every year. So it is a very contextual decision that one has to check, and it, has to be done at a predefined period every year.
Okay. And the last bit, which is when are you paying too much of an EMI? Megha, this is, oftentimes people talk about this in terms of a thumb rule, but really it goes beyond that, because many times there are couples that are contributing to this together, right? And so they have the ability, especially if there are two people that are earning, to increase the velocity of payments.
Right. So, Alex, whether it is one person or two people, I think, you can always club your income and look at the ratio, which we call what is your fixed obligation to income ratio. To my mind, I think when that ratio of all combined EMIs increase 40%, probably you are letting go of your resilience, in terms of your financial independence to some extent. I would say that this is one bit of it, wherein you can say that, if I'm earning 100 rupees, I would, or even in a joint way, I'm earning 100 rupees, 40 rupees is what we would pay for all the loans put together. Another way, I think, where people also end up prepaying, paying a lot more is when they do not reprice the loans. So typically, when the rate of interest increases, banks would increase the rate of interest by default, but the vice versa does not hold true many a times. It becomes, it is important on the borrower to check and get the rate of interest reset so as to ensure that you are not paying a higher rate of interest when a new borrower would pay something lower, because in that context, you could end up, paying at least a couple of lakhs higher on your loan. So I think that is very, very important. And another thing I always want to, keep in mind is that if you are funding your EMIs, from your contingency funds or your long-term savings, I think that is very detrimental. And if you're not able to do that first and you are kind of paying the EMIs, I think that's a danger zone to be in.
Yeah, absolutely. And we've had a conversation in the recent past about what you should use your emergency or contingency fund for. But absolute pleasure having you as always, Megha. Thanks so much for taking the time today.
Thank you. Thank you so much.
All right, we have to slip in a very quick break, but on the other side, we'll talk about macroeconomy and how that should affect your investment strategy. Stay tuned.
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस तेल में। जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूँ? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
They built, they led, they redefined the business conversation. Now, India Inc.'s finest takes center stage. Who will win the NDTV Profit Business Leadership Awards, 26 July on the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. Welcome back. If you've been looking at financial news, then you will see headlines, or you will have seen headlines about Brent crude once again climbing up to over $90 to the barrel. The fact that the rupee has fallen below 96 and it's heading lower. There has been pressure on the currency. Bond yields have been going higher. How should you adjust your fixed income strategy? And what is the likely path ahead for the Reserve Bank of India and an extension for your financial instruments. Devang Shah, who is the head of fixed income at Axis Mutual Fund, joining me to talk about this. Devang, thanks so much for taking the time. I'm wondering, for a fixed income fund manager, more than equity, is this a difficult time to manage a portfolio?
Yeah, definitely, Alex. I think probably you summed it up quite well. So last 6 months has been quite volatile for fixed income markets. You'll actually look across, and it's been thanks to all the ME conflict. And again, we saw significant positivity around markets on bond market specifically when the RBI measures got announced. Also in the same month, around a month back, we also had the positive news about the MOU. But once the MOU has failed and again the oil price started seeing flare up, I think the concerns have started raising again on bond markets, where should yields heading. And our view is that if you'll ask me personally, I think large part of the duration rally is probably behind us, because we have seen now levels significantly around 675, 680. They're gone above 6, 710, 715 levels. So 10-year GSEC had significantly rallied post the MOU announcements and the RBI measures. Similarly, the entire short end of the curve had also, whatever rise in yields that happened, had significantly reversed. Personally, if you ask me, if crude touches again $100, I think somewhere down the line, you continue to see bond market volatility and probably more volatile, specifically on the duration side of the curve.
Okay. The other question, of course, Devangsha, is what happens to inflation outlook and what happens to monetary policy? Because that shifted. At the start of the conflict, a lot of people were saying, oh, the Reserve Bank of India has to come in and increase rates right now. But anybody who understands economy or economics 101 will say that it's actually demand-side inflation that the Reserve Bank of India will target through interest rate hikes. And so therefore this is supply chain disruption. But having said that, this is not an economics class. We're trying to understand, where are the interest rates headed? What is the RBI likely to do?
Yeah. So Alex rightly highlighted, I think RBI did a master stroke by not hiking rates, and many other central banks actually did hike rates due to the oil volatility. But RBI chose to understand that the problem on the ground is, as you rightly highlighted, supply side. And how it is impacting the macroeconomic for India is somewhere down the line the external sector. So they understood that let's look across at what happened in the last 12 months or probably the last 3 months. The external sector significantly got vulnerable. Rupee started seeing a lot of depreciation and we started seeing outflows. So they targeted schemes whereby they can actually get money, attract FDI money back in India, and probably through debt instruments. I think it was a masterstroke from RBI. My understanding is RBI will be patient because, as you rightly highlighted, we still don't know where this entire uncertainty on crude unfolds. And if I look at the inflation perspective, I think still inflation hovers around 4.5%, 5%, or probably in H2, you might see inflation going closer to 5.5%. But we don't see significant upside because RBI in its predictions have targeted crude at 95. Today also, as we talk, we are still at 90 to 93 levels on oil, and that is for the full year. So my view is that unless we see a significant upside risk on inflation, either due to El Nino or crude prices go above 100 again due to another talk or on the town has been Red Sea disruption. If that happens, we again see crude prices going above 100. Then probably RBI might start looking at some bit of rate increases. Otherwise, our view is for the next policy. In fact, till second half of the year, most part of the year, we believe that RBI probably will stay put on policy rates.
Okay. The other thing that I've been hearing, Devang, is, and this is visible in the bank's lending figures as well, is that corporate lending has gone up by banks, right? And that's seemingly because the bond market in India is not as lucrative as it was, as has been before the conflict. And so the question to you is, from your perspective as a fund manager that also manages a credit fund, to say that opportunities exist, the yields would have gone up and those look attractive, right? So is this the time to look at credit as a strong alternative to playing duration? And duration, I'm hoping that my viewers understand this. If not, we can talk about that in some detail.
Yeah. So Alex, completely buy out your point. I think in fact at the beginning of the year, we have done a show before also on this, talking about that this is a year probably for the theme of accrual, because largely you are at the bottom of the interest rate cycle. If whenever the RBI chooses to change the monetary path, I think 100% it will be on the upside. So the rate increase will happen, and whenever rate increases happen or rate hikes happen, so it is actually not positive for duration assets. And that is why our theme all throughout has been that this is the year where probably you should try and build in accrual into your portfolio. As you rightly highlighted, this entire volatility had led to AAA assets. In fact, 2 to 5 year segment is what we like for investors at this point of time, and we are continuously advising that to investors. Today also, as we speak, the 2 to 5 year segment on the AAA side is available at 7.5%. AA and single A assets are available at 8.25 to 9%. So I think these are the levels where you, if you are expecting a shallow interest rate hike cycle, I think accrual is the space to go and probably maintain lower duration across your portfolio. That should be the theme for investors in for the next 6 to 9 months, unless and until we see significant rise in yields. After that, probably the view can change towards duration. But for the year, balanced part of the year, which is next 6 to 9 months, I think accrual is the way to go.
Okay, just a quick primer then, Devang, because we're talking about things in a little bit of a technical way, right? So what is credit? What is duration? Why is duration not a good idea in this kind of a market? Just simply, if you can explain it from your perspective, which is to say that you won't go and buy a long bond right now, which is a bond that has a maturity of over 10 years or thereabouts. Why is that?
So, Alex, how it works in bond markets is the yields and the price are inversely correlated. So, as we spoke, that probably the next move would be rate hikes. And that what does it mean is whenever rate hikes happen, bond market yields go up. Whenever the bond market yields go up, the price of the same bonds go down. And higher the duration, the impact on the prices will be higher. So that is why what we believe so that in this environment where somewhere down the line, our assessment is that we are at the bottom of the interest rate cycle. Oil is still continues to hover between $85 to $95. We somewhere down the line believe that RBI's, if the next move will be slowly and gradually towards rate hike, they will not be in a panic mode. They'll probably look at inflation cycle. They'll probably look at flows coming through the FCNR deposit. But second half of the year, there are opportunities for rate hikes. If rate hike happens, duration assets which have longer maturities, the yields will go up, which will lead to price fall, and returns for those funds which own those securities will be muted. And hence, you should probably look at accrual as a strategy whereby you maintain lower duration. They are also offering a cushion by the way of higher yields and higher YTMs. And that is why we believe for the remaining part of the year, accrual as a theme makes more sense for investors.
Very, very well put and very well explained. I can see, Devang, that you've been asked to explain this many times. But having said that, what is a sweet spot, in your opinion, on the yield curve and on the duration chart?
So, Alex, I think 2 to 5 year segment. So I always divide the clients into 2 or 3 categories. One is a category of investors who's looking at parking solutions and somewhere down the line looking at opportunities on various alternatives where he wants to invest. I think for parking solutions, I always advise clients to look at money market funds as a category. For investors who are medium-term debt investors, and it is important to understand what is your time horizon while you're investing in debt. So if you're looking at a medium-term debt investment horizon, I think 2 to 5 years spot on the duration side makes a lot of sense. Generally, the category of funds which probably fit in this 2 to 5 year duration bucket are short to medium-term funds. And third is always a category of investors who want to probably take a contra bet against markets and probably try to play very tactical. For such investors, we always advise gilt funds. But at this point of time, I would say the sweet spot would be the 2 to 5 year segment.
2 to 5 year segment. Okay. Just to close out, what is the strategy that is being employed in hybrid funds? Because that is something that you have a say on as well.
So the same strategy on hybrid funds on the debt side, what we are doing right now is maintaining a significantly accrual bias positions where somewhere we are building the duration of these hybrid strategies also on the debt side have been significantly reduced over the last 6 to 12 months. We were running around 8 to 9 year duration on the debt side there. We have significantly reduced it to 2.5 year duration. And the entire focus is on building in high accrual carry assets with significantly low duration, which offer somewhere down the line stability in your returns in this kind of choppy markets where even equity as an asset class has not been performing. I think the fixed income space is generally built in to somewhere down the line provide cushion to the portfolio and bring in stability in the returns.
Yeah, okay, well described. Devang, as always, thank you so much for taking the time. Pleasure having you. You make a slightly complicated topic easier to understand.
Thanks, Alex. Thanks for having us.
All right, well, that brings us to the end of this edition of Your Money Matters. Thanks so much for tuning in. Stay tuned. Lots more coming up on NDTV Profit.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
This is India Inc.'s Roll of Honor, recognizing the leaders shaping India's growth story, where ambition, enterprise and excellence meet. In the presence of the Finance Minister, Nirmala Sitharaman. NDTV Profit.
Right, on Earnings Edge, we're in conversation with Puneet Chhatwal, MD and CEO of IHCL. It's been a strong set of numbers, despite concerns of what geopolitical headwinds would do in terms of impact to the business. Mr. Chhatwal, let me start right there. What has worked and followed through in terms of the trends that you have seen so far from the previous quarter? Because this was one where we expected some extent of impact.
We have been talking about it since a few quarters. The management has been driving diversification of top line by brand, by geography, and by contract type. So what helps us is that domestic remains very strong. Of course, Dubai was very weak versus what it used to be. London has not been very strong, but it's coming back now very strongly this quarter. Maldives has not been strong. So the impact was very well mitigated by the hotel business, especially in our renovated portfolio, our intelligent use of CapEx in Taj Palace, in Goa, in Taj West End, which has driven not just top line growth, but has also driven very strong margins.
And do you see some of these trends where you've had mitigating factors actually continue? Because one presumes that everything that you saw in Q1 in terms of the Dubai properties, maybe the Maldives properties, will continue now, even as we speak, because that situation has not cleared yet.
That's one, and then on top of that, we have to add the airline catering business. That's also a bit under pressure. Was under pressure in Q1, remains under pressure in Q2. But having said that, the hotel segment on the domestic front is been very robust, as I said earlier. And the first 3 weeks of July have really surprised all of us. We are looking at a much higher growth in the first 3 weeks than we have seen in the entire first quarter.
Oh, and what do you think is driving that?
Demand on the domestic front remains strong. Iconic assets like Taj attract more business, higher, revenue growth index than other competitive brands. That's how we achieved an occupancy of 82%. Our new openings, our not like-for-like growth is very strong. We should be opening a hotel a week. I mean, approximately 55 to 60 hotels should open new this year. Very strong pipeline, and the mix in the pipeline is also very strong. So it's like 90% of the pipeline is capital light. So all that, when it adds up, should help us to keep delivering on the promise that we have made or what we have guided for.
So, give us a little bit of a sense on what the occupancies and room rates are looking like for the rest of FY27 compared to what you've seen, the data we have for Q1, and then you're seeing the first 3 weeks of July as well. Are you seeing occupancies remaining at these levels or trending higher? What about room rates? What is the outlook there?
Well, as I said earlier, it depends by brand. Taj remains very, very strong in its performance. Ginger is going from strength to strength in the last 3-4 years, so is expected to also perform very well. Actually, our growth businesses, which is Ginger, Ama, Tree of Life, and Cumin, should do at least a 25% CAGR. That's something we've seen in the past, is happening as we speak. Markets like Goa and many other new markets are performing very, very well, and we have a very strong presence in some of these markets. So Bangalore is doing very well, Goa is doing very well, Delhi has been doing well, and Mumbai is obviously at the top of the charts. So I don't see any change in drop in occupancy or in rate in some of these key markets. Actually, if I would look at it, from the point of view that we're going to have the BRICS summit later this year, we're going to get more business delegations in the months to come, post-October. We should, coupled with the wedding dates, maintain a double-digit RevPAR growth, although we have guided for 7 to 9, but it would be fair to say that at the moment, it's trending at a much higher level.
So you think we could see the 7 to 9 guidance for RevPAR growth actually being beaten on the upside?
Up till now, it is for the first quarter plus the first 3 weeks in July. We will see how we could, as management, provide new guidance at the end of this second quarter.
Okay, so there's possibility of a new guidance at end of second quarter. Talk to us a little bit, Mr. Chhatwal, about management fees. And, you've talked about this model as well. Do you see management fees growing faster than room revenue?
At the moment, it is. I mean, it's showing a 26% growth in management fees, and the room revenue is not showing 26%. I think it will keep growing because of the strong pipeline, because of the new openings. And also, as I said, some of the things, when they become normal, the fees that we earn in Dubai in dollars translates into a lot of rupees. At the moment, it is under pressure. So there is a hidden upside potential that we have from fees, especially coming from the 3 hotels in Dubai.
Is there a hidden upside potential from the air catering business as well? You mentioned a little previously in this conversation how it has underperformed. Do you see an improvement there, and in what timeline?
Absolutely. The new kitchen we have opened in Noida, then there is a new operation we're doing in Navi Mumbai airport. So they will stabilize. And we have all seen, Tamanna, that whenever there is any crisis, there is pressure on the demand, whether it's airline travel or hospitality, but it comes back very strong. My favorite example is, it's like a plastic ball. You push it underwater, it's fine. The moment you release it, it comes back up. So I think both the airline segment as well as the areas that are facing the brunt of the crisis will come back very strong. Maybe it's another 3 or 6 months that is needed, but that upside potential is there.
For the last, I would say, couple of years, one constant refrain for the space has been that demand is outstripping supply. This is for your industry as a whole. Do you think we've reached the peak of that trend or a lot more to go?
Being in the sector, I would like to believe we have not reached the peak and the best is yet to come. But at some point, the demand and supply will converge because not much construction activity on the hotel front happened during COVID, and it takes 3 to 5 years to build new hotels. So whatever was under construction got completed, but the new supply hasn't come in the same fashion. I think India needs a lot of branded hotel supply. We are at only 200,000. That's equivalent of Dubai and Singapore in terms of branded hotel supply. So a lot needs to be done. We need exponential growth in number of rooms to cope up with the demand and to cope up with the new India, where businesses require you to travel to tier 2, tier 3 cities. You need more airports which are getting built. You need more airlines. So a lot of that is happening, but it just takes time. There's no magic formula to do it overnight.
Yeah. Just one last piece really about acquisitions and plans ahead, Mr. Chatwal. I want to ask you about Oriental Hotels. Is there any plan to increase a stake and make an acquisition from the promoter family that owns about 24.5%? I'm asking you upfront because this is the buzz that is on, and I think we have the opportunity to speak about it. As clear an answer as you can give us. Is there business sense to it? Is this something being looked at?
Simplification in a company which is in existence over 100 years is a part and parcel of any strategy. For some odd reasons, Oriental Hotels has been on the ticker of most of the news channel for last 7-8 years. It's a question which keeps coming every quarter or every now and then. I think we as a Tata Group company have been very good partners with all. If there was an opportunity to simplify, to increase our shareholding or to do anything else or growth within that company, we would always do that, and that's the board of that listed company that will decide what's the best step for it. But for some odd reason, this amongst all the other group companies, this one has created most speculations, but not now. It's ongoing for 7 years, as I said.
No, that's all right. But what is happening right now? So as I understand it, if there is an opportunity, this would make business sense for you.
Every opportunity that makes business sense, it's the job of management to go for it, be it Oriental, be it a new acquisition like Atmantan or Ank and Pride, or our recent openings in Frankfurt or the lodge in South Africa. So we keep working on all opportunities and to get things done which have been stuck for ages, like Bandstand. It's been stuck for 17 years, and it's now the excavations are getting completed. So we're almost 90% there. I think we'll work on that. I mean, I don't have a concrete answer to give you. If
let me contextualize it, because in December last year, the call was taken to exit Taj GVK. So I suppose that's why that interest has been spurred, that you're all in or you're not with the way that you're running the business. Just want to get a sense of what is the sense with Oriental.
Tamanna, we had a very good, and we still have a great relationship with the GVK group. We kept all the contracts, and that family at that point decided that they want to do something with hotel business for their own internal thing. And it was a good opportunity for us to exit with a minority stake and at the same time keep the contracts. That's the ideal world. From their point of view, it was also ideal world because they got full control of the portfolio. They are now the main promoter alone, and it made absolute win-win sense. And if something like this, and it did not happen overnight, there were discussions. that kept going on for a long time. And when the right moment came, things happened. Similarly, for Roots Corporation, we did. We bought out our partners in Roots Corporation 3-4 years ago, and we made it 100% subsidiary of ours. So that gave us the flexibility to do with Ginger what we have done. So as and when any opportunity comes, we will look at it carefully, cautiously, diligently, and do what we feel is the right thing to do, obviously guided by the Board of Indian Hotels.
Okay, thank you so much, Mr. Chitwal, for answering all of our questions on what has been a stellar quarter and focus on IHCL. Thank you so much.
Thank you. Thank you.
Rakesh Sharma, Joint Managing Director at Bajaj Auto, joins in. Rakesh, welcome to the show. Always a pleasure to speak to you. A very interesting quarter right now if you have to look at the numbers, because volumes are strong, revenues are strong, margins have held up as well in spite of everyone talking about the impact of West Asia crisis across industries, right? If you have to look at FY27, do you think it is still going to be the export business that is going to drive growth? Because the only concern that I heard from a lot of brokerages, a lot of investors is that why is the domestic business not firing to that extent?
Yes, foremost, I must say that it was a very difficult quarter because there was RM inflation, there was supply chain disruption, there were logistics issues, and given our size of international business, these logistics issues do have a big impact, and it required the entire company to really come together. And for me, the milestone is really the various functions coming together on a very dynamic and daily basis to deliver a quarter in this environment, and for it to be record breaking on all parameters was certainly very confidence inspiring. I think the environment is going to remain volatile. I don't think that there is one crisis after the other. So we will continue to see volatility, but we have to learn to live with it. Exports, strong outlook based on the order books that we have and based on the assessments of our team. It's a strong order book. It is the African and the Latin American markets, part of ASEAN, have proved to be very resilient as an industry. And that's really very good news for us because we've got some excellent competitive positions over there. When you come to domestic, there is no, I would like to just frame the lens through which we look at domestic so that I can share that with you. We don't really look at domestic two-wheelers as one number because it's now there are so many meaningfully sized constituent parts in it which are behaving so differently that you lose a lot of meaning and understanding of the market if you just look at domestic. So, for instance, I'll tell you the two-wheelers are growing at 14%, but within that, electric scooters are growing at 70%, 100cc bikes are growing at 3%, 150cc plus bikes, which is our sort of key battleground, the top half of the industry, they are growing at 25%. The 125cc's are growing at 3 or 4%. So it is very important to disaggregate this and understand how it impacts us. Now, if I look at where Bajaj Auto is strongly positioned, where our management focus is, then I say that we've already talked about exports. That's very strong. 40% of our revenues are coming from there. We have a good outlook of hopefully breaching the 250,000 mark with very good profitability in the coming months. Then the second part is the electric business. We've got a good position in electric scooters. Remember that we got out of scooters in 2007. And then on the back of electric, we've come back into the scooter business and rapidly come to at least a number 2 position, sometimes number 1, but very, very close to in the leadership stakes out there.
Yeah.
With double-digit profitability in the electric business. Then if you look at the electric auto business or the three-wheeler business, people don't, that's almost like 20% of our whole business. It's almost now rivaling the motorcycle business. And solid market position, tremendous growth in e-autos.
Sure.
They doubled, And finally, if you look at the 150cc plus segment, I said it's a 25% growth. We have now seen market share expansion, albeit at a small pace in Q4 and in Q1 in this segment. And it's also going to see a lot of action in terms of new product introductions, etc., from our side. So our segments, the one which we are really, really strongly focused on, seem to be having a really good tailwind for us to capitalize on.
Indeed, Rakesh. This is Alex, and I think you've described all of these categories so well. But I do want to ask about the export segment from the lens of comments that you've made, I believe, in con calls, where you've said that if it were not for supply chain issues, the numbers in the first quarter could actually have been substantially higher. So what can you tell us about the situation on the ground as things stand right now? Because a few of the areas that you do operate in are volatile, even as things stand right now.
Yes, Alex, if you recall in the quarter which has gone by, April and May, we were besieged with a lot of manpower migration, LPG shortages, which sort of disrupted a lot of vendors and our own production. So April and May were very difficult months from that point of view. I must say those pressures have eased off. But at the same time, there is a lot of shortage of shipping opportunities. Bajaj Auto exports a container every 10 minutes. That is the scale of the operation. And we need 4 to 6 shipments per day. And the shipping opportunities have reduced, which makes this whole thing difficult. So I would say that we were expecting to reach the 1.5 million mark, but we could hit 1.4 billion. So I would say yes, about 100,000 to 120,000 units were lost, mostly in exports, but also in our electric business, both three-wheelers and two-wheelers.
Rakesh, I'm going to just switch focus from the export to the domestic yet again. You spoke about the 125 to 160cc segment upgrades that are coming in as well. Now, if you're talking about the launches that happen in this segment, will that help the company regain the market share in the core motorcycle segment in FY27?
Yes, of course. But let me tell you, all these segments we are participating are core to the business. The motorcycle business is 25% of our revenues. So just to put that in context, if you permit me to roll back a little bit in the history, the thing is that when ABS regulations came in, we moved very fast in the market and brought in new products extended the Pulsar brand into the 125cc, which gave us a very good market share expansion for 2 to 3 years. But we also saw that by FY25 and in FY26, the end of product life cycle fatigue had set into the portfolio, which had slowed down the portfolio. And there was a weakness in the shares. Now, our first priority was in this segment, if I simplistically break it up between the 125cc, which is substantial, and the 152 to the 400cc subsegments. Then our first priority was to launch products in the 150cc plus segment, which we did after the festive in November, December. And if you see the outcomes on the basis of Vahan registrations, you will see there is market share gain in the 150cc plus segment in Q3 and Q4. 9 upgrades were put in place in the period of November to March. And they have given us a very good uptick in market share, confidence building. Now, as we go forward in the year, we are going to shift focus to include even product launches even in the 125cc segment. So not just upgrades. Now going forward, we will have an absolutely new model, albeit under the Pulsar brand, in the 125cc as well as in the 150, 160. And along with that, there will be around 8 other refreshes. All this happening in the next 6 weeks. So it's a hectic quarter from a product innovation part of it. So that would completely reinvigorate the portfolio, which was sort of at the end of its potency from, let's say, September onwards. And we are hopeful that that should, get us some gains in competitive position.
Okay. Mr. Sharma, Manna here. I think right now the stock is a darling of the street. Everyone's very excited about the numbers, especially because of exports. But one thing which one should keep an eye on it is what is happening with your EV business. Now, I want to understand how you're thinking about it. Are you looking at EVs eventually cannibalizing ICE scooters? What is the kind of growth you're seeing there? And sorry, I'm bundling up all of these questions, but what is the split right now between two-wheelers and three-wheelers in your EV portfolio?
Well, first of all, we have always been bullish about EVs. We were amongst the first to put in an EV scooter way back in 2020. And I must say, it was at a considerable loss at that time. But the company was backing up the development of the EV segment. And of course, with the increase in gasoline prices, those are always a very strong trigger for shift from petrol to or gasoline or conventional fuels to electric. And that's what we are seeing. So the industry is going to be strong. Already, electric scooters are 25% of ICE scooters. So it's substantial. We certainly think, based on the, again, operating economics, this trend will continue over the next period. And we are very happy with it because we were out of scooters. We had decided to step out of scooters way back in 2007. Now, this gives us an entry back into this very, very important segment, not just in India, but also overseas. And that will happen as soon as capacities get unlocked. So we are, churning out about 50,000 units per month. We are unlocking capacity immediately so that at least we can go up to 60,000 and then investing in substantial capacity expansion over the next 12 to 18 months. Similarly, in three-wheelers. Three-wheelers also, in fact, the progress of e-autos, the electric vehicle segment in three-wheelers has been very, very spectacular. And today, e-autos account for about 40-45% of the L5 category, as we call it. Now, if you see there, we have got the widest portfolio, I think, with 12 models, which go from the humble e-rig right up to the very big three-wheeler with the longest range at an 18 kilowatt-hour battery. So there are 12 models which are now there in that portfolio to attack this segment, which is growing big. And as the segment expands like this, several sub-segments and use cases emerge. And that is our whole strategy of being able to laser sharp attack sub-segments which are emerging as both these electric categories develop over a period of time.
So just a couple of quick follow-ups. You talked about 50,000 units right now, scaling up to 60,000 in about 12 months. What is the kind of output that you see on electric vehicles?
No, I said immediately scaling up to 60,000 in the immediate term.
Yes.
And then, we are being challenged on capacity in electric, in three-wheelers, and high-end motorcycles. So today our capacity is around 7 million units, and we want to take it up to about over 9 million units per annum progressively over the next 12 to 15 months or so.
Okay. I just wanted to get your sense on if you're seeing any impact of El Nino, patchy monsoons, demand at all in any categories right now, Mr. Sharma, because you're more likely to see a first-hand impact than anyone else and before anyone else. Are you seeing any signs of trouble there?
Well, I won't be able to isolate it down to El Nino. It is still very early days, and the monsoon is bringing some cheer in many parts of the country. But I must say this, that the bottom half of the market is really underperforming. In fact, it is very, very low single digit. And the top half, particularly, like I said, the 150cc plus segment, is growing at 25%. So it's a very wide disparity. And then if I look at it state-wise also, there are states which are in negative, and there are states which are growing at 25-30%. So it is perhaps reflecting the structure or the distribution of purchasing power in our economy. And the environment is tough, but there are significant segments which are growing as if, there is no problem. And there are segments which are really underperforming.
On that note, Mr. Sharma, thanks so much for taking the time. We enjoy our conversations with you. Wish you all the best in FY27.
Thank you very much, Alec. Thank you.
जानते हैं मैं एलीट मैट्रिमनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
Now SEBI came out with BRSR, Business Responsibility and Sustainability Report. The important thing to notice there is that these are quantifiable numbers which can be compared. So these are comparable, these are quantifiable. So that is the more important thing. So an investor now can know how a company is doing, and he can make comparison between one company and the other, and also over a period of time. So far as the other players are concerned, the proxy advisory firms, they are also helping the investors in evaluating the companies, how they are doing. And in doing this, India has reached at a level today where we can claim that we are one of the best in the world.
This is India Inc.'s Roll of Honor, recognizing the leaders shaping India's growth story, where ambition, enterprise and excellence meet. In the presence of the Finance Minister, Nirmala Sitharaman. NDTV Profit Business Leadership Awards, 26 July on the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. Hello and welcome to The Big Question. Here I am on NDTV Profit. I'm Vikram Oza. Now the question is quite simple right before you. What if your investment portfolio reflected not just your financial goals, but your personal beliefs, your personal principles as well? That's the debate that we're taking up tonight. India's markets now are seeing this rise of a new investing trend. So in June, the BSE has launched the Satwik 100 Index. And then just weeks later, the NSE has followed up with the Nifty 500 Ahimsa Index, both moving beyond the traditional ESG investing by applying ethical and value-based filters to stock selection. ESG, of course, like you know, ESG is environmental, social and governance investing, which looks at how companies manage issues like climate impact, social responsibility, corporate governance alongside financial performance. But now under the Ahimsa Index, it goes beyond ESG, where companies that are linked to sectors like tobacco, alcohol, gambling, weapons, meat, and certain animal-related activities, those are excluded. So supporters of this say that this is the next evolution of investing, where capital is aligned with conscience. Critics, though, on the other side, are arguing that markets should be about returns, not morality.
After all, many so-called sin stocks have historically delivered strong shareholder returns. And interestingly, the early numbers appear pretty mixed. You see the numbers over there? The Satvik 100 has outperformed the Nifty 50 across several recent time periods. And if you consider the newer Ahimsa index, that has had a more varied start, but maybe it's too early to tell. But the broader question now is, can values, can profits coexist together? Or does ethical screening come at the cost of diversification? Does it come at the cost of performance? And perhaps the bigger question is India creating a uniquely Indian model of values-based investing? Or are these products just designed to remain a niche corner of the market right now? Which is why our big question tonight, now that you have the Satvik index, you have the Ahimsa index as well, the question is, should investors put principles before profits? It's a good question to ask our panel. Let me introduce you to them. Joining us on the show, Vijay Mantri. He's Chief Investment Strategist, founder of Vijay Mantri Financial Services. Good to see you. With him is market expert Sunil Subramanian. Thanks for making the time. And also, we've got Sanchita Mukherjee with us. He's Chief Investment Strategist, founder of Vijay Mantri Financial Services. Good to see you. With him is market expert Sunil Subramanian. Thanks for making the time. And also, managing partner of Talk the Walk LLP. And Hardik Shah is with us, head of sustainable investing at DSP Mutual Fund. Thank you all for making the time for the big question today. Vijay Mantri, now that India has this Satvik 100, the Nifty 500, Ahimsa index, you see this as the birth of a new investing philosophy, or you think these are simply schematic products that are searching for investors right now?
So there are people, there are investors who are looking at various ways to participate in the growth of the economy, the various ways to make profit. So it is not essentially linked always to the investment performance. Capital market is very brutal. It gives allocation where it sees the more opportunity to make money. So for instance, if there's a COVID, the healthcare will do well. If there's a war, the certain kind of industry like defense will do well. Post-war construction will do well. And as you rightly mentioned, sin industry have a stickiness of the client.
True.
But what we've seen very interesting is that even for instance, look at USA. The alcohol consumption for last 50 years in USA has been going up. The industry have a stickiness of the client.
True.
But what we've seen very interesting is that even for instance, look at USA. The alcohol consumption for last 50 years in USA has been going up. But in recent year, the alcohol stocks are not doing well because the Gen Z is not consuming alcohol as much as the millennial used to, or the generation earlier used to consume. So people taste keep changing. So in my opinion, it is one of the way to look at investing, may not be always looking at the profit angle.
So not always is it going to work, but there is opportunity sometimes. So it is about profits at the end of the day. Sunil Subramanian, you agree? Where do you stand on this? Should investing ever be about the values and principles that one has? Because many would argue that the only job of an investor is to maximize risk-adjusted returns, which is what Vijay Mantri is saying that they eventually go for. And that is regardless of where those returns come from.
No, I don't entirely agree with that statement, because I think when you say risk-adjusted, the risk profile of the investor varies. So what is a good risk-adjusted return for me may not be the one for others.
Right.
And I'll take an example of this from the food industry. We all know that Jains don't have onion and this in their food. And you look at the number of restaurants in India which offer Jain food as a separate thing, because there's a separate class to which they cater to. Now, the taste of that sambar with or without onion is different.
Yes.
But there's a market for it. So the point is that principles have to form a part of your investing. When you're investing, everybody is not greedy for the highest return, because then you will throw diversification out of the window, you will throw asset allocation out of the window and try to get the maximum return asset class at every point of time. That doesn't work. So one of the key things is principles have to be always a part of this. Principles means what? What are your core beliefs, right? Now, again, I took the Jain example. Let's take them that if you say that I don't want to invest in alcohol companies, how do you have the ability to do that unless there's an index which provides that?
Right.
So it's an optionality which is critical, because ultimately there are investors who say, I want money regardless of philosophy. Let them be there. But when I enter that space and I have my principles, I am willing to sacrifice my return to get what I feel is the right return, because I do not want to die thinking that I have supported an unethical business or whatever, right? So those are important to me. So I will judge my success by saying, has the quality of my investment been good? And within that, have I maximized my return?
So what you're saying is that this is about choice. Investors need that choice, and that is an option that is being offered. Sanchita Mukherjee, you think there is a dichotomy among Indian investors? Like Sunil Subramanian is pointing out, you go to a restaurant, you have a menu, there is a separate menu for a certain kind of consumer. Many younger investors today, they increasingly want their spends, their careers, their lifestyles to reflect their beliefs. And you know, it is only natural that that class has investments also reflecting the kind of choices they're making when it comes to lifestyle.
Absolutely. And I'm so glad you mentioned the word choice, because investing for me has never been values neutral, right? So every investment actually reflects a choice. Now, the million-dollar question arises whether these choices are solely driven by financial matrices or by personal conviction and personal beliefs, or within a cultural framework. Now, the way I see it is the future of investment is not a debate in profits versus principles. It is the ability of an investor to pursue both. And that is very reflective on the maturity of the Indian capital markets, that today we have evolved to a situation where we are giving a choice to the investor, a very cognitive, intentional choice to invest using the profit principle as well as a principle-based personal conviction kind of a thing. Because what you just mentioned about lifestyle, for example, different investors in their lifestyle choices, somebody might buy an EV versus a petrol or a diesel vehicle. Some investors would invest into organic food. So it is not about replacing the existing menu. It is actually about expanding the menu that we are talking about.
So
here.
is that happening now? Is there expansion actually truly happening? And the evolution that Sanjita is talking about of the Indian investor, is the creation of these two indices, the Satvik and the Ahimsa, reflective of that? Hardik Shah, you work in sustainable investing. How different are these two indices, the Ahimsa and Satvik, from ESG? Is this a genuine evolution, you think? Or do you think simply ESG with an Indian cultural twist, even if that is the ask of a certain kind of investor?
Thanks for having me on the show, Vikram. So if you look at the spectrum of what is known as broadly ESG investing or responsible investing, at one end, you will have basically traditional investing, where the focus is essentially on valuations and, like you said, getting risk-adjusted returns. Then when you kind of move down on the spectrum on the right-hand side, you have something called as impact investing or even exclusion-based investing, which is where both these indexes fall, where it basically values come first, not valuations, right? So like some of the other co-panelists were talking earlier, when a customer is exercising their preference to kind of not invest in a certain type of businesses or maybe invest only in certain types of businesses, that they are kind of doing that as a personal preference, right? So I think what you need to understand is it an individual customer making that decision? Is it us, let's say, as an asset manager or as a fiduciary making that decision for them? If it's the former, I think it's fine because everybody is entitled to kind of, in a way, choose what they prefer. But as a fiduciary, I think we should not be taking those values-based decisions on behalf of our clients, right? Some clients might want this. Let's say if you think about another lens, let's say fossil fuels, right? Some people might say fossil fuels is bad for the environment and hence I don't want to invest in companies that kind of are doing this kind of a business, while others might say I just care about return, right? So if us proactively are saying we will exclude fossil fuels in all of our funds, that is not correct because not every client really wants that.
But how many from your clients, Hardik, from your own personal experience, are telling you about the kind of preferences that they have when it comes to making investments on their behalf, even as you're the fiduciary? How much of that is coming through in the kind of investment choices that an investor is talking to you about?
So I think when you kind of have a one-on-one discussion, doesn't matter whether it is a high net worth individual or a family office or even a retail investor, I think most people will agree that following sustainable business practices which don't necessarily have a negative impact on the environment or the society makes sense. But a lot of times what happens is this conversation happens only with a handful of people, right? It's not a broad-based awareness campaign. And hence you kind of have this common myth that I just want to focus on returns. I don't care about anything else, right?
Is that the majority, Hardik? Is that the majority?
I would say yes, because, and it's not because people prefer that way. I think it's just that there's lack of awareness creation, right? If you think about it, maybe I can just give you a parallel. About 6-7 years back, we had this mutual fund Sahi Hai campaign, right? And that kind of did wonders for the whole industry. People started investing in mutual funds. If there is, let's say, a sustainability Sahi Hai or an ESG Sahi Hai campaign, I think there'll be much more awareness creation. So I think it's just more of
Right.
lack of awareness rather than people don't really
But
care.
just like Sanjita said, we are looking at a more evolved investor right now, and you're saying that there isn't enough awareness. Vijay Mantri, these indices that we are talking about today in the Indian context, they exclude sectors like alcohol, tobacco, gambling, weapons. In Ahimsa's case, even meat, even poultry and leather and animal testing related businesses. So I'm just wondering if you see this as more responsible investments, or would you say it makes investing that much more restrictive?
So even today, we have many big investors who don't touch tobacco, alcohol, even in India. Very big investor, and they're very clear. The profit motive is not the only motive they are looking at. The second thing we need to keep in mind, since we talk about the size, sometimes the supply creates its own demand. Today, the choices are not too many. When more choices are available, as Hardik rightly mentioned, few years back, mutual fund or investing in capital market was not the big choice. Big choice was investing in real estate, gold, or FDs. But when the choices are made more available, investor migrated toward that. And very clearly, we see people want to, they would like to live, similar way they would like to invest, similar way they would like to make profit. And when they create this kind of benchmark, even the industry want to see that if the capital flow is available to certain industry, definitely more leverage will be given. For instance, I'll give you a couple of illustration. Many companies, many institution in USA would not touch industry if they are using child labor.
Right.
Similarly, just look at pre-Ukraine war. ITC was down and dumb because it was considered to be sin industry. But unfortunately, the energy prices shot up and the definition of sin industry became flexible, and suddenly we see ITC going up. But even people are demanding. Unfortunately, there are not too many choices. But if there are choices available, if the money start flowing, industry itself will adjust to the choices of investor. We are vegan restaurant.
Yes.
Okay.
Yes.
Globally. And why is that?
Well, because we want the choice, right?
Exactly. So I think people would look at, and there are some investors who are asking us very honestly that I don't want to invest in sin industry. I don't want to invest in alcohol. I don't want to invest in gambling industry. So definitely these guys would migrate toward if the choices are available. And keep in mind that when you look at these value-based investing, the return should not be the only thing you should be looking at.
So fair enough. But even so, since you did mention the kind of businesses, we're not talking about the illegal businesses. If tobacco or alcohol, if these companies being legal, if they are well run, if they are highly profitable, if they consistently create shareholder wealth, then what is the case for an investor avoiding it?
No, I'm not saying you avoid it. Both these things can coexist. So I would say I will not invest in alcohol. I don't drink alcohol. I don't smoke tobacco. It doesn't go well with my way of doing things. So I'm comfortable making less return, but it should go according to my choices. So I think these are choices available to investor. Nobody stop anybody from investing in alcohol-based company, tobacco-based company, or even the entire thing happen on a stock exchange, which some people may think like gambling den. But for some people it is not. So it is completely a choice with the investor will exercise. And we have seen in various walk of life, for instance, look at, I think in next 10 years, people would look at investing more in organic clothing, organic beauty product, organic food product. So these things will evolve. And my sense is that Gen Z will definitely will look at these idea more, and they will accept these idea much more than
It's
what perhaps
interesting.
people like us. Yeah.
It's interesting that you're saying young investors, because then we're looking at a starting point for some. What about those who already have a portfolio? These indices have just started, Sanjita. Should investors feel morally responsible for what is in their portfolio, for the activities of the companies that they already own, even if they're simple minority shareholders?
It's a very great question. For years in India, investors have asked a question, how will I make returns? In today's date, certain investors are now asking, where are these returns being generated from? right? So there is a difference. Now, if you see globally, I'll just take this trend globally. Globally, it's ESG-based investing, faith-based investing, are trillion-dollar industries. Like I think the Sharia funds are close to around $4 trillion. There's Nordic impact funds. There's Japanese social responsibility investing funds. All of that, right? So if one were to look at the trend, it is all about giving the choices to the current set of investors. And if one were to look at the constituents of these two indices, how they have been built up,
Yes.
one should be very, very cognitive that they are completely transparent, and one must understand what they're made out of so that you can be driven by both your principle as well as a profit motive.
Yes.
For example, the Satwik 100, it almost 38% of it has banking, stocks, and financial institution as a sector. So it is structured more reflective of the BSE 500. It does exclude the sin products, the negative filter on the products and all of that, but it is structurally more inclined. However, the Nifty 500 Ahimsa index, which is based on the Ahimsa investment movement, that uses a very strict classification. So it actually excludes the banking stocks and large conglomerates which have diverse business interests. So it's excluded. Now, this is not structurally reflective of the broad indices. So investors will eventually come to the mindset that they have to look at the returns, the financial matrices, and what these indices comprise of, and accordingly take a call.
So then you need that kind of balance. Sunil Subramanian, you think these indices are doing a fair job of that? Looking at the composition, the financials account for nearly 40% of the Satwik 100. That kind of concentration, does it create portfolio risk that investors maybe should be worried about?
You see, once we talked about principles versus profits, right?
Yes.
Once you're choosing an ethical index, you cannot use profit as your criteria.
It's either or the other.
It's not either or. What I'm saying is, exclusion of banking could help you get better returns at some points in time. So the point is that you go to sleep at night saying, I have deployed my money in an ethically consistent way with my principles. And then within that, I try to maximize my return within that ethical framework. It's unfair to compare that ethical framework-based returns to a generic returns and say, oh, and that's the danger. And that's one to point out the danger that happened. And Hardik will bear me out here that when ESG came up, what was the issue? ESG was very, very clear in terms of its ethicality. The reason that ESG was popularized, and I come from the industry which popularized it, is that when active managers get into managing it, they tend to talk about the returns of ESG. They tend to talk about the fact that big institutions, pension funds, are going to use ESG in the framework, and big capital moving will give good returns. That was mis-selling. Because an ethical investment cannot link itself. And that's why a lot of people got disappointed when the energy crisis happened and ESG funds started underperforming. So I think that as long as these indices are kept passive, the moment active management comes, I'm going to run an actively managed Satwik fund, then you know what happens? You tend to oversell it to try and get mobilization. Then you talk about returns. So to me, when you're talking principles, like look at it this way, right? Air conditioners, 5-star rated air conditioners, there is a market for them. They are more expensive than 3-star and 4-star. There are people willing to do that. Obviously, there is a cost to them, right? Now, in investing, we talk about returns. In buying consumption products, you're talking about cost. There are a set of people who are willing to pay the higher price for a 5-star air conditioner, which is less environmentally damaging. Now, does he think that I spend extra money? No. Ethically, he wants to be supporting the environment. So I think that you can't mix principles with profits, please.
Hardik Shah, would you agree? You've run ESG funds. Now you tell us whether this is exactly how it works. By way of passive kind of management, do you think that's the one way to go when it comes to these? In particular, when you're talking about Ahimsa, when you're talking about these thematic funds even, because there are quality funds, there are value funds, there are thematic funds. All of them use filters. So why are ethical filters treated differently and the profit part of it, like Sunil Subramanian is suggesting, is out of the picture or should be out of the picture?
Yeah, I would not totally agree with Sunil here. I think, see, there is, obviously passive is one way to do it, but it's not the only way to do it, right? So, I mean, if you think about it from a client's perspective, why would they want to invest, right? I mean, think about somebody who's living in a city like Mumbai or Delhi today. we are facing the ill effects of things like climate change. Hence, I'm more concerned about sustainability. I'm looking at the next generation. I have a son, and he basically what kind of a world he will live in and thrive in, right? So it is not that just because of returns, I will still invest in a fossil fuel company, or I will kind of still promote a company which is not that, I would say, doesn't have a positive impact on the environment or the society. So I think there is a very clear change of preference that is coming in. When you talk about, I think Sunil was mentioning very rightly so, I think in the early days of the ESG kind of funds, there was an AUM gathering exercise, and I'm talking this more about global, not specifically India. In the global market, everybody basically put up some sort of a rating saying we'll just pick the top ESG rated companies in our funds, and eventually they basically all ended up buying tech, financials, and healthcare, and these were basically generally highly rated companies. And when the cycle turned, and especially after the Russia-Ukraine conflict started, all of this started underperforming, right? So I think what is very, very important in my opinion, Vikram, is you have to be very transparent about what do you kind of classify as ethical, ESG.
Absolutely.
In fact, that is very, very important, because what you mean by ESG and what I mean by ESG would be very, very different.
Very different. And so it is actually true about ethical as well. Sanchita, you'd have to agree. Who gets to define what is ethical? What may be unacceptable to one investor may be perfectly acceptable to another. So where do you draw the line? Tobacco is one thing. Meat, dairy, leather, animal testing. Doesn't ethical investing become increasingly subjective?
Yes, absolutely. But then again, the markets are here to reflect the personal choices of investors, not to sit on moral judgment, right? So, for example,
but isn't this more about moral judgment?
It is about choices, for example, and how you look at it, because IT as a sector fund was thematic at one point in time, then it got mass adopted. Defense funds are there in today's market. There are defense ETFs, there are PSU ETFs, there's consumption index, a lot of them. So I think eventually it will come down to whether there will be sustained investor demand, first of all. And these indices are very good because they're reflecting the choices. Now, the whole question arises. These indices have been designed to lower the barrier cost of, say, ETFs, which will come into this sector, PMS mandates. There's a whole host of underserved retail investors, HNIs, family offices, who might actually like to look at these choices for investing. It will be a part of their portfolio. It will not be the core portfolio. It can also be a tactical allocation, right?
Yes.
So, but the choice is always there. So it's a matter about choice.
It is a matter of choice, and we've seen that globally. Sanchita, you spoke about this. Globally, we've seen Sharia-compliant funds, the faith-based portfolios, the sustainability funds. Is India creating a uniquely Indian version, you think, of values-based investing that is rooted in concepts like ahimsa? Globally, we've seen Sharia-compliant funds, the faith-based portfolios, the sustainability funds. Is India creating a uniquely Indian version, you think, of values-based investing that is rooted in our investment decisions?
Yes, absolutely. In fact, you're having a choice of a cultural preference, right? If you're a Jain, you have certain dietary values. You might be an animal welfare cognizant person. You might be a non-violent person, and you would like to have the choice to deploy your hard-earned money and to deploy your capital according to your personal convictions and beliefs. That index has been created to reflect that personal choice. So it is an evolution, if you ask me. It is beyond just thematic sectoral bets. But most importantly, it is very important for investors to understand what this entails, what kind of tracking errors it might entail, what kind of a structural bet they're taking, with whether it's reflective of the other major broad-based indices, all of that. What does the exclusion entail in terms of the performance?
Correct.
So all of these they should be aware of.
But the comparisons are going to be more or less about how much profits they can deliver. Hardik, if these indices succeed, do you expect the fund houses to launch more philosophy-led, faith-based and value-based products over the next decade or so? Is that something we can expect? And very quickly, because I'm running out of time.
No, sure. I think you'll see some of these products. I think you'll probably see more of what I would call as sustainable/impact investing products, right? Basically supporting businesses that are solving problems of the environment and the society, right? Whether it is renewable energy, whether it is wastewater treatment. I would think more of those funds will come up in the next decade. This cohort of demand for such kind of ethical or faith-based funds will be, I would say, somewhat limited. Yeah.
Well, looking forward to more of this taking place over a period of time, the kind of debate that we are having on investment decisions. Like we said, I mean, the real takeaway from this discussion is that investing is no longer just about what grows your money, but increasingly it's about what reflects your values. And the challenge for investors is going to be about finding that balance between conscience and capital, because while the principles, of course, matter, performance ultimately is going to matter as well, and that's going to be the core of investment decisions. I want to thank Vijay Mantri and Sunil Subramanian and Sanchita Mukherjee as well as Hardik Shah. Thank you for taking out the time and sharing your perspectives with us on this edition of The Big Question. That's going to be the core of investment decisions. I want to thank Vijay Mantri and Sunil Subramanian and Sanchita Mukherjee as well as Hardik Shah. Thank you for taking out the time and sharing your perspectives with us on this. And we'll be asking the most important questions here on this show, The Big Question. I'm Vikram Oza from me and the team. Thank you indeed for joining us.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P Mark, the mustard specialist since 1933. बरसों से सरसों, कुछ तो बात है इस दिल में।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में। P Mark, the mustard specialist since 1933.
बरसों से सरसों।
The stakeholders are becoming more important than just the shareholders or the majority shareholders. So things have changed over the last 3 decades. In that background, corporates in India who are more focused on stakeholders, who are more focused on sustainable business growth, that has been the focus of the jury. We are looking at people or organizations where the focus is on long-term sustainable growth rather than doing something by cutting the corners and making a one-off improvement and one-off wealth creation. The jury realizes that wealth creation is important. These are people who are creating wealth not only for their company but for the nation. But it has to be in a sustainable way, in a long-term way, without harming the environment and the climate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and
Hello and welcome to the show. Let's get chatting with a large investor in India and Singapore-based Masek, which has got net portfolio value in total of over $500 billion globally, and 7% of that really comes from India. So let me introduce Ravi Lamba. Ravi, always a pleasure to speak to you. When we look at the present unusual environment globally, which is having a huge economic impact as well because of the US-Iran war and the geopolitical tension, how is the investor mindset really developing in this scenario?
Yeah, I think it's a situation that's been playing out for some time now. We are obviously in a situation where there's uncertainty. You have to be cautious. So as an investor, we are being cautious. At the same time, the shocks that are being felt by the Indian economy have not been created by the Indian economy. So these are shocks from outside. And our view is that these are here for now, and they will go away at some point in time. So given we are a very long-term focused investor, we are able to ride out these shorter, volatile sort of parts of the cycle. So we are happy to stay invested. We're looking for opportunity. We are being cautious because uncertainty requires you to be a little bit more cautious. From our perspective, there's a cost element to the economy, right? There's a FX element where there's some volatility in the Indian rupee as well, and then there's of course the fact that you got to be careful about deploying capital in industries that could be affected for a longer period of time.
Yes.
And therefore you just have to decide how you want to deploy capital. From our perspective, if I look back in the last 3 years and some years back, I think when you and I had spoken, we had said that we would like to try to deploy $9 to $10 billion in India over the next 3 to 5 years. And as of last year, we have deployed about $9 billion in the last 3 years. So we are on track. We are finding the opportunities. We're just being more selective.
Right. And for this particular year, Ravi, then, given the macroeconomic situation, given that we have a huge import bill and oil dependence, and looking at the war situation, which is a flip-flop situation between the US and Iran, how do you see the sentiment as well as Temasek strategy for India investments? Has it changed because of this macroeconomic factor?
It has changed to the extent that we are just more cautious about sectors and companies that could be directly affected. Of course, there's an impact on the economy as a whole. At the same time, we are long-term investors and we are underwriting. So if I step back, what are we underwriting in India? We're underwriting the Indian consumer, effectively. So it's a consumption theme. And if I look back 10 years, India has been the best performing market for us globally.
Yes.
Whether it's the US or Europe or China, you put it all together, India has been the best performing. This is despite the fact that the currency in the last 10 years has depreciated almost 30% against the Sing dollar.
Yes.
And our books are written up in Sing dollars. So, and a third of that depreciation came in the last 1 year.
Yes.
So 13% came. So if I think about the growth that India is able to deliver to our portfolio, and if I can think about the great management teams that we are backing, despite these headwinds on currency, for example, and also the shorter term impact of some of these events, which have happened over the last 10 years. There have been many such events.
Yes.
But we stay invested through these volatile periods because we are not a fund, we don't have a fund life, and we can stay invested for the long term. And that helps us to ride out the volatility.
Of course.
And that's what we're doing.
All right. So when we talk about the India setup and